Didn't seem to be disappointed last night because the ADRs jumped by 8.5% over in the US session. So we look for some upside on those caring numbers. Even when things were bad, they weren't as bad as had been expected. Oil stocks certainly in focus. We're up by over 3%. Brent is up by over 3% this morning on the back of the latest sanctions news out of the White House, Guy.
Saw a big move in Shell yesterday. Biggest points addition to the FTSE 100. Just keep that in mind when you look at the numbers this morning. Right, here we go. Let's talk about the market open this morning. There's a macro top-down story that you need to fold in. There's a definite bottom-up single stock narrative that you're going to have to think about as well. Does one offset the other? It's going to be interesting to see how the single stocks all perform. You're going to see some big moves today, but are they going to offset each other one way or the other? We're going to watch out and see whether or not that is the case. Cautious start to the market this morning. Look, the FTSE 100 is barely budging. I think that kind of offsetting story is going to be evidenced really across many of these markets this morning. The IBEX is down by just 1/10%. Again, kind of a lot of stock stories that needed to be folded in. Could take a while for the CAC to open up this morning. It's going to be interesting to see how Dassault Systèmes opens up as well. You've got a space story that you need to fold in. You've got an aviation story around Wizz this morning, which is worth talking about as well. The DAX looks like it could take some time as well. It's going to be interesting to see how SAP opens. We were hearing from the CFO. He thinks we're actually going to open fairly close to where we closed yesterday. Indications are that maybe we're going to see a slide of maybe 1-2% on that stock, but we'll wait and see. The SMI could take a little while to open as well this morning. You've got Roche to fold into its numbers too, and we'll see exactly how that trades. So this morning, at the moment, index level, net, nothing to see here. But remember that we saw a move yesterday to the downside. It's not being filled quite this morning, which is interesting in itself as well. So the IBEX is now down by 0.3%. So today's, I don't think about the index level. It's going to be about sectors and single stocks. So let's find out what's happening there with Chrissy.
I mean, tech and oil, those are the trades that are really moving this market to the upside, at least when you look at the stock 600. And this is really fascinating. Those are two sectors that don't necessarily move together on a mixed day. And you can see that on your screen here when you look at the breakdown. I mean, SAP and ASML are driving things pretty interestingly. SAP was a miss, ultimately. They were still talking about some macro factors affecting their bottom line. We had the CFO on just a few moments ago, and yet their stock is up 2%. But to me, I think it is the oil story that is really catching my eye. Shell, Total, BP, you name it, you find an energy company and it is up. And remember, Shell, of course, has a major LNG trading business, Anna. Total is also a very crucial one when it comes to importing LNG from the United States. That's going to be a crucial piece to watch.
So the energy space is by far and away the best performing sector, up by nearly 2% this morning. So that is certainly one of the big impacts on these markets. And we remember Europe's weightings towards energy in certain places, and that will have a big impact. It's interesting to me how a number of stocks we've been covering this morning are still halted and not moving, probably quite a lot of volume trying to get through. So the likes of Nokia, there's a story. We had heard earnings and a positive earnings story from that business, I recall. Roche is also halted. Dassault Systèmes, we were talking to the CEO, anticipating something of a drop in the Dassault Systèmes share price this morning, and that one is also halted. So we are waiting to get the verdict, I suppose.
The surprise to me this morning is SAP. SAP, we'll wait for all that to open, but SAP, the calls were down 1 and 2% on the numbers that I was looking at. The stock has actually performed much better than that. The CFO clearly knows things that I don't know.
And he said that in the interview,
he basically came out and said, yeah, we think the stock's going to kind of open.
In the nicest possible way.
Yeah, you guys are wrong.
So.
You guys are wrong. It's going to open just fine. And actually, he was maybe underplaying the narrative. SAP up by 1.88%. So, yeah, got that one right. Shell is the second kind of biggest points gainer. It was up yesterday on a 2-day basis. It's gapped higher this morning. It's up by nearly 4%. So Shell is definitely moving on the back of what is happening with the 1%. this morning. So it is moving aggressively. Roche has now opened. It's down by 2%. And in fact, the whole of the pharma space looks like it is weak this morning.
Shall I tell you one of the, I was going to say words, but it's an acronym, in the headline around Nokia is AI, if that gives you any suggestion as to what's happening here. Nokia profit surges past estimates as AI and cloud demand grow. So that's moving in the right direction after long periods where geopolitics was interfering in the ability of these businesses to sell some of their infrastructure.
Kering's up really substantially as well this morning. And this is a stock that's hit a series of 52-week highs recently.
Yeah.
And it's up another 6% this morning on the back of the earnings that have been delivered. Nice performance.
Lots of individual micro stories to keep an eye on. Let's get a little bit more analysis when we look at the big picture. Jerry Fowler joins us around the table, head of European equity strategy and global derivative strategy teams over at UBS Investment Bank. Lovely to see you. Thank you for coming. Talk to us about this magic phrase, artificial intelligence. In an environment where we're talking about momentum selling off, whether it's in the commodities market, whether it's in the tech market, whether it's in just, the Russell 2000, for example, what do you do with artificial intelligence in an environment where momentum might be a bad word?
So momentum is coming through in a variety of ways. Obviously, there are the companies that are directly involved in creating AI, and then there are those that are enabling it. But to some extent, the profit streams of various companies are either coming now, soon, or much, much later. And so a lot of the momentum we've seen is in the quite frothy stuff where the AI association is really quite back-end loaded. Things like nuclear, things like quantum. I mean, these ETFs have tripled their share count this year, showing that there is a lot of retail flow into those types of entities. Those are the sorts of things that are coming under a lot of pressure and a huge amount of volatility at the moment as retail swings from being very crowded, using a lot of margin leverage, a lot of call option buying, that sometimes just gets squeezed out. The underlying profit streams of these companies still look very good. I think the questions people have around AI is there going to be a return on investment anytime soon from all of the data center build out? What's really interesting is at the moment, it does seem like the revenues of Meta and Microsoft, for example, are going up as fast as their CapEx estimates are going up.
Yeah.
But I think what's really interesting is to remember that CapEx does not come through the income statement directly. It's balance sheet, and then it's amortized over, let's say, 5 years onto the income statement.
Yeah.
So we've only had 2 years of really significant AI-related CapEx, and therefore only 2/5 of that CapEx coming through the income statement. So even if CapEx doesn't grow any further and just stays at these fairly high levels, for the next 3 years, the amortization and depreciation figure coming through in the income statement is going up. So we need to see constant revenue upgrades over the next 3 years to justify to keep the earnings growth stable.
Yeah.
So I think it's entirely likely at some point we have a downgrade cycle on earnings just because that is unlikely to happen.
Yeah.
But it'll be like 2021. It's an adjustment of cost to income that in the long run probably is fine.
Well, Jerry, you're talking there about kind of the operating growth and the investment in the CapEx. Let's talk about margin pressure here, because I felt like in the second quarter, it was all about how much can companies absorb some of the pressure when it comes to tariff impact, et cetera. And it felt like margin compression wasn't punished in the way that it might have been historically.
Yeah.
We're seeing the opposite in some of the companies today. I'll give you an example. Volvo Cars has come out with massive operating profit beats. A turnaround story, it feels like, is underway for a company that has really focused in on restructuring and layoffs as well. The stock is up some 27%, given it is a smaller stock.
Just today.
Compared to its peers. Just today, up 27%. You can see it on our 25% now. You can see it on our screen. In this environment, are we putting a renewed focus on margin compression on operating profit?
So we absolutely are more broadly. I can't speak so much to Volvo. I'm not sure of that specific company. But what I would say about the tariff situation is that for European companies broadly, Q2 earnings that we got in August were very much dominated by the currency effect. And we're definitely seeing companies this quarter report less of a currency effect because we've had less of a currency move. Now, we know that the third quarter was always going to be a much more tariff-dominated quarter because we had tariffs in effect the whole quarter, and we got the clarity on what the tariff was likely to be in the long term as well during the quarter. But actually what's interesting is even though there has been some commentary, I think Nestle was one of them that said that tariffs were under pressure, tariffs were causing their margin to be under pressure. But offsetting that, and part of the reason that actually ended up was that they were able to say, our forward guidance embeds what we think the tariff impact will be. So it reduced that uncertainty about what tariffs were going to do to earnings. So it's quite interesting that even though there is still an earnings impact for some of these companies, and Volvo, for example, looks like one that maybe is able to do a lot of self-help to manage through that through cost-cutting or managing whatever, however they're doing that. But at least with the tariff certainty, there is a little less risk premium that you need to price into some of these tariff and currency-sensitive companies. And many of them have derated substantially. So that's part of the reason luxury is doing quite well as well. We've had concerns about demand, but also concerns about currency and tariff. But with a bit more certainty, you can look at the valuations of luxury and go, well, maybe the earnings are getting close to troughing, if not maybe recovering, and you can start buying them again.
To the extent that it is possible to have certainty about tariffs in this current administration, then we have some, don't we? And yes, Volvo Cars does make that exact point about having a bit of certainty, and that seems to be something that is they are trying to manage through. Another big theme of this morning is, we're watching, over the last 24 hours, we've been watching headlines around European tech businesses maybe being exposed to US export controls around critical software into China. Now, all of this might or might not be posturing ahead of meetings that are taking place next week, Joe, but is this a risk for European businesses that they basically get caught up in new fronts between China and the United States?
I'm sure it is a risk, although I think what we're learning, and to some extent what Eduardo Carmignac actually put a full-page open letter in the FT saying the other day, is that when one entity like China essentially controls rare earths and the other entity in the US controls high-end semiconductors and software, you will end up with an agreement. It's sort of an inevitability. So I think a lot of this is just sort of trying to get to that point, which creates some friction and uncertainty along the way. But that's not the biggest issue. It's the transformation of the global economy around, AI and potential productivity, the energy requirements for that, the new infrastructure and defense regimes, all of these sorts of underlying themes that are going to be around for 5 years, kind of, I think, surpass at the moment some of those trade tensions that have become much more noise than signal.
What's the options market telling you at the moment?
So there's two different sides to that, I guess. From a positioning perspective, actually, that's telling us to continue buying equities, because positioning does not seem stretched when we look at futures positioning or mutual fund positioning. They're kind of neutral, and basically that would say that there's still room for this market to rally. We don't think that retail are fully extended in their use of cash or margin, but certainly from the derivatives perspective, one of the drags on our positive signal for equities is the call to put ratio, or put to call ratio. There is a lot of call buying going on at the moment. Heavy skew to buying the upside in markets. Now, actually, I think in many cases that's valid, because what we're seeing is a lot of single stock volatility that doesn't necessarily get translated into index volatility, because we've had this highly dispersive environment. Some stocks up, some stocks down. In the US, that's because AI has been the only thing performing and things related to it. In Europe, it's because you've got domestic economy versus exporters. But what we're seeing is the weak parts of both the US and Europe starting to look a bit better and catch a little bit more momentum and catch some flows. So actually now, more stocks are rising together, creating a bit more correlation. Index volatility goes up, and that actually makes buying those upside call options pretty valuable. And considering the risks that we see out there, buying upside call options.
Is there a signal that comes out of that?
If you were to... So, given where valuations are, particularly in the US, you would say that stocks rising with volatility also rising and call options being such a dominant part of the market, that's pretty unusual. It does look a lot like my memories of 98, 99, which is when you get rising markets with rising enthusiasm through call buying, volatility rising at the same time. It's quite bubblish type behavior.
But you don't know kind of where in that process we are.
Correct. And so you start looking at things like, broader positioning metrics, as I mentioned. When you look at money market fund assets and cash in bank accounts in the US, it still only represents 17% of market cap when the low was 12. So it tells you there's either too much cash, which you can't destroy, it's just giving it to somebody else, or the market cap isn't high enough to get to a really vulnerable point where the cash has less value. But at the moment, margin leverage is higher, but it's not really higher than it was in 2021 during the meme stock mania on an inflation and market cap adjusted basis. So it doesn't remotely look like we are at extremes. Even the broad market valuations, if you squint, you could justify based on potential growth expectations from productivity. Only certain parts of the market do you see really frothy behavior, where the profitless tech companies just absolutely fly higher, and they're the ones who are experiencing like 10% daily moves at the moment. Quantum, nuclear, these sorts of things.
Yeah, exactly. Yeah, and they got whacked yesterday pretty hard.
Yeah.
Great to see you, Joe. Nice to see you.
Thanks.
Joe Fowler, Head of European Equity Strategy and Global Derivative Strategy, joining us from the UBS Investment Bank. We have just been looking at pictures of Volodymyr Zelensky, the Ukrainian president. I'm going to show you the live pictures coming out of Brussels, where he is currently making a number of different comments standing next to Costa. It's as far as possible. We all want it. US sanctions on Russia are very important. He welcomes the adoption of EU-Russia sanctions as well that we've heard this morning. Not willing to give territorial concessions.
Yeah.
Okay. We'll continue to monitor what is coming out of Brussels. There has been a move this morning on LNG. We'll bring you more details of that a little bit later on in the programme. Let's show you what is happening at the Core 6 this morning. What is going on at a single stock level? There's some really interesting moves happening out there. It's interesting, less of a defensive bias in the market this morning, which is fascinating. Nestle and Novo, both soft this morning. The stocks picture in luxury is being boosted. Caring is up and up sharply. Defence stocks are actually on the front foot. And what is interesting as well is some of the tech stocks are moving higher too. In some ways, maybe some of the moves we weren't expecting this morning. But that luxury move in Caring is big. So let's get some more details and start there with Chloe Mellet.
Good morning, guys. So yeah, Caring is up 7% this morning after reporting sales that were less weak than expected in the third quarter. And this really shows that the recovery in Caring and in Gucci, its biggest brand, is underway. And for investors, it shows that the hopes that they had placed in the new CEO, Luca De Meo, might be paying off as well. Some analysts are expecting that the return to growth could happen as soon as early 2026. So that's something to be looking out for. But in the meantime, we are seeing this huge boost for Caring this morning on the back of those better than expected sales. Moving on to oil companies that are also in the green this morning. Across the board, we're seeing higher moves in BP, Shell, Total and Eni after Trump announced new sanctions on Russia's oil producers. Trump is trying to get Putin to come to the negotiating table and negotiate the end to the war in Ukraine. This is quite a reversal in his approach to Russia, and this is really driving those shares higher. We'd already seen Asian producers moving higher, and we're seeing the same today in Europe. Moving on to ST Micro, the chip maker is down this morning by quite a bit. We're down almost 4% after its guidance for sales missed estimates, which shows that maybe the progress in the recovery in that chip sector is not progressing as well as expected. This follows what we had from Texas Instruments earlier this week, saying that there was weakness in the industrial and automotive chip sector, and this seems to be also impacting ST Micro, and we are down quite a bit this morning on the back of that. Moving on to another name in that semiconductor sector, but on the equipment side. So BE Semiconductor Industries makes equipment for semiconductors, and it is higher this morning after reporting profit that beat estimates, and that is thanks to really strong AI-related demand. So we're seeing different end markets there creating those different stories. And finally, Sodexo, the caterer, is down quite a lot this morning. We're down 8.5% because its guidance missed estimates by quite a lot, significantly missed estimates, and that is because of continued weakness, structural weakness in its US market. And so this is really driving down the shares for that caterer this morning.
Chloe, thank you. Chloe Mellet from our equities team. Coming up on the programme, we have so much news this morning and a lot of movement on some of these individual stocks and sectors. So we'll get to some of that, certainly with the auto space. Auto earnings coming through. Volvo Cars soaring at the open on third quarter earnings beats. We'll talk about that and other autos themes shortly. This is Bloomberg.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Welcome back. You're watching the opening trade. The index levels tell you nothing this morning about what is going on below the surface, because below the surface there's some massive moves happening in terms of single stock stories. Some not moving much this morning. We'll talk about Lloyd's in a moment. It's down by 0.2%. But staying in London, Shell's moving a lot. LSEG, the London Stock Exchange Group, moving massively this morning on the back of its numbers. So you're getting some really big punchy moves at an index, at a single stock level, that are largely, by the looks of things, kind of being offset at an index level, which is kind of what Jerry was saying. But he's actually expecting maybe more dispersion to start going forward from here. Let's talk about the banking story. Lloyd's Banking Group out this morning, raising its net interest income to £13.6 billion this year. That's despite earnings for the third quarter falling. It's interesting in terms of what it's seeing in terms of the outlook, and it has seen a cut this morning in terms of its return on tangible equity. So let's get a kind of sense of what is happening here. Tom Metcalf leads our EMEA coverage, finance coverage. Takeaways from Lloyd's?
Yeah, so slightly messy because you have that big motor finance provision moving through. So that's why the ROTE fell slightly. But if you exclude that, it's actually kind of, broadly speaking, what
14%, wasn't it?
Yeah, so I think you've got to exclude that because I think most people view that provision as, well, it is a one-off. And in fact, there's some analysts out there going, you know, we're hopeful the FCA might kind of ease sort of its requirements on that. So you might even see that provision being sort of too conservative, which would be obviously good news if they could write it back. Yeah. But yeah, broadly speaking, underlying Lloyd's very strong. It's, NII was up slightly, and basically, you know, under Charlie Nunn, it's just kind of churning out these very reliable sets of results, albeit with these kind of idiosyncratic, moments like motor finance. You're like, I wish they hadn't done that.
I thought we were going to get to the point around now, Tom, where we knew everything there was to know about motor finance and the penalties, but it feels as if, is there still more to discover then? This could still turn, there could still be other numbers.
Well, it's definitely going to be more numbers. So one thing I'm looking out for is what Santander UK, another big player in this space, will do. They haven't changed their provision yet, but I think like most people, they'll probably have to up it for now. And then, I'm afraid you're not going to get away that easy from motor finance, because the big thing is now the banks are disputing what the FCA is doing. There's what's called a consultation period, and it's just whether there is any change. Can they persuade the FCA, the rights of their argument, and thus hopefully reduce their costs a bit?
All right, Bloomberg Tom Metcalf walking us through some of the financials, ending very nicely on the motor finance story. Takes us very smoothly to the automaking sector. Volvo Cars soaring this morning after third quarter profit unexpectedly beat estimates. The automaker benefiting from the impact of its $1.9 billion cost savings program. I mean, just look at those shares go. Almost 27% of an intraday move. Craig Trudell, our global autos editor, is all over it. It is not often that we talk about autos and we do it in a positive light.
Good news.
Yeah. Can you just explain the logic here?
Yeah, I think it's a pretty clean one, honestly. A case where Hakan Samuelsson, when he left this company years ago, it was doing quite well. He was replaced by someone without a whole lot of automotive experience, someone who had BlackBerry and Dyson on his resume. There was a sort of move to bring in somebody who would shake things up. There was a really aggressive move to electric vehicles, and also, the sort of buzzword of the industry is software-defined vehicles. That has not panned out well on either front. The company has had to sort of turn back from its all EV ambitions. Some of its recent models have had real glitchy software issues. Samuelsson has come in and cut a lot of costs and sort of undone a lot of what his predecessor was doing. And this is the first really sort of substantial, tangible indication that what he's doing already is working quite quickly.
So there's that incredible performance by Volvo Car in terms of the share price. Then there's Renault. I mean, it's not dropping on the back of a profit warning, though, and that for the auto sector is maybe a positive, because we saw one not that long ago from Renault, didn't we? So what do you make of the third quarter numbers out of the French car maker under new management?
Yeah, the shares have been not doing so well this year, and I guess looking at these numbers, I mean, they're a little bit limited. They're just really top line and unit sales. They're kind of ho-hum, not really anything to get too excited or too concerned about. But in terms of sort of the broader picture for this company, if you're an investor, you've got to be really concerned about sort of the way things are trending with the Chinese manufacturers in Europe. There was some moves last year to protect manufacturers locally, and those measures have not done a whole lot to slow the momentum of Chinese manufacturers.
Did you listen to the Tesla call last night?
I did.
Look at that smile. Like, what on earth was going on?
I mean, I think it was. It was, definitely interesting. I mean, Musk turning it into, rather than a discussion of earnings, a discussion of the merits of his pay package.
Sure.
The reason for his desire to have, roughly $1 trillion worth of stock, so that he can build in his words, a robot army.
But he wants to be in control of the robot army.
Stay in control of it. He's worried that, if he builds it and someone else is in control of it,
maybe he goes crazy.
Bad. Yes.
Which he referenced.
Yes.
Yeah. So this is it.
And, very little discussion of, is this company going to be able to sell many cars in the fourth quarter and into the first half of next year with much less, government support for that? $7,500 tax credits in the U.S. are gone. And this is a company that still is struggling in Europe, is struggling to keep up with those Chinese manufacturers we were talking about earlier.
Normally you kind of a call like this and it would be like, oh, it's amazing, it's going to be fantastic. People are now, it feels, reading the analyst numbers, it felt like people treated it like a car company last night.
I think so. And part of it is because you hear a lot of talk about these Optimus humanoid robots, but when are they actually going to be in production? Yeah. Musk himself doesn't speak with a whole lot of conviction about the ability to scale this quickly and is speaking pretty clear-eyed about how difficult a task that's going to be.
Yeah, and are they going to be an army? I think is the other question that we'll need to ask ourselves. Craig, thank you very much indeed. Bloomberg's Craig Trudell on what we've seen in the auto sector. It's been a busy morning in that space. Coming up, we're going to talk about what is happening in the Scandinavian banking sector. Norway's largest bank, DNB, is going to be joining us after third quarter numbers. Kirsten Brutton is going to be up next. This is Bloomberg.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to the opening trade. About 30 minutes into today's session, seeing some green on the screen everywhere but Germany. I think this is interesting here because your outperformer this morning is actually the French index, higher by 0.3%. But there are a couple of individual sectors that you really want to keep an eye on. Oil, for me, is really the driver. You have a couple of others. SAP, for example, missed the earnings numbers, but again, their shares are positive. So what's driving this DAX underperformance? Maybe, Guy, you have the answers.
Well, at an index level, actually, I don't think there's much of a story this morning because everything is kind of offsetting the kind of the gains and the losses are being offset by each other. And you can kind of see that. I know this says in the take account of weightings, but you got 300 up and 280 down on the stock 600. That looks pretty balanced to me. Volumes ticking high, which is interesting, which actually tells you the market's reasonably engaged with all of these earnings and what is going on. So there's a little bit of churn kind of happening. So there is some volume going through the market, which is interesting too. Gainers, Credit was mentioning Shell. It's up by 2.24%. Had a decent move yesterday, so factor that into your thinking as well. LSEG Group, one of the big movers of the FTSE 100 this morning, out with its numbers. Market likes what it has to hear there. Remember, this is a data company largely, and you've got to bear that in mind when you think about what its earnings are looking like. Nokia is up by 10% this morning. As we were mentioning earlier, AI, 2 magic words, definitely working for Nokia this morning. So those are the gain. That's what's kind of moving the market to the upside, but it's balanced on the other side by some fairly substantial losses that we're seeing. Look at Roche, massive heavyweight out of Switzerland, down by 2.6%. Dassault Systèmes, we talked to the CEO a little bit earlier on. What are we seeing in terms of the software story and the concerns around what's coming out of the White House, what is happening with the earnings? I think I didn't get a clear sense from that conversation about which one was going to be moving the share price, but the share price is definitely moving, down by 15%. Siemens is down by 0.9%. But the point here is that we've got a whole bunch of gainers and we've got a whole bunch of losers. They're meeting in the middle and the market's not moving as a result of that. Anna.
Let's have a look at some of the other big picture stories then, Guy. As the markets do, as you describe, what are the big stories that we're following this morning? The Trump administration has announced sanctions on Russia's biggest oil producers, including Rosneft and Lukoil. The move sent oil upwards and marks a U-turn for President Trump, who had held off on major sanctions on Moscow. Indian refiners say their Russian flows will plunge to near zero due to the measures. This as the European Union adopts a new package of sanctions that will ban Russian LNG LNG imports from 2027. More on that a little bit later on this hour. Volvo car shares surging this morning after reporting better than expected profit in the third quarter. That's as the automaker benefits from its $1.9 billion cost-saving program. Operating income rose well above analyst projections. The earnings before interest and tax margin also improved in the period. And SAP offered a mixed forecast for 2025 as executives said the firm's sales momentum will continue in the fourth quarter in the face of economic challenges. Shares they're now down by 1.9%. Guy.
So do I chalk that up as a win versus the CFO? I don't know. We'll take that. He told me a little bit earlier on we were going to open flat, but actually the shares went higher, and now they've come lower. I think we'll call that a draw. Let's talk about what is happening in the banking sector. DNB shares on the move. Net interest income and fees missing numbers. The numbers were out yesterday. What you're looking at here is a two-day chart. So you're getting a little bit of a tick higher this morning. Stock's up by around 0.9%, but it doesn't compensate for the gap low we saw yesterday morning after the numbers. So net interest income apparently disappointed. Fees disappointed. Remember, rates coming lower, so you can kind of understand the NI story. That's a factor into the thinking here. Let's talk about what is going on, though, at Norway's largest bank. Its CEO is in London this morning. Kirsten Bratton, good morning. Nice to see you. Is that an overreaction in terms of the numbers we saw yesterday?
Well, I think we've increasingly seen volatility around the day when the results are published. Okay. We think our results are pretty good. We have a return on equity of 15.8%, decent growth in several of the business areas, but expectations are even higher. But I think the important thing for us is that there is a positive backdrop in the economy. And the economy this year is expected to grow by 1.8%. Inflation is coming down now at 3%, wage growth in the area of 4.8%. So people are seeing a growth in their disposable income, which means that consumption is expected to grow. And growth, we're talking about growth that is triple what it was last year.
So how do you make that work for you?
Well, being the largest bank in the markets, obviously, both the growth in itself and also the inflation and nominal growth in wages is a positive driver for our business.
So that helps with what? Deposits?
It helps with loan growth.
I was about to say, that was the next question. Okay, so tell me about loan growth.
Well, loan growth, 0.3% in mortgages this quarter. Look at 12 months, 2.7%, which is a good number for us in a market that is very competitive. We target to grow 3 to 4% per year in lending, and we target for our fees to grow more than 9% a year. Okay. So we target a higher growth of capital light income. And of course, the acquisition that we did of Carnegie, establishing the leading investment bank in the Nordics, is an important part of that ambition.
Yeah, Kirsten, can I pick up on that? Good morning. The fees conversation, we've had this conversation in the past, the purchase of Carnegie, and that's supposed to add more fees to the mix of the types of revenues that you bring in. Was there a little disappointment around fees yesterday? So some of the analysts talking about how the fees weren't as high as maybe some had anticipated. What should we understand about the rate at which the fees will grow?
Certainly, I mean, by reactions, you can see that expectations for fees were higher. Still, I think it's fair to point out that we had a 29% growth in fees compared to last year, obviously driven by the acquisition of Carnegie, but also a record high number of assets under management. Now, which parts were strong in this quarter particularly? I would highlight ECM, I would highlight DCM, in particular investment grade. And then it was a softer quarter for us in M&A, as one example. That tends to vary more from quarter to quarter. More than judging from one quarter, I think it's important to highlight the strength of the platform, where we have been leading in 3 of the 4 largest stock IPOs this year. We were a global coordinator on Verisure, which was the largest IPO in Europe for the past 3 years, the largest in Sweden in 25 years. And on equity research, as an example, we are the number 1 in 16 out of 21 sectors. So it's a tremendously strong brand and that rates with a high performance. So I think that platform for growth is maybe more important than just the recent quarter.
You mentioned one of the drivers there as being debt capital markets, and thinking about debt takes me onto credit and private credit, the boom we're seeing in private credit, and some people's fears about that. And you can tell me if this is typical of the Norwegian experience or whether Norway is very far removed from these trends. But for example, here, the Bank of England governor has been increasingly vocal about this concern and saying we're slicing and dicing debt like it's the financial crisis. Do you worry about that kind of thing happening in the markets that you're active in?
Well, I think what we're seeing in private credit is something that was wanted after the financial crisis. The regulators wanted to move debt out of the banking market into more other type instruments and players, and this is what we've been seeing. And I think at the rate that this is growing now, they are right to pay attention to it, to look at it in the perspective of financial stability. Now, we see this mostly in the US, we see it somewhat more in the Europe and slightly less in Norway, but we still come across this in transactions that we are competing for. And sometimes we lose to private credit, sometimes we have customers wanting to refinance a debt that they have with
And you have to be careful not to drop your lending standards, I suppose.
Well, that's the dynamics of the market, that we always need to be mindful both on profitability and also on structure. And right now there is a lot of capital in the market, so there is a pressure on both.
Kirsten, you talked a little bit about your IPO experience as well. I really want to pick your brain on this because DNB obviously operates in the Swedish market quite substantially. We have a graphic that's made up of some Bloomberg reporting that suggested the top IPO markets. The UK is no longer part of the top 20, but Sweden is very much in number 7 in that number. Just from a big picture perspective, what is Sweden doing right that maybe the UK can learn from when it comes to the capital markets? Give us your diagnosis, give us your prescription.
I think they've been very successful in building an ecosystem around their capital markets for years, driven by a market with ample private capital and also private equity. And they have facilitated for companies also of a smaller size to get listed and have attractive liquidity in their shares. So they do stand out as the market that has listed more companies in the past 10 years than what is it, France, Germany, Netherlands, and Spain altogether. So one additional thing that I would mention is how they've been driving retail savings and investments and the public sort of commitment and engagement into the market, probably the most active market in Europe. This is usually what we see in the US. And this was, the start of this was driven by pension reforms done, I think now closer to 20 years ago, where they are making people aware of the value of their pensions, incentivizing them to save their money wisely, and not only put them in bank accounts, but also engage into the markets. And of course, this is then again also driving liquidity and becoming a very important part of that whole ecosystem.
Well, let's marry those two concepts, the public and the private, if we can, because you also work with plenty of private equity firms, EQT is just to name one, among others. And one of the big concerns in the private markets right now is that, is this the environment to explore IPOs, to explore public debt issuance when we're looking for deal exits, or to kind of keep it within the private market sphere? And I think that's where some of those private credit concerns are coming from. Your take on just the global environment when it comes to M&A, capital fundraisers, and of course, when it comes to deal exits for a lot of these private firms?
Well, I think it's well known that a lot of private equity has been sitting longer in their companies, and they've been struggling to find exits. And now markets are really opening. We're seeing that in Sweden as one example, and we are expecting a lot of activity in the coming month and years. I mean, they operate by windows, these markets, so let's see. But I think our expectancy is for them to pursue typically dual tracks, to consider both a public alternative as well as a private alternative. Some of them are repackaging parts of their companies and selling off to different categories of investors to be able to liquidate with other investors who want to exit the funds. But we had a high expectancy for activity this year, which was pushed a bit out due to all the noise around trade and tariffs. We've been curious to see as when the markets are coming back, and it really looks like that's happening as of now.
That's going to ultimately stick. And I feel like, Guy, that's one of the concerns that you've heard in all the private credit spaces and the private equity spaces, that ultimately, if the IPO markets aren't as juicy as perhaps you're seeing in New York, do you then ultimately go to credit? Do you go to the private markets that aren't as transparent, aren't as liquid? And that seems to be what's driving the momentum and the risk.
Do we start to see that sort of unwinding a little bit next year, though? That is the key question here in Europe. Do those IPO numbers start to pick up? Kirsten Broughton, DNB. CEO. Thank you very much indeed for joining us. Lovely to see you in London. Coming up, we're going to put some pressure on Putin, apparently. That's the message coming out of the EU. Oil surging after the US announces sanctions on Russia's biggest producers. You've also got an LNG story this morning out of Europe. Oil stocks are higher. Oil is higher. Does it stick? That's the question we're going to ask next. This is Bloomberg.
Estava sitiada.
Nisso, ao começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho talia ki kon ahma ta chuara pango ahma le pa manjang le nyai kon mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Welcome back to the opening trade. We're 46 minutes into an incredibly busy session for earnings news. We have had plenty of it, and that leaves these overall indexes pretty unmoved. We have a bit of downside coming through on the German market this morning, but elsewhere a little bit of upside, in particular over in Paris, where caring in the luxury space is all the rage, it would seem. Let's talk about what's going on in oil markets. Brent has jumped past $64 after the US slapped sanctions on Russia's largest oil producers. That's Rosneft and Lukoil. And as a result of the restrictions, major Indian refiners see flows dropping to almost zero. For more, we're joined now by Bloomberg's Stephen Carroll, who's tracking this story from Brussels, because this has a huge impact on and is being done, I suppose, to some degree, in conjunction with what's happening in Europe. Stephen, good morning to you. So another change of heart on Russia, then, from President Donald Trump. Let's start there.
Yeah, certainly adding to the pressure on Vladimir Putin, and a significant change in the dynamics for Russian oil exporters, because, of course, what the US is doing is catching up with what the EU has been doing for some time in targeting Russian oil producers. The two companies that have been affected by this, Rosneft and Lukoil, make up around half of Russia's oil exports, so they are the key companies at the heart of this. Their revenues also make up a quarter of Russia's federal budget as well, so this is a move designed to hit a key part of what's funding Russia's post-war economy. Now, these sanctions are due to come into place from next month, so there is still some time for perhaps negotiations or changes that could be made to it by now, but we're already seeing the interpretation from markets of how this is going to play out in terms of supplies, and it's particularly going to hit the likes of India that you mentioned, one of the major countries, the second biggest, in fact, buyer of Russian oil at the moment. So a really big move from the United States. Now, Donald Trump has said there's still time to talk about this. The sanctions could be lifted down the line if there's progress towards peace, because, of course, the reasoning behind this is to try and get Vladimir Putin to a negotiating table in a way that Donald Trump feels that progress can be made.
Well, Stephen, what's so interesting about this, especially, and we should mention, we are also getting comments from the Chinese authorities who are already frowning on the sanctions that are coming from the United States and from the EU as well. They're making some public comments. What's so interesting about this is that the U.S. has been trying to twist India's arm for quite some time, and it took the sanctions on Rosneft to actually potentially see some action in that direction. Can you just explain why this is different than the previous rounds we've seen under both the Trump and Biden administrations?
Well, look, it's targeting the companies that are selling to the likes of India as well. And we've already heard from refiners, our own sources speaking to Bloomberg, saying that they see these sanctions as having the effect of reducing flows to almost zero. So that would mean the 36% of India's oil supplies that they're buying from Russia at the moment could drop out in a very short period of time. And that's going to lead to a scramble of India looking for supplies from elsewhere. Now, India has been ramping up how much Russian oil that it buys since the beginning of the war in Ukraine, as it became cheaper and more available to them. So it used to not play such a large part in the country's energy mix. They used to buy more from the Middle East, and the question would be whether or not they will turn back now to those Middle East producers to try and make up the shortfall from what will be, it looks like, the turning off the taps almost completely of Russian oil into India. Interesting timing, though, for this to happen as well in terms of where oil prices are. I mean, we're looking at them before the jump today at around a 5-month low. So there is, I suppose, a position as OPEC Plus has been ramping up production for India to be able to at least buy oil from somewhere else that they may not be able to get from Russia now.
Yeah, it certainly feels like a big squeeze in the oil market this morning. Let's talk about what is happening with the EU side of things. You're in Brussels. What are we looking at there?
So the 19 sanctions package against Russia was formally adopted this morning by European countries. So this will also target some elements of the energy sector that haven't already been sanctioned by the European Union, so tightening up transaction bans against some of the big Russian oil companies. Also measures targeting more than 100 vessels involved in the shadow fleet that's been transporting Russian oil around the world. There's also provisions in this to sanction Russian liquefied natural gas from the start of 2027. There's already a deal that was agreed by energy ministers earlier this week to phase out natural gas by 2027 as well. So that's going to be another change in what has already been a pretty dramatic move away from Russian energy supplies for Europeans as well. But we have also heard from the Ukrainian President Volodymyr Zelensky, who is attending that meeting of EU leaders here in Brussels this morning. He's welcomed these two sanction packages together. He was asked whether he felt it would make a difference. He said, "We will see, but it is an important signal to not only Russia, but also to other countries that are buying Russian products as well, and perhaps that they'll want to join in on the sanctions efforts, as he sees that as being key to bringing this war to a conclusion." On the question of talks, because he was asked about that as well, he says they're open to ceasefire talks as well, but it would need to see what the arrangement or the setting for that would be as well. Of course, he's also waiting to hear about the question over Tomahawk missiles. We've been watching that very closely as well, whether the United States would be allowing Ukraine to use those missiles, and that, he said, is a sensitive subject. But given that we've seen movement on something like sanctions, he's continuing to hope that there could be some movement from the US on that front as well.
Stephen, thanks for the update. Really appreciate it. Stephen Carroll joining us out of Brussels. Let's talk about what we're going to get for the rest of the day. Stephen's just been saying EU leaders are meeting. We've got that to focus on. We've also got US state-level jobless claims. Now, they're going to be out at 1:30 p.m. This is a perfect job for the AI, isn't it? Just kind of crunch it all together. I'm sure some people have got some fantastic models to do all that and give us actually a fairly accurate look at what is happening there. US existing home sales will be out at around 3 p.m. After the bell, Intel, Ford are out with numbers. I think we've got a Jim Farley interview coming up a little bit later on here on Bloomberg Television.
Okay, let's talk about some of the tech stories that are in focus today. Europe's most valuable software company, SAP, reported third-quarter cloud revenue that missed estimates. But SAP CFO Dominic Assam, we spoke to him earlier on in the program, he says it has the company has strong demand for AI.
We have unabated demand here, and we are only anticipating that this will continue. I mean, half of the deals we have printed on cloud in this Q3 were again already including some monetization of AI.
For more on the tech space, we're joined by Matt Bloxham, analyst with Bloomberg Intelligence. So what do you make of the SAP's earnings story? We had some great conversations about big picture, stepping back, AI, the threats, the opportunities in that space. But in terms of the in-the-moment numbers that they've reported, how it's gone down with the market and the volatility it's created.
Yeah, I mean, obviously a slight miss on the revenue, but we're talking less than 1%. And, they slightly trimmed down the full-year revenue guidance. But again, probably around 1% or so. So really kind of negligible issues. And they talked about a cloud order backlog, which is essentially pretty much in line with what the market was looking for. And so I think, the kind of slightly negative reaction to on the share price, partly reflects, I think, fickle markets, but also this issue that there's a huge amount of optimism and froth, if you like, around the AI story, and what people are looking for is beats to the upside, particularly on kind of future order books. And they've got a strong order pipeline, but it's not surprising on the upside. So I think that's why you're seeing a little bit of that kind of.
I like the way he said they don't need to have an inferiority complex about AI. That was one of the nice lines.
Why is STM down by over 3%?
It's kind of a similar story. They kind of had a very kind of mixed set of results, and kind of some question marks about the outlook for them too. I guess they're a bit more directly exposed to everything that's going on around tariffs, around kind of China restrictions, but also the kind of iPhone and Tesla outlook. Two very big customers for theirs. We've heard stories that Apple are trimming the iPhone Air shipments. Obviously, Tesla has had great shipments as people kind of make use of the outgoing EV credits in the US. But obviously, there's a lot of question marks around the Tesla outlook. So I think, again, it probably comes down to a similar thing about the kind of order outlook and perhaps on the margin looking a bit weaker than people were expecting.
All right. Matthew Bloxham over at Bloomberg Intelligence, walking us through some of the tech stories this morning. We thank you so much. Anna, there are plenty of earnings conversations this morning. What do you have your eye on?
Yeah, I'm watching luxury because, somebody has to. Up by 8% on the Kering share price over in Paris. Sales coming in, the sales drop was less than expected. And that, if you can't work out all those words, that's better than anticipated. So half of the profits of this business come from Gucci. And at Gucci, at YSL, at Bottega Veneta, they all saw better than expected numbers. Even if those numbers weren't moving in the right direction, they were a pleasant surprise for markets in terms of the drops we saw. So the ADRs were up strongly, and as we see, the stock is up strongly here in Europe. Chrissy, you've got your eye on what's going on with oil.
I do. I mean, I'm fascinated by the conversations in Brussels and Washington this morning, and arguably New Delhi as well. They are all together driving up a lot of the energy stocks that we're seeing, and those are together moving up the entire index of both the Stock 600 and the FTSE 100 as well. But I mean, just take a look at these moves here. BP, Shell, Total, even Eni. You go down in market cap, even Repsol, for example, they are all higher this morning. The question here is this a temporary move, Guy, or do we see a more sustained move higher now that the United States has officially sanctioned Rosneft and Lukoil?
The market was short going into this, though, and that's what I think is interesting. So this feels kind of squeezy in the oil price. So is this something that sticks? Is this something that we're going to see in terms of the share price sustainability on some of these stories? Shell was up yesterday on the back of this as well. I don't know, market positioning. I think we were moving towards a position where we could go sub 60. That's not happening, so maybe a little squeeze in the market this morning. So I want to quickly focus on Airbus. Airbus, Leonardo and Thales are doing a space joint venture. All three stocks are sharply high. Oh, no, they're not sharply high. They are up this morning. The weighting that they're having in terms of the Stock 600 is quite significant, and they are moving up on the back of that story. It's going to be headquartered in Toulouse, which I think is interesting. The Berlin Global Dialogue is underway today. We've got some great conversations coming out of there. Francine is going to be there. The Pulse will focus on that. That's next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Welcome to a special edition of The Pulse, live from the Berlin Global Dialogue, uniting leaders from business, politics, and academia on the biggest issues facing the global economy. Now, first, here are the top stories making the headlines today. Donald Trump ramps up pressure on Vladimir Putin to end the war in Ukraine, slapping sanctions on Russia's two biggest oil producers, oil soaring as a result. European gas also rising as the EU adopts its own fresh package of sanctions on Russia's energy infrastructure. The bloc joins a new U.S. push to chip away at Moscow's ability to wage its war against Kyiv. Plus, Tesla's third quarter profit drops as rising costs undercut a record quarter of vehicle sales. But Elon Musk still wants his $1 trillion pay package. Now, we're going to bring you some top guests from the Berlin Global Dialogue over the coming 2 days, including the Bank of America France Chief Executive Vanessa Holtz a little bit later on in the program. Now, first thing is first, you know the drill. We start the show, we look at markets. Now, European stocks seem to be hovering near this record peak. Again, there's a lot of earnings. We're in the middle of the earnings season. Third quarter earnings continuing to flow in. The stock 600 gaining about 0.1, 0.2%. Of course, the big story is what's happening with crude jumping to a 2-week high. This is after the U.S. President Donald Trump imposed sanctions on Russia's biggest producer. And then gold. We always look at gold. That's our golden rule on the Pulse because it gives us a good indication of maybe money flowing outside U.S. assets somewhere else, and gold 4,099. Again, if you look at Brent crude, look, it's up almost 4%, and then earnings definitely changing the way we look at some European indices. We have another packed agenda for you on the earnings front. Tesla disappoints. Elon Musk, though, still wants his $1 trillion pay package. On the market news, look, gold again fluctuating after retreating from a record price surge. But first, let's begin with a U-turn from President Trump, with the U.S. stepping up pressure on Russia by targeting its biggest oil producers with sanctions.
We canceled the meeting with President Putin. It didn't feel right to me. It didn't feel like we were going to get to the place we have to get, so I canceled it. But we'll do it in the future.
Mr. President, can you tell us a little bit about why you're elevating sanctions against Russia right now?
I just felt it was time. waited a long time. I thought that we'd go long before the Middle East. And Mark, as you know, we did the Middle East plus 7, so we did 7 different wars.
Well, let's bring in Chad Thomas, Bloomberg's executive editor for Europe. Chad, thank you for joining us. It's great being here because we're going to have some great conversations with some of the newsmakers. But if you just followed what Donald Trump wanted to do with Russia and Ukraine, kind of got whiplash because it was a big week to try and understand whether he was friendly with Putin, wanted to meet him, and now these big, big sanctions.
We got huge whiplash. You and I were talking just a week ago, and we were talking about the Budapest summit. And did that make sense to do that? Should President Trump meet with President Putin for a second time, and whether that he was being played? Clearly, within the last week, things reversed significantly. We were hearing already early this week that the talks between Rubio, the Secretary of State, and Lavrov, the Russian foreign minister, weren't going well. And then Trump not only backed away from the idea of there being a second meeting, saying it would be a waste of time to do that now, but he slapped these sanctions on Russia. This is what the European Union has been asking the U.S. to do for a long time. There will be a significant impact on Russia here. These two companies are 50% of oil production out of Russia. 25% of the Russian budget comes from these two companies. So if you want to impact Vladimir Putin's ability to wage war, you just did that.
Yeah, why did it take so long? I guess is one of the questions. The other one is the ripple effects will be felt far and wide, including China. That buys still a lot of Russian oil.
Yeah, why did it take so long? People were really pushing President Trump to do something, and he's been saying for months that he would. He did say yesterday, and I think this was interesting, I've had some great talks with Vladimir Putin, but then nothing happens. He seems to have finally decided that he needed to take action. China today, we're seeing real strong reaction there. They get 20% of their oil from Russia, and so there's a real concern. They either have to abide by the sanctions or they face the consequences of secondary sanctions on them when it comes to things like access to SWIFT and so on, where Russia obviously has already been cut off from that years ago when the full-scale invasion of Ukraine took place.
So yesterday, a lot of leaders were in Europe, actually in the UK. Yeah. That's a Freudian slip. Still Europe. And today, actually, there's an EU leader summit. What can we expect from that?
Yeah, so we've already seen this morning more sanctions coming out of the European Union against Russia. It will clearly be a big topic. This, by the way, the European Union, Trump says that they love sanctions. This is the 19th sanctions package against Russia from the EU. It's really an effort by them to cut off the ways in which Russia has gone around some of their previous sanctions. So clearly that will be a big topic of discussion at the Leader Summit starting a little bit later today.
Chad, thank you so much. As always, Chad Thomas there and his team with some great coverage, of course, coming all over Europe. Bloomberg's executive editor for Europe. Now on to some corporates, and Tesla profit plunged as rising costs undercut a record quarter of vehicle sales. Now shares in pre-market actually lower, with analysts saying there's just not much to inspire investors and really questioning the timeline to develop new businesses like AI and robots. Well, despite the concerns, the chief executive, Elon Musk, ended the call by pleading with investors to ratify his upcoming $1 trillion pay package.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Let's go straight to Craig Trudell, Bloomberg's global autos editor in London. Our cards are. Craig, I mean, this is a pretty extraordinary end to a difficult earnings call.
It was, and I guess, I walked away from some of those comments, scratching my head, because if we really sort of have any doubt as to the amount of control that Musk has of this company, it's reinforced quarter after quarter that he's taken them in this direction of kind of sticking with, just the product that they have in terms of their actual core vehicle business. It's been years since we've seen this company bring out entirely new models. The Cybertruck was the last one added. It's also been quite a disappointment and was a product that Musk was very hands-on with. And yet, he is very much in control of this company. And this is a company that is taking his lead into these uncertain directions, chiefly I would sort of flag humanoid robots as being sort of the best example there, where it's really unclear just how quickly this, business is going to be something tangible for investors to wrap their minds around.
Craig, can Elon Musk turn Tesla's fortunes around? I feel like I ask you this every quarter.
Yeah, I mean, I think there's a big debate over, this idea that the auto business is getting really difficult for everybody, right? And it's getting particularly tough for electric vehicle makers, where, and particularly for U.S. companies, right? In that with the $7,500 tax credits in the U.S. going away at the federal level, real concerns about how much of an effect that's going to have on the EV industry more broadly. And, a quarter ago, we heard Musk acknowledge that may lead to, in his words, a few rough quarters for Tesla, going forward. There was very little sort of discussion of that last night, which I found surprising. And it was much more emphasis on, again, the humanoid robots that Musk refers to as Optimus, and also on sort of robotaxi efforts that are still, not quite actually robotaxis. You still have human operators in these vehicles that are sort of there to step in and prevent against any crashes or accidents in Austin, Texas.
Craig, I'd love to get a humanoid robot on TV, actually, next time. It's you and I on the pulse with a humanoid robot. This morning, we also had some pretty strong numbers from Volvo Cars. Challenges ahead. That's what the chief executive told us this morning.
Yeah, I think Hakan Samuelsson, to his credit, was pretty clear-eyed about that, and yet the market absolutely is loving what he had to say this morning and the numbers he had to present. This was a company that, when he left it a few years back, was in quite good shape. I think the company sort of felt really compelled to bring him in as a steady hand to turn things around, because performance has gone in the wrong direction since he left. And, he's only been back since April, I believe, and we've seen some pretty decisive moves on his part to really cut costs and sort of unwind some of the things that were happening under Jim Rowan, who was running Volvo for the years since he had stepped away. So, kind of walking back some of this ambition to go fully electric as quickly as previously thought. And again, just sort of reining in costs. I think the job cuts that Samuelsson has announced and moves to sort of improve the operations of this business are bearing fruit much more quickly than everybody was anticipating going into this print.
Craig, thank you so much. What a story. Craig Trudell, there, our Bloomberg Global Autos editor. Now, majority of European Union members, including Germany and France, are now calling for a systematic review of bloc's regulations by the end of the year. It's hoped that the push will dismantle old rules that pose challenges for the competitiveness of EU companies, which are facing a host of headwinds, from tariffs to the ongoing war in Ukraine. Now, these themes are top of the agenda at this year's Berlin Global Dialogue. And I'm now delighted to be joined by Lars-Henrik Holler, the founder and chair of the event. He also served as chief economic advisor to the German Chancellor Angela Merkel. So thank you so much for joining us. Thank you so much for having us. Actually, it's a great event that kind of brings public and private newsmakers at the table. First of all, when you look at Germany, I mean, we talk about an economic revival. This has not happened yet. When do you think we'll have meaningful growth in this country?
Well, I think we're in a very important time. I think this fall is going to be very important, as the German Chancellor said himself. There's a very important summit in Brussels also today and tomorrow, which looks at these regulatory issues. As many have said, Europe is too regulated, so I think that is important. The second element, which I think is very important, that Germany relaxes fiscal, so-called debt brake, for more infrastructure, but also for defense spending. And now the proof of the pudding is in the eating, that you have all that money and all that flexibility, but now you need to do the reforms, you need to make it easier, you need to create space for private investment to come into place, all things we'll be discussing at the Berlin Global Dialogue, so that that money actually leads into growth.
How is Chancellor Merz doing?
He's doing fine. I think that he's certainly brought Germany back on the international stage. And I think that's very important. And I think a big priority for him is actually Europe, even though he's also, met with Donald Trump and with many other world leaders. But he has to do homeworks at home, and that includes Europe. And he needs support to do it. Germany is a complicated country, not the only one. France is also challenging right now. But I'm quite hopeful that he's going to be able to do it.
What do you think are the main obstacles, actually, for Germany, but also maybe for Europe? I mean, in Germany, is it geopolitics?
Right.
Is it trade?
Yeah, trade is important. I think the defense sector also as an engine of growth for Germany, transforming the economy. Because Germany is an industrial powerhouse. We have lots of companies at the Berlin Global Dialogue which would be willing to move into these areas related to defense or dual use. But it's not easy to transform your economy. So I think that's an issue. And the other one is sort of other regulatory constraints. For example, climate change. We haven't decided on our NDC goal for the Paris. Paris is 2 weeks away. And therefore, don't change the goals. I think we all want climate neutrality by 2050, but I think the way to get there has to be redone, and this is not easy.
But what is the right way? I mean, we're seeing a number of things also from Brussels actually being changed, some of the laws with deforestation maybe taking more time.
That's
right. I mean, there could be a link between defense, right, and climate change. Is that far-fetched? Some people say it should be folded into the ESG world.
Yeah, I think defense is an important aspect of it. I think what you mentioned is true, that we should not overdo it in terms of time. I think we should have realistic goals. And as I said, the reporting and the regulatory stuff, I mean, this is really horrible when you look at it. Yeah. They were all there for good intentions, so it's not the intentions, but actually we need to be more pragmatic and think about what generates growth, and that is a change of mind, which I think is happening in Europe.
But does that happen by actually breaking up the rule book? So if you say, look, we're going to really cut down on regulation, and again, let's see actually what happens on that. Right. You know, at the country level, some people have tried. Right. Then do you really become competitive towards, you know, the U.S. and China?
I think that's a big part of it. By the way, we had, I think, 3 regulatory packages under the Merkel regime. So as you said, we've tried so many years. The big difference between then and now is it's blatantly obvious that we need it right now, because I think Europe is going to be irrelevant in the rest of the world if it's not economically strong. That was different 10 years ago. We were doing actually much better economically relatively to other parts of the world. So the pressure is there. There are proposals on the table, which heads of states will discuss today and tomorrow. One big issue, which I think is very important, is rather than having what people call an ex-ante regulatory approach, that before you do anything, you need to report and you need to show there are no risks, to an ex-post approach when you actually intervene, is more the American way of doing things. If things don't go well, you intervene afterwards, but you let people go and get started.
But what would you do? I mean, is it AI regulation? Again, we don't have these big AI companies, and the energy market is a bit of a mess.
There's AI, there's climate, there's supply chain management, so all of these. I think the AI Act, we are trying to look at a European way of doing AI, which looks also at security and trust, and remains to be seen, and that people are skeptical whether this is really a market or whether we should be more innovation prone. But this is on the table, and also a discussion we're having here.
Christine Lagarde actually steps down from her role at the ECB in October 2027. Is it time for a German to be in charge of the ECB?
If you ask a German, yes, I think it would be time, but it's complicated. It's usually also a package deal with other jobs, but at that time, I think the other big jobs in Europe are not on the line.
Who would you put forward? You're so ingrained in German politics. You must have a list or a name.
I like our finance minister, ex-finance minister, Jörg Kukies. I think he's a good person, but there would be others. And I think it's more important to get a good person, but it also applies to other countries. In the US, there's also a big change coming up with, Kevin Hassett, who's a good friend of mine, is also in the running. But to get the right person to do that, and I think we'll do that. Yeah.
Thank you so much for joining us, Lars-Henrik Holler. They're the founder and chair of the Berlin Global Dialogue, and of course we'll be broadcasting live today and tomorrow with many panels, so I know we'll see you around the corridors. Now coming up, it's been a turbulent week for gold prices. We'll discuss all of that with Lombard Odier's Nanette Hechler-Feider. But that's next, and this is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Earnings season is here.
European earnings in focus. We'll break down the results.
Bloomberg is first to break the numbers.
And we bring you some earnings that are coming through a Nordea Bank.
LVMH reporting a surprising return.
And BP.
The earnings story, I think, is really fascinating.
There's just so much news.
With the smartest insights.
It has been a record half-year result. We are committed to capital return. We were even able to increase our outlook. It's very good news, I think, for our shareholders.
Continuing coverage on Bloomberg.
I think the Fed should be putting a little bit more weight on the fact that the stock market's been very strong, bond yields have fallen, the dollar has weakened, credit spreads are narrow, all those things are supporting economic activity, and put a little bit less weight on the level of the federal funds rate.
That was Bill Dudley, former New York Fed president and Bloomberg opinion columnist. Now, it's been a pretty dramatic week for gold prices. Gold fluctuating this morning. That's after a rout on investor concern over the market overheating. Well, joining us now is Nanette Hechler-Feiderb, EMEA Chief Investment Officer at Lombard Odier. Nanette, so good to see you. Thank you so much for coming in and in London. Nanette, there's three things that the market is obsessed with. Of course, it's credit because of the jitters that we had last week. It's gold and it's AI. What does gold represent to you now?
Really, gold has been the one asset that has come forward in 2025 as the ultimate diversifier. Remember, in April, actually government bonds were not really helping to diversify. So gold has taken this new position for asset allocators. And it's also part of the explanation of the incredible rally and ascent of gold, in spite of the volatility now of past week, has experienced this year. So a very important asset for diversification purposes, but also for structural purposes, Francine. Gold is going to be really quite critical in everything that is happening at central bank reserve shifts.
So, Nanette, I mean, is this really also part of the geopolitical reordering? And if this is, maybe central banks selling treasuries, selling a dollar to buy gold, is there a target price, or does it just go up and up?
Well, you can take basically pre-Bretton Woods and take a look at how much gold represented in central bank reserves, and it's about twice as much as it does now. I'm not suggesting that central banks overall are going that way, but what is clear is that if the financial system continues to evolve and financial settlement systems continue to evolve with a parallel one where central banks are providing liquidity to each other in their domestic currencies, gold is playing a very interesting role as a security, if you like, against that. So I do think that central bank reserves are going to go up, and I do also think that this will push up the gold price. For now, our forecast for next year is that it might reach 4,600.
Nanette, if you look at AI, and we're in the middle of earnings season, there's a lot of concern that AI could be in a bubble, but then there's a good earnings report in an AI world, and then it keeps on going higher. I mean, it's priced to perfection.
It is, and at the same time, it's really quite close to what it has been all along. I mean, take a look at valuations. They are around 28. That is not far from what they have been on average as well. And it is very far from the absolutely excessive valuations we had during a true bubble, a true tech bubble in the dot-com period. Back then, we had multiples of around 55. Right now, we are turning at around 28. So you can see that we, I think, are not in this completely overextended terrain. But what I really would want to point out is that earnings growth as well, Francine, has been really strong in a lot of these AI-related companies. And they are turning around 1.5 or twice as strong as the market globally. So I do think that there are fundamental drivers that are explaining this strength and these prices. Of course, one has to be very selective. And within all these technology stocks, there are some smaller ones that have really seen a very strong multiple expansion and where earnings have not so much been supporting that. There you have to apply caution. That's very, very clear. But selectivity, in my view, doesn't mean that we are facing a bubble here. On the contrary, AI is at this moment really standing ahead of a very broad adoption.
Yeah. Is there a worry actually that there's too much money, that there's too much investment, for example, going in data centers? Because if you don't see a return in a fairly brief time horizon or timeline, then maybe there's just going to be overcapacity.
It's very true, Francine, that the capital expenditure into the infrastructure of AI and data centers are part of the infrastructure has been mind-boggling. But I do think that it is absolutely what will be required. I am confident that technology and AI is going to pervade so many different sectors, and in particular services, that the infrastructure required to process that is just going to be there. So I'm really not so worried about that trend. I think that the world of tomorrow is going to make use of data and, by the way, of energy in a way we haven't seen or imagined before.
Nanette, what do you do with the credit jitters? We were talking, last week whether there'd be more defaults, whether there's systemic risks out there. Like a chief investment officer at Lombard Odier, like how do you deal with it?
I mean, look, we've been very, very attentive to all of these news. Anything that is happening on the credit market is always cause for attention for us, because there are really two areas that transmit into the global economy and into recessionary risks. One is credit, the other one is real estate. So anything that is touching to these two areas deserves a lot of caution. But the good news is, in our view, that these are at the moment very contained events. We have had some of them before. We are certainly of the view that credit spreads, Francine, have narrowed down to a point that they are not really compensating for any credit risk. And therefore, we have taken the decision to be a little bit less overweight, in fact, neutral now on investment grade credit, where we find that the overall yield is probably not going to give us much more room for bond price appreciation.
Nanette, thank you so much. Nanette Hesselhoff-Feiderb, their EMEA Chief Investment Officer at Lombard Odier. Coming up, we'll be discussing long-term capital markets with John Bilton, Global Multi-Asset Strategy.
relief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back, everyone, to a special edition of The Pulse, live from the Berlin Global Dialogue, uniting leaders from business, politics, and academia on the biggest issues facing the global economy. But first, here are the top stories making the headlines. Donald Trump ramps up pressure on Vladimir Putin to end the war in Ukraine, slapping sanctions on Russia's 2 biggest oil producers, oil soaring as a result. European gas also rising as the EU adopts its own fresh packages of sanctions on Russia's energy infrastructure. The bloc joins a new U.S. push to chip away at Moscow's ability to wage its war against Kyiv. Plus, Tesla's third-quarter profit drops as rising costs undercut a record quarter of vehicle sales, but Elon Musk still wants his $1 trillion pay package. So the European Union is adopting a new package of sanctions targeting Russia's energy infrastructure. The move includes a ban on LNG imports from 2027. Let's get straight from Bloomberg's Brussels Bureau Chief Suzanne Lynch, who's monitoring events at the EU summit. Suzanne, thank you for joining us. So tell us more about these sanctions and what exactly is in the package.
Yeah, so this is the 19th sanctions package that the EU has brought forward against Russia. So it's been tightening the screws gradually since that full-scale invasion of Ukraine. In this package, we're seeing them targeting some more Russian entities, but also significantly Indian and Chinese entities that are seen to have facilitated the Russian war effort. It's also including that very important ban on LNG. That was a very important part of this package. Now, why this is significant is that over the last few weeks here in Brussels, diplomats had been negotiating the finer points of this, and we had objections from countries like Austria, which was concerned about implications for a bank linked to the oligarch Deripaska. We had concerns from Hungary, and we had concerns from Slovakia. The situation now is that all those countries lifted their concerns, and that is why we have agreement here today at this EU summit. So it's a big win for Europe, and I think it's very important that the EU is able to show something, some deliverable, particularly as it welcomes Vladimir Zelensky, the Ukrainian president, here today.
And Suzanne, this, of course, all comes as Europe is looking to really strengthen its defense strategy.
Absolutely. I mean, I think there's been a lot of concern here over the last few weeks about the fact that Europe yet again seems to be watching from afar as the future of Ukraine is mapped out between Donald Trump and Vladimir Putin. But of course, we've seen a lot of flip-flopping by the US president on Ukraine policy. Earlier this week, leaders were scrambling to respond to the fact that they thought a summit was going to happen between Putin and Trump in Budapest in Europe, on European soil. Now it seems that's not going to happen. And then we've seen this latest move by the United States last night, which we do believe the EU was aware of, about these new sanctions on Russia. So we see Donald Trump tightening the screws and getting tougher on Russia. So I think the EU all the time is trying to prove that it's a serious defence player. It is. It has enhanced its own defence capabilities, and it's doing things like the sanctions package, and also a move to use these immobilised Russian assets, most of which are based here in Belgium. Now, we do expect EU leaders to discuss this today at the summit, which is just beginning around now, but we don't expect a major sign-off on that. Rather, we expect leaders to give the European Commission the mandate to come back with a proposal. This is highly complex. The idea of using these assets to help Ukraine is extremely complex. Belgium wants other countries to share the risk. The Belgian Prime Minister here today, coming into this meeting, was very clear that he's got demands before Belgium will agree to this. So there's a lot of road still to go on that issue, but we do expect some progress here on that today.
And Suzanne, Europe is also facing this harsh reality check to cut its emissions. Are leaders likely to actually reach an agreement on that?
Yeah, that's something that we expect could really, open up a Pandora's box here in Brussels today. Climate targets are on the agenda. And again, as always with the EU, you see some very different perspectives. Different countries, trying to protect their own industries, if you like, and their own energy mixes. So on the agenda is discussion about the 2040 climate targets by the EU. But really what we've been seeing, Francine, is a real pushback against some of these strict targets. We've been seeing a lot of debate, a lot of pushback from business, from corporations, from capital, saying, look, we need to be careful not to stifle innovation, even though the EU has generally been a leader on climate. So some pushback from some of the bigger countries here. This is all coming, of course, ahead of the COP climate talks that are going to happen very soon in Brazil. So we don't expect any decision on this. We do expect a very tense debate. And then in early November, EU environment ministers are going to come together, and that's when we should see more decisions on targets, or a range of targets that the EU will hit.
Susan, thank you so much. Suzanne Lynch there, Brussels Bureau Chief. And then I'm looking forward also to catching up with Susan, who's on her way tomorrow to the Berlin Global Dialogue. Now, Thales' third quarter orders and sales beat expectations thanks to strong defense demand. That's as governments across the world, of course, seek to bolster their military capabilities. It comes as Thales and aerospace peers Airbus and Leonardo seal a deal to merge their space businesses in an effort to compete with Elon Musk's SpaceX. And Europe's most valuable software company, SAP, has offered a mixed forecast for 2025, which has sent shares lower. Well, SAP sees full-year revenue for its key cloud business trending towards the lower end of guidance. Investors have been focusing on SAP's progress with cloud sales since the chief executive, Christian Klein, pivoted the company away from selling traditional software licenses to subscription services. Well, SAP's chief financial officer says the company has maintained momentum despite an uncertain macroeconomic backdrop. And the blurring between public and private markets and the future of the AI boom are just some of the top themes in JP Morgan's reports on long-term capital market assumptions. Now, for more on this, we're joined by John Bilton, Head of Global Multi-Asset Strategy at JP Morgan Asset Management. John, great to speak to you. It's like our yearly catch-up on this report. Is it much more difficult now looking at long-term trends, given all the volatility and all the disruptions we're seeing almost on a weekly basis?
Yeah, so it's actually always interesting to actually take a step back. And I think any investor who's caught up with the news flow, what's the Fed up to, what's the ECB up to, and quarterly earnings, to actually take that step back. So it's especially important at a time like this. And this is our 30th edition. We use it to run $1 trillion of the assets that we're privileged to look after. So it's incumbent on us to do that. And actually, yeah, we have had this really interesting year of a lot of changes. And we titled the report Shifting Landscapes and Silver Linings because there's so much going on, which is changing the economic fabric of how we think about the world. Things like trade friction, restrictions on labor, which are bringing down how much workforce we have to drive global growth. But surprisingly, we've had big fiscal responses, and we're beginning to see an uplift in total factor productivity as a result of capital spending, which is keeping growth moving at a reasonable level at a global, from a global perspective, but is starting to even up the differential between some regions, such as the US and Eurozone.
John, and I love the fact that you've basically identified 3 key themes, which frankly we try and keep on top of, on the pulse on a daily basis. This is like AI and the impact on financial markets. It's of course, privatization or private markets and the impact on getting the markets to more people, democratization, and then you have the emergence of new assets and market actors, which kind of backs up that. I mean, what will be most disruptive? What's a real game changer out of these 3 diverse forces?
Well, I think all of them actually link together in quite an interesting way. So if we think about regulations and policy, we think we're moving away from a world which was principally driven by things like the inventory cycle, dictating the business cycle, to one which is much more to do with lurching between more extreme positions in terms of economic policy. We've seen a bit of that this year. So what's happening is that is prompting, to some degree, investment in productivity enhancing technology. And that's really where that whole technology angle comes into play. And the reason for that is, of course, that some of the issues around migration have obviously been in the headlines a great deal this year. Trade has no doubt had frictions placed into its flow. And so as a result, we're having to see a bit of investment, a bit of capital spending to make up for some of that shortfall in the labour market. And what that's doing, of course, is that's giving a boost to the profit share of the economy. It's supportive for cyclical growth. It's supportive for companies. So even though we're seeing these frictions, actually companies are doing relatively well out of it. And what that's doing in terms of the overlap between public and private markets, of course, is we're seeing the private markets significantly leaning into this trend and really beginning to invest heavily in the next generation of this technology as it evolves. 36% of private equity is involved within AI, 25% of private credit, and 71% of deals in the VC industry this year have been involved in technology. And when you have this kind of investment, that kind of capital in motion, then it can be very supportive for returns over the intermediate and longer term.
John, I mean, on the shorter term, do you worry about private credit? We saw there were a lot of questions on when the next default would be after the week that was. So if you just put your news of the day hat on, how should we be looking at it now?
Well, it has a role in a portfolio. It's no doubt about it. But as with any credit instrument, there are tail risks to it. And when you get a big explosion, as we've seen in terms of the volume of funds going into private credit, then there is a risk that you get some issues at the margin with certain deals. Now, whether that's systemic, we're perhaps less... we're taking less of a sort of pessimistic view on that, because we do note that there's less involvement from some of the levered institutions. It's not bank balance sheets supporting this. Oftentimes it's real money. So yes, there has to be proper sizing of the private credit risk within portfolios. But this is not something that is an industry that's going away. In our view, it's an extension of credit that actually means that you've got a buffer to some degree to the public credit markets. It's opening up credit availability to firms around the globe. And so it is a reasonable part of the financial markets. But this year in our numbers, the return expectations from private credit for the next 10 to 15 years have necessarily come down because there's been such a rush of money into there. So we're already reflecting that to some degree in the numbers that we expect. And certainly, in terms of some of the more recent news, as with any credit investment, you've got to be very, very aware of the left tail.
John, I like the report, and there's something that actually struck with me, right? It's a great read. It's an easy read. There's something about an inflection point, and you basically say that we're moving from cheap money or cheap capital to expensive capital. What does that mean?
Well, so if we think about the last 10 to 15 years, we've had predominantly a period where central banks were supporting growth with very easy monetary policy. It was coined the new normal back in the day. And of course, what we've now seen post-pandemic is much greater willingness of governments to use their fiscal levers. Now, this is going to be quite interesting in terms of how it works out. A country like Germany, of course, there's plenty of fiscal headroom, and it makes sense to do a lot of fiscal spending. With other countries, you're perhaps taking more of a risk with the deficits, What that ultimately means is the gamble being taken is, can we use this deficit spending alongside the private sector to build productive assets so that we push up our trend growth over the long term? And some will do that right and some will do it wrong. And the issue, of course, that we have is that the cost of money has to rise to take on board the risk that some of this fiscal spending won't be well directed. So as a result, the overall cost of money goes up when we have that fiscal lever being pulled. So we've moved from a world where central banks really were the only ones providing the support for the economy, where we're now using the twin levers of fiscal and monetary. So monetary policy has to do less. Interest rates are necessarily that little bit higher. As a result, that cost of capital has gone up some.
John, what is the one thing that is actually the most underestimated by the markets, where you could see a correction because of what you found in your report?
The risk of correction, you're asking. I think, well, there's two things that are underestimated, and let's look at a negative and let's look at a positive, if we can. I think first and foremost, we've seen a huge rush into sort of some of these commodity-type assets, particularly gold, and we're beginning to see that unfold in front of our eyes. There's been a bit of a correction coming through there. We do think that gold looks good over the long run, but investors need to remember that in volatility terms, gold is a lot more like an equity-type asset. It has a volatility of around 13% compared with the S&P at around 16%, and it's like a bond asset, which has a volatility around 5%. And so we think that that's one area just to keep an eye on, because there's been a lot of rush into there. We still see a good outlook for gold, don't get me wrong. But staying with gold and thinking about currencies, that's where I think there's some upside opportunities. We've seen the euro appreciate 13% this year relative to the dollar. We've seen it appreciate about 8% relative to the yen. If we look at where a euro-based investor can look now, there's much less of a currency headwind from investing in the US, and there's still a currency tailwind from investing in places like emerging markets. So as a result, even though we've seen our outlook for European equities come down just a touch, about 10 basis points to around 7.2% average annualized expected return, the US number has come up and the emerging market number has come up, and that's about currencies. So for a euro-based investor thinking about currency overlay and just how to use that in a diversified portfolio, Europe's really in a sweet spot because of the currency moves.
John, thank you so much. As always, John Bilton, their head of global multi-asset strategy at JP Morgan Asset Management. Now, coming up, we discuss capital markets and the deal-making outlook for Europe with Vanessa Holtz, the Bank of America chief executive for France. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Lloyds Banking Group raises its outlook for net interest income to £13.6 billion this year. That's despite earnings for the third quarter falling. Now, for more on this, we're joined by Tom Metcalf, who leads our EMEA finance coverage. So, Tom, thank you for joining us. What are your key takeaways from these results?
Well, like you say, a little bit messy because they're absorbing this big motor finance provision. So they've already disclosed an 800 million hit. So you're seeing that roll through these Q3 results. And it just distorts a bit of everything. So their profit missed, etc. But if you can back that out, I think broadly speaking, this is kind of as the market expected. So net interest income, that's probably the most interesting thing on the underlying business. They tweaked their guidance a bit, put it up very marginally. That's always a good sign. So yeah, perhaps no surprise to see the shares kind of unchanged really today, just because they've done a good job of flagging that motor finance provision, which otherwise would have come as a big nasty shock.
Tom, so how big could actually this impact be from the motor finance provision?
So far they've basically provided about £2 billion worth. And, it's still pretty much up in the air. Basically, where they are in that situation is with the UK regulator. They're basically having some back and forth and effectively telling the UK regulator, we think you're casting the net too wide. We shouldn't be on the hook for all these cases that you're sort of throwing our way. And that's true of all the banks that are kind of being dragged into this situation. So over the next few weeks, there might be some movement on that. I mean, it would certainly be a big victory for the banks if they're able to persuade the FCA to sort of roll back a little bit, and maybe you'll see that provision, that £2 billion provision kind of be reduced a bit or written off a bit, which would be obviously a bit of a win. I think right now what management are saying is this is a worst case scenario. We may be looking down the barrel of a £2 billion hit, and hopefully we can kind of even that out a bit, soften it a bit.
Tom, what are you looking for with results from NatWest tomorrow?
Yeah, they should be a little bit more straightforward than Lloyds. NatWest not as exposed to the motor finance thing, so we're not really expecting kind of too many external shocks or anything like that. I think, like with Lloyds, the biggest thing is what are the indications we can get about the UK economy. It was all fairly benign today with Lloyds. You'd expect NatWest to say something similar. I mean, every quarter these banks are basically saying the same thing is, yes, there's lots of macro doom and gloom, but when we look at our own books, when we look at the stresses our customers are under, we're not really seeing that flow through any results.
And Tom, finally, Jane Fraser at Citi has just been given a lot more power.
Yeah, exactly. She's CEO there, but also in the great American tradition, also now becoming the chairman. So, in the UK here, those roles are typically split, but in the US, it's normally an indication, you're really getting your back into the bank, right? So, real fillip for her. I think it's kind of also getting a bit more of a pay rise as well. And it just kind of goes to show it's very much her bank, right? Much as Jamie Dimon, JP Morgan. When you think of Citigroup, it really is Jane Fraser calling the shots there.
Tom, thank you so much. As always, Tom Metcalf there with all of our banking earnings. Now, it's been a volatile period for broader sentiment over the past week. European stocks headed for a fresh record as third quarter earnings continue to flow in. So let's discuss the capital markets outlook and how the deal-making environment is shaping up with Vanessa Holtz, Chief Executive of France at Bank of America. Vanessa, thank you so much for joining us. When you look at the capital markets in general, I don't know what you're seeing. We're still expecting a banking union. Is Europe more competitive? Are we going to see more IPOs in the pipeline?
So we've seen, resurgence of IPOs. It's been subdued for quite some time now, but, this year we've seen the number of IPO doubling in terms of volume, especially since Q3, during the summer. So it's definitely like some more interest from investors to do public offering. The question is, and the thing which is at stake is obviously we are in a more stable environment, with low interest rate, more certainty on the easing, geopolitical tension and uncertainty is still there, but it looks like the market is taking more confidence about the market itself. And I think overall, inflation is much lower. So I think it's all positive for the market to start to, reflect on renewal IPOs across the board. So
what are your clients saying? Are they, because there's still a lot of disruption, are they getting used to the slight volatility or kind of like news changing quite
I guess
fast?
the market is starting to get used to the volatility. If you look at the market trend, there's been a lot of obviously uncertainties. Financial assets have been moving all over, but the level of volatility itself has come down significantly. Obviously, even more since Liberation Day. So I think the market, and when the tariff gets to a kind of a stable stance, I think, there's definitely some room for markets who have been delayed investment, delayed IPOs to pull the trigger and make sure that it is happening right now. So we've seen definitely some increased volume on that front.
Are you expecting a catalyst actually for, for like the animal spirits? I know there's a lot of things being discussed at the European Union level. Do we need something like regulation taking a back step for clients to be fully in?
Well, we definitely need this capital market union. We've been talking about it for quite some time. There is some progress that has been made, but there's still a lot of fragmentation. I think it's absolutely critical that, Europe act with a sense of urgency right now. So everyone is mobilized. And I think securitization is a very key aspect of that. We need to de-risk, we need to have better source of financing. And I think deregulation and simplification is critical for the time being.
But Europe is looking at France and saying, look, this is what maybe Italy was like 10, 15 years ago. There was a credit downgrade. There's a lot of uncertainty politically. How's that playing out for your business?
Well, we still have credit downgrade in France, by Fitch and S&Ps, and obviously the service of the debt is increasing, so that's definitely on the radar. The deficit obviously is important. The budget, still needs to be passed at some stage. So yes, there is some turbulence, political instability, but I think, on the long run, France is quite resilient. We have a lot of strengths, France has been the one that had attracted foreign direct investment in one of the first countries in Europe to attract that. There's still, the world-class corporate that is there. Financial ecosystem is still there. So I definitely think that there is resilience in France. The household saving financial asset is huge in France. Yeah. So there's capital to mobilize, but it needs to go in the real economy. So that's the key aspect of this capital market union and securitization that needs to happen now. It's all the 27 countries that needs to go together. And as I was saying at the beginning, it is urgent.
Do people understand it's urgent? In your conversations with policymakers, do you think this is, a crucial point actually in a change in how Europe can reinvigorate itself?
I think people understand it's urgent. What is critical now is that Europe comes together, and obviously as the national, there is political agenda on each country. People need to overrate the importance of Europe beyond, obviously, the political national agenda, and I think this is critical right now. So there's definitely some work. It's slow, but I think the private sector and the governments need to act together to make sure this is happening.
Chancellor Merz was talking about some kind of pan-European stock exchange. Does that make sense?
Yeah, I think it could make sense, to have a pan-European stock exchange. I think it will help, the transaction and flow the liquidity back into the European market.
Vanessa, thank you so much, as always, for joining us. Vanessa Holzler, the Bank of America France Chief Executive. Now, plenty more to come from the Berlin Global Dialogue over the next 2 days. We'll have interviews including Ukraine's Deputy Minister for Digital Transformation. We'll be speaking to Bernie Mensah, Bank of America International President. And, of course, we'll follow a lot of the big conversation. We're actually speaking to Henry Kravitz and also Nadia Calvino a little bit later on. The focus still on earnings across the board. We're also getting a little bit of data, not the easiest thing to understand what the Fed does next because of the government shutdown. But look, the main story is also oil. Oil is really up because of what we heard from President Trump over the U.S. So oil rallying after the U.S. announced these extra sanctions on Russia's two biggest producers. President Donald Trump ramping up pressure on his counterpart Vladimir Putin to negotiate an end to the war in Ukraine.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier Liu Hefeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China. Is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the 2 main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel. Good morning, Valerie.
Good morning, Ivani. Let's start with the disappointment across earnings after the bell yesterday. The big one being Tesla. The shares are sliding 3% in pre-market trade, Bonnie, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Bonnie, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off, and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Vani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to benefit from this AI trade. Lastly, let's end with some stocks in the green. That's quantum computing. We had a source article from the Wall Street Journal saying that the U.S., the Trump administration, is considering taking direct equity stakes in some of these quantum computing names in order to for them to receive federal funding. So we're seeing the likes of IonQ up nearly 14%, Rigetti up nearly 12%, and D-Wave up 15%. Now note, this is a very volatile market. These shares had been depressed in the last few weeks, but we're definitely seeing a decent pickup in pre-market this morning.
Yep, they for sure had seen a sell-off along with the rest of tech. Valerie, thank you so much. Valerie Teitel there. And later this hour, we'll look ahead to the Fed's rate decision next week with JP Morgan's Priya Misra. And RBC's Tom Narayan will join us to recap Tesla's earnings results. But first, let's get back to oil. Prices jumping after the U.S. announced sanctions on Russia's biggest producers, including Rosneft and Lukoil. That's as President Trump ramps up pressure on President Putin to end the war in Ukraine. Now, across the Atlantic, the European Union has also adopted fresh sanctions to target Russia's energy infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important. And also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump, and then yesterday Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the U.S. and China are set. China saying Vice Premier Le Hefeng will meet with U.S. officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation, but the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit, and we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the US and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trade czar there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like, there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15 and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Voters are going to have to decide in this election what candidate has the plan to save this city and what candidate can get it done, not just talk about it.
I am the sole candidate running with a vision for the future of this city.
My main opponent has no new ideas. He has no new plan. It's Bill de Blasio rehash, and we know how that turned out.
Andrew Cuomo will spend much of tonight attacking me. He is a desperate man, lashing out because he knows that the one thing he's always cared about, power, is now slipping away from him.
Zoran, your resume could fit on a cocktail napkin, and Andrew, your failures could fill a public school library in New York City.
The three candidates in New York City's mayoral race debating for the last time last night. Former Governor Andrew Cuomo looking to overturn a double-digit polling deficit to Zoran Mamdani with just 2 weeks left in the campaign. Joining us now is Bloomberg's Miles Miller. So, Miles, during last night's debate, Zoran Mamdani looked like a front runner. That was last week, and then we had last night. How did it change the polling?
Yeah, last night you saw the two other candidates in the race, Andrew Cuomo, Curtis Sliwa, really trying to define Zoran Mamdani as more of the same, and the same being Bill de Blasio. They were able to sort of knock him off of some of his key proposals and to get him to really talk about some of the issues that he's not defined in the campaign. He could not say why he does not want control over city schools. He could not say why he didn't support ballot initiatives that are coming up during this election that relate to housing. And the subtext of that is because those are ballot initiatives that are not supported by the city council, which is overwhelmingly very liberal, and are ballot proposals that are supported by the unions that have backed him in this race. But yes, Zoran Mamdani didn't stumble much, but he did have to answer for some of his key policy positions, but he gave it right back to Andrew Cuomo, saying while he was governor, all he did was put in a fancy fountain at LaGuardia Airport, didn't do enough for affordable housing nor education.
Curtis Sliwa, does he drop out?
Curtis Sliwa is staying in the race. He yesterday announced that he was resigning from his job at WABC Radio just down the street, and really because he said of pressure by the owner of that station to get him to drop out of the race. You know, big-time Republican donor, and really someone who is close to the president, who is asking for this to be a two-person race. But if he were to drop out in this race, nothing would happen with this. He'll still be on the ballot, but it's a money thing. If he drops out of the race, then he'll be forced to pay back some of that money that's part of the campaign financing program.
You know, it's gaining momentum. There's 2 weeks left. We've had all the debates now. New Yorkers are paying attention. What are we anticipating turnout will look like? And I guess it depends, like it always does, on things like weather and so on.
Yeah, so when you look at the primary election, right, this is a very energized base. Usually younger voters in this kind of general election, you know, we're going to see, you know, which kind of voters come out. Will it be the high propensity voters or will it be this new coalition? Andrew Cuomo is banking on his strong Democratic base will come out for him, and that the liberal base of the Democratic Party that voted for Zoran Mamdani, as well as the moderates, will listen to some of these attack lines, will listen to some of what the business community says and go for him. But Mamdani seems to have gotten a pretty big coalition together. Just yesterday, announcing with the New York Times that he's going to keep the current police commissioner. That's going to be good for the business community, considering she comes from the business community, right, the family in business owning Lowe's hotels. And so, definitely something that will bolster his support with people who may be a little shaky about his candidacy.
And there was definitely skepticism that he would keep Jessica Tisch, right? So I'm curious, where does the spending happen over the next 2 weeks?
The spending is going to be in the ads, right? You saw yesterday Zohran Mamdani putting out an ad during the Knicks game, right? You had him on stage on New York One and other places, but during that Knicks game in this New York market, spending some of that over $7 million that he's brought in to get some of those people to see who he is and get his record out there, same with Andrew Cuomo and same with Curtis Sliwa. But the spending is going to be focused on advertising and also the Get Out the Vote operation. How will Andrew Cuomo move these people to the polls who just a few months ago in June said, we like Zohran Mamdani?
Yeah, absolutely. Miles, thank you so much. Staying up late to watch that debate. And in early this morning, that is Bloomberg's Miles Miller. Let's take a quick look at the markets now in this early going. We do look to gold and oil markets first. Oil, of course, the big story today with fresh sanctions placed by the U.S. on Russian oil companies Lukoil and Rosneft. It was unexpected. It's a U-turn on the part of the administration, certainly having an impact on oil markets, although analysts are not finding a consensus on whether this oil will still get to market or not. Gold, as you can see, steadying after 2 days of declines above 4,100 now. Does this raise the temperature geopolitically? And of course, we're all waiting on CPI data tomorrow. Today is another Thursday where we don't get initial jobless claims. Coming up, we'll bring you our latest conversation from the David Rubenstein Show with Harvard University President Alan Garber. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
This is Bloomberg Brief. I'm Bonnie Quinn. This is This is Bloomberg. As uncertainty around visas lingers.
We had announced in the first official communication upon the release of the Supreme Court's decision that we would adhere to the law, not change our values and principles, but we would certainly adhere to the law. The specific measures that we've taken have been many. We've made sure that in the admissions process, nobody involved in making a decision about admissions has access to the check the box, what's your race, what's your ethnicity, et cetera. So they don't have access to that information. Of course, if there's an interview and aspects of identity will come up, but we do not provide that information to the admissions officers where people identify. And I would add that we train them to make sure that they don't consider these characteristics that are prohibited from consideration through the SFFA decision.
You talked about immigrants and how the major universities have brought a lot of immigrants over, and they were great faculty members and researchers. What about getting foreign students today to American universities? Do you actually feel that foreign students are now afraid to apply because of visa problems, or they think they won't get in because there's going to be some discrimination against foreign students? How has the whole concern in Washington about foreign students and foreign faculty affected Harvard?
For many programs, there is a lot of hesitancy about attending college or attending graduate school in the U.S. because of uncertainty about visa status and whether that could be taken away. At the same time, this year, we've had a lot of success, and the students who were actually admitted virtually from other countries, virtually all of them have been able to attend. So it's too early to have a confident answer to your question, but we are worried. And I want to say one other thing. They aren't strictly speaking students, but postdocs. That is, the postdoctoral fellows who work in our labs. Evidence that fewer of them are applying for jobs in the U.S.
To watch more of David Rubenstein's interview with Harvard University President Alan Garber, watch The David Rubenstein Show, peer-to-peer conversations. Time now for Wall Street Journal. The Trump administration is in talks with several quantum computing companies in funding. People on Q, Rigetti, and D-Wave Quantum. Next up, the BBC bleeding with U.S. forces striking a second vessel in the Pacific, killing 3. That's a day after 2 people were killed in another strike. Defense Secretary Pete Hegseth saying both vessels were believed to be carrying drugs along known trafficking routes in international waters. The strikes are the 8th and 9th against suspected drug boats since September 2nd, but the first in the Pacific. And people familiar telling the Financial Times Andreessen Horowitz is aiming to raise about $10 billion for new investments as the Silicon Valley VC group tries to replenish coffers amid frenzied deal-making for top AI and defense tech startups. It would be Andreessen's largest fundraise to date after a $7.2 billion fundraise last April. It would also be a step up from a $9 billion raise during the tech boom in early 2022. Coming up, we're going to look ahead to tomorrow's anticipated CPI data, yay data, with JP Morgan's Priya Misra next. This is Bloomberg.
So today, has value investing been a profitable thing to do over the last 10 years or so, or has it been hard to do?
The market structure has changed, and there has been what I consider it to be a broken market, or the value investing industry, I think, is defeated, so to speak. It used to be that most money was invested by these long-only investors, these big mutual funds and stuff like that. And they had money coming in every day, and they were getting nice fees on all of that money, and they had large research teams. And they would sit around following all of the companies with teams of analysts, and they would say, this company we think is undervalued by 30%. And it might be a growth stock or a value stock, a Magnificent Seven or otherwise, but they would say, I think this is undervalued by 30%, and if I buy it and I hold it, I'll make the S&P plus 30. Now, as we've moved to passive, they've lost their customers, and the remaining customers are paying them lower fees, and they have reduced their research staffs, and they don't have new money coming in to make new investments in any case. And so most of the investing these days is no longer done by people who are buying something because they think it's worth more. They have opinions about price. Like, what is the price going to be tomorrow? And so the result is most trading that is going on right now has nothing to do with value. So it leaves us sort of as a dinosaur.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging. It's a U-turn for the Trump administration as the U.S. announces sanctions on Russia's biggest oil producers, citing a lack of commitment to peace in Ukraine. China's Vice Premier He Lifeng will meet with U.S. officials Friday for the next round of trade talks as the U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy session yesterday. It looks like markets are trying to find direction, at least equities markets today, as it's another Thursday where we don't get jobless claims, but we do get plenty of earnings, and we do have yesterday's session to digest as well. The Nasdaq 100 at one point was down 1.9% in yesterday's session, finishing that session down 1%. Let's take a look at bonds. We're still below 4% on the 10-year, but just barely. We are up about 3 basis points, as you can see. The 30-year yield, though, still at 4.57, and the 2-year 3.46. We're going to be talking about the bond universe in a moment with Priya Misra. And then take a look at oil, because that's where the action is for the most part today. Off its highs now, but Brent crude is still above $65 a barrel, and WTI above $61 a barrel as these new sanctions are imposed upon Russian producers. Will that oil get to market? Will it deter Russia in its effort to continue this war? Well, lots of questions to be asked. Now let's get to some individual movers. Over to London and Valerie Teitel.
Good morning, Bonnie. Let's start with a check on Tesla. Out with earnings after the bell yesterday. Disappointing investors. The shares are dropping 3.2%. This is on the back of a disappointing operating profit. It sank 40% year on year. A lot of this having to do with the price war going on in EVs. Tesla had to slash a lot of its prices last quarter, and that leading to some margin compression, even though they had record sales ahead of that EV tax incentive rolling off at the end of September. Now, their business model is under a lot of threat, shall we say. We both have Trump rolling back those EV tax incentives. We also have him deregulating those gas guzzlers. So Tesla declined to give guidance in the interview yesterday. Also in the share call, there was really no substantial update when it came to their plan with the robo-taxi rollout, the autonomous vehicles that investors really want to hear more updates on. So Tesla disappointing, down down 3.2%. We also had disappointing earnings from IBM. This one was more focused on their hybrid division, Red Hat, seeing a slowing in momentum in sales growth. IBM down 6.7% in the pre-market. Now, Wall Street was more focused on this Red Hat division because it's more of its AI cloud business, and it does seem to be like it is sputtering. So IBM shares disappointed after results. Lastly, let's end more on a positive note. The Wall Street Journal is saying that the U.S. Administration, the Trump administration, is looking in direct equity stakes into quantum computing stocks. So we are seeing these quantum computing names surging in the pre-market, one of them being IonQ, up some 14%. Now, Vonnie, perhaps this is a sign that the Trump administration is looking at more creative ways to boost its interest. A breakthrough in quantum computing would surely make those AI data centers more efficient.
Yeah, well, that's for sure. Those stocks had been seeing a huge run-up before the latest pause as well, Valerie. Rigetti, for example, up 136% this year, and that's before today. That's Valerie Teitel in London. Well, as investors await delayed CPI data tomorrow, the market has been consistent in pricing in a Fed cut next week. JP Morgan's Priya Misra says, quote, government bonds are doing what they're supposed to do. She writes this: we don't think CPI will be a big market mover and don't think it will deter the Fed because tariff-related inflation should be one-off. We're not seeing wage inflation and the labor market is weak. I'm pleased to say Priya joins us now. So that's all very well and good, and you know it's likely we'll see that cut next week, but none of those things that you enumerated are very good for the economy, particularly the lack of wage growth and this job market being a little weaker, Priya.
So I think what we're seeing is a structural, strong economy with the AI theme. There's also this K-shaped idea, you know, where the large companies, they're able to handle tariffs. If you have money, so if you have a job and you have assets, financial conditions are really easy. And then you've got the other side of that K, which is small businesses still dealing with tariffs, still dealing with uncertainty, immigration uncertainty, and you've got the lower income, households that are struggling. So I think that's the structural side. And then I think we're still dealing with uncertainty around tariffs. What companies have done is if they've not been able to pass on, and we'll see that tomorrow, maybe goods inflation does start to pick up, but it hasn't picked up as much as I think a lot of economists expected, is because I think people, the ability for the household sector to absorb higher prices is lower because of that wage inflation point. So I think that's why what are companies doing? They're just not hiring. They're paying for tariffs and maybe some more uncertainty by not hiring. That's the tension we're in. Do we stay in a low hire, low fire economy, or does that actually start to move in? We don't have claims, and I miss, I can't imagine Thursdays without claims. We're getting used to now looking at lots of other data points. We're not seeing the pickup in firing, so that's good. We can stay here where the structural positives keep risk assets strong, but I will highlight dispersions picking up because you've got the cyclical side as well, where the economy seems to be slowing. The labor market is slowing, there's no question.
Just on that note about AI being a structural positive, a structural foundation maybe for this economy, what convinces you? I mean, we're starting to see layoffs even there. At Meta yesterday, for example, 600 layoffs in that arena. And also, whose job is it really helping?
So I think what AI can do is raise productivity for people who are working. It is going to create new jobs. I mean, I look at every previous technological big evolution, whether it was the dot-com time, or we're now looking at like railroads. Is this going to be as impactful as the railroads were, 100 years ago? And it creates its own set of jobs. You'll have people who are AI native, those kind of jobs will start. So I think you'll see a shifting in the labor market. But I think perhaps AI is one of the reasons why college graduate unemployment rate is starting to rise. So when we take a step back and think, what does this mean for the Fed? They can look at the AI productivity gain and be happy about that. And that helps, I think, stocks particularly. But if their mandate is the labor market, if the labor market is slowing, and to your point, maybe you even have layoffs in the tech side, the Fed then can at least reduce the restrictiveness. I think that's where we are, where why should monetary policy be restrictive here? At least start to get that closer to neutral.
Priya, we're in day 23 today of the government shutdown. Now, we may not have seen all the firings that we're going to see, but certainly there have been some, and I guess we don't know because we don't have data, right? Do government firings, will they impact the labor market that much?
I think if you actually get firings, I think it does impact because the labor market is in a state of stasis. meaning it's a frozen labor market. If you lose a job, it's much harder to get a job. You can see this in surveys. You can even look at earnings, and companies are not saying that they have lots of plans to increase hiring. So I think if government layoffs start, now right now a lot of them have been stalled because of the court ruling. If that changes and you actually start to see a pickup in government layoffs, I would get really concerned. And I think owning duration, you talked about how government bonds are doing what they did. This is a big difference from April. Remember when there was no place to hide. And now, even though the 10-year is below 4%, if you start to see the labor market showing signs of firing, whether government or the private sector, I think then the 10-year has a lot of room to decline, because then the Fed's cutting into accommodative territory, not just getting to neutral.
Yeah, I mean, Ed Yardeni yesterday was talking about 375 in the 10-year, but that was predicated on oil going lower, and it doesn't seem like, at least from today's headlines, that that's going to happen. But you still see a 10-year down at that range or even lower by the end of the year?
So in a sub-trend growth environment, ex-AI, which is probably 1 to 2% type GDP, I think our 10-year forecast really for the last year and a half has been 375 to 4.25. So we can absolutely drift closer to 375 as people realize maybe I need some bonds in the portfolio. Bonds are giving you income as well as diversification. You just have to look at days like last Friday or the Friday before that. You have, we still have a lot of uncertainty around US, China, around these credit cockroaches, as we're calling it, which, can happen. I don't think it's a systemic issue, but if you have a lot of risk assets in the portfolio, I think owning bonds is what's creating that pressure for the 10-year that was getting close to 4.5 is now below that.
The incentive for going beyond that, so we have a 30-year yield today at 457.39, and if your scenario comes true, that could come down even further.
It could. I think some of it is a reduction in fears around either the deficit. Remember, just a few months ago, the concern was the deficit's out of control, there's a Sell America trade. Well, we have now tariff revenues that are helping the deficit. They're paying for the one big beautiful bill overall if tariffs stay here. So I think some tariff concerns have come down. Fed independence, big concern with Lisa Cook firing, maybe Chair Powell firing. I think we've realized that's not going to happen. The Fed and the different Fed chairs that are being talked about, all credible candidates. I think the market's a lot less concerned. That's why the long end, I would say, has had this sneaky bid. As some of all those concerns, the term premium increase, that's been coming down. So yeah, can we come down a little bit more? I think if the economy stays okay, you're probably looking at 10, 20 basis points. If we start to see further slowdown in the labor market and the Fed's cutting to below 3%, I think then that long end has a lot of room to decline. We still prefer the 5 to 10-year part of the curve, not too further out, because that is sort of a lot more duration risk. But I do think some of the concerns around the steepener and let the long end can go to the moon. No, I think fortunately a lot of that has been taken off the table.
Well, Priya, enjoy the CPI data tomorrow. It should be a major event, given that we haven't had any official data for a long time, although the actual data itself may not be too surprising. Priya Misra, thank you so much. Priya Misra of JP Morgan Asset Management there. Now to other top stories trending on the terminal this morning. China's Vice Premier Liu Hefeng plans to meet with U.S. officials in Kuala Lumpur from October 24th to 27th for the next round of trade talks. The Vice Premier, who's Beijing's top trade negotiator, held a call with Treasury Secretary Scott Bessent last week ahead of the planned in-person summit. Meantime, India's Prime Minister Modi will not be in Kuala Lumpur for the ASEAN summit, missing out on a possible meeting with President Trump. He'll now be attending virtually instead. He said he can't be there in person because India is still celebrating Diwali. The European Union adopted a new package of sanctions targeting Russia's energy infrastructure. This includes a ban on LNG imports from 2027 and a full transaction ban on Russian oil companies Rosneft and Gazpromneft. The move adds to efforts to chip away at Moscow's ability to wage its war against Ukraine. Coming up, Tesla extending post-earnings declines. We'll take a closer look with RBC's Tom Narayan next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
The point is, I just like, there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Shares of Tesla taking a hit in pre-market trading. The EV maker's profit plunged despite a record quarter for sales. Joining us now is Tom Narayan, Global Autos Analyst at RBC. Tom, thank you so much for joining. So you're keeping your price target at $500. Nothing about the quarter really spooked you in any way, would you say?
Yeah, that's fair. I mean, I think coming into this quarter, we already had the big delivery number. We already knew that was the good news. Maybe there was some bad news about how costs were a little elevated, right? They missed on the gross profit ex-credit margins. But that's really on the car business. I think what we're noticing the past couple of quarters is a decoupling from the narrative on Tesla, from a car business now to folks really looking at AI endeavors, notably robotaxi and the humanoid robotics space. So folks who are really interested in the car data are probably not going to be happy because those costs are going to only increase because they're going to spend more on AI. But those folks like myself who really view this company as an AI story, really more on robotics and on robotaxi, I think there's a better case to be made and to be looking at the stock from that perspective.
Yeah, it's fascinating, Tom. You just integrated humanoids into your Tesla valuation. This is after you visited Tesla's Giga Berlin factory. I'm so curious about that factory, especially the club downstairs. But what struck you, and how did you end up being able to, do the math on humanoids?
Yeah, it's really interesting. Prior to that event and to some, past couple of weeks, I really didn't know what to think. But we really, sharpened our pencils and did a lot of work on market sizing the robotics opportunity and actually talking to investors who are ahead of the curve, actually, even more than us, kind of telling us, what took you so long? And what we realize is this is actually a significant market opportunity. Think of all the monotonous and tedious jobs that could be replaced. And also the tech is really there. The question we do have, however, is what form factor will ultimately win out the space? China is a big player here. Will it be what Tesla wants, which is these humanoids, the same form factor for every task? Or will it be like a Rosie the robot from the Jetsons and something else for some other task? That's still an open-ended question. But the way we looked at it is, let's look at the overall market opportunity. And we think it could be like a $9 trillion market globally. And then we only assigned 5% share for Tesla. So when you look at it from that perspective, a top-down and give a conservative path for Tesla itself, it actually seems compelling.
Yeah, I talked a lot about Optimus on the call. Let's move to Ford, because you're maintaining your $11 on that for your price target. Not too optimistic on Ford's prospects.
Well, it's more about just uncertainty, but I do have to say, if you reference GM, right, that reported earlier this week, a really surprising tariff announcement last Friday from the Trump administration that extended the MSRP offset to allow for more parts to be included. And you saw that GM was able to cut their tariff amount, which really means a bigger amount for 2026. We could see that surprise positively from Ford, but we don't know about some other things. Its EV losses are significant. They had that supplier fire, which really hit the F-150 significantly, and also, of course, warranty issues. So it's really more to do with the uncertainty, but certainly if you look at Judge based on what happened with GM, it could be a pretty positive situation with Ford as well, but let's wait and find out.
But Tom, we don't fully know the impact of tariffs yet, right? We're not even sure if they're going to be upheld by a court.
Well, no, I think as it relates to the Supreme Court, that actually doesn't have to do with the auto tariffs, right? That has to do with the other sector tariffs. So I think the tariffs are here to stay. But more importantly, as it relates to the auto sector, the administration appears to be more friendly, and it seems like at least the informal deals that we have, right, the 15% level down from 25% for the EU, Japan, and Korea, that seems to be a starting point. And we could go lower, as we've evidenced from last Friday's decision. And then USMCA, right, Mexico and Canada, that gets resolved mid-year next year. That could come in at 15%, and then you could get carve-outs and credits, and maybe USMCA allows for U.S. contenting rules. So the point I'm making is the administration seems to be more friendly towards the auto industry, specifically the U.S. auto industry, making deals to lower the tariff level from that 25% level. So we actually see upside from that, as opposed to the tariffs not happening at all.
All right. Well, we will be watching Ford very closely later on today, trading currently just in the $12.43 range. That is Tom Narayan of RBC Capital Markets. Thank you so much. Another name we're watching this morning is American Airlines, earnings due before the bell, as investors will get updates on domestic demand for both leisure and corporate travel. Joining us with a look ahead is Bloomberg Managing Editor for Space, Aviation and Defense, Benedict Connell. Benedict, what do we anticipate seeing? We had Bloomberg Intelligence just recently saying that, at least in the case of United, you know, the higher demand for the premium customer is getting exhausted. Will we see that here?
So we're going to get the numbers in about 10 minutes, so we'll know more then. But the expectation is that American Airlines is trying to sort of catch up with Delta, with United on the premium side of things. They're a little behind in that regard. Over the last couple of years, Delta and United have put a lot of resources, a lot of investment into that front end of the aircraft, and that's really paying off for them. We've already gotten their numbers. Delta was out first, then United, and they've really had a strong set of numbers, both for this quarter, but also into the outlook for the rest of the year. So the question really is, can Americans sort of close that gap? Can they also win more of those customers back? That's really where the money is being made. It's made in the front of the cabin, not so much in the main cabin, so economy. So investors will be looking for any sign that they are benefiting from that trend, because really a lot of people are still upgrading their travel, both on the leisure but also on the corporate side. That is coming back. So we'll also listen for that. Is there some stronger demand on the corporate side, on the transatlantic and the transcontinental operation? Those are some of the key things that people will be looking out for.
Yeah, about 10 minutes, as you say, Benny. Those shares down 30% year to date. That is Bloomberg's Benedict Connell. And don't miss our exclusive interview with American Airlines CFO Devon May. That's at 10:30 a.m. Eastern. That's on Bloomberg Open Interest. Coming up, we'll get you set up for your trading day with more earnings on deck. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. We get earnings from American Airlines in just a few minutes, and then Intel and Ford come after the market close. Plenty of others on deck as well. Fed Vice Chair for Supervision Michelle Bowman's Senate testimony scheduled for 10 a.m. Eastern. Plus another Treasury auction today, $26 billion worth of 5-year tips. That's at 1 p.m. Eastern. Let's take a look at some movers before the bell now. As you can imagine, Tesla is moving. Profit tumbled. Their costs undermined. Record EV sales. That stock down about 3.25%. And then we have IBM down more than 7%. The results for the software unit underwhelming there. It won't really help that President Trump is now considering not allowing exports to go to China of software without a significant tariff. And then we're going to have all of the quantum stocks moving today. IonQ, just one of them, but Rigetti, D-Wave, and so on. There's a report out there that the U.S. is mulling stakes in these companies, and we all know what happens to these companies when the U.S. mulls stakes in them. Let's take a look at the macro environment on this day 23 of the government shutdown. So oil is obviously the commodity moving the most right now. We're above 61 and 65 apiece for WTI and crude. This as the U.S. imposes more sanctions on Russia. Wasn't expected. It was a bit of a U-turn. President Trump also says he doesn't want to waste his time on a second meeting with Putin if it isn't going to produce results. And this is punishment for the lack of commitment to peace in Ukraine. And then gold is stabilizing after 2 days of declines. Let's take a look at futures. We do seem to be pointed higher, very, very fractionally after a very choppy and down day yesterday. And then look at the Japanese yen, 152.61, significant weakening there for the yen, the U.S. 10-year yield below 4%. Well, that is it for Bloomberg Brief. Surveillance continues the conversation. Do stick around. This is Bloomberg.
sociedade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Corporate sector is strong. Maybe we're not in a bubble yet.
The cash flow at these big hyperscalers is still very strong.
Part of the reason why mega-cap tech can rally with such strength is that fundamentally those names are defensive.
We are seeing broad-based and underestimated strength elsewhere.
There's, I think, a wave coming that will push through for corporate America.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, the president losing patience.
Every time I speak with Vladimir, I have good conversations, and then they don't go anywhere. They just don't go anywhere.
The United States making a move to sanction Russian energy giants. As the White House considers additional restrictions on exports to China, some of this year's big market winners beginning to become undone. Gold looking for a firmer footing.
This is really a significant step from the White House, from Donald Trump, who, since his inauguration, we haven't seen him really up the ante when it comes to Russia and these sanctions. He's going after Rosneft and Lukoil. Rosneft in and of itself is 40% of Russian production, and the signal it sends, it's run by a Putin ally, Igor Sechin, Jonathan, and it is the crown jewel, really, of the Russian oil production, and fossil fuels is the heart and soul of the Russian economy. And that's why you see oil prices this morning higher.
You see the move in the commodity market, up by 5% on both Brent and WTI. I'd also say this appears to be coordinated with the Europeans. The EU making their own move.
Yep, they're out with another sanctions package at the same time. And it's not just when it comes to Russia that there's coordination. Yesterday, we heard from the Treasury Secretary, as he goes into these negotiations with China, he talked about everything is on the table, and we will also coordinate with our G7 allies.
So China, India, we've all got the same question. What does it actually mean for the purchases of Russian crude? What does it mean for the Indian refiners?
Well, long term, whether or not these sanctions work will depend upon whether or not India and China continue or are able to buy from Russia. You're hearing from some India refineries saying this is going to make the flows a lot more challenging coming from Russia. At the same time, if there's a will, there's a way. Russian crude will be able to get to India and China unless the United States really doubles down and goes for secondary sanctions.
Big move in crude this morning, at least. We'll see if this holds. We're higher by more than 5%. Broader equities doing okay, just about unchanged on the S&P 500. Coming up this hour, we'll catch up with Cameron Dawson of New Edge Wealth with earnings season in full swing. Dan Ives of Wedbush on Tesla's profit miss, and we'll speak to the former Boston Fed President Eric Rosengren, looking ahead to tomorrow's inflation print. We begin this hour with stock steady as investors await more earnings. Cameron Dawson of New Edge Wealth writing the following: Earnings continue to be the key watch item as US corporates paint a rosy and resilient picture of the US economy. Cameron joins us now for more. Cameron, good morning.
Good morning.
In many ways, the earnings more useful to gauge what this equity market's going to do than the actual economic data. Is it helpful that we don't see that anymore?
Well, we don't have any economic data to go on, which means that we have to rely on these earnings. And they're continuing to say that the U.S. consumer is very resilient, which is extraordinarily important because we do know that there's certain pockets of the consumer that continue to struggle. The challenge is that in the aggregate data, that doesn't show up because the high-income consumer really outpunches their weight when it comes to the overall aggregate data. So this is still an environment where we're seeing earnings revisions move higher, which is one of the reasons why we think that this market has continued to rally and probably draws more and more people off the sidelines as you're seeing 2026 estimates continue to get ratcheted up.
We're saying earnings season is in full swing, but earnings season doesn't really begin until next Wednesday when we get the major tech players reporting. Just how high is the bar for those names?
I think it's extraordinarily high, and maybe we're getting a little bit of an inkling of it in the reaction to earnings from some of the infrastructure players that are supporting the tech names. What I mean by that is that this CapEx cycle for AI has been so very powerful for the tech names, but you're starting to see things like GE Vernova yesterday trade negatively in response to earnings, some weakness in names like Eaton, for example, that are feeding into that AI infrastructure. So maybe at the margin, people are saying the bar has gotten very high and even beats and raises aren't enough to cause rallies in stocks.
Different industry, but I wonder whether the move in Netflix offers a signal as well. It's almost like a meet is a miss right now. If you look at their outlook, their guidance, let's strip out the Brazil noise, but just their guidance was in line with estimates on Wall Street, not enough.
I would add to the Netflix response, the response to the trade headlines a couple Fridays ago, the response to the private credit woes for a day. When you see these outside moves in response to a little bit of data, and maybe not something cataclysmic, it suggests that people are very, very tightly wound in a bullish positioning. If we look at things like options data, it all suggests that there's a lot of, at least on the retail side of things, people being very all in. You've seen leverage in things like FINRA margin loan balances increase over the last 6 months at the fastest pace since 2020. So there's a lot of high expectations and very leveraged upside positioning that's in this market. That should be in contrast, though, to what's going on with institutions, which remain just neutral. You saw institutional positioning go from the 70th percentile to the 40th percentile last week in response to just a little bit of volatility. So institutions are still very much skitterish.
Are you now starting to see the trade war start to hit corporate America?
Yeah, I think that the trade war is hitting corporate America if you do not have the size and capability to lobby your tariffs down. I think that was the key takeaway from some of the autos is that if you're able to get your tariffs reduced, then you say tariffs aren't a problem. But if you look at the toy companies that weren't able to get tariffs reduced, it's certainly a problem.
Mattel, but also Tesla last night, talking about the tariff impacts are going to exceed $400 million. What does this foreshadow for 2026, given the fact that the United States still is in this dance with the second biggest economy when it comes to China?
I think that it would behoove investors not to completely write tariffs off as a risk. Just because you haven't seen the tariff impacts yet in data, I think that there was this assumption that you would see it happen immediately, almost like you saw the immediate impact from the COVID shutdown to earnings. But the reality is that companies had an ability to either pull forward in inventory or be able to do things with accounting so it didn't hit earnings immediately, as well as delay things like price increases to customers. That's the big question for us, mostly on consumer-facing companies. If you see price increases, are customers able to take it? We think that it will be a lot more like they'll say, we're not going to take it, we won't take price increases, and thus you'll see volumes decline in areas where they're trying to push price.
Do you think this is a story for this quarter, the current quarter, or a story for next year?
It probably will bleed into the fourth quarter. And I think that the holiday season will be really fascinating as what companies do around inventories if you start to see prices start to increase. And we're hearing it from companies. We heard it from Walmart last quarter where effectively they said, hey, price increases were coming. We were hoping that tariffs wouldn't stick, but now this is the way the world is, and so we're going to be raising prices.
The market has become comfortable with the status quo, the new status quo, which just means a rolling truce with China. The one observation I would make at the moment, Anne-Marie, is that rolling truce is becoming somewhat more difficult. It's become harder to get that additional extension.
It is becoming harder, especially the United States is now waving around a potential tactic to combat what China's doing with rare earths, that they might actually curb some software coming from the United States. Everything is on the table, the Treasury Secretary said, as they go into these meetings. And we might get maybe a rolling truce to the end of the year, but 2026 many people think that that's when actually this trade war really heats up between Beijing and Washington.
So next week we've got the earnings, we've got the talks with China, we've also got a Fed decision next Wednesday, and it just seems to me that the Federal Reserve and the leadership there, particularly Chairman Powell, has essentially set up this market to ignore inflation tomorrow morning and ignore any tariff pass-through for the remainder of the year.
Yeah, I think that the Fed is going to cut almost regardless of what inflation print that we get tomorrow, simply because they'll be able to do some kind of gymnastics to explain it away. I think the only thing that could be a challenge is if you start to see the non-tariff related inflation, that super core services ex shelter, start to kick up. And we did see that last month, and that could suggest that maybe there's more of inflationary impulse. But we think at the end of the day, the new Fed, the Fed that comes in next year, is going to cut to 3% no matter what. And they're going to ignore the inflation line of things. They'll focus on employment. And if employment is weaker, it will give them room to move very fast to get to 3% or even lower, suggesting that they would say we want to go even below neutral if you see employment weakness.
So no matter what, now the what is important for financial markets. If they're going to cut to 3, even with inflation, CPI closer to 3 than it is to 2, you've got a bond market that's rallying into that. Yeah. Can you explain to me why long-end yields are lower this time compared to what happened last year, the same time around?
Well, I think a very important point. Last year, when we were seeing interest rate cuts, you had economic surprises shifting extraordinarily higher. So you had this rally in economic data, or move higher in economic data, which caused long-end yields to move higher. Now we don't have any economic data, so you're seeing this divergence with economic surprises and the 10-year yield. Maybe there is some pricing out of an expectation of the start of QE. Isn't that interesting that they're talking about ending QT, but maybe the Fed, in its captured state, potentially in 2026, will start to pursue QE? I think the biggest question we have is the 10-year telling us something about the growth outlook that we should be concerned with? Is it telling us that equity and credit are being way too complacent, given what 10-year is potentially reflecting? It could be the fact that people can't hedge with other things anymore. Gold has gone up too much, it's too volatile, and so you're looking for an outlet somewhere. But that is the one thing that makes us raise an eyebrow, is if everything's so awesome, why is the 10-year below 4%?
Cam, it's good to see you. Thanks for dropping by. Cameron Dawson there of New Edge Wealth. Bond yields are higher today. That tells you more about the move in crude. Crude higher by more than 5% so far. 10-year bond yields up by 4 basis points, just short of 4%.
This is a real move when it comes to these sanctions. They're going after the 2 biggest oil producers in Russia, Rosneft being really the most important, the crown jewel. And this is a significant step in terms of escalation on trying to bring Putin to the table that we've seen from this administration.
That's the latest on the market move. If you're just joining us, welcome to the program. Let's get you an update on stories worldwide with your Bloomberg Brief. It's Vonnie Quinn. Hey, Vonnie.
Hey, John. Good morning. As you've been saying, the U.S. has imposed sanctions on Russia's biggest oil producers as peace talks over the war in Ukraine have stalled. The sanctions signifying a shift in policy for President Donald Trump, who'd previously held off on major sanctions. The move was welcomed by Ukraine, but its impact on President Vladimir Putin's strategy for conducting the war remains unclear. The Trump administration is considering export restrictions against China, centering on a range of critical software. Treasury Secretary Scott Bessent said that, quote, everything is on the table, and that any export controls would likely be in coordination with G7 allies. President Trump told reporters he expects to have a long meeting with China President Xi next week. IBM reporting disappointing revenue in key software categories, including its Red Hat unit, and that's sparking concerns among investors. Third quarter sales in the hybrid cloud unit that includes Red Hat increased 14%, but that was a slowdown from the previous period and below analysts' average estimate for 16%. Transaction processing software was down 1%. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the program, pushing Russia to the negotiating table.
President Putin has not come to the table in an honest and forthright manner, as we'd hoped. We are going to be announcing a substantial increase in Russia's sanctions.
Up next, the former NEC Deputy Director Everett Eisenstadt, live from New York City this morning. Good morning.
politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Check out crude, up by more than 5% on Brent, likewise on WTI. A rally this morning off the back of increased sanctions from the United States and a seemingly coordinated effort with the Europeans to clamp down on the use of Russian energy. With that move in crude, you see this move in the bond market. Yields higher across the board on 2s, 10s, 30s, higher at the long end by 4 basis points, 10s at 398.94. Equities just about unchanged on the S&P 500. We're going absolutely nowhere. Firmer on the Nasdaq, higher on the Russell. The Russell 2000 up by 0.55%. Under surveillance this morning, pushing Russia back to the negotiating table.
President Putin has not come to the table in an honest and forthright manner, as we'd hoped. We are going to be announcing a substantial increase in Russia's sanctions. I'm not going to give you the exact sanctions, but I can tell you that this will be one of the largest sanctions that we have done against the Russian Federation.
So here's the latest this morning. The Trump administration announcing fresh sanctions against Russia's biggest oil producers. The move, the latest effort to pressure Russian President Vladimir Putin to negotiate a peace deal with Ukraine. Joining us now from Washington is Bloomberg's Tyler Kendall. Tyler, the president losing patience.
Right, exactly, John. This is considered to be a substantial escalation, but also marks a change in course for President Trump, as this is the first direct U.S. action against Russia so far this term. Now, according to our own estimates here at Bloomberg, these blacklisted companies, one privately held, the other state-controlled, account for nearly half of all of Russia's total crude oil exports. We're going to have to see whether or not any real changes materialize, because it does, of course, take time for these sanctions to kick in, but we are getting some indications. Take, for example, how people familiar with the matter tell us that refiners in India are preparing for oil supplies in that country to drop to near zero. And President Trump himself says that he will use this as a way to bring up the issue with Chinese President Xi Jinping when they meet next week in South Korea. Of course, Beijing has so far evaded so-called secondary tariffs being implemented by the U.S. over this. Now, the broader backdrop here is that this move comes at a time when Russia's seaborne crude shipments have actually reached a post-invasion high. So we're going to have to see if this changes the calculus for the Kremlin going forward. In fact, that's one of the reasons why President Trump himself says that he waited to impose these, because he wasn't sure it was going to have an impact. But it is very clear that frustration over stalled talks is mounting at this White House. And it's also clear that the White House has been talking to its allies on this. John, very quickly, this comes in tandem with two things. One, the NATO Secretary General Mark Rutte at the White House yesterday, and two, the EU passing its 19th package of measures this morning. That, of course, includes this planned ban on all Russian LNG products into the bloc by early next year.
Tyler, a few days ago, we had Senate Majority Leader John Thune saying the sanctions package on Russia that was moving through Congress was on hold to see if the president was fruitful in his discussions with a meeting with President Putin. Is that now back on the table?
It does seem viable, Anne-Marie, and we actually saw the Senate Foreign Relations Committee advance 3 pieces of legislation that would ultimately ramp up these economic penalties against Russia. So we're going to have to see how it evolves, but it is very clear that this was a move applauded by both sides of the aisle. We had everybody from Senator Elizabeth Warren to Senator Lindsey Graham, perhaps 2 unlikely allies, coming out and saying that the White House did make the right decision in this action.
Hey, Tyler, thank you. Thanks for the update. Tyler Kendall down in Washington. If you are just joining the program, this has been a key feature of the disinflationary story for the year so far for many of you I know. Energy prices, particularly crude prices. This morning, bouncing back by more than 5%, 66 on Brent, just short of 62 on WTI. Following the sanctions, some big moves. The president planning to discuss China's purchases of Russian crude with the Chinese leader during talks next week. The former National Economic Council Deputy Director, Everett Eisenstadt, joins us now for more. Everett, welcome to the program. We have to start with these additional sanctions on Russian energy and what you think the response will be on the Chinese side when they sit down for negotiations with the president over the next week.
It's a very big development. As you just reported, the president has not been eager to impose those sanctions on Russia. It's the first time he's done it in this term. He's not a fan of sanctions. He much prefers tariffs. So he tries, it seems like he's raising the stakes as he's going to go over to Asia to try to get an outcome that he wants. And of course, if he meets, and he's planning to meet with President Xi, I do think that China's support for Russia in the Ukraine war is going to be a major topic of conversation.
Everett, how do these meetings go? How does the president come in with all of these asks? We're talking about fentanyl, we're talking about rare earths, we're talking about now Russian oil. At what point does the Chinese say, this is too many asks, we feel like we have the leverage, you're only getting one of the 5?
I don't think it's going to work that way. There's a lot of things they would like to see from us as well. And of course they do, China wants to be a responsible actor. There's many things they'd like for us to do on export controls and obviously the tariffs themselves. So I don't think the number of issues on the table is necessarily going to dictate, a lesser outcome. In some ways, when there's more to talk about, when you have a broader range of issues, it's sometimes easier to find a package that's going to work for both parties. I think it's going to take some time. I don't think one single meeting with President Xi is enough to move the relationship to a brand new place. But it is an opportunity to level set and kind of stabilize the relationship, which would be very welcome right now.
Did you see any appetite on the Chinese side to wind down some of their crude purchases from Russia?
I would be surprised. I think, they do need the energy. So, yeah, I would be surprised to see them do that.
Trump is also... Well, he's also weighing export restrictions against China specifically. The Treasury Secretary said yesterday everything is on the table. Do you think that is real, tangible policy, or is this just a negotiating tactic ahead of the meeting?
No, I think it's real tangible policy. I mean, what the Chinese government did recently on putting export controls on rare earths was an unprecedented move and seen as very, very aggressive by the U.S. and many others around the world. So the Chinese have shown, okay, we can put export controls on rare earths. We can control and create some choke points for manufacturing and for your economy. And the United States is basically sending a signal that says, okay, well, we can do that too. And we can continue to play this game, or we can find a way to get back to a more stabilized trading relationship. So I think they're very real.
When it comes to the rare earths, and Jonathan has been asking this question since it happened, since many people viewed it as aggressive, did China make a mistake? Because they're forcing Trump to really up the pressure going into the South Korea meeting.
They didn't. It depends on what their goals were. I think that it was an unnecessary error right before the meeting that seemed to be going towards a good direction. But again, I think the Chinese really wanted to demonstrate that they had this leverage. It has, for lack of a better word, spooked a lot of intelligence officers that knew that this was a big problem. But yeah, this is a very significant move. I think they really wanted to show that they had the ability to fight back and that they were willing to do so. Now, one of the key questions will be, how are these implemented? What kind of an accommodation can they come to putting these into effect? How that's done is going to be very important, but it's not going to be easy to put the genie back in the bottle on this one. Those export controls are going to be around for a long time.
Everett, the US side were wide awake to all of this happening. You and I, we've all discussed it a million times. It was the Europeans that appeared to be asleep to some of the issues developing in China. And the reason some people believe it was a mistake, maybe a strategic error, is because it has the potential to unite the Europeans with the United States at a time when the Europeans have spent a lot of time sitting on the fence. Everett, are the Europeans closer with the US now going into this round of negotiations?
I think so. They are. We've seen some moves by the European Union to mirror some of the tariff regimes that the United States has put in place, particularly on steel. They do recognize that China is a massive manufacturer and that much of it being subsidized. So the overcapacity is hitting their markets and hurting their industrial base. They know that. And now that China has said, well, we have a worldwide regime where we're going to select what products go to whom, that's another spook, I guess, for the European Union, and it does bring them closer to where the United States is. So in that sense, it could have been a strategic error, yes.
Everett, just one final question just on the Europeans. So the EU also made a move overnight alongside the US side, banning LNG imports from 2027 and bringing that forward by about a year. I just got a question from a terminal subscriber asking whether Russia would respond by cutting off natural gas to Europe as we head into the winter. Everett, the Russians are watching this happen. They can see it on the horizon. Why would they make it easy?
Yeah, it's certainly possible. They've done it before. They know it's a pain point. They know it goes directly to the citizens of Europe, and they may also want to show that, well, we can play hardball too and take those actions. Certainly possible.
Everett, appreciate your time, as always. Everett Eisenstadt there, the former NEC Deputy Director. That has to be something that's on everybody's radar going into year-end.
Yeah, and which is why in the past what we saw Europe do is try to stockpile in the summer months to prepare for the winter because they don't want Vladimir Putin, who is an individual never lets a crisis go to waste, to close the taps. The issue, of course, now is Russia needs to send all the supplies they have out to get the revenues because that is how he continues to fund this war.
Coming up on the program, we'll continue the conversation. We need to get you some earnings. Tesla, Dan Ives of Wedbush, still bullish on the name. The stock is down and down hard in the pre-market off the back of really, really good sales, but not so good profits. Expenses absolutely surging. We'll get to that story in just a moment. Plus, Yahara is going to join us with your morning movers. Quantum stocks rising as investors make some big bets on the next big government stake. Look at this move in the pre-market. We've been talking about this repeatedly.
Yep.
People are just waiting for the next big investment.
If it's a national security concern, a technology concern for the United States, and they think China might have an advantage, watch out. Your next big investor is the U.S. government.
The broader market, equity futures doing okay. We're just about unchanged on the S&P 500. Live from New York City this morning. Good morning to you all. You're watching Bloomberg TV.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Waking up to this mood on crude. Looking at crude higher by 5% on Brent and WTI. Brent and WTI higher off the back of additional sanctions on Russian energy from the US, but also something else to consider. The EU making their own move, bringing forward restrictions on Russian LNG. The unintended consequences of all of this are something we've all got to pay attention to in the coming weeks and months.
Right, and that unintended consequence is what this viewer was talking to you, Jonathan, about, is the fact that Russia then, maybe Putin decides to cut off the taps in the dead of winter to the Europeans, which is why throughout this war, what we've seen the Europeans do over the summer is to build up their reserves when it comes to natural gas. But we need to take a moment and be reminded of how big of a move this is from this administration. Halima Croft at RBC note overnight was dropping the hammer. The U.S. is shuttering the Russia war ATM.
That move in crude flowing into the bond market, so to speak. Yields are higher across the curve, particularly on 10s and 30s, up by 4 to 5 basis points here, up 4 on 10s, up close to 5 on 30s. In the equity market, things are pretty calm following yesterday's losses. Equity futures positive by not even 0.1%. Let's get you some single names, some morning movers. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. We are seeing quantum computing stocks surging on a report by the Wall Street Journal that the Trump administration is looking to take equity stakes in firms like IonQ, Rigetti Computing, and D-Wave in exchange for federal funding. It follows similar deals with the likes of Intel and MP Materials as Washington looks to back a sector key for things like drug discovery and unlocking other efficiencies in the economy. And we move on to IBM. Those shares also are falling 6.6% in the pre-market after growth in its hybrid cloud unit came in lighter than expected. Investors had been counting on that unit to drive the story, but clearly we are seeing its software business decelerating even as its AI book of business continues to show solid growth. And Tesla's record EV sales were not enough to stop the stock from sliding. Shares are down 3.25%. That's because profit plunged as costs surged 50% in the last quarter. The other issue, executives offered little to no guidance about this quarter and beyond. And in true Musk fashion, he ended the call with fireworks, defending his $1 trillion pay package and blasting those who have pushed back. John?
Why not? Yahara, thank you. That stock is down by more than 3% in the pre-market. And a radar this morning, oil prices surging. The Trump administration hitting Russia's 2 largest crude producers with fresh sanctions, marking the latest effort to pressure Vladimir Putin to end the war in Ukraine. Elsewhere, the administration weighing export restrictions, which could block China from buying a wide range of U.S. software. The Treasury Secretary Scott Bessent confirming everything is on the table, saying controls would likely be coordinated with G7 allies. And finally, the Trump administration mulling new equity stakes in public companies. According to the Wall Street Journal, the White House is discussing investments in several quantum computing firms in exchange for federal funding. And look at the moves so far this morning.
Another intervention from this White House on an industry that they think is going to be critical. Another industry that they'll probably put in the national security bucket where they are fighting head to head with China. So first it's chips, then it's raw materials, and now it's going to be quantum computing.
That's the one to watch so far this morning. Another name, of course, is Tesla. Yahara mentioned it, profit falling, rising costs undermining a record quarter for vehicle sales. The company reporting adjusted earnings down 31% from a year ago. Bloomberg's Craig Trudell joins us now for more. Craig, sales are great. What on earth happened with expenses?
Yeah, there was a lot of sort of puts and takes here. I think a combination of the fact that this company continues to be just increasingly reliant on just the Model 3 and the Model Y. So there was, some hope that the Cybertruck, of course, would be a driver for this company. It has only been on sale for coming up on a couple years now. And yet it has been a huge disappointment. So you've had mix issues. You also have, as mentioned, costs. Those include tariffs. And this is also a company that during the quarter, really sort of pulled back from some major initiatives like the Dojo project that our colleague Ed Ludlow scooped was being unwound. That cost the company a couple $100 million. So all of that combined with, I should also mention, regulatory credit revenue. That is, a business of money that just flows straight from other car makers' bank accounts right to Tesla's bottom line. That was down dramatically from a year ago, and it's going to be an ongoing issue now that the Trump administration has undermined emissions and fuel economy regulations in the U.S.
So, Craig, we've had this report even with really decent sales, and there was always a question about what would happen in the current quarter and the next quarter, given there was obvious pull forward here. What's the payback going to look like in the coming months?
I think that's one of the things that's a real sort of concern coming out of this call is that, 3 months ago, you had Musk sort of taking that on head on. He didn't, of course, have much of anything reassuring to say, but he at least, kind of acknowledged and spoke to the idea that, we may have a rough few quarters to come after incentives in the U.S. go away. There was so little discussion of that on the call and so little sort of, reassurance of the idea that Tesla's going to be able to sort of, muddle through this period of transition of pullback on the part of the federal government supporting EV sales. And so the investors are sort of flying blind on that and also not getting a whole lot of particulars around, okay, how are we going to sort of commercialize some of these other projects that you have in the works, such as the humanoid robots that Musk spent a lot of the call talking about in sort of, just more of a general sense.
And finished on his pay as well. We'll get to that in just a moment. Craig, thank you, sir. Craig Trudell over in London with the latest. Dan Ives of Wedbush maintaining an outperform rating on the stock with a $600 price target, saying we continue to believe Tesla could reach a $2 trillion market cap in early 26 in a bull case scenario and $3 trillion by the end of 26 as the golden AI chapter takes hold at Tesla. Dan Ives joins us now for more. Dan, how relevant is the car making business at Tesla to this stock, and how relevant should it be?
Look, I mean, it's foundational relative to, obviously what they're doing in the quarter and of course, generating cash in the business. But the reality is the future is around AI. It's around autonomous. It's around robotics. I think it's the most important chapter in the history for Musk and Tesla. That's why Musk, now wartime CEO, and obviously a new pay package. And I think that's what investors are focused on. Any sell-off here, look, we view autonomous alone is worth $1 trillion of the story. This will, one with NVIDIA, be two of the best, what I view physical AI plays in the market.
Dan, I think a lot of people might agree with you that autonomous could be worth $1 trillion to someone. It's about whether it is for Tesla. What can you point to that demonstrates success? What are the metrics you're following that justify a valuation that this company currently carries?
Yeah, first off, I mean, robotaxi, we've seen it in Austin ourselves. I think that you'll have 8 to 10 cities by the end of the year, and we ultimately believe 30 cities in the first half. Then you ultimately look at what's happening there, the geofence area, the safety driver getting removed. It's my view this is all heading toward level 4, right, in terms of when you think about autonomous. And what that means is no company in the world, BYD, pick any name out there, will have the scale and scope to compete with Musk and Tesla when it comes to autonomous and cyber cabs. That's the future. And then Optimus, I believe is going to be, a key part of this story. That's how you're going to get to $3 trillion market cap next 12 to 18 months.
But scale and competition, isn't this space, Dan, already looking very crowded?
Look, I'd say, crowded in terms of Waymo being first mover advantage, but they're in 5 cities, relative to from a scale perspective. I think Tesla's going to own 80% of the autonomous market. And that's why, from an investor perspective, look, if you hate Tesla, you continue to hate it today. I get it. But the reality is that this is a golden age for Tesla looking ahead, from autonomous to robotics. And that's why you talk about November 6th, what's going to be the Musk pay package, and then they're going to own, obviously, a big piece of XAI. This is now the AI transformation happening at Tesla. Cars, obviously, are important, but that just sets the stage for what I think what's going to be a historical move.
Well, let's talk about the pay package. Elon Musk had some very colorful language yesterday on the call when it comes to the proxy advisors for some of these institutional investors. What does he need to achieve in order to get that headline $1 trillion pay package?
Yeah, and look, and go back to the first pay package, the one that's right now caught up in Delaware. He did everything and more. And it just comes down to I agree in the fact that the biggest asset for Tesla is Musk. Musk is Tesla, Tesla is Musk. Look, obviously some of those are very ambitious in terms of, where they're ultimately going to hit in terms of the targets. But I think mid to high targets are hittable. And that's why incentivize him, make him wartime CEO. That's what he's doing. That's where his laser focus, versus maybe some of the, dark days when he was with Trump administration, obviously some of the brand damage. And I just think betting against Musk has been the wrong move again and again. And I think that's why shareholders overwhelmingly will approve this.
Dan, let's just stay on the pay package. What's the opposition to the pay package? What's your understanding of what it is? Beside the fact that it's absurdly large, that kind of doesn't matter. What's the opposition to it? What don't people like about it?
Look, obviously it's just, the view from an excess perspective, the actual numbers, why do they actually have to do this? But I think to some extent it's investors that don't understand the Tesla story. And I think any of the core believers, any of the core followers understand that the future of Tesla lies in Musk being CEO. And I think from a pay package perspective, given the targets, set high bars. That's where you want Musk to, you don't want to set low bars. And I think I think the board stepped up, Robin stepped up. This is the right pay package at the right time for what's going to be what I view as a golden chapter for Tesla.
And if he achieves them, shareholders are going to get a whole lot richer.
Oh, a whole lot richer. Also, it only comes if he delivers a CEO succession plan. So it gets Elon Musk to really start thinking about what does Tesla look like. Dan is here talking about Tesla is Musk and Musk is Tesla. What does it look like if he is no longer the executive? And he has to articulate that.
Dan, it's good to see you. As always, Dan Ives there of Wedbush. Great quote in our write-up. You referenced it when you walked into the studio this morning. The market's realizing Tesla trades like an AI platform, but reports like a car maker.
Because the market's looking at the future and what Dan is looking at. And he says the core followers sometimes sound a little bit like a cult. These Musk bros that are looking at what he could potentially do when it comes to autonomous, when it comes to AI, and also his hand in everything else that's going on, XAI, robots, etc. That's where the market is. But when they get on the earnings call and they start talking about how difficult and expensive it is to make a car, especially with tariffs, especially the need for rare earths, then you start to realize, oh, actually, ton of operating expenses are going into this company. We are not yet into that future world.
This is always the tension around this name over at Tesla. The short-term struggle, the realities of where we are right now, and the long-term hopes and dreams. And the long-term hopes and dreams are what support this name. We're down by a little more than 3% in a pre-market. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. President Trump has denied a report by the Wall Street Journal that the U.S. lifted a key restriction on Ukraine's use of some Western-supplied long-range missiles. Trump, writing on Truth Social, the Wall Street Journal story on the USA's approval of Ukraine being allowed to use long-range missiles deep into Russia is fake news. Citigroup is betting big on CEO Jane Fraser, giving her the additional title of board chair, as well as a multi-million-dollar retention bonus valued at $25 million in restricted stock, plus over $1 million stock options. The awards are structured to keep her leading the firm's major restructuring push for at least 5 more years. Fueled by soaring stocks and a return to deal-making, the annual Wall Street bonus pool is expected to shatter all previous records. According to New York State Comptroller Thomas DiNapoli, profits for major firms hit $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. And that's your Bloomberg Brief. John.
Comptroller DiNapoli joining us in about 60 minutes from now. Vonnie, thank you. Up next on the programme, staying above target.
This coming CPI report is likely to be one of the better ones. We don't really see inflation momentum moving back down to 2% in a clear and compelling way. Here, inflation still seems to be coming in with prints that are well above the 2% target.
Up next, we'll catch up with the former Boston Fed President Eric Rosengren, live from New York City this morning. You're watching Bloomberg TV.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of the meatballs,
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We're actually running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
More earnings coming up. It starts with American Airlines in about 15 minutes from now. They report before the market open. After the close, we'll hear from Intel. We'll hear from Ford. Intel just gets way more interesting. I'll be very transparent. When Intel reports, typically, I'm not going to pay much attention to that. I understand if you're a shareholder why you would. These days, though, I think everybody's paying attention to that story.
Oh, absolutely. A CEO that the President of the United States wanted to oust and said that Intel should get rid of, and then all of a sudden a turnaround where the United States was investing an equity stake in that company. And then you started to see other companies say, maybe we should start doing more business with Intel because the United States government took a liking and a backing of the company. It's going to be so interesting to hear what he has to say.
That's a name to watch a little bit later on this afternoon. In the equity market right now this morning, just about unchanged on the S&P 500. Some outperformance on small caps, the Russell 2000 up by 0.4. Much more interesting moves developing in both the bond market and the commodity market, and they speak to one another. In the bond market right now, yields are up by 4 to 5 basis points at the long end of the curve, up 4 on 10s, up close to 5 on 30s. Off the back of this move in the commodity market, Brent and WTI higher this morning by more than 5% off the back of more action from the United States.
And this is significant, bold action. The United States is sanctioning, putting on a blacklist, Rosneft and Lukoil, the two biggest when it comes to Russia. Rosneft alone, Jonathan, is 40% of Russian oil production. It is the crown jewel of the commodity space in Russia. And it's at a time, which is why you see the market react, at a time when everyone was talking about excess glut of oil in the market right now. And what do we have? Potentially Russian barrels might find it a little bit harder to get to India and China.
Could have some consequences for the inflation story as well. Let's talk about that. Under surveillance this morning, staying above target.
This coming CPI report is likely to be one of the better ones. I think we should be very careful about cutting into higher inflation. We don't really see inflation momentum moving back down to 2% in a clear and compelling way. And that's actually a stark contrast from a year ago, and it's a contrast to, say, pre-COVID. Here, inflation still seems to be coming in with prints that are well above the 2% target.
So here's the latest this morning. All eyes on tomorrow's CPI print, the first major data release in weeks, expected to show inflationary pressures mounting on the economy. The former Boston Fed President Eric Rosengren has seen it all. He joins us now for more. Eric, welcome back to the program, sir. What are you anticipating to see? What do you expect to see tomorrow morning at 8:30 Eastern Time?
Expecting to see that both the CPI and the core CPI are at 3.1%. So for the overall CPI, it was at 2.9% before. That's a bit of an increase. It partly reflects some of the pressures coming from tariffs continuing to flow through. So goods like apparel, furniture, sporting goods. But it's also that we're seeing food prices go up in a variety of areas. And I think that indicates that we're not getting much progress on inflation, that this report actually is going to be a continuation of numbers that are at 3% or higher rather than moving down towards 2%. So that is a challenge for the Fed as it tries to weigh how much emphasis to put on inflation and how much emphasis to put on what's happening in the labor market.
Well, Eric, let's stay on that theme. Are they sources of inflation that this Federal Reserve can ignore?
I don't think it should ignore. The labor market, while it has been softer, is still fairly close to the Fed's estimate of full employment. And in some of the areas, both in food prices, we've seen cost of electricity going up. Some of those trends, I think, are something we have to keep an eye on. And while there have been some negative pressures, for example, shelters come in a little bit better, natural gas is likely to come in a little bit better. I think the overall package, I mean, we've been above the 2% inflation target for over 4 years. So at some point, the Fed has to start seeing some improvement in inflation. So I would not be somebody who would view this as because it's partly coming from tariffs that it should be ignored.
Eric, is a lot of this inflation policy induced?
Well, I think it is partly policy induced. It's certainly fiscal policy induced. So tariffs definitely have an impact on what the reported prices are going to be. I would also say that the immigration policy is a policy that probably means that some of the food prices have gone up as labor costs have gone up for people that are trying to harvest crops, and fruits and vegetables have been an area in particular where we've seen rising prices. In terms of monetary policy, I think the question is how much of the pressures that we're seeing have been accommodated. So the Fed thinks it's restrictive, but if you think that the economy is more productive and that AI may contribute to that productivity, then it's a little unclear that we should be going back to the same interest rate that we were at prior to the pandemic. So the summary of economic projections that the Fed puts out is assuming that we'll see something, Fed funds rate in the long run closer to 3%. So that would indicate a lot more room. But the fact that we've seen so little progress on inflation for the last 6 months indicates that you shouldn't be so confident that you know exactly what the real interest rate ought to be.
Well, not only that, the fact of the matter is the Fed will be sitting down and they won't have the labor market report. They're just going to have this inflation report. Do you think it's a mistake if the Fed cuts interest rates next week?
I think that given the softness in labor market, I can understand a 25 basis point cut. I would highlight that while we're getting the CPI report, a lot of government workers left their jobs at the end of September, and a lot of the source data may not be available. So this CPI report probably is going to be using more estimated results than normal. It will be interesting if the report highlights that this data may not be as reliable, which means it could be noisier. And if it's noisier, it could be a surprise on the upside or the downside. But it just says, as we continue to have pressures on statistical organizations having enough people to gather the data, that this data may become noisier and harder to rely on.
Eric, forgive the snark, but how reliable was the data when we had it?
Sorry?
How reliable was the data when we had it?
I think the CPI report was a pretty good report. So, I mean, they had significant amount of surveys across the country. They have had to cut back over time on the amount of survey work that they do. They've closed some offices. So I think that over the last few years, it has deteriorated a little bit. But I think if we continue to be cutting back on statistical agencies, it'll get more unreliable as we go forward.
Eric, you're a gent. Thanks for being generous with your time this morning. We appreciate it. The former Boston Fed President, Eric Rosengren, just raising some questions about the decision to cut interest rates into hot inflation. We saw the same thing from David Seif of Nomura in that clip we played just moments ago.
So what he's nervous about is the tariff-induced, potentially a little bit more of prices higher, apparel, furniture, sporting goods. And then, of course, what have we been seeing, of course, the course of the past few months? Food inflation, food prices are going up. And the president actually gave a nod to this yesterday, talking about how cattle ranchers need to bring down the price of beef. If you look at how beef inflation has been going up, 2025, it's just been months of a steady increase. And it's making it incredibly harder for American consumers to go out there and shop with confidence when this administration promised to tackle affordability.
Electricity prices as well. That AI story is not going anywhere.
Thank you to AI. What are you going to do if you want to make a data center? You have to use electricity. The prices that individuals are seeing now, and this is why it's becoming so political. We're already seeing it in the Virginia and the New Jersey governor races. This has been an election topic. It's going to be one of the midterms for sure. Electricity prices continue to rise because of what's going on with the CapEx spending of these tech giants when it comes to AI.
Equity futures so far this Thursday morning, just about unchanged on the S&P. The second hour of Bloomberg Surveillance coming up next with David Leibovitz of JP Morgan, Sarah Bianchi of Evercore, Stefan Slavinsky of BNP Paribas, and the New York State Comptroller, Tom DiNapoli.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now
than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
We're in that moment where we see downside risks to the economy.
We're not heading quite into a recession. That growth overall is actually fine.
Nobody's really talking about recession.
A year from now, inflation will be convincingly down into the mid to low 2s.
We're not looking at huge amounts of inflation anymore. We're not panicking anymore.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. On the equity market on the S&P 500, we're just about unchanged. Similar story on the NASDAQ 100 this morning. Some outperformance on the Russell, the small caps up by 0.4. The big move in the commodity market, Brent crude, WTI, higher so far this morning by around 5%, up by 5.4 on WTI crude, just short of 62 on WTI crude, on Brent crude, 65, 75. Tighter restrictions on Russian energy.
That's right. They're going after Rosneft and Lukoil, this administration. Halima Croft of RBC calling it dropping the hammer, going after Russia's wartime ATM. This is how Putin has been able to fund this war. And a lot of people are saying, Jonathan, this is political because of what is going on between the discussions Trump is having with Putin. Trump is losing patience. That might be part of it. But also, what has this administration done the past few months? They've talked about drill, baby, drill, which has actually been challenging for U.S. oil companies because of where the price has been. But we've seen OPEC leader Saudi Arabia add more and push the cartel to add more into the market. People were talking about an excess glut. Maybe now Trump is viewing this time as when the market could absorb some of that pullback from Russia, because it's going to be harder. We're already hearing from Indian refineries. It's going to be harder for them to take in those flows.
So he's been pretty consistent on this one theme. Unhappy about India buying Russian energy. Now, the question is, what happens to that flow of Russian energy now? Does this actually work? Does this stop the Indians from buying Russian crude?
Well, an Indian refiner is already saying this can make it more challenging. But the next step, which really be dropping, let's say, instead of a hammer, a saw, would be going after secondary sanctions, going after the individuals that buy that crude in India and in China. And this story is going to become a lot more interesting when the president and his team sit down with Xi Jinping in South Korea. I know the president has gone after India for their purchases of Russian crude, but the big purchaser of Russian crude across the entire commodity space when it comes to Russia is, of course, Beijing.
That's the latest on Russia energy. and what happens with India and Beijing. This is what's happening in the pre-market right now. American Airlines positive by 2.8%. Earnings just dropping moments ago. Seeing fourth quarter adjusted EPS, a range of 45 cents to 75 cents. The estimate was 33, so that's better than expected. The third quarter passenger revenue came in at 12.47 billion. The estimate was 12.41. Also better than expected. That stock is higher by 2.8%. Lisa on the ground, catching up with the CFO a little bit later on this morning, so look out for that conversation. Better news from the airlines. We've seen it almost across the board.
Better news, and it's not just those that are sitting in the front of the plane in first and business in these premier seats. It's individuals across the entire plane. They have seen demand upkeep, which is why a lot of individuals are saying the consumer has been resistant. You can see it in the airlines. What I want to know from American Airline, though, is more political. What are they seeing in terms of delays because of what is going on with the government shutdown with the FAA, Jonathan? Because remember, that was the pressure point to end the shutdown of 2018 and 2019.
Look out for the CFO interview later on this morning with Lisa and the team. Coming up on this program, David Leibovitz of JP Morgan with investors looking for an equity rebound. Sarah Bianchi of Evercore as President Trump hits Russia's oil giants with sanctions. And we'll speak to the New York State Comptroller, Tom DiNapoli, with bank profits absolutely surging. We begin this hour with stocks edging higher. David Leibovitz of JP Morgan writing, with inflation still above target and real activity expected to improve, the nominal growth story looks good and current profit estimates for 26 seem reasonable. David joins us now for more. David, good morning.
Good morning.
The expectation story, let's just sit on that because we started the conversation last hour on it. Just how high is the bar for growth and how high is the bar for earnings?
So if we start with the growth side of things, I think that there's an expectation that real growth will be north of 3% on average during the first half of next year. The reason why I think that there's potentially some upside to that, and we'll talk about the risks to this view in just a moment, but the reason I see some upside to that is because of the duration of the government shutdown. We're now at a point where we are going to see an impact on the fourth quarter numbers, but as we've seen over time, you get that back over the following couple of months. And so I think that the risk to growth, or growth estimates in the first half, is very much to the upside because of what's going on with the shutdown today. Now, translating that into earnings, which is what matters for the market at the end of the day, not only are we expecting real growth to be north of 3% in the first half of next year, but inflation continues to be sticky. And we'll obviously get an update on that tomorrow morning, but you're talking about a nominal growth story of 5.5%. That is very supportive for revenues, and if companies are able to continue defending margins the way that they have, I think that makes 12, 14% profit estimates for next year, not that all that offsides.
So you think the first quarter of 2026, we get that growth back. Well, what if some of these employees that are supposed to be furloughed actually are made permanently fired?
So there is a risk that the labor market takes a few punches on the back of all of this. That's not our base case expectation, and I still think it's important to recognize that while the labor market has softened here, we're still talking about an unemployment rate in the low 4% range with wage growth of 4% on top of that. I mean, that's still a pretty good story, especially on the wage front when you think about it relative to where we were in the post-GFC environment. You layer on top of that what's going to go on with the big, beautiful bill, the tax refunds that people are going to start to get in February. Consumers are going to have money in their pockets, and we know the American consumer likes to spend.
So you're not worried about what you're seeing with some of the retailers, at least at the moment?
Not particularly worried about that. We've seen this in the consumer data and some of the Chase data for some time. Consumers have become more price conscious, right? They've moved away from labels. They've gone to private label. To us, that's not really all that concerning. Some of the other things we're seeing is that big ticket purchases are beginning to pick up. And furthermore, when we think about the distribution of spending, right, we know that the upper income cohort does the majority of the spending in the United States. They don't sit on a lot of cash. They borrow to fund their purchases. And if the Fed continues to cut here, that just makes credit more available and I think supports consumer spending next year.
So two-part story. You can learn something from the earnings, and then you can learn something from how the stock responds to the earnings. What are we learning about single stock performance in reaction to earnings over the past few weeks?
So I think that the bar is high, and it's interesting because we're obviously waiting on the big tech names to report.
I keep saying earnings season's not really started yet. It starts next week.
Exactly. If you think about what's been driving earnings for the past 6 quarters, it's been the mega cap tech names. Everybody's once again talking about this idea that you're going to see earnings broaden out in 2026. I'm not saying it's not going to happen, but I continue to think the engine of earnings growth is going to be in those tech names. And so the results we've seen thus far, I mean, expectations were too high. To me, the question for the market overall is what happens with these names over the next few weeks.
So next week, we're going to hear from all the major players. On Wednesday is going to be a crazy day because after the close, you hear from the likes of Meta, Microsoft, Google. Before that, in the afternoon, you hear from the Federal Reserve. What's been interesting about anticipating all of that is how little people are interested in CPI tomorrow morning and how most people just think it's inevitable they cut interest rates next week, regardless of what Friday looks like.
Exactly. And, I think that the CPI numbers tomorrow morning, I think, will be a little bit warm. But the way I'm thinking about tariffs at this point is it's like a mosquito at a barbecue. It just kind of buzzes around your head. It's a little bit annoying, but it never really does any damage. I mean, listening to what some of the retailers were saying in terms of that tariff impact showing up, some are saying, back part of this year, some are saying first half of next year. It's not going to come all at once. So inflation is going to have upward pressure on it, but it's not necessarily going to spike higher. I think the question around the Fed is a good one. And I do think the path of least resistance in the near term is for the Fed to ease. But if we get this improving demand in the beginning of 2026, we have inflation that's a little bit sticky above 2. You have a labor market that hasn't deteriorated further. I think that makes it more challenging for the Fed to deliver the magnitude of cuts that the
Tesla is
market's currently
talking
pricing.
about $400 million of tariff impact. GM is talking about $3 to $4 billion of tariff impact. Mattel is talking about the fact that they haven't been able to sell enough toys because of tariff impact. Isn't that more than just a mosquito?
So I'm not saying that the tariffs aren't there, right? It's more about the overall impact and how quickly it shows up and the magnitude of that impact showing up. So yes, you have these one-off cases, and some of the big retailers, as I mentioned, have said you're going to see tariff impacts when it comes to holiday season this year. But it's not like CPI is going to go from 2.5 to 4 overnight. And so if it's more gradual, consumers can warm up to that. I don't think you face the same problems as if it were a shock scenario.
What if we get a prolonged shutdown and we don't get labor data for the rest of the year? And I say this because what I am hearing is some people in Washington are preparing for this to go through Thanksgiving.
So, we can speculate, we can flip a coin. I don't think anybody really knows when the shutdown is going to end. What we're watching most closely are what happens with the approval ratings. I think that if those really begin to deteriorate meaningfully, that could begin to move policymakers' hands. But in the interim, we are in this data vacuum, and we're forced to look at other things. And that's why I think earnings season is proving to be so important, because it's the first real look that we've gotten at what's going on beyond the survey data, which frankly hasn't done a very good job of tracking real growth since COVID.
To that point, what evidence is there that equity market participants have been trading on payrolls anyway? And I'm really being flippant and snarky, I know that, but I said this yesterday. If I told you all the payrolls data for 2025 at the start of the year, you would have been hopelessly bearish. You would have thought the economy was falling off a cliff. You would have been short equities, and look what's happened. Still close to all-time highs.
Exactly. I think the interesting thing about the labor market, and we were debating this with a client yesterday, everybody has this notion that things in the labor market are getting bad, right? And you hear from Powell, you hear from other Fed officials, we're more worried about labor than we are about inflation. The reality is that, yes, we've seen some marginal deterioration in the labor market, but it's really just not churning. It's kind of in this steady state where if you lose your job, yes, it's become more difficult to find a new one, but we're not seeing those mass layoffs. I mean, one of the pieces of government data that we've actually been able to look at is piecing together the state level data on claims to get a sense of what firing looks like in this shutdown environment. Claims remain low. Claims do not send a nefarious message. And I think we just need to get comfortable with the fact that an unemployment rate between 4 and 4.5% is okay at the end of the day. It doesn't need to be below 4 in order for markets and economies to perform.
I will say, so long as you're not part of that statistic, because then it feels like an absolute depression.
Yes.
And that's not where we want things to go. We don't want unemployment to go much higher than where we are. But to your point, this Federal Reserve is more worried about the unemployment story, the labor market story, than they are inflation. And right now, this market's more comfortable with earnings than they are worried about the labor market. Is there any reason for that story to change into the new year?
I think in the next couple of months, I don't really see that story falling apart, because for investors right now, it does feel like we're in one of those bad news is good news environments where, okay, labor market weakness means that the Fed's going to continue to provide support. I think that the challenge or the big risk out there as we look ahead to 2026 is if the Fed does cut, say, another 100 basis points, and you see the economy begin to gain steam, what does that mean for inflation from a more organic perspective, right? Less from a tariff perspective, and does that prevent the Fed from delivering the full amount of easing that markets are looking for? I think that could be a fly in the ointment for equity investors next year.
David, it's good to see you. As always, thank you, sir. David Liverts there of JP Morgan Asset Management. Crude this morning, the one to watch, higher by 5% on Brent, 65.84, WTI 61.78. With an update on stories worldwide with your Bloomberg Brief is Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. American Airlines shares taking off after reporting a strong performance in the third quarter. Passenger revenue and available seat miles for the quarter beat estimates, while projections for the fourth quarter adjusted earnings per share jumped well above expectations. Estimates that called for a loss. In a statement, the company noted revenue growth in its premium unit continues to outperform the main cabin year over year. Tesla's profit fell in the third quarter as rising costs undermined record vehicle sales. The company reported adjusted earnings down 31% from a year ago. CEO Elon Musk touted ambitious initiatives on the earnings call, including humanoid robots and AI programs. Musk also pleaded with investors to back his $1 trillion compensation package. The three candidates in New York City's mayoral race took the debate stage last night. Former Governor Andrew Cuomo looking to erase a double-digit polling deficit to Zoran Mamdani with just 2 weeks left in the campaign.
The voters are going to have to decide in this election what candidate has the plan to save this city and what candidate can get it done.
Andrew Cuomo will spend much of tonight attacking me. He is a desperate man, lashing out because he knows that the one thing he's always cared about, power, is now slipping away from him.
Early voting in the race begins Saturday, and that is your Bloomberg Brief. John.
Vonnie, thank you. Forgive me for somewhat editorializing, but the standard of political candidates in really important races, not just in this country, but around the West right now, it's pretty sad sometimes, you know?
Well, this is why the Democrats and Republicans that want to see a more centrist Democrat be the mayor are in this problem, because you put up Andrew Cuomo, who had to leave his job as governor because of what was going on in terms of these allegations of sexual misconduct. This is not an individual that New Yorkers are excited to vote for, so they're going for the socialist Democrat. That's where we are right now.
We've got a socialist, a failed Democrat, and a Republican the Republican president won't endorse.
Because he has a lot of cats. Something about the cats really unnerves Trump. He doesn't want to see all these cats in Gracie Mansion.
It's such a great city. It just deserves so much more. Up next on the program, drawing a hard line.
There are massive sanctions, and sanctions on oil. The two biggest oil companies, among the biggest in the world, but they're Russian.
Up next on the program, Sarah Bianchi of Evercore from New York City this morning. Good morning.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Things a little bit snoozy in the equity market, just going nowhere on the S&P 500. Likewise on the Nasdaq, we're down about 1/10%. Nothing snoozy about the move in the commodity market. Gold, wild swings in the last 24 hours. Big moves for crude this morning too. Brent, WTI higher by more than 5%. Under surveillance this morning, drawing a hard line.
I think that they'll certainly have an impact. They're massive sanctions, and sanctions on oil. The two biggest oil companies, among the biggest in the world, but they're Russian. They do a lot of oil. And hopefully it'll push, hopefully he'll become reasonable, and hopefully Zelensky will be reasonable too.
So here's the latest this morning. The president imposing significant sanctions on Russia, targeting the country's major oil producers. Bloomberg's Gillian Lee joins us now for more. Gillian, welcome to the program. Will it work? Will it actually stop the flow of Russian crude to places like India, places like China?
Well, I mean, it certainly sounds big and it sounds impressive. Russia's two biggest oil companies. I think if you look into the details, it's noticeable that neither of their trading arms have been specifically targeted, have been specifically listed. So this is really going to depend on how refiners in places like India, China, and Turkey react to this. These companies aren't selling any oil to the US. They're not selling any to Europe since the invasion of Ukraine. So it's going to depend on, do refiners in India feel under threat from this? Are they worried about secondary sanctions that might hit them if they continue to buy Russian oil? The initial response that our reporters in India have been hearing is that yes, they do. So for India, at least, it's looking like there's going to be a significant drawback in the amount of Russian oil that they're buying.
If we do see that, Julian, when will we see forced production shut-ins in Russia?
Well, I think that's a big question. I mean, if India at the moment is taking somewhere in the region of about 1.5 million barrels a day of Russian crude. If they stop buying that, that's going to have to find an outlet somewhere else. The most obvious place would be China, but I think China is going to have its own concerns about sanctions, and also, even if they're not so worried about sanctions, their own concerns about becoming too dependent on supplies from Russia. So that means that oil could start to get backed out. Now, there is a grace period until the 21st of November for this trade to be wound down, so that's going to be some sort of a cutoff point. But given that it takes about a month for oil to get from Russia to India, we could start to see this happening very quickly. My suspicion is that we will continue, at least for a while, to see Russian oil put onto tankers that will move from Russian ports towards the Arabian Sea and towards the Asian markets, perhaps in the hope that things will change again before they get there. But I think if India does back away, it's going to be very difficult for Russia to find alternative buyers for as much as 1.5 million barrels a day of its crude.
Gillian, thank you. Gillian Lee of Bloomberg. In London, off the back of these moves in crude, Sarah Bianchi of Evercore ISI joins us now for more. Sarah, consequences and objectives. Let's talk about objectives first. Does this get the president, the leader of Russia, to the table?
We'll see. You know, obviously Trump has been very frustrated with his inability to, kind of make this happen and settle this down. He's obviously looking quite really anxious to make progress on this. Certainly, this is a key step. This has always been sort of one thing that folks have thought would bring Putin more to the table, but we're going to have to see how long it holds, how serious it is, how effective it is, and until we see how this plays out, I think we should withhold judgment.
Sarah, how do you think this is going to play into the trade talks the president's going to have with Xi Jinping in South Korea?
Well, it's interesting. I think that the United States and China have a lot of other issues to focus on right now. The anxiety and the escalation has been around something different, much more about rare earths and export controls and trying to keep these tariffs down. So it's a lot to really try to introduce this and to get China to take steps on this. I think if the agenda expands to this in an aggressive way, China will come back with questions about Taiwan, and I think it's not very likely that we'll see a lot of progress here.
The Trump administration is weighing export restrictions against China when it comes to critical software. I asked Everett Eisenstadt this in the last hour, and I'd love to get your take. Is this tangible policy, or is this a new leverage point that the U.S. wants to use just for a negotiating tactic?
Well, we've certainly heard that in the government, everybody's been asked to sharpen their pencils and to find different aspects of things in the export control space that would really make China anxious. So, look, I think if that's where the talks go, we're going to see China push back pretty hard on rare earths. I think they feel very aggressive and confident right now in that space with good reason. So I think if we're in a space in this talk where we are introducing new things, that's not a great sign. Perhaps it will help some with leverage, but I think we all have to watch carefully because I think China is feeling quite bullish on this, and the risk is really that we overplay our hand.
Do you think then that China has more leverage going in than the United States does?
I think both of these great economic powers both have leverage. And I think what's unique is that when the Trump administration negotiated last time with the Chinese, they didn't find that there wasn't this dynamic in the conversation. And so I think it has been a little bit of an on-the-job learning for some in the administration that China is willing to play as aggressively. So I don't know.
Well, they used rare earths back in May. Are you talking about when it was just down to agricultural purchases and Trump won?
Yeah, I'm talking about in Trump 1.0. I think one of the reasons that the Chinese came out so strong with rare earths this time is they found last spring it worked really well for them. And so I think they are, I think they were hoping to get more out of the talks than they saw coming. And I think it was pretty explicit strategy. I'm not quite sure they meant to overheat things quite so much, but I don't know, I think both sides have something the other team wants, and when you're in that situation and feeling out those relationships, there's risk for escalation.
Sarah Bianchi of Evercore ISI. Sarah, thank you. We've talked a lot about that upcoming conversation with Secretary Bessent and Ambassador Greer with their Chinese counterparts this weekend, I believe, in Malaysia. It's going to be key to set the tone for next week.
Absolutely. And to Sarah's point, it was when China introduced rare earths that you saw basically the jet fumes starting, get on the planes. We need to go have a sit down with China because they cannot hold the chokehold on rare earths exports because we can't get them anywhere else. And everyone's going to talk about their mobile phones and how they're important in a number of tech in the technology space, MacBooks, whatever. No, it's our defense sector. Every single piece of weaponry has a rare earth metal, and China has not just all of the rare earths, but the processing and the refining of them. You can't make this stuff without China.
It's the dirty refining capacity that we've just kind of outsourced, really stupidly.
Absolutely.
To China, and something the US is trying to do something about. Coming up on the program, Stefan Slavinsky of BNP Paribas Exane on his underperform rating on Meta, the only sell on that name out of all the analysts that cover it. That conversation up next.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Live from New York City, welcome to the program. Equities on the S&P 500 just about unchanged following yesterday's losses. Some stability, if you will. On the Nasdaq 100, down by about a tenth. We're positive on the Russell, small caps up by 0.4. In the bond market, you'll notice some curve steepening, led by the long end. 10s and 30s, yields higher by 4 to 5 basis points. On 10s, just short of 4%. On 30s, just below 460, 457, 67. Off the back of this move in the commodity market. Crude, Brent, WTI higher by 5% this morning.
It's the sanctions that this administration has put on Russia, blacklisting two major Russian oil companies. Rosneft, really the crown jewel when it comes to Russian oil production, and Lukoil as well. What's so interesting, too, is I don't think the market was prepared for this. This came almost out of nowhere. Trump has hinted towards this, but he's hinted towards this for months. Beginning this week, we were talking about a sit-down between President Putin and Trump in Budapest. And now, all of a sudden, Trump says that's off. And I am actually going to try to get you to the table in a different manner. No more phone calls. We are sanctioning your two biggest oil companies. How it works depends on what happens with India and Russia and China.
Why did the Biden administration stop short of doing this? Why didn't they go this far?
They had a huge inflation problem. Right now, the oil market can handle this. Everyone is talking about a glut we are seeing in the oil market. The fact that OPEC plus, Saudi Arabia, is adding more barrels to the market. During the Biden administration, they couldn't handle what potentially would be higher crude prices, which would trickle down to higher gasoline prices.
That's the key difference. WTI 61. 70s. We count you down to the opening bell about 2 hours away. Let's get you some morning movers with Yahara Anand for more. Hey, Yahara.
Hi, John. We start with American Airlines. Shares are up nearly 3% after posting a smaller than expected loss, boosted by a rebound in domestic business and leisure travel. And no surprise, American is saying premium passengers are driving that growth. But this all fits a bullish trend we've seen across the airlines, with Southwest yesterday, as well as Delta and United, all seeing domestic demand bounce back. And we move on to Hasbro. That stock also now turning negative in the pre-market, down 2.8%. This is despite the company raising its full-year outlook, saying that sales are ramping up just in time for the holidays, thanks to hits like Dungeons and Dragons. It's a sharp contrast from what we heard from Barbie maker Mattel earlier this week, missing on earnings due to tariffs. But as I said, that stock now turning negative. It was up nearly 5% earlier. And we end on Honeywell. Those shares are rising 4.3% after the company raised its full-year profit outlook, with aerospace driving the gains ahead of a planned breakup of the company. This follows a trend we've been seeing this week, with strong results from GE Aerospace and RTX, showing that commercial aerospace is firing on all cylinders. John?
Yahara, thank you. Honeywell higher by 4.3%. On our radar this morning, oil rallying after the U.S. announced sanctions on Russia's biggest producers. President Donald Trump ramping up pressure on Russian leader Vladimir Putin to negotiate an end to the war in Ukraine. Elsewhere, Tesla profits plunging as rising costs undercut a record quarter of vehicle sales. The CEO, Elon Musk, jumping on the earnings call, pleading with investors to ratify a $1 trillion pay package. And finally, Yahara mentioned it. American Airlines shares gaining after reporting a strong performance in the third quarter. Passenger revenue and available seat miles beating estimates. Southwest posting a surprise-adjusted profit in the third quarter with a boost from its new bag fee policy.
I laughed at this one because they're trying to find any way to make sure they can continuously turn a profit. So now basically it is becoming even more expensive to fly, even if you're going for one of these low-cost carriers, because you have to pay for more things like fees when you want baggage or more legroom. But when you put all of this together, what the airlines are seeing is robust demand and a turnaround from domestic demand than we saw earlier in the year.
You know my problem with the airlines, the boarding process and the chaos that's caused by trying to get everything in the overhead bins. That's what they need to address to make this experience better. It's the boarding process.
Bigger overhead bins?
I don't know if that solves it. Make it more exclusive to use the overhead bins.
Not make everyone zone one. Yeah.
Right, everyone thinks they're group one.
Yeah.
We've talked about this in the past.
It's a problem.
It's a massive issue.
Yeah.
Let's turn to tech. Wall Street anxiously watching as the Mag 7 faces a big earnings test next week. Stefan Slavinsky, he's Group 1, BNP Paribas Exans, with the only underperform rating on Wall Street for Meta. Stefan has a price target of 198 on the stock. He joins us now. Stefan, welcome to the program.
Thank you, Jonathan. Good to be here.
We've got to talk about a range of names. Don't worry, we're not just going to talk about this one. But this is an outlier. What have you and the team got this underperform rating on Meta?
Yeah, when we look at the cloud computing companies, the Mag 7, and we look at AI and monetizing AI, for the time being, most of the monetization is still happening within enterprise cloud computing. So we're seeing Microsoft obviously monetizing through Microsoft Azure and their OpenAI relationship. We're seeing Google monetizing through Google Cloud and their use of TPUs to win enterprise customers. And we think we're going to see Amazon increasingly monetizing Anthropic as their big Project Rainier comes online, their big GPU cluster for Anthropic. Obviously, for Meta, it's 98% advertising revenues. So you're much more reliant on them monetizing all of these AI investments through advertising. They've done a really good job on sort of core AI and improving their recommendation engine and ad targeting. On Gen AI, it's still a little bit unproven. So we have the ramping CapEx, 80% up year over year. We've now got ramping OpEx as they have these expensive superintelligence group hires. So we do think margins are going to come down. They are guiding for margins to come down. We worry that if growth slows, you're going to have earnings growth slow into the high single digits. So we've got more confidence in the earnings growth going forward for some of those other big players.
Baseball contract, star hires, based on some of the salaries we've seen for some of those individuals, hundreds of millions. Stefan, do you expect some of those problems to show up in the earnings report next Wednesday, or is it still too soon?
No, for Meta, last quarter they did guide already for next year's CapEx to be around $100 billion. They guided for OpEx next year to grow more than this year. So they've already kind of issued that warning, if you will, for next year. However, the top line beat expectations. So they're still growing greater than 20% on the top line on a $160 billion base. So that's definitely supporting the stock here. We could get a bit more details around the range of OpEx for next year. And again, I think the market will be fine with that as long as they keep that revenue growth above 20%.
They have these very highly paid AI intelligent individuals, these experts. At the same time, why are they then cutting? Bloomberg memo says they're cutting 600 jobs from this unit.
Yes, we have a bit of a transition going on within their AI group. The Llama models have kind of stalled. The last releases were a bit disappointing and weren't very well received. And so obviously they've had a big shift in strategy. So some of the leaders of the existing Gen AI strategy, the open source strategy, have been sidelined. And some of that team are being let go, we believe. And obviously they've been replaced by these hires that Jonathan was just mentioning, some of these very expensive AI superintelligence hires. So we're all waiting to see kind of how that plays out. It's kind of a Real Madrid Galactico strategy, if you will, about bringing in the best. There's risk, obviously, putting a team together like that. Real Madrid's won a lot of trophies, so sometimes it works, sometimes it doesn't.
All right, so what's the #1 team right now?
I think the #1 team is probably Google. You know, they had the foresight over a decade ago of going to London and buying DeepMind. They've been very consistently executing. Yes, they were late, and they let ChatGPT kind of steal the thunder, and that was a strategic mistake, you can argue. But they certainly have the most consistent team and the best execution over the past decade. Obviously, second would be OpenAI. You know, they've been executing very well. They've been keeping the main team together. And obviously, in terms of productizing their technology and their models, they're doing an excellent job, and we're seeing them every single day in the market with new announces.
Is there enough space for both OpenAI and Google to succeed?
Absolutely. I think right now, you're seeing those two companies really leading the way. You're also seeing Anthropic, especially in the enterprise, scaling. Reports are that they've gone from $1 billion of ARR to $8 billion of revenue run rate right now, heading to 20 to 29 next year. So those are the three that are really in the lead in terms of consumer AI assistance, but also enterprise adoption. And then I guess trailing, you might have a Meta and xAI with Elon Musk, where they're still kind of trying to work out their strategies.
We've often reflected on a quote that came from the Alphabet CEO last summer, that the greatest risk was underinvesting and not over-investing. There appears to be a different approach in America to this moment than there is in, say, maybe China, for different reasons, of course. And that's been a feature of our coverage as well, that China seems to be focusing on efficiency, whilst America is ramping up massive CapEx plans. Is there a optimal approach for you? Do you think one's better than the other?
I think one of the concerns for the U.S. tech sector is the cost of the build-out will be significantly more than it will be in China. So whether it's the cost of using some of the U.S. models versus using a DeepSeek, whether it's the cost of building the data center, whether it's the cost of power. And so we seem to be celebrating OpenAI making $1 trillion of commitments to build out 30 gigawatts plus of compute capacity. We're starting to see some concerns creeping into the market about a company with $15 billion of revenue able to pay those bills going forward, and the sustainability of that build out and that cost beyond this initial phase.
What about when it comes out to the build out, this concern of circular financing in the entire space?
Yeah, I mean, that is a concern, obviously, that's crept up in the last few weeks, especially with NVIDIA and AMD investing and funding some of the OpenAI's build-out. I think the bigger concern, like I just mentioned for investors, is OpenAI's ability to pay those bills. Last week, I was at the Oracle AI World event in Las Vegas. I think they made a very good case for why the $300 billion contract they have with OpenAI will be on a good margin. But the question is, of course, will OpenAI be able to pay those bills? In order to do so, Microsoft holds the keys. They need to renegotiate their contract with OpenAI. That will allow OpenAI to restructure its business, to get those SoftBank funds, maybe to raise more capital, and to continue to invest. So that's the big catalyst we see between now and the end of the year for really the whole sector, is that Microsoft OpenAI memorandum of understanding that they've announced, converting into a new contract and what that actually looks like. We think that could be positive for Microsoft. We think it could be positive for Amazon, actually, if Amazon starts to monetize its Anthropic build-out, but maybe also starts to work with OpenAI in the future.
You're usually in Europe. Is Europe in the game? Are they in the game right now?
In what sense?
Do they have a player?
They've got Mistral, obviously, in France, but obviously it's a much smaller scale than what we're seeing amongst the U.S., so the adoption that we're seeing in Europe still remains mostly for the U.S. hyperscalers, the Microsoft, the Amazons, Google to a lesser extent, and I think the U.S. models will see adopted there as well.
We could do a whole show on this, but what's gone wrong in Europe? Because they have the talent. I'm sure you meet these individuals all the time, incredibly bright people that are really dialed in. What is it about Europe that's made it difficult to generate the kind of success we've seen in places like the U.S. and increasingly in places like China?
You're right. We could do a whole show on that because this has been the case for decades. Europe has some leading innovators like a Nokia or an SAP, or even on the handset space, used to be the biggest manufacturer of handsets. But obviously, I think it's hard to escape that gravitational pull of Silicon Valley. That's still where we're seeing startup companies in Europe gravitating to re-domicile, raising capital because of the access to talent, because of the access to capital, because of that ecosystem. And obviously regulation in Europe remains a hindrance. We're seeing that right now where the EU AI Act is suffocating some of the startups. They don't get access to the most recent technologies. And again, you're seeing a lot of those startups and a lot of those professionals moving to the U.S. And then finally, I mentioned the acquisition of DeepMind by Google. So, we just saw another big investment made in autonomous driving by, I believe it was Microsoft in the U.K. So we're seeing acquisitions and investments from the big U.S. players coming into Europe and into the U.K.
Stefan, it's good to see you. Thanks for spending some time with us. Stefan Slavinsky there of BNP Paribas Exane. Let's get you an update on stories worldwide with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. The Trump administration is in talks to acquire equity stakes in several quantum computing firms in exchange for federal funding. The Wall Street Journal is reporting companies including IonQ, Rigetti Computing, and D-Wave Quantum are among those in discussions. The funding awards would total $10 million each, with other companies expected to join the talks. Canada is aiming to double its non-US exports by 2035. Canadian Prime Minister Mark Carney shared the country is, quote, re-engaging with the global giants India and China. During his campaign, Carney had pledged to make Canada less reliant on the US, saying its close ties to America have become, quote, vulnerabilities due to President Trump's tariffs. The NFL Wednesday approved the purchase of a 10% stake in the New York Giants by Julia Koch in a transaction that values the team at $10.3 billion. The deal marks the highest valuation placed on an NFL team for a team sale. In other approved deals, the New England Patriots and San Francisco 49ers both added new minority shareholders. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes. Up next on the programme, easy money.
You're going to see valuations extend further. I'm very bullish. I think the market goes to new highs before Thanksgiving. There's one simple reason for it. It's easy money.
That conversation up next with the New York State Comptroller, Tom DiNapoli from New York City. You're watching Bloomberg TV.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Equity futures on the S&P, negative by, let's call it 0.1%, a little more now. We're down by a quarter on the Nasdaq 100. On the Russell, small caps positive by 0.2%. Under surveillance this morning, easy money.
You're going to see valuations extend further. I'm very bullish. I think the market goes to new highs before Thanksgiving. There's one simple reason for it. It's easy money. All metrics are extended. It's just some are more extended than others, but it just doesn't matter when there's a ton of money coming into the markets. You got to be bullish and try to take advantage of this because you don't know how much higher than this can get.
So here's the latest this morning. The S&P 500 achieving 33 record highs this year, boosting bank profits and pushing the Wall Street bonus pool to new heights. The New York State Comptroller, Tom DiNapoli, saying, quote, while uncertainty remains around interest rates, inflation and the broader economy, Wall Street looks to have another strong year. Tom joins us now for more. Tom, welcome to the program, sir. It's good to get some time with you. Let's just talk about how big those numbers are so far this year and what kind of benefit that provides to the state of New York.
Yeah, the numbers are big, and we look at this closely. We monitor it because obviously revenue for New York State and New York City significantly is derived from what's happening on Wall Street. So we always do an annual report this time of year on the securities industry in New York City. What we find for the first half of this year, profits of $30 billion. So when you consider last year, for the total year is about $49 billion. We could be headed for a record. If the current trends continue, we could be talking about profits of $60 billion this year.
Tom, is there a risk that we take that for granted? As you know, and I'm sure you're following, we've got a mayoral race here in New York City, and at the top of the polls is a socialist. Now, Tom, it's amazing that in the beating heart of American capitalism, we could have a socialist mayor. Is that something we risk taking for granted?
Well, look, New York City, New York State is quite resilient, between what may happen in New York City and what's happening in Washington, New York City is going to stay strong. What I think is key in all of this is that New York must continue to be the global capital for finance. And what I always say to my friends and neighbors in New York, however you feel about Wall Street, good or bad, the reality is the services that we provide to the people of our city and our state significantly rely on the profits of Wall Street, the business taxes, the personal income taxes that are generated, the employment that's generated. So whatever's going on in the larger politics, we want these jobs to continue to be located in New York. There's still more jobs in securities industry in New York City than any other city in the country. We've seen, last year we saw some growth in jobs in New York. This year it looks like there might be a slight retrenchment, but this is a win for New York State, and no matter who's going to be the mayor, no matter who is the president, no matter who's the state controller, Wall Street, we want this to be the home right here in New York because we all benefit when Wall Street does well.
Wall Street does, but does a future Mayor Mamdani want it to be? Do you think he's a possible threat to the securities industry's tax revenue if these individuals want to leave New York?
Well, look, we already have an issue of taxpayer migration having nothing to do with the current mayor's race. That being said, when we look at our revenue picture, we do a monthly cash report, we call it, revenue coming into the state. We continue to have tax collections, largely because of personal income tax revenue, exceeding projections. So I know there's a lot of folks predicting gloom and doom, but so far, actually, the money, because of strong personal income tax collection, coming in higher than projected. And certainly to the extent that, again, the election's not happened yet, but if the new mayor has some ambitious goals as far as addressing affordability, more services that need to be paid for, I think whoever the mayor is going to want to see Wall Street to be profitable and strong and benefit from the taxes that will derive from that.
You also have come out with a statement about Elon Musk's latest $1 trillion pay proposal. You're saying it's excessive. But do you think Tesla would be successful without Musk? And there's a number of hurdles he needs to jump through to even look at this kind of pay package.
Well, obviously, Musk has been a very key ingredient in Tesla. I won't dispute that, but our view has been that the board oversight has not been as independent or as stringent as it should be. How many billions or trillions does one person need to make? And, my concern is that the compensation package, while it may have some broad milestones in there, there really should be more clear metrics and to really justify this very, very generous payout. I mean, how much money does one person need? And it's been very clear from my perspective that some of the other activities that Mr. Musk has been involved in over recent months has taken away from his focus on Tesla. You've seen a lot of volatility, and certainly in terms of the stock price. That's a concern to us as a shareholder. So we really would like to see more independence on the board. We're going to vote against the compensation package, going to vote against the board members who are up. I think that will make the company stronger if they would take some of our recommendations to heart.
If they take more recommendations to heart, would you vote for it?
Oh, sure. If they come around to our point of view in terms of independence and more clear metrics in terms of what kind of milestones would have to be achieved for a compensation package as generous as they're proposing, we'd certainly reconsider. But I think in terms of the dollar amount at this point. And when you would look at the concentration of stock ownership that Mr. Musk would have, would really continue to diminish any role that any other shareholders would have in say of the company. I think those are concerns. My guess is they are not going to come around to our point of view between now and November 6th when they have the meeting.
Tom, can I just press you on the number? Why is the number itself relevant? Surely if we establish the appropriate metrics and they're achieved, shareholders benefit from that. Why is the number so important?
Well, look, I think we live in a time where people are very concerned about income inequality, and despite the challenging times, I mean, coming out of COVID, still a lot of people in need. When you see the excessive compensation package, I mean, credit to Mr. Musk, he's already one of the richest men in the world. How much more rich does one person have to be? And if he is going to continue to be focused on some of these other activities that will divert from Tesla, it seems that we're not rewarding performance. Instead, we're rewarding power or personality. I don't think that's the smartest way for Tesla to be managed.
Well, I guess the way some people might counter that, Tom, is that if he doesn't pay enough attention to the company, he won't hit the metrics anyway, and he won't get the money. And isn't this about addressing that anyway? Because ultimately what you want is for him to pay more attention to the company. How do we go about doing that?
Well, I mean, I would question the metrics. I think there needs to be more specificity than we've seen thus far. And this is a board that, from my perspective, has operated more as a captive group rather than a truly independent board in terms of their oversight role. So I think it's a combination of more clear metrics in the compensation package, and I'd like to see more independence on the part of the board in terms of their oversight of the company generally. I mean, obviously, he is very key to the company, but the company will hopefully be strong enough to survive one person, right? Who knows what the future is going to bring? And I think that's where, again, appropriate compensation and strong independent board oversight, that's what is needed here.
Tom, appreciate your opinion. And thank you for giving us some time this morning, sir. Thank you. The New York State Comptroller, Tom DiNapoli there, finishing on a controversial pay package for Elon Musk over at Tesla.
Very different view than Dan Ives has. And Dan Ives' whole point is we actually want Musk to focus, which is why let's give him this carrot he can look forward to so he can hit these targets. When it comes to some of these targets, the FT had an editorial from an opinion columnist talking about why this is good. It is going to be hard to hit some of these metrics that the board wants him to hit when it comes to robo-taxis and autonomous driving.
Coming up on the program, we'll catch up with Liz Thomas of SoFi, Dana Telsey of the Telsey Advisory Group, Stephanie Roth of Wolf Research, and CJ Muse of Cantor Fitzgerald from New York City. The third hour of Bloomberg Surveillance, up next.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And So far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We have 2 crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Corporate sector is strong. Maybe we're not in a bubble yet.
The cash flow at these big hyperscalers is still very strong.
Part of the reason why mega cap tech can rally with such strength is that fundamentally those names are defensive.
We are seeing broad-based and underestimated strength elsewhere.
There's, I think, a wave coming that will push through for corporate America.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures negative by 0.2%, building on yesterday's losses. We're down by 0.3 on the Nasdaq 100. In the commodity market, what a move. Brent, WTI, higher by around 5% on both Brent and crude. WTI crude is 61.65, following tighter restrictions on Russian energy coming from both the US and the European Union. As the session progresses, more attention will be paid to the earnings after the close later on. Intel and Ford. Talked lots about Intel and the White House stake. Ford, the automakers, really struggling right now. GM's had a fantastic go of it so far this week. Tesla, not so much. Where does Ford lie?
This is going to be a huge question in terms of the tariff impact Ford is going to feel. I'm sure the Ford CEO is going to come out and thank the administration for giving them a longer run time in terms of lower tariff levels for importing auto parts. But they're still going to have some sort of impact, you could imagine. GM's was $3.5 to $4.5 billion. At the same time, the President of the United States is speaking in the Oval Office yesterday, because I was watching the T Live about the Tesla call, but listening to the President. He's talking about how tariffs have made the United States strong and rich. At the same time, the Tesla CFO was saying that tariff impact will be in excess of $400 million. It's been a struggle for these auto manufacturers.
It's real money, and we're seeing that impact on some of these companies. Getting some real moves as well in the commodity market, so let's talk about it. Of 5% on Brent, of 5% on WTI. These are the things that the Biden administration just didn't go towards. They stopped short of. And now we're seeing these sanctions on two of the biggest players in Russian energy.
Biden administration couldn't because of the domestic politics at the time and higher inflation, and that was really bruising the Biden administration. They couldn't do it. They had to keep as much Russian capacity on the global oil market. Well, right now, the global oil market could handle some pullback in Russian supplies because everyone was talking about a glut. So what Trump is doing, though, is hitting the heart. It's more of a signal as well to Putin himself. He's hitting the heart of the Russian production of oil, crude, commodities. It's the heart of their economy, and it is a close ally when you think of Igor Sechin, who runs Rosneft, the individual that in Russian media colloquially known as Darth Vader. It is a message that we are going to be serious if you do not come to the table.
The US move is getting tons of coverage. The European move, less so. And I find that interesting. Let's just sit on the European move. Bringing forward banning the imports of Russian LNG. Okay? Now, yeah, this should have been done a long time ago. I'm right there with you.
2027.
I'm right there with you. But if the Russians are looking at this play out, in an ideal world, Russia comes to the table, war's over. Most people I know is on board with that. That's great. Stop the killing. In an ideal world. But what are the unintended consequences of all of this, and could Europe be in for a tough winter?
Well, Russia, of course, knows that this chokehold they still have on the Europeans. But we should note, the Europeans have done a tremendous amount of work of finding LNG elsewhere, from Qatar, from the United States. Remember Trump won, he talked about freedom molecules when it comes to U.S. LNG. But yes, it is a good point, which is why in the past we have seen Europe in the summer really build those stockpiles, because they know that Putin could have the ability to turn it on and off like a light switch. This is their 19th sanctions package, and yet we are seeing them pull forward for the first time their dependence on Russian LNG, places like Belgium and France, to 2027, and the war is on their soil.
Oil.
That is why it is not as exciting as what the United States is doing.
Up across the board this morning off the back of that US move, both Brent and WTI higher by almost 5%. Futures right now rolling over just a touch. We're down by about 0.2%. Coming up this hour, Liz Thomas of SoFi as the stock rally remains on pause. Dana Telsey of Telsey Advisory Group with retailers bracing for the tariff impact of holiday shopping, and Stephanie Roth of Wolf Research as we count you down to the CPI data tomorrow. We begin this hour with stocks holding steady as Wall Street awaits the next round of earnings. Liz Thomas of SoFi writes the following: the rally could go further, but not without intermittent breakdowns in beta. I don't expect this to be the beginning of a broader rotation out of equities. Liz joins us now for more. Liz, welcome back. Let's pick up on that constructive tone. Why should we stick with this bull market after several years and gains of more than 80%?
Well, when you think about the different components of what goes on in the economy and the markets, you've got obviously the market itself, you've got earnings growth, and then you've got the macroeconomic piece of it. We are deprived of macroeconomic data at the moment, so we have to rely on earnings results to understand if and why the market should continue to grind higher, or at least not have a big, huge breakdown right now in a rotation out. When you look at earnings, and although we don't have all the data from Q3 as of yet, so far things are going pretty well. And the expectations, yes, are high. The bar is high on those expectations. The market has tended to almost punish stocks even if they meet or beat estimates. However, we're in a period where profit margins are still on their trend upward, and they're growing. They're healthy and they're growing. It's really difficult to believe that we're going to have some kind of big breakdown and rotation, wholesale rotation out of equities when profit margins are this healthy. Now, if that changes, I might change my tune a little bit, but at the moment, the fundamentals are still strong. And the breakdowns that we've seen have really been rotations out of the momentum stocks, out of things like high momentum and all of the stocks that have really driven things up to this point, and even gold in a lot of ways. So it's not this rotation entirely out of beta. It's just a rotation into other parts of the market that haven't participated as much.
Big shakeout in precious metals in the last 48 hours, that's for sure. Liz, you mentioned the data. How helpful was the data when we had it? How instructive was the data when we received it?
Well, the data recently, and when I say recently, I mean even for the last 3 to 6 months, has really been us trying to figure out how the Fed is going to react to the data. So the data had been cooling. We all know this. This is no secret. The labor market data had been cooling. Growth data had been cooling, although it's looking to be pretty strong for the third quarter. And we know that just activity had slowed across the economy in general. You've got manufacturing PMIs below 50, services PMIs right at 50. So there wasn't any terribly concerning data data, but the data was confirming for everybody that yes, things have slowed down, and frankly, we needed them to in order to take care of this inflation problem. So was it helpful in trying to understand what the Fed might do and set our expectations appropriately? Yes, I think it was helpful for the market in that regard, but it was also something that we could look to react to in the moment and understand really where we stood. I like to call it as the weather, right? What's the weather like? What's the environment that we're operating in? And right now we just don't have as clear of a picture of that. We're looking at backward-looking data that's now stale. Macro data is always backward-looking, but now we're looking at this extra stale backward-looking data. So when we start to get those releases again, and CPI will help tomorrow, when we start to get those releases again, particularly for the labor market, I think it will be tremendously helpful.
Liz, that's the key point, particularly for the labour market. Can we just talk about inflation tomorrow? To the extent that incoming data shapes our perceptions of what the Fed will or won't do, how influential will CPI actually be?
At this point, unless it's way off of expectations, I don't expect it to be that influential. There is some chatter that it may come in above where everybody wants it to, but we're still in this period where we're trying to confirm that tariffs haven't taken a huge bite out of consumers' pockets and that they're not being passed through by companies that are going to expect to raise prices down the road. We also need confirmation that companies haven't taken a huge hit to their margins because of tariffs. We're more likely to hear that companies in the goods sector have taken a hit to margins, but I think that's expected at this point. So the CPI data tomorrow, I think probably just confirms what everybody has already priced into the market, and that's that the Fed is expected to cut 2 more times this year.
Well, what if it comes in even hotter than everyone's expecting? What kind of market reaction could we see?
I think it depends on what the components are that would drive that print. If the component is something like shelter that we've known is a problem for a long time that we really can't affect directly with rates, at least not in the very near term, I don't think there's as much of a reaction. If it's due to something that's surprising, if there's some goods sector that's very important to the economy that suddenly shot up in price and consumers don't have a choice but to absorb those prices, then I think you see a different reaction. There's also a school of thought that during government shutdowns, when we don't have economic data, it actually makes the Fed more dovish going forward. So I don't expect that we're going to suddenly see a repricing down in rate cuts, meaning that the market is going to pull back the expectation of rate cuts. If anything, we might see a repricing of more, but that's obviously if the data comes in line or even cooler.
Why would they be more dovish, though, if they don't have the data to back it up? And this Fed loves to say that they're a data-dependent Fed.
Right. So, well, and that's the other thing about next week. When we hear from the Fed, because they're so data dependent, I think they're going to be very flexible in their message. And they're going to maintain the flexibility of saying, we did cut rates once. This doesn't mean that we're going to cut them every time. We're still watching the data. We're still concerned about the labor market. I think in general, and this is just my speculation, I don't have a line to Jerome Powell. He has not said anything like this to me. But my speculation would be that absent data, absent transparency, investors tend to get a little bit more skittish, markets get a little bit more skittish. We're obviously seeing that right now. So the Fed coming out and being extra hawkish after a period of like that would probably not be received well. The Fed doesn't like to surprise the market. The Fed doesn't like to upset the market and cause harm when it's undue. So I think that's probably more so the reasoning for becoming more dovish afterwards and just being careful with the messaging.
Let's appreciate the clarity. Thank you. Liz Thomas there of SoFi. Part mind reader as well with Chairman Powell. I think we all have to be sometimes. The Fed's in this phase at the moment where it's show me why I shouldn't cut, not show me why I should. And that's a difference. And the bar for them not cutting at the moment, the data we'd need to see, that bar's pretty high for the moment.
I agree, but I think it is uncomfortable that for years you got up behind the podium and said, we are data dependent, we are data dependent, we are data dependent. And guess what? You don't have data except for one print of inflation.
The optics are awkward.
That is going to be hot. And then you're going to cut interest rates. Yeah, it's going to be, I think, challenging for them to communicate.
Inflation data drops tomorrow morning, 8:30 Eastern Time, about 24 hours away. Let's get you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. The U.S. has imposed sanctions on Russia's biggest oil producers as peace talks over the war in Ukraine have stalled. The sanctions signifying a shift in policy for President Donald Trump, who had previously held off on major sanctions. The move was welcomed by Ukraine, but its impact on President Vladimir Putin's strategy for conducting the war remains unclear. The Trump administration is considering export restrictions against China, centering on a range of critical software. Treasury Secretary Scott Bessent said that, quote, everything is on the table and that any export controls would likely be in coordination with G7 allies. President Trump told reporters he expects to have a long meeting with China's President Xi Jinping next week. President Donald Trump announced Wednesday he's demolishing the entire east wing of the White House to make way for a new, larger ballroom. The move significantly expands the construction project, originally estimated at $200 million, now rising to $300 million. Trump stated the increased cost will be covered by him and by private donors. And that is your Bloomberg Brief. John.
Bonnie, thank you. Appreciate it. Up next on the programme, the Morning Calls Plus, Dana Telsey of Telsey Advisory Group, with retailers bracing for the tariff impact on holiday shopping. That conversation is up next. Live from New York City. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The future is around AI. It's around autonomous, it's around robotics. I think it's the most important chapter in the history for Musk and Tesla. Tesla's going to own 80% of the autonomous market. And that's why, from an investor perspective, look, if you hate Tesla, you continue to hate it today. I get it. But the reality is that this is a golden age for Tesla looking ahead. From autonomous to robotics.
I've got to share that moment.
Why? Come on.
You're speaking to the guest, our next guest, about retailers, luxury. And you ask about the top pick and they say Tapestry. And your face, because I know exactly what you were thinking. Coaches and luxury. That's what you were thinking, wasn't it?
It's not. I said, what's your top luxury pick?
There
Tapestry. Coach.
There you go.
Okay.
It's not, is it entry-level luxury? What is it? It's just not luxury.
I think it's entry-level, high-end quality.
Okay.
I wouldn't put it with luxury. You're talking about luxury. I'm talking about LVMH and Hermes.
Okay.
Stuff also most people can't afford.
Dana's going to give us her view on this in just a moment. As we count you down to the opening bell, let's get you some morning calls with one stock in focus. Tesla, first up, Canaccord lowering its price target on the stock to 482, noting a lack of meaningful guidance on 2026 deliveries. Your second call from Cantor, raising its target on the EV maker to 510, remaining bullish on meaningful future upside. And finally, Truist raising its target to 406, believing Tesla's AI projects are potentially extremely valuable. The stock is down this morning by 4%. It was the eye roll. It was the eye roll.
I have a good one. My parents would agree.
It's a phenomenal eye roll, I agree. Let's turn to retail. Companies bracing for tariff impact heading into the holiday season. Investors looking to earnings from toy makers like Hasbro and Mattel for insight. Lindsay Dutch of Bloomberg Intelligence joins us now for more. Lindsay, welcome to the show. So this has been something economists have been tracking for a while. What's the tariff impact on the bottom line of some of these companies? Are we starting to see some disruption show up?
Hi, thanks for having me. Yes, when we look at sort of Mattel and Hasbro results over the past 2 days, we are starting to see those costs of the tariffs coming through. Both of them have estimates of less than $100 million on an annual basis, and they're working really hard to mitigate that cost with multiple levers. They're raising prices on some cases, adjusting sourcing, and they're also cutting costs elsewhere. I think the bigger worry, Bede, though, is the second order effect of these tariffs on demand. And that demand heading into the holiday season is quite uncertain.
Yeah, Lindsay, this is the difference now compared to where we were coming out of the pandemic. Consumer price tolerance was so much higher. You could pass this on and consumers would eat it. Lindsay, are you seeing pushback already?
So we haven't quite seen pushback already. The point of sales data for toys is positive. We are seeing growth, but what's reflecting in the toy maker earnings is that the retailers, think national retailers like a Walmart and Target, because of the tariffs, delayed their holiday orders, and they delayed them significantly. So usually we would see those orders start to come through earnings in the second quarter. They didn't even really show up in the third quarter. So these orders are delayed 2 quarters all the way to that back half of the year. And the orders are actually coming through a little bit smaller because they're importing the product domestically. So there's a big change in how the retailers are taking these toys ahead of holiday, which just gives more uncertainty on that demand front.
Lindsay, appreciate you jumping on. We'll talk more, no doubt, going into year-end. Lindsay Dutch there of Bloomberg Intelligence. Let's stick with retail. Telsey Advisory Group expecting sales to grow 3.5 to 4.5% this holiday season. Right in the following. We expect tariff-related inflation to drive a relatively normal sales increase for the holiday season. Dana Telsey, the CEO of Telsey Advisory Group, joins us now for more. Dana, good morning.
Thank you. Thank you for having me. Good morning.
It's good to see you. Who's in the sweet spot into year-end?
I think in the sweet spot to year-end, it's those companies where there's product newness and innovation. Who do we have doing that? Yes, you have Coach in terms of Tapestry. You also have newness at Levi's. Look at the wide-leg jean that's out there. Birkenstock and their closed-toed shoes. Ralph Lauren, and frankly, the expanded appeal of their product is compelling too. And you know what? You have to watch out for some of the wholesale companies too. When I mean wholesale, those that sell other brands. Off-price, given the tariff-related impacts, there's going to be traffic to the off-pricers. And you know what? Let's see what Macy's does in coming up with the bold new chapter strategy. And look what they have now, Abercrombie Kids, and new brands that they're showing in their assortment.
You just mentioned a number of brands that I would call more mid-market.
Right.
That's the sweet spot, not luxury.
Well, the interesting thing with luxury, 2 things, LVMH and Hermes. LVMH showed sequential improvement in their first positive growth in quite a while. With a bar of 80 billion euros in sales, Hermes numbers, look what they had, 9.6%. Stock went down on that because overall, you're topping out and you've had 3 quarters of high singles, but a much smaller bar of 16 billion euros in what they're generating in sales.
So you're saying Hermes was punished because LVMH did so well? Because the
sequential
numbers,
change was bigger.
Because the numbers were insane. 14% higher in America. Their sales in leather goods division, which is the Birkins and the Kellys, is phenomenal.
It's amazing. Keep in mind, it was up, but it was up even a point higher last time. So at a 40 times multiple that Hermes is trading at, it needs to deliver continued exceptional results. And look what's happening. You talked about real estate before. Both Hermes and LVMH investing in retail real estate. The Christian Dior store here on 57th Street, one opened in Beverly Hills. Hermes supposedly paying $400 million for a new location on Rodeo Drive that could expand up to 40,000 square feet when they're currently generating $200 million in their existing location and sales.
New store on Madison Avenue.
Yes.
Say new, last couple of years. Beautiful, beautiful
stunning,
store.
Absolutely stunning.
What are the benefits of that real estate footprint?
Well, a couple things. I think the global streetscapes, we don't have a lot of them. They're more limited. A lot of these luxury brands want to control their own destiny, and wholesale is not as growthy as what you can do in your own store. So limited real estate venues, you can capture the experience of buying, but also of doing too, whether it's restaurants or whether it's spas. Controlling your own brand destiny and the experience matters in retail real estate.
This is all very Anne-Marie. I'm going to bring us down to the low end just briefly. Two big losers on the S&P this year. Two of the worst performing stocks on the S&P 500. Lulu, Deckers. What's gone wrong?
I think a couple things. I think Lulu overall, they need to accelerate the product innovation they have. And I don't think it's necessarily from competition. I think you needed to do it to yourself. There's upticks that need to be made in showing a wow in what you have. At Deckers, rate of growth. The HOKA rate of growth, tonight they report after the close. Let's see what that number looks like, especially when you have On growing at a faster rate.
What's going on in terms of the tariff stories for these companies? How have they been able to mitigate the impact?
I think you're first going to see it. I mean, we've all heard about the longer you wait, the more the price increases are coming. You've seen some price increases in footwear. Not a lot, but definitely some. We're expecting in this fourth quarter. That's why we have such a wide spread in the holiday season sales forecast, 100 basis points, because what's going to be the demand levels as prices tick up. On average, we're looking at price increases low to mid-single digits.
Deloitte's survey also is talking about how people might pull back a little bit when it comes to holiday sales. Is it just because of the sticker shock of an increase of prices from last year because of tariffs?
It is tariffs and that price increase. And what are you going to choose? Is it the experience of dining, traveling somewhere, or the new item? And if you're buying the new item, one of the things is new and innovation. It has to be new. And part of the reason why, if it is new and different, it may be whatever price it is, but you didn't have it last year.
Who's innovating right now the best?
I think you're seeing a lot of interesting things. I think you have innovation in beauty. Look at the 43 new brands that Ulta has shown. It really has helped drive sales. You've seen that strength in Sephora also. You have innovation at Birkenstock. Those closed-toed shoes are meeting demand. And wide-leg denim is all the rage.
I don't get closed-toes Birkenstocks.
I don't get Birkenstock.
I don't get them either.
Period.
Well, people who do are buying 4 pairs.
Why the closed toe?
Warmer, something new and different than a sandal can be worn in colder weather.
So they're basically sandals with a closed toe?
Yeah.
Okay, all right. Dana, thank you.
Thank you for having me.
Thank you for being here. Dana Towsey there, Towsey Advisory Group. I mean, I put them in the same category as Crocs.
Same.
You know, for me...
but I'm looking at a pair at Neiman Marcus right now. They're going for $450 because they have a Teddy Shearling fur buckle, mules, part of it. It must be Birkenstock mixed up with some other luxury brand. But just for the viewers' awareness, the only reason why we know that Madison Avenue Hermes is so nice, because not me, you brought us there to buy yourself a new tie.
I did.
Yeah.
And then got
that's really your really your world.
Then did something that was very bad.
Yeah, tell Dana what you did.
I got it slimmed down.
Oh,
yeah.
Wow.
Tailored an Hermes tie. Have you heard of this?
I haven't heard of that before. That's new and different. Is that the tie?
It's not, no.
Okay.
Maybe it's innovation.
No, I wear that on Tuesdays.
Oh, Tuesdays.
Yeah.
I'm going to be watching.
It's on the calendar. All right. Coming up, Stephanie Roth of Wolf Research as we count you down to the CPI report tomorrow. Plus, Johara's got some morning movers. Quantum computing stocks up on a potential U.S. stake. From New York City, you're watching Bloomberg TV.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Counting it down to the open about 60 minutes away. Equity futures positive by, or rather negative by about 0.1% on the Russell. That's where your outperformance is. That's where you see some positivity. The small caps up by 0.3%. Let's get some single names, some morning movers. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. American Airlines shares are popping off, up 4.3% now in the pre-market. The airline now sees a profit for the full year after previously predicting a loss. All this boosted by domestic business and leisure travel. And no surprise, Americans saying that premium travelers are driving that growth. But all of this fits into the bullish trend we've seen with all 4 major airlines reporting now. Southwest, Delta, United, all seeing this pickup in domestic demand. And we move on to Warner Brothers stock. Those shares are up 2.3%, on track for a fourth day of winning as the company's potential sale moves quickly. We're reporting that it will start asking bidders to sign NDAs as soon as this week in order for it to start sharing sensitive financial information with them. Plus, that Warner Brothers has already received 3 offers from Paramount Skydance, with one almost $24 a share, but all were rejected as being too low. And we end on quantum computing stocks. They are surging in the pre-market on a Wall Street Journal report that the Trump administration may take equity stakes in firms like IonQ, Rigetti, and D-Wave in exchange for federal funding. It follows similar moves with Intel and MP Materials as Washington looks to back a sector key in things like drug discovery and unlocking other efficiencies in the economy. John?
Yahara, thank you. Thanks for this morning. Appreciate it. Let's turn to the data. The Federal Reserve no longer receiving private sector employment numbers from ADP. Sources telling us here at Bloomberg the data stopped after an August speech by Fed Governor Chris Waller. Joining us now to explain just what's going on, Bloomberg's Mike McKee. Good morning, Mike.
Good morning, John. We don't know exactly what's going on because the Fed isn't commenting and ADP isn't even answering the phone, but it does appear that ADP has cut the Fed off from its data. Now, ADP provided raw data to the Fed, the data that they collect, and they provided it on a weekly basis as opposed to the monthly figure that we get. The Fed would adjust the data to fit its models on what's happening to the labor market, and that is different from the numbers we get. ADP works with Stanford to come up with its release that it puts out every month in terms of how many jobs were created or lost. Now, the issue is what happened when Chris Waller talked about it in August. Waller has talked about it a couple of times, so has Jay Powell. It's no secret that ADP gives the Fed the data. It seems that maybe Waller released some of the data, told us that the data was getting worse in that month before it was supposed to, but we don't really know. We don't get the data, and it's one less thing the Fed has to make a decision on. But you're right, we do get CPI tomorrow. They have to do that because the Social Security Administration uses third quarter CPI data in order to construct the cost of living increase figures for next year, which by law they have to put out fairly soon. And so the Labor Department has called back in workers. The data's already in, but they've called back workers to collate it and put it out tomorrow. The forecast is we're going to see continued fairly strong inflation, up 0.4 and 0.3 for headline and core, pushing us up to 3.1% for both, which is not the direction the Fed wants to go. But again, they're thinking this is tariff-based and it is going to be relatively short-lived. So they're going to look beyond it, and it's not likely to change the Fed's view, but will give us something to talk about.
Michael McKee, short-lived. Thank you, sir. Appreciate it. Too short, as always, Mike. Thanks very much. I can't go with short-lived.
It's short-lived.
It just doesn't sound
so
right,
weird.
You know?
Yeah,
Chairman Powell-esque, Mike McKee. I'd expect nothing less. The ADP story is interesting. So Anna Wong of Bloomberg Economics commented on this yesterday, and it's kind of a strange decision from ADP, so I'd love a comment from them on it, because the Federal Reserve's use of that data offers validation to ADP, which they can leverage as a company anyway for private sector economists trying to track the same thing.
Well, that's what I thought. Doesn't ADP want the Fed that's going to make decisions and talk about the fact that they're making these decisions because they have this great data from ADP? Don't they want that to continue to be the narrative? And also, I think it's quite honest intellectually for Christopher Waller, Governor Waller, to come out and say what he is looking at. I think that's important for the health of the transparency of the Federal Reserve in this market.
We need some more transparency on just what happened with that story. The data we will get is CPI. It drops tomorrow morning. Stephanie Roth of Wolfe Research writes the following. There are a number of offsetting factors keeping the overall reading benign. While airfares and good prices should be firm, we expect rent inflation to continue decelerating. Stephanie joins us now for more. Steph, good morning.
Good morning.
That last point's the important point. Do you think that continues?
The rent deceleration?
Yeah.
Yeah, I do. And I think we've seen a gradual trend in terms of rent deceleration. We saw a pickup in the August print. That appears to be tied to the August versus February because it's on a 6-month panel. So when we move to the next month's panel, which is comp to the March data, then you actually have it moving in the other direction. So we expect that the trend will continue. The last month was a bit of a quirk tied to kind of the comparison to the February reading. And then in this case, it will continue to move down.
So this gives the Fed ultimately space to keep reducing interest rates. For how much longer?
Yeah, so I think they're certainly going to go next week. And then beyond that, it's going to be more of a question. I think it's interesting that Governor Waller most recently said it's not a clear path towards continuously cutting rates because he had been one of the more dovish voices out of the Fed. So our expectation is they'll cut a couple more times. December, I think, is more of a toss-up than the market thinks. And then from there, it's going to just depend on the path of data, which eventually we'll get, in which case we'll probably see a labor market that looks a lot better than the most recent trend in non-farm payrolls.
Christopher Waller said that, Governor Waller said that to Jonathan and I, the fact that you have to be a little bit cautious. Do you think he's warming up to the fact that maybe they need to also see the inflation prints to match how he's feeling about the labor market?
Yeah, and I think there's also potential evidence that the economy is holding up fairly well. If we look at the consumer spending data, that's not consistent with a labor market that is weakening significantly. So given that there has been a lot of volatility within payrolls, it is very feasible to believe that the economy is a lot better than the 29,000 3-month average payrolls. If it's something more like 60 or 70,000, that's exactly where the break-even pace should be, in which case they should be a little bit more cautious in terms of cutting rates from here.
When it comes to inflation, how are you also feeling about food inflation, which has been going up, which is why the president was talking about beef prices yesterday, and things like coffee prices going up. And at the same time, this morning, we potentially are looking at higher oil prices.
Yeah, so I mean, that's certainly a challenge. Of course, the Fed focuses on core, but that's something that matters for the U.S. consumer. It has an impact on sentiment and spending into the future. Our sense is that we'll see gradual elevated inflation, although our forecast for the next print is on the lower side, 0.26. Our expectation is you'll see it bounce between around 0.3% for the next couple months. Q1, I think, is something to watch out for, though, because Q1 we might start see just yet another Q1 where inflation is elevated, and that might spook markets a bit. So running between 0.3 and 0.4 month on month, which is just a step higher from where we've been.
How are you and the team exploring the change at the top of the Fed? When you take a 12-month view, is it split between the Chairman Powell Fed and whatever comes next, or just a smooth 12-month view?
Yeah, so I think what we'll see is an environment where the majority of the FOMC members are focused on the actual data, in which case the data should be fairly solid. In fact, the economy is likely to inflect higher next year. So they're probably not going to be as dovish as perhaps the next Fed chair would like them to be, and it might be a bit more of a split committee even than we've seen.
Do you think the new leadership, even if they are super dovish, will have some problems convincing this committee, given the vote makeup and the changes in early next year?
I think that's exactly right. And what we saw in the last FOMC was the most important indication of that they all were largely voting together outside of Governor Myron. And that tells us that the Fed independence is really more durable than people feared.
Risk management, that phrase they used, I think covered up a lot of cracks on the FOMC and plenty of division, debate, whatever you want to call it. How much longer can you cut rates and call it a risk management decision before you have to ultimately just say, time's up?
I think you get 1 or 2 more rate cuts, and then it has to meet tops. And then it's going to be a question of what the data are doing. And our sense is maybe they'll cut 3 or so more times, and then at that point it's going to be the economy's largely fine. In fact, it's inflecting higher. There's a lot of tailwinds heading into 2026, and it's going to be a harder environment for them to just be cutting for risk management reasons.
You keep saying what the data's doing. How have you been dealing with the fact that we are in a data desert, besides, of course, CPI tomorrow?
So everyone's been talking about state unemployment claims. That's, of course, one thing that we are getting and looking closely at. The credit card data that's coming from private sector sources has largely been stable. And then we had data up until most recently, and that showed a consumer that was running quite solidly in an environment where there was a lot of economic uncertainty.
If this is a prolonged shutdown, how difficult does the December meeting become for the Fed?
Yeah, that's a tough one, because October is easier. They kind of wanted to cut at least one more time anyway. December, I think, becomes a little bit more difficult. Of course, we'll get another inflation reading, so they'll have a sense.
We might keep getting inflation readings, though. We might not be getting the jobs report.
Yeah, that's totally right. Oh, we'll continue to sort of keep an eye on those jobless claims, but I think it's going to be a really difficult environment for them. They'll be focusing on the sort of the private sources. I guess maybe not so much ADP, but
will they be? No, seriously. I mean, it feels like the Fed is in a really challenging position.
They are. I think the easier thing to do would be to cut in October and then perhaps hold in December, saying that we're closer to where we think neutral is. We're now in an environment where jobless claims are not picking up, and we're kind of going to wait and see for now.
December could be amazing. You could have a lame duck chairman sitting there offering forecasts, and on the same morning you could have an op-ed from the incoming Fed chair, Wall Street Journal, Bloomberg, FT, take your pick. On the same morning you could have an op-ed from the incoming Fed chair telling the world what I would do with interest rate today and why. And you could have a very different backdrop for that decision.
And who does the market listen to? Is it Chair Kevin Hassett, incoming Chair Scott Bessent, incoming Chair? What do you think? To John's point, how does the market trade that?
I think the focus is going to have to be more on the bulk of the FOMC members, because that's really what's going to matter, right? Even if we have a really dovish chair, if the rest of the FOMC doesn't get in line, which they might not, specifically if the data don't support that, then the market may pay a lot less attention than they typically would to what the incoming chair is saying.
Stephanie, it's good to see you. Thank you. Stephanie Roth of Wolf Research. Lots to think about over the next 12 months. Nothing simple about this. Let's get you an update on stories worldwide with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. American Airlines shares higher in the pre-market after reporting a strong performance in Q3. Third quarter revenue for the U.S. domestic market came in higher than analysts expected. International disappointed due to lower sales to Europe and to Latin America specifically. The airline also sees a profit for the full year compared to the loss previously forecast. Tesla's profit fell in the third quarter as rising costs undermined record vehicle sales. The company reported adjusted earnings down 31% from a year ago. CEO Elon Musk touted ambitious initiatives on the earnings call, including humanoid robots and AI programs. Musk also pleaded with investors to back his $1 trillion compensation package. In sports, NBA action is back with a busy slate of Wednesday night games. In Texas, Spurs phenom Victor Wembanyama scored 40 points in a dominant win over Dallas, outshining top draft pick Cooper Flagg. In the East, the 76ers beat the Boston Celtics behind a historic debut for guard VJ Edgecombe, who scored 34 points. And here in New York, the Knicks season off to the right start after beating the Cleveland Cavaliers 119-111. And that is your Bloomberg Brief. John.
Vonnie, thank you. Happy now?
Yeah, the Knicks won. I'm so excited. I changed my mug. This is all for Jamie.
Oh, so we've moved on from Yankees.
I mean, sore subject still.
Okay, all right. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with CJ Muse of Cantor Fitzgerald as he's raising his price target on Intel ahead of earnings. That conversation up next.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
One of the concerns for the U.S. tech sector is the cost of the build-out will be significantly more than it will be in China. We seem to be celebrating OpenAI making $1 trillion of commitments to build out 30 gigawatts plus of compute capacity. We're starting to see some concerns creeping into the market about a company with $15 billion of revenue able to pay those bills going forward. And the sustainability of that build-out and that cost beyond this initial phase.
Stefan Stawinski of BNP Paribas Exane. Interesting conversation earlier this morning on Meta. If you look across the analyst coverage right now, ton of buys, few holds, one sell. That underperform belongs to Stefan over at BNP Paribas. Just to get the bear case when the bull case is articulated so well and so often on this program. Equity futures on the S&P 500, negative here by a little more than 0.1%, down by a quarter on the Nasdaq 100. A little bit of outperformance on the small caps, the Russell, up by 0.2. That's your price action. Here's the trading diary for the week ahead, the end of this week, and a sneak peek of next week as well. Today, earnings from Intel and Ford after the market close. On Friday, some CPI data plus UMich consumer sentiment. Looking ahead to next week, Wednesday is absolutely massive. Fed rate decision in the afternoon, plus earnings after the closing bell from Microsoft, Alphabet, Meta, and Boeing. Thursday, more results from Apple and Amazon, plus next week, talks between the US and China.
It's a huge week. It's a huge week for risk and potentially a tremendous amount of upside. I think out of all of these, who cares about the Fed? I'm focused on Xi Jinping and Trump, as well as the tech earnings.
Yeah, and the market is too. Let's talk about some more earnings later on. Intel set to report after the market close. CJ Muse of Cantor Fitzgerald raising its price target on the stock to $40. He writes the following: we see a better picture for unit demand as well as price increases, but the questions remain as to whether there is durability in this demand uptick and to what extent. CJ joins us now for more. CJ, welcome to the program. Slightly snarky to kick off the program like this and this interview, but will the White House be on the call? Because CJ, this conversation around Intel has got so much more attention precisely because of that stake.
Yeah, sure. So no, I think the simple answer is they won't be on the call. But we added Intel to our tactical long list on September 1st when the Trump administration became a shareholder, and so I think that that is obviously has been a positive driver for shares. And I would note that we expect one or two or three more kind of partnership announcements with the likes of Apple and Google, Microsoft as potential partnerships. And then finally, I would note that Lip-Bu, the new CEO, compensation package really kicks in at a $45 stock price. So I do think there are drivers here that can drive, one more kind of leg higher for shares.
CJ, can I just press you on why you upgraded? Obviously, it's worked because the stock has absolutely ripped since that investment from the White House. But CJ, what was it about that you believe is a fundamental positive development for the name?
Well, I think that, the U.S. administration, investing in Intel told me that there would be partnerships announced, right, where like the one with NVIDIA, where they would invest into Intel. And, our work suggests that for 14A to be successful, for Intel to be successful as a foundry, they need roughly 10,000 wafer starts per month of outsourced foundry capacity. And with Trump administration behind Intel, we thought the probability of that being much higher. And if they're successful, as a small foundry, then Intel will overall be successful. And that was really the key driver.
Do you see pressure yet from the U.S. government to get individuals to buy these chips?
Not so in terms of buying the chips, but I think that if you have, exposure to China, it is logical to want to come be a partner with Intel, to be in good graces with the administration. And that's where logically, NVIDIA, Qualcomm, Apple, really come to mind. And so that, was our thinking behind it.
CJ, you said you took a long position on the day the U.S. government announced their stake. Do you have a list of companies that potentially the U.S. government might announce an equity stake in that you think, well, now time to go long on a bunch of these companies? It is no longer just chips and rare earths. They're now looking into quantum computing as well.
Yeah, no, I saw that this morning. No, I don't have a long list. I would say that, it is critical that the U.S. has an indigenous leading edge semiconductor manufacturer. And Intel has fallen tremendously behind TSMC. And so for that reason, I think the investment by our government in Intel is a great thing. I normally am a pure capitalist. I think intervention by the government is awful. But in this case, it makes great strategic sense. As for other potential investments, I would prefer the public markets to dictate as opposed to government intervention.
CJ, I think we're right there with you as well. Difficult to debate that one. I just want to ask you about the exposure to China now. CJ, whether that exposure of Intel specifically in China is going to be compromised by this investment, and how much of a risk factor that is going forward?
Well, I think that, x86 technology is pervasive, and for that reason, I think China will continue to purchase, either from Intel or AMD. So I don't see a real, challenge there. But I do think at a higher level, we're obviously seeing, I do think is a negative thing in the semiconductor world. And it's the most obvious, in terms of, NVIDIA's exposure of their accelerators in China going from 95% share to 0%. And so I do think, next week, President Trump, President Xi, I do think that semiconductors will be a part of that grand bargain, which I think would be a positive for U.S. semiconductor sales into China. But, we'll see.
Well, CJ, I've got to ask you, what could that grand bargain actually look like? And do you think that maybe that opened the door to the top tech from the U.S. being exported back to China?
Well, I think rare earth is what the U.S. and the rest of the world wants. And I think China wants, more leading edge semiconductors. But I don't think we will reduce that threshold. So I don't think we'll allow the most bleeding edge silicon from NVIDIA. But I do think that, a little bit more lagging edge will become available. And on the semi-equipment side, I don't think there's any change in terms of that line in the sand, in terms of not getting access to EUV technology, which really limits China to building 7 nanometer and above, as opposed to, TSMC today building 2 nanometer. I don't see that changing, but I see everything else easing.
This morning, we got the communique from the CCP's 4th plenary session, and they talked about how China aims for a, quote, big increase in level of tech self-reliance. CJ, does China even need the United States?
That's a good question. I mean, the simple answer is yes. They need semi-equipment, and if they want the best semiconductors, then the best semiconductor fabless companies are in the U.S. And so the simple answer is yes. Concurrently, however, they are investing in their own indigenous industry, and that's something that they've been doing for the last 10 years, and that is something that will continue. And their goal is to be self-reliant. I don't think that is possible in the next 5-10 years, but beyond that, that is their goal. I would say that U.S. and or more specifically non-Chinese companies are not standing still, and so they are developing great value that I think will sustain kind of an advantage over indigenous Chinese equipment and semiconductor companies. So if you want the best, you're going to want to go outside of China, but they are investing and they are working incredibly hard, and so I wouldn't discount their capabilities if I take a longer term view of kind of 10-20 years.
Self-sufficiency is China's goal. It's America's too. CJ, thank you, sir. CJ Muse there of Cantor Fitzgerald, and Intel is at the heart of that effort.
Absolutely, the heart of that effort. And CJ said it right there. The second the United States got behind this company with an equity stake is the day we decided to go long on this company. Because why? They knew that has the backing of the U.S. government. And then from there, everything flows.
Intel this morning down by a little more than 1%. How much is riding on this meeting between those two leaders? Which, by the way, might not happen. Look, I know it's on the calendar for all of us, but you have to remember it might not happen.
He wants maximum flexibility going into this meeting, and I think also putting even a tone out there that maybe the meeting won't happen, potentially is trying to cajole Xi Jinping, not just to the table, but to the table with better terms when it comes to rare earths. But everyone I talked to is expecting this story to be a 2026 story. There's no grand bargain to be had next week. This is going to bleed into 2026 and honestly, probably more into the future as well.
We've got some good news. I'm told this will happen. Tomorrow morning, 8:30 Eastern Time, we will get some data. CPI just around the corner. CPI Friday into the weekend. Dean Kerner of Macro Risk Advisors joins us, the former Kansas City Fed President Thomas Hoenig, the former Fed Governor Betsy Duke, and Kristen Bitterly of Citi from New York City. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
So today, has value investing been a profitable thing to do over the last 10 years or so, or has it been hard to do?
The market structure has changed, and there has been what I consider it to be a broken market, or the value investing industry, I think, is defeated, so to speak. It used to be that most money was invested by these long-only investors, these big mutual funds and stuff like that. And they had money coming in every day, and they were getting nice fees on all of that money, and they had large research teams. And they would sit around following all of the companies with teams of analysts, and they would say, this company we think is undervalued by 30%. And it might be a growth stock or a value stock, a Magnificent Seven or otherwise, but they would say, I think this is undervalued by 30%, and if I buy it and I hold it, I'll make the S&P plus 30. Now, as we've moved to passive, they've lost their customers, and the remaining customers are paying them lower fees, and they have reduced their research staffs, and they don't have new money coming in to make new investments in any case. And so most of the investing these days is no longer done by people who are buying something because they think it's worth more. They have opinions about price. Like, what is the price going to be tomorrow? And so the result is most trading that is going on right now has nothing to do with value. So it leaves us sort of as a dinosaur.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs?
How
And
are
you're
the
lowering the
meatballs?
cost of the meatballs,
So I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
All right, markets stalling as tech companies, some big ones, miss earnings. 30 minutes until the start of trading. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Tesla disappoints as profits plunge. Ford and Intel are among the companies set to report after the bell today.
Meanwhile, oil surges. President Trump intensifies pressure on Russia to end the war in Ukraine.
And Wall Street bonuses are expected to break records this year as big banks reap profits.
Well, Matt, you mentioned it. The big drag on the equity indexes this morning is Tesla. It is down very sharply here in the pre-market about 30 minutes ago until the start of trading, down nearly 4%, 3.8%. Its profit dropped in the third quarter, and that was despite the fact they had record sales for EVs. Earnings were down a third from a year ago as concerns around near-term growth drivers mount, and all Elon Musk wanted to talk about was his desire to get paid more and have a robot army.
All right, we'll talk a lot about that today. And another big tech company reported disappointing revenue. It is Big Blue, IBM, and its key software business. Bloomberg Intelligence says the results suggest that organic software growth is slowing. And this is, of course, a key concern for the industry as AI eats everything.
Eating everything, but maybe it will save Tesla and Elon Musk as he pushes forward for his robot army. Elon Musk ended the earnings call discussing his $1 trillion pay package up for a shareholder vote. It could give him a 25% take in Tesla. Here was his rationale.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Bloomberg Tech's Ed Ludlow covers Tesla and joins us from San Francisco. Ed, we can talk about the likelihood of Elon Musk going insane and being able to be kicked off in a moment. But first, just the earnings themselves, because it was record EVs. People rushed in to buy vehicles before you had some of the tax credits expiring. Why then did the results look so rough?
Yeah, I mean, look at the stock where it is now in the pre-market, right? Down 4%. That is kind of the level it was holding at in after hours last night when Elon Musk finished his prepared remarks. And in the moment, it was the lack of information. You know, there wasn't this sort of big carrot to keep investors looking to the horizon, any new detail on the big projects around Robotaxi and Optimus, nor was there any sort of them addressing the quarter gone. Record sales, but missing on the bottom line. Consumers rushed to buy Tesla vehicles in the United States before the federal tax credit expired. But what Tesla acknowledged is that tariffs to the tune of $400 million, but generally larger operating costs and a difficult environment were a factor and will be a factor going forward. I guess the one conundrum the market didn't really look to was the impressive free cash flow. But that is, again, a consequence of shifting a ton of inventory in the quarter gone.
So Elon Musk, of course, pushing for his $1 trillion pay package, and really it's him. He's the star of the show here. He's the reason people buy this stock, not because they sell a record amount of EVs, although they did do that in the quarter.
So what happened? We got right to the end of the call, and the CFO clearly had some prepared remarks to encourage shareholders to vote in favor of the package. And Musk basically interjected. He cut him off. But what you just said, the specific wording on pay package, to Musk's mind, it is about voting control because he thinks he needs to have proportionately more voting power to get Tesla to the future that we've talked about endlessly on this program, which is it does not necessarily sell cars to consumers. it focuses on humanoid robotics. And the argument that he and the CFO tried to make is that the proxy or advisory services like Glass Lewis and ISS are missing the point that if Musk is going to achieve that voting control, he will have had to have delivered substantial shareholder returns anyway, pushing back on those advisory services argument that it would be dilutory to the shareholder base for Tesla to reward him with that kind of voting power.
All right, Ed Ludlow covering that story, as always, for us. And you can catch more of him on Bloomberg Tech that kicks off in 11. In just a few minutes, we're going to chat with BNP Paribas' head of U.S. Autos Equity Research, James Picariello, because it's not just Tesla. We also have a surging General Motors on our hands and Ford out with earnings after the bell. We're watching oil prices this morning soaring after the U.S. announced sanctions on Russia's biggest oil companies. Joining us with more is Anne-Marie Jourdain, Bloomberg's chief political correspondent, co-host of Bloomberg Surveillance, and we also have more sanctions coming out of Europe as well.
More sanctions coming out of Europe, a 19 sanctions package. Also, Europe is going to be making the timeline shorter in terms of LNG shipments, natural gas going to Europe to 2027, so bringing that timeline up. But really, as Halima Croft of RBC called us, dropping the hammer, it's the U.S. sanctions on Rosneft and Lukoil. This is a massive amount of Russian oil production. Rosneft itself accounts for about 40% of crude production of Russia. It's also a signal, given the fact, I think, that Igor Sechin is such an important part of oil production in Russia, and he's a close Putin ally. He's the CEO of Rosneft. He's known in Russian media as Darth Vader. So they are sending a big message, and it's the first of its kind during the Trump administration to really go after Russia in terms of blacklisting both these companies.
We have John Malone and they have Sechin, right?
Is that what it is?
John Malone was always called, when I was growing up, the Darth Vader of cable.
I would never want to draw those two comparisons myself, so sure, why not? But you can see the reaction. It is clear.
One's a little scarier.
Yeah, I would probably agree with that. So the reaction is clear, Anne-Marie, up more than 5%, nearly 6% for NYMEX crude. With these sanctions, how difficult will it be for Russian barrels of oil and energy to still find their way to market?
Well, this is why this is a significant measure, but it's not as damaging as potentially it could be, because we would need to see secondary sanctions on those refiners, on those banks that are part of the supply chain if they were to buy Russian fossil fuels, the same way we see in terms of the Iranian oil trade. But this is a big deal because already what we're hearing out of India is top refining executives are saying it is going to be much harder for us to bring those Russian flows into India. The question is, does China come in and fill that gap? If India is unable to do it, it really matters what the next few months look like. But the market reaction shows you that, one, the market wasn't expecting this, and two, there is such a glut right now, everyone was expecting in the market, that they are prepared for maybe some Russian barrels to come off. Also, we have today Ukraine saying it struck a major Rosneft refinery in Russia. So you potentially could see shut-ins in Russia and just more Russian barrels coming off the market with these sanctions.
All right, WTI trading just below $62 a barrel. Anne-Marie, thank you so much. Anne-Marie Jourdain of Bloomberg Surveillance. Now to the financial sector, and this year's Wall Street bonus is expected to break records as bank profits surge. New York State Comptroller Thomas DiNapoli spoke earlier on Bloomberg about the sector growth.
So we always do an annual report this time of year on the securities industry in New York City. And what we find for the first half of this year, profits of $30 billion. So when you consider last year, for the total year is about $49 billion, we could be headed for a record. If the current trends continue, we could be talking about profits of $60 billion this year.
Joining us now is someone who is very familiar with the boom on Wall Street. It's Bloomberg's chief Wall Street correspondent, Sri Natarajan. Sri, maybe this was expected just because the earnings were so solid for these investment banks.
Maybe it was expected as of this month, but if you rewind back to April, this was not the outlook for this year. We were already coming off a very strong 2024, and with what was happening in the first week of April, Liberation Day, all the tariff onslaught that we were hearing about and the immediate reaction in markets, there was real concern and fear that profits would be down, compensation pools will be down, and therefore the bonus pool will be down. Fast forward 6 months, what we have is the exact opposite. Profits are way up, compensation pool is up 10%, and the bonus pool is expected to hit a fresh record.
So who's going to get paid the most? Who cashes in here?
So if you look at across the business lines, obviously where you see the most bonus pools set aside is within the investment bank. And within the investment bank, it's interesting that this year, while we've been talking about the rebound in deal making, it's still not at the level of the craze of 2021. But the group that has done really well is the equities business. If you look at the stock traders, Morgan Stanley, 2 of the 3 quarters this year, they've breached the $4 billion mark. $2 billion a quarter was considered a very good, very solid quarter not that long ago. Now firms are breaching the $4 billion mark with reasonable regularity. That is the business I'll be looking for when you think of the biggest jump in the bonus pool and the happiest folks at banks.
You have a big jump in bonus pools, but to your point about where we come from, there was a moment where we were hyper-focused on costs and costs at banks, and growing costs meant that share prices went down. Has that focus kind of been pushed to the wayside, considering the boom that's been coming back, or is it still a hyper-focus?
No, that's still important, but the point is costs as a portion of your profits is what is important. And when profits are growing the way they're going, when revenue is climbing so much, that expense-based climbing to reward your most successful producers would not look that bad. So they're not likely to be punished in the stock market for that.
All right, fair enough. Sri, thank you so much for joining us this morning. Bloomberg Sri Natarajan. 20 minutes to go until the start of trading. And will we have a second consecutive day of losses? We're down by 0.5% yesterday. Concerns about trade, about a shutdown. Then it morphs into concerns about earnings. We've had back-to-back big tech giants, or tech if you can call it that, Netflix and Tesla, disappoint. That's what's weighing on the NASDAQ 100 futures this morning. It is Tesla, and maybe why Russell 2000 futures are still higher, up about 0.25% with Brent crude. Matt, that move still mirroring what Anne-Marie was talking about, the increased sanctions on Russia.
Yeah, those small caps continue to outperform over the last 100 days. They've beaten large caps. Let's take a look at some of the other movers on our radar. Super Micro Computer came out with first quarter net sales at $5 billion. That misses the $6.5 billion that the street had anticipated, and so Super Micro is duly punished, down more than 8%.
Yeah, everything is priced for perfection, so you don't deliver it. That's what happens. American Airlines also reported a smaller than expected loss for the third quarter. Its outlook topped estimates. The airline expects to reach profitability by year end. 5.5% is the move there, with the luxury travel demand, the business class, what have you, still very strong. And we're going to hear from the American Airlines CFO, Devin May, in the next hour at 10:30 a.m.
Yeah, American Airlines just adding to the airlines that are crushing it this earnings season. Quantum stocks also crushing it after a report that the Trump administration could get equity stakes in exchange for federal funding. This is a sector that had been, I guess, retracing its moves higher recently until now. Ionic up 9%, D-Wave up 19%, and Rigetti up 11%.
Coming up on the show, BNP Paribas keeps an underperform rating on Tesla. We're going to discuss it with the analyst James Pecoriello. That's coming up next. You're watching Bloomberg TV.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs?
How
And
are
you're
the
lowering the
meatballs?
cost of the meatballs, too.
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually veggie balls and plant balls. And personally, I don't love the veggie balls, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Let's get to high interest now. Look what's making headlines around the world. Global hedge fund assets have climbed to a record $5 trillion, fueled by nearly $34 billion in new inflows and strong quarterly returns as well. The 3 months through September saw the biggest investor inflows since 2007, according to hedge fund research. Equity and macro strategies led average gains, while crypto funds rebounded sharply. Blackstone's quarterly profit surged 48% as the world's largest alternative asset manager cashed in on a wave of investment exits and new inflows as well. President and COO John Gray spoke with my co-host Danny Berger earlier about the results and his outlook for next year.
The cost of capital is coming down. The Fed's lowering rates. The long end has come down. Spreads have tightened. High yield spreads are down almost in half from their highs a couple of years ago. And we've got record highs in the stock market. That is a very good combination for more deal activity. And so if we get a little bit of calm here in the overall environment with this kind of backdrop, I would expect next year will be an even better year for M&A and IPOs.
We're going to have more from Danny's interview with John Gray in the next hour, so stay tuned for that. And Amazon is rolling out a new AI-powered tool for the indecisive customer. The feature is called Help Me Decide, and it will automatically appear at the top of the page after shoppers have looked at several similar items. The feature is rolling out to millions of users before a wider launch. It follows Walmart's recent OpenAI partnership, which lets customers shop directly through ChatGPT.
Good. I look forward to the future where I never have to make a decision again. All right, elsewhere in this market, Tesla's profit plunged. Despite a record quarter of vehicle sales, and that reflected a strain on its automotive business and near-term growth drivers, BNP Paribas head of U.S. Autos Equity Research, James Picariello, has an underperformed rating on Tesla with $307 and on a 12-month price target. James, thank you so much for joining. Can I just get your initial reaction to what we heard from Tesla yesterday?
Yeah, I mean, given the third quarter record deliveries, right, this was supposed to be a really nice quarter profitability-wise into the known margin challenges for next year, right, where we live life without regulatory credits demand, right, because the emissions are getting relaxed in the U.S., and then also, of course, without the $7,500 consumer tax credit for the purchase of EVs, right, though that spells challenges for Tesla in the medium-term future, right? So the third quarter, right, we had the pull forward in demand. I think we all expected better automotive gross profitability, right, if we exclude the credits. And it simply just didn't come through. We only saw 40 basis points of margin expansion versus the second quarter, which was a very much challenged quarter.
But my question, I talk to Ed Ludlow about this all the time, and I ask, who cares about car sales at Tesla? This is a $1.5 trillion company. That's not a car company's market valuation.
That's right, right? The punchline to my price target valuation, which is about 30% below the share price, is that 75% of Tesla's value is tied to robotaxis and the Optimus robots, right, humanoid robots. That said, there is strong directional correlation to the stock price and automotive gross profitability. And that's, I think, expectations, certainly my expectations are for the gross margins for auto to come down in next year. Consensus for free cash flow next year is just over $4 billion. I'm just barely above break even, right? So there's a massive gap in the potential downside for next year. And
which is why, because everybody who wants an EV has one. The kind of people who buy EVs don't like Elon Musk's politics. They haven't put out anything new other than the Cybertruck since like 2010. I mean,
yeah, to Tesla's credit and what I have in my model, I do have volumes quite resilient next year, despite the $7,500 tax credit going away. And that's because of full self-driving, right? I do think Tesla is far ahead of the competition for their hands-off and soon maybe eyes-off driving capability. And so I do think that is the driver to demand, but it's going to come at a cost, right? Pricing will come down, and the early commercialization of Robotaxi and Optimus is going to have costs associated with it, and that's what also drives lower profitability.
I mean, you saw that in this quarter, right? Like there was a really big hit on operating expenses because of the AI. But if Tesla is viewed in this market maybe more as a tech company, even though your price target doesn't see it that way, we've seen other tech companies be rewarded for spending more. The more you spend on AI, the more ahead you get in the race of whatever's going on. Does Tesla not get that benefit of a doubt that it needs to spend in whatever this AI future is going to look like?
I would say they get a substantial benefit of the doubt. What I've done is taken a look at the Mag 7, right? The Mag 7 group, which Tesla is of course a part of. The average Mag 7 margins are 30% plus or minus. NVIDIA is the highest margin at around 60 or 65% EBITDA margins. Tesla is going to be at 15% next year, and if you fast forward to what their 2035 version looks like, right, which I'm giving them substantial success in that view, their margins are still only around 25%, which would be the lowest among the Mag 7. So I do think Tesla's getting a lot of credit already as a tech company.
Can I ask about Ford? It's coming out after the bell. You have not got an outperform on that stock. You do on General Motors, which obviously, the stock crushed it over the last couple of sessions. But year to date, they're still like neck and neck at 25, 26%. What do you expect from Ford?
Yeah, the issue I have with Ford is valuation, where they're trading at a 4 to 5 times PE, price to earnings premium versus GM. And typically they trade at a 1.5 turn premium. So the valuation is already stretched, and I would not expect tonight for a significant guidance raise from Ford. We did see one with GM, right? And of course that reflected in the stock reaction.
What's the problem? Why can't Ford? Because they make expensive big trucks too.
Yeah. So for Ford, they have an aluminum supplier that they're specifically exposed to. They had this aluminum supplier had a plant fire. That we estimate is going to drive almost 40,000 lower volumes in the fourth quarter. So that's going to be, kind of offset. I would expect Ford to have a better tariff outlook. GM also shared that. Yeah. So I think that's a positive for Ford, but then that gets offset by the fourth quarter aluminum supplier.
Were it not for the fire, James Picariello there of BNP Paribas talking to us about cars. I hope you come back because I like to talk about cars. I will today speak after the close with the CEO of the Ford Motor Company. Jim Farley joins me and Romaine Bostick at 4:20. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Look at some of the movers on our radar here. Just 5 minutes to go until the start of trading. T-Mobile gained 1 million new phone subscribers in the third quarter and raised its outlook for the year. It's working with SpaceX on direct-to-device services, but shares down 1%. Southwest Airlines, they posted a surprise-adjusted profit in the third quarter after implementing a new fee for bags. Those shares up just under 1%. And Honeywell raised its full-year profit outlook as it plans to spin off its advanced material unit later this month. Shares up 4%.
There's so much going on today. There's a ton of
earnings
news.
I think it's the second busiest week for earnings this week. So yeah,
we're in the heart of it.
We have the big tech giants next week, so it's going to get even crazier.
All right, less than 4 minutes until the opening bell. We're going to kick off trading with Ann Berry today. Talk to her about those big tech misses and bring in Anurag Rana from Bloomberg Intelligence as well. This is Open Interest.
For Trump to win, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEM and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good education, and latest technology. That's the only way to go. Education not contribute much profit for equity, but from the country point of view, that's most useful contribution what equity should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging.
Yes, exactly.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We've got a ton of earnings news out today. No shortage of geopolitical tensions simmering as well. And you have S&P futures actually coming up into the green, but really little change here. NASDAQ futures, very little changed as well. And this has been a theme. We haven't really broken out of a range that we got into last week. We did have an amazing, obviously, Monday, but we sold off yesterday. And right now we hear the opening bell of New York Stock Exchange, Energy Vault, enabling a renewable world. This is a company that you would expect to be absolutely crushing it as we need energy from anywhere we can get it for AI. They had a good year so far. I think they're up 40% year to date, but over the past 5 years, down 65%. Down at the NASDAQ market site, you've got Forbes ringing the bell. I believe that's Moira, Forbes herself. I don't know why. There's some kind of anniversary. The most powerful women's list, and that's why.
In sports, and I think they had an event with a lot of athletes at it who were all very impressive. I wasn't there. I saw photos of people there. It looked very cool.
There you go. There you go.
A not cool day for Tesla, if I can make that horrible segue. Its shares are down 4 1/3%. Their profit dropped in the third quarter. That's despite the fact that they had record sales. Earnings are down 30% from a year ago. Matt, the problem is that they're spending a lot on AI, so margins don't look great. They also cited tariff concerns, too. All that weighing on the shares this morning.
Yeah, IBM also reporting disappointing, well, for IBM, it's revenue that disappointed in its key software businesses. Bloomberg Intelligence says the results suggest that organic software growth is slowing, even at Big Blue. And I think that's interesting as we often hear concerns about AI eating software's lunch. Joining us now to talk a little bit more about this and really the whole tech space is Bloomberg Intelligence senior analyst Anurag Rana. Anurag, in terms of IBM, what is the problem specifically?
You know, you could say there was a modest deceleration in a couple of the units, and, you know, Red Hat came in slightly lower than where consensus was. And there's another segment called transaction processing, where everybody was thinking it would turn around this quarter. That was also in the red. So those two things, I think, are a bit concerning. On the good side, I think free cash flow is really good. That was a big positive.
Even so, you're seeing a lot of quantum stocks rally today, Anurag, on this news that maybe the Trump administration is going to be taking stakes on them. Does IBM not have that as part of their business? Could IBM be a potential contender for this? And if so, why are shares down still nearly 5% if that could be in their future?
That's actually a very good question, and I don't think a lot of people are thinking about it that way. IBM has a good quantum practice. I think they're one of the early ones in the area. In fact, all the big companies, all the hyperscale cloud providers have a good place in quantum. But at the same time, it's not a pure play. You know, what we are seeing right now is stakes in a lot of the pure play being talked about, and I think those are the ones that are getting the lift at this point.
When we look at the tech earnings thus far, Anurag, and, you know, talk of earnings season was that the beats rate was amazing, but how do the tech earnings or the companies that you follow specifically seem like they're doing in the third quarter?
See, you have to bifurcate it in two groups: the ones that are, you know, dealt with AI infrastructure, and the other, you know, all the other ones. It's all the other ones that are having a negative reaction. If you look at Roper, for example, right now, it must be down 6.5%. They just announced a slowdown in organic sales growth also this morning. We saw the similar numbers from Salesforce, from Workday. Accenture's consulting business is weak. So anything that's non-AI infrastructure driven, that is not doing well, while the AI infrastructure play is well. So I think the world is, completely divided into two buckets at this point.
Anurag, we had Workday on the program yesterday. You and I discussed it, but software, enterprise software, be it Workday, be it Salesforce, I mean, it has gotten so punished in this market. The idea being that AI will completely disrupt their businesses. These executives are steadfast that no, that is not the case. They are adopting it, and they will not just weather the storm, but lead the advancements in AI. Are we actually seeing that play out yet? For these software companies, is AI yet a meaningful part of their revenue?
No, they're not a meaningful part of their revenue. And in fact, it may not happen for a while. Software by itself is, should progress in the nature of, evolution of functionality. So AI is just part of it. But when you think about the software landscape, there are two things you have to think about. Is this a structural problem or this is a cyclical problem? We are in the bucket that this is more of a cyclical issue, and people like OpenAI are not going to go out and disrupt systems of records that have been around for a while. Somebody like an SAP, for example, that's been around for a while. Workday, same story.
But why? I mean, if I get a good artificial intelligence woman or dude on my team, can't I say, hey, go make me some payroll software, take care of my health insurance, do my scheduling, like everything. Why would I have to buy it from some other company that has a silly name?
Yeah, it's okay if you are a 5 or 10 person, shop or a pizza area. But if you are a large multinational that has to sign up for, Reg FD and going out and, doing compliance and, accounting, you're not going to go out and leave it to an LLM. You're going to use a system of record that has been housing your data for 30 plus years. It's not going to be that easy to get rid of that, especially for large enterprises. And that's where most of the money comes from, people like SAP and Workday.
All right, Anurag, thank you so much. Anurag Rana of Bloomberg Intelligence. Is it the names you take issue with, the silly names? Is that the problem?
Snowflake, MongoDB.
Yeah, but you remember them better, right? Maybe it's fantastic marketing to be called Snowflake or MongoDB.
No idea what they do. They all just provide solutions, right?
Yes, everything just provides solutions. Okay, let's get a check on the stock market right now, about 6 minutes into your trading day. And we go back and forth, whether it's gains or losses. At the moment, we're looking like gains, up 0.1%. We fell yesterday after consecutive days of gains. So do we get back to a momentum trade that's been really struggling? In fact, this week, if you were to buy momentum stocks, that would have been the worst performing strategy of all the factor strategies like value, volatility, et cetera. Doing the best in terms of points moving is Apple and Broadcom. You just got a lot of the Mag 7 here. Apple, Broadcom, Amazon, Alphabet. Some of them suffered yesterday. Meta's in there too. To the downside, though, it shouldn't be surprised. It is the unloved child, the ugly stepchild, whatever you want to call it, of the Mag 7 today. It is Tesla. After earnings that showed some real stress, be it in operating expenses or a tariff hit, shares down 5.33%. And of course, we were just talking about IBM. That comes up second on the list as the biggest drag on the indexes. For the sectors themselves, you're going to get this push and pull between this tech doing well and IBM and others falling. And overall, that's resulting in a tech index that's little change. It shouldn't be surprised at what's at the top of the pile. It is energy. Oil is up 5 to 6% this morning after increased Russia sanctions coming from the U.S. Consumer discretionary, that is at the bottom of the pile, but just consumer discretionary and healthcare are lower. The rest of the sectors into the green this morning, Matt.
All right, so we should be set up, at least from the industry breakdown, for gains. Coming up, Ann Barry of Threadneedle Ventures joins us at the desk as big tech misses mount. This is Bloomberg Open Interest.
Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Let's look at some top calls this morning, some of the analyst action that we're watching. First up, Newmont gets an upgrade at Scotiabank. The analysts point to higher gold prices and say that they expect stronger operating performance ahead. Those shares up 1 1/3%. Next up, Morgan Stanley upgrading Lending Club to a buy. They raised their price target to a street high of $22. It's trading just below $19. The analysts say that the company now has more ways than ever to expand its profits without facing a punitive accounting rule. He expects the company to see faster profit growth and stronger returns next year and beyond. And finally, Core Scientific, that gets raised to a buy at Roth Capital Partners. The analysts citing growth expectations that shareholders will reject the proposed merger with CoreWeave. Shares, though, unable to hold on to gains, just slightly lower. Matt.
All right, let's talk about some of the bigger tech earnings that came out. Joining us at the desk is Threadneedle Ventures founder Ann Berry. And we've had big gyrations in this market with momentum trades like AI losing steam. Earnings misses seem to be piling up here, even though we had such an incredible beats rate thus far.
Yeah.
And what's your, first of all, welcome.
Thank you.
Thank you for joining
Good
us.
to see you both.
What's your take on the misses that we've seen? Are they, is it indicative of so many cockroaches, or are they idiosyncratic issues?
Let's hope it's not cockroaches in AI, because so much is now depending upon it. Let's hope that's been left with, subprime auto loans. I think expectations were extremely elevated for this quarter. There's no getting around it. But what I do think is interesting, Matt, is when you look at the different reasons for the beats or the underperformance, they're pretty esoteric by company. And I think this is where we start to see that the AI trade isn't monolithic, and that the market really has to start drilling down to why is IBM different from NVIDIA? Why is that different from some of the other big tech names?
Well, if you look at someone like Tesla, one of it was the AI spend, but another part of it was tariffs. And they're not the only company to cite tariff issues. We had Mattel earlier in the week, toy companies obviously very exposed. Considering a lot of companies were able to front run some of the tariff issues, is now kind of the period where we're finally seeing some of the stress filter through?
I think we are maybe seeing it filter through. Mattel actually is a fascinating. Can we just talk about Mattel for a second? Here's why I found that one fascinating. If you look at Walmart, Target, the big retailers, last quarter is the time they place their orders for toys to sell in the holiday season. So Mattel, we always knew there's going to be a tariff issue. There's a second issue there I'm looking at, which doesn't mean the big retailers are expecting weaker holiday sales than expected. So the pieces of the jigsaw puzzle are coming together.
Wait, what's the second issue? Because we know you don't need 30 dolls. You can just do with one or two.
Well, didn't
right?
President Trump actually say that? In fact,
Yes,
that was, so you guys are on the same page. But, so the first one is around tariffs. The second one is, fundamentally, what are the biggest retailers with the biggest insight to what consumers are feeling, anticipating for this holiday season? That worried me a little bit. But yes, I think we're seeing tariffs come through. We're seeing people being much more transparent about where they're seeing softness. Hilton was another one, right, saying we're seeing U.S. demand down, offset by international growth. This is the earnings season where people are having to provide real detail. They're going back to providing guidance, and they've got nowhere to hide at this point. There's enough clarity.
Can we just, I don't want to take this too far off the tech path, right?
Okay.
But
we're going off the reservation now.
We have, Ann and I have a special interest in toys. And, well, Hasbro, right?
Yes,
because
okay.
both of us have interviewed Gina Getter.
That context is so important.
That is very odd.
We've both spent time with the CFO of Hasbro, and they are crushing it. Look at this chart. Hasbro is up 40% year to date, and Mattel is basically treading water. Why are they doing so much better?
Well, I think Hasbro has been leaning a lot more into this adult affection for collectibles and toys, more so than Mattel. So when you look at the portfolio that Hasbro has, I think they're slightly more skewed to that. And I
Dungeons and Dragons,
exactly.
Magic the Gathering.
Magic, exactly, the card games, versus, Fisher-Price, for example, or Barbie at Mattel, which did see that blockbuster with the movie. But they sort of set the stage for IP monetization. Hasbro sort of seen them and raised them. I think that's how that's gone so far.
It feels just like real dispersion, that we went from an environment where, oh God, everybody is going to be in trouble because of tariffs, to actually everybody's okay, to now, to your point, you have to actually look at the details and figure out who's winning and who's not winning. How much does that mean you can invest at an index level right now versus individual companies? How does that change things going forward when you're thinking of how to actually be involved in this equity market?
Well, I think the index level's been problematic for a while just because of the sheer level of concentration we've seen in these biggest tech companies. But I'll give you an example because I know Matt wants to bring it back to big tech now that we've gone to toys. Let's take an example of unpacking the AI trade. Let's take IBM, for example. I know that's one you're interested in. IBM right now is trading at north of 4 times price to earnings to growth ratio. Right, you look at that and say they had actually a pretty decent quarter. Their cloud growth wasn't quite as expected, although healthy teens. And you say, well, do I go and do that? Or do I go and continue to invest in NVIDIA at 1.5-ish times price to earnings to growth ratio? That's where I think it gets really tricky, Danny, because the valuation spread we're seeing right now is incredibly dispersed.
Let's talk for a moment about Netflix.
Yes.
Because obviously the shares have run into some trouble lately, but they've done well over the last 5 years, up 130%.
Yeah.
I heard someone say yesterday, it's not about Netflix versus Disney or Netflix versus, Amazon or Netflix versus Apple TV. It's Netflix versus YouTube.
100%.
On a channel on which you're fairly popular yourself. What do you think about that, that battle?
So I think that they're going to play to 2 quite different audiences. And this is where I think Netflix is going to be a very credible competitor for YouTube over time. And I say this, I'm holding my nose and buying more Netflix stock because it is still objectively expensive. I do think in the world of more AI slop, people are going to look for destinations where they really want higher quality, curated, high production storytelling. And I think Netflix is trying to find lots of different ways at the moment to make sure it's the ultimate destination where you and I can go find it. It's the partnership with Spotify to try and get very popular Spotify podcasts turned into really high quality video content. I think that's important and on point and on trend. If you look at what they're doing in games, we just talked about Hasbro. Netflix has just got a partnership announced with Settlers of Catan, right, the board game. They're really trying to figure it out, and they're being more creative, I think, than others. And by the way, AI has run through their blood, whether it's the algorithm or that's generative, for much, much longer than the other.
But YouTube is crushing it. I mean, I have both.
Absolutely.
Right?
But one thing YouTube has is, like, I don't have to pay for YouTube. I can just log on and watch an ad version of it, or not log on, rather, and just watch an ad-supported version of it. More of that is popping up. What's the other one? Tubi, I think, is free too. Are these real threats to Netflix? Does Netflix need to come out with some free version supported by ads?
Well, it's got the ad-supported tier, absolutely.
Right, but a free tier with advertising.
I think about this in a slightly different way, which is think about the apparel sector. Do you want The Gap? Do you want Old Navy? Do you want Gucci? do you want? I think of Netflix as the luxury equivalent in a world in which content is now purely a consumer product, it's consumer tech, and there are going to be tiers, and depending on what you want to go shop for, in some cases you'll go to YouTube for the lower end stuff, and in some cases you want to go luxury and you're going to go Netflix.
Yeah, be better than the Gap. I guess.
You know, I think of it differently. We don't have to get too deep into this, but I want Aero Leathers. I want Eastman. I want the real McCoys. These are actual luxury products, not just brands slapped on plastic made in China, you know, but we don't have to get too deep into that.
I was going to ask where are you going for those things, but yeah, there's definitely
you got to go to Tokyo, you got to go to Sheffield. All right, Threadneedle Ventures founder Ann Barry, they're talking to us about the market. We've seen some real gyrations here, and we're focusing in on what's driving that and earnings season, of course, as well.
Yeah, speaking of where you go to shop for things, how about Nike? Coming up, we're going to head to Nike's headquarters. We have a behind-the-scenes look at its new products and new strategy. Stay tuned for that coming up next. You're watching Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. We saw futures down, and we're looking now in the cash trade gains on the major indexes. The S&P 500 now up about 0.5% at 67.29. I believe the closing high is 67.53. The intraday high is about 67.62. And I know Jonathan Krinsky over BTIG said if we get above 67.62, then we're off to the races, but if not, we remain range bound here. The NASDAQ up 0.5% at 25,000 even. Take a look at some of the individual movers to my left. NVIDIA, one of the big reasons for the gain, up 0.5% right now. Tesla, obviously the big miss. It's a drop of 4%, but Tesla's only worth $1.5 trillion only, right? Not even, and NVIDIA is worth well over $4 trillion. American Airlines adding to the airline successes that we've seen from Delta and United. Southwest actually getting punished in today's market after its earnings report, down 4 2/3%, I should say. And then we have Las Vegas Sands gaining almost 10%, so adding a tenth to its market cap, and Warner Brothers Discovery up about 2% right now, 1.8%. Danny?
All right, shifting gears to Nike, Matt, because it's been 1 year since Nike CEO Elliott Hill took the helm of the world's largest sportswear company, unveiling a suite of new products to usher in a new era. Bloomberg's Romain Bostic spoke with the key players of the turnaround initiative.
In the heart of Western Oregon lies a 750,000 square foot plus complex. so secret, few are allowed past the lobby.
If you love sports and you love product, this is kind of Disneyland.
All told, more than 800 pieces of testing equipment under the roof of the LeBron James Innovation Center, home to the Nike Sport Research Lab.
This is the home to dreamers, creators, makers, engineers, some incredible teammates of ours who are all dreaming about serving elite athlete problems.
Yeah, what Nike as a brand is founded on, really at the core of our history and heritage, is listening to the voice of the athlete.
Amy Montaigne is the new president of the Nike brand. Phil McCartney is the new Chief Innovation Design and Product Officer. They are two of the key players in CEO Elliott Hill's full court press to reinvigorate growth following former CEO John Donahoe's reign. It was a tenure that saw annual sales begin to drop in 2024.
We're going to obsess sports. I think that's been since Elliott returned. The reason that we start with elite athletes is when we solve those discerning problems, those milliseconds, micro millimeters, we can create products that then translate down for athletes every day all over the world.
Speaking of the everyday athlete, I put on my running shoes and geared up for an afternoon under the microscope of some of Nike's best researchers for a head-to-toe consultation. Nike's Chief Science Officer, Matt Nurse, providing some words of encouragement along the way.
So we have an expression, if you have a body, you're an athlete.
Yeah.
And a lot of what we learn from elite athletes does trickle down and help everybody, but a lot of what we learn from everyday athletes does trickle up. Honestly, today is just a more modern, sophisticated incarnation of what Bill Bauman was doing in his lab, but allow more sports, more athletes, full speed, full motion, but we're solving the same problems, doing the same thing.
A little different this time around. Mounting pressure in the running space, under threat by competitors like On and Hoka.
It's fair to say that the distance between ourselves and our potential is a little bigger than the distance between ourselves and our competition.
What I believe and want for the Nike brand is for us to always remember our roots and to honor our founder, to really come in every single day obsessed with serving the athlete, listening to their needs, not only meeting their expectations, but taking them somewhere new. And when we do that, there is all the opportunity in the world for our future.
And that was Bloomberg's Romaine Bostick covering Nike out of Oregon.
Yeah.
Are you, I mean, you're an athlete.
I'm not, I have like every kind of pair of shoes. I have Ons, I have New Balances, I have everything except Nike.
Oh, really?
Yeah, well, I mean, they have. I mean, to Romaine's point, they've been lacking behind in innovation. I don't get my tennis shoes. I get those from New Balance because they're crushing it with tennis shoe technology. Running, you have Ons and those kinds of competitors that are doing really interesting stuff. Maybe Nike will catch up, but for now I don't have any.
All right, I just have like a 20-year-old pair of Prince squash shoes. Coming up in the next hour, Blackstone's John Gray on concerns in the credit market, Karen Pay, a fiduciary trust on market fragility, and American Airlines CFO.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. and inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
What is going to be the consequence for U.S. markets?
We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Verdon outside Windsor Castle, England, and this is Bloomberg.
Just handed, Miles?
Oh my God, this thing is, we've got to be talking about 50 between the 3 pages.
Okay, you've got 7 minutes to read it all, and only Miles Miller can do that. Miles Miller, thank you so much. Yep. Sean Griffin, professor at the Citadel. This is the way we do it on Bloomberg Surveillance. Adult conversations on the news breaking at the moment. Here with the Dow, I think it's green on the screen, the VIX 18.28 as well, Dow up 72 points. In time for this press conference on sports in New York City and the nation. Paul Sweeney and Scarlett Fu.
Tom Keene, thank you very much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube. We will have that press conference from the Southern District of New York as it occurs in just moments. But let's get a reset here of these markets. We'll go to John Tucker in a Bloomberg Business Flash.
All right, guys, good morning. And this Bloomberg Business Flash brought to you by IBKR. Will the Fed leave the rate unchanged at the October 29, 2025 meeting? At IBKR forecast trader, the yes was recently at 38%. Start predicting today at ibkr.com/forecast. Last trading day for this contract, October 29th. Right now, the major stock averages are higher to little change. Let's start off with DraftKings. Just curious how that is doing, given the news we've just heard. DraftKings shares now down about 0.5%. Overall, you have 7 of the 11 major industry groups in the S&P 500. Again, they are higher right now. Energy in the lead as the price of oil surging 5% with those sanctions on Russia. After the earnings, Tesla among the worst performing stocks in the S&P 500. That earnings report showing rising costs there. Right now, the Dow up 38 points, S&P 500 up 22. The NASDAQ Composite Index up 101 points. All eyes on the data tomorrow. After weeks in the dark, the CPI may show a higher rate of inflation. In the meantime, Cameron Dawson at New Edge Wealth says earnings are in the driver's seat for stocks right now.
Earnings have been the key reason why this market has been so very resilient. If you're revising up earnings estimates, it does something really powerful because not only are you increasing your estimates for profits, but you're also providing the environment to be able to expand multiples.
Once again, the S&P 500 up 22 points. And how's this for an economic indicator, Paul? Eagle Foods, the Cleveland, Ohio-based company behind Hamburger Helper, says its year-over-year sales rose 14.5% for the month of August. They're benefiting from renewed consumer interest tied to inflation and tighter household budgets. The things you can do with Hamburger Helper.
Sure.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker studio and streaming live on YouTube as well. This NBA news, Scarlett, is just kind of really out there, it seems like, and we're waiting for the U.S. Attorney for the Eastern District of New York. He's going to lead a press conference in New York with FBI officials any minute now. We'll bring that to you, but I'm trying to figure out, is this affecting the games themselves, or is this just tied to some gambling
I think
debts,
that's what
some
we're all
poker
trying to
games.
figure out,
Yeah.
right? I mean, we don't know a whole lot of details. We know that a total of 31 people are expected to be arrested. What it looks like, at least in our initial reporting, is that this has to do with rigged poker games taking place in Manhattan, the Hamptons, Las Vegas, perhaps other locations in New York. But that's not to say this isn't bigger either. And we were just hearing how shares of DraftKings are down because it's not clear whether this has to do with perhaps players betting on the outcomes of games that they have stakes in, they're involved in. When you have coaches, head coaches, and players involved, that raises all kinds of questions.
It does. And Miles Miller from Bloomberg News was just reporting that FBI Director Kash Patel is coming up from D.C. for this press conference as well. So that suggests a certain level of weight to this story. So we'll have that press conference as it occurs. We'll have full reporting on that as we go along through the day. But let's get a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Tatiana Darrier. Tatiana, what are you looking at today?
Well, kicking it off with Tesla down 3% today as profits missed despite a record quarter of sales. So a beat on sales, better than expected cash flows, but operating expenses soared 50% to $3 billion in the quarter. That almost matches the amount of free cash flow that they generated, which goes to show that the company isn't immune to the rising costs that we see in the auto industry due to President Donald Trump tariff policies. But most importantly, it also shows that the company is heavily spending on its robotic and AI initiatives. Well, after that call, investors are left with more questions than answers because Elon Musk discussed ambitious but yet vague initiatives in robotics and AI, saying he'd be surprised if 5 years from now they're not making 100,000 robots a month. That sounds great, but 5 years is a long time. You know, those investors aren't quite comfortable with the comments that they've heard. Shares are down 3% and are trailing the Magnificent Seven year to date.
That phrase was key. Ambitious yet vague. That kind of sums up everything about Tesla right now because we're not clear what the growth drivers are in the near term. Tatiana, you're also looking at LC, Lending Club.
Lending Club. So the peer-to-peer lender posted earnings that beat expectations, and its guidance for origination was ahead of estimates. Those shares are up 15%. Your ticker is LC, and the solid results earned the company an upgrade from JP Morgan to overweight. So the stock now has 9 buys and 2 lonely holds and no sells. And you know, importantly, their originations rose 37% year to year. So investors like that, but it almost makes you wonder, you know, what stands behind this sort of rush into loans and borrowing. But at the same time, importantly, they provided more disclosure on their provision for credit losses, which fell year over year and were below estimates. So if, you know, there were concerns that consumers are falling under pressure due to the weakness in the labor market and tariffs, this is yet another key company that is telling us that those concerns are contained or limited for now.
That's the question, I think, for a lot of these stories that are coming out about credit in the credit markets. How, not to use John Tucker's word, idiosyncratic are they, or how systemic are they? I don't know. People are trying to get a handle on that.
Exactly, and that's why we keep monitoring one by one to see if it's more widespread than just a few names.
Gotcha. Okay, Dow.
Dow shares are up 11% now. Dow Chemical,
Really?
Exactly. Your ticker is DOW. Operating EBITDA beat the average analyst estimates as volume rose. Analysts said they saw upside driven by packaging and specialty plastics. However, they noted that the backdrop for commodity chemicals remains weak. And I think, you know, this is a very important name to go back to the credit concerns, because this is one of the industry that those credit investors are watching very closely after the auto industry, because it has been for some under pressure for some times, battered by many headwinds like weak demand, tariffs, and capacity constraints. Well, so far, Dow provides sort of a good result there that should allay some of those concerns. This is a name where sentiment has been very negative. If you look at the stock, is down 45% this year, so it can definitely use some good news this morning.
All right, Tatiana, thank you so much. We appreciate that. Tatiana Darrier, Bloomberg News, giving us the latest on what's moving in the marketplace. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Again, we're waiting for a press conference. U.S. Attorney for the Eastern District of New York will lead a press conference with New York and FBI officials to announce details stemming from 2 indictments involving illegal gambling schemes involving current NBA players, former NBA players, a current coach,
head coach of the
NBA, the Portland Trailblazers. So this is messy.
This is messy, and the NBA has been dogged by gambling scandals for more than a year already. One of the Toronto Raptors, Jonte Porter, has been banned from the league for life for conspiring with gamblers to fix his performance in NBA games. And this was always kind of the concern when the professional sports leagues opened themselves up to legalize sports betting, that somehow players would start getting involved, that the temptation was too great or the money was too great to be able to do something like that.
I'm thinking now we have professional sports teams in Las Vegas, and that was just, you never would have thought that.
The epicenter of the gambling,
exactly
the legalized gambling.
Some of the Bloomberg reporting, participants, including current and former players, were told when to win and when to lose, according to the people familiar with the matter. Several defendants were paid to take part in the games, which investigators said appear to have been profit-driven rather than efforts to repay gambling debts.
That's another motivation that, of course, people are keeping a very close eye on as well.
Yeah, we just had a guest on, right, to finish up the surveillance, and he's a professor at the Citadel, and he's written a book on this whole issue, the NBA and gambling, and he brought to light that a lot of these high-profile players and personalities can't just walk into a casino, and if they want to gamble big, because maybe it's not good for their image, and so they go to these underground games or private games, and that's where the trouble. That's where they can get into
It's
trouble.
supposed to be less profile, but of course there are a lot of big whales there as well. And when word gets around, as it appears to have right now, then it could all unravel pretty quickly.
Yeah. So in January, the NBA said it was alerted to suspicious betting activity involving Mr. Rozier in March of 2023 when he was playing for the Charlotte Hornets against the New Orleans Pelicans. League spokesman Mike Bass said in a statement at the time that internal review, quote, did not find a violation of NBA rules. So Terry Rozier is now with the Miami Heat.
Do you think that the NBA is different from other leagues in that players can have an outsized influence on the outcome of a game, or at least individual stats?
It seems like it, because it just seems like you could simply taking yourself out of a game, simply missing a shot. I mean, and we've seen it in the history of the sport. Colleges, back to Boston College and some others. And you've seen it even before that. So I think the answer is yes. Whereas
certainly
in football,
compared to like the NFL or the NHL or MLB, right?
It seems like it. Again, particularly if you have somebody who's, plays a lot of minutes. You could just, I think one here, concerned about somebody took themselves out of a game early, and that was a game that was under review. So it looks like it. And I think most sports leagues probably just holding their breath saying, at some point we're going to have to deal with this because this is likely to come up, and this may be one of those issues with the NBA.
Every time there's a headline about former players or ex-players who've been arrested on some kind of gambling issue, your mind always goes to the idea that this is what everyone was afraid of seeing when the leagues opened themselves up to legalize gambling.
And I told the story earlier to Tom, sitting in our favorite breakfast spot last weekend, high school boys were sitting at the counter talking in great expertise and details about betting, the types of bets they were going to make that day on college football.
Parlay bets, I'm sure, right?
Exactly. I was like, you're 14, 15 years old and you're talking about
Well,
betting.
this is what the leagues wanted, too. They wanted the engagement of fans, and they're getting that.
I guess they are getting it. So, again, we have some video right now of some folks getting together in New York City, officials about ready to start this press conference here. So the U.S. Attorney for the Eastern District of New York will lead a press conference with New York and FBI officials. So this is federal, to announce details stemming from 2 indictments involving illegal gambling schemes. So again, we'll bring that to you. Let's go right now to this press conference in Lower New York.
States Attorney for the Eastern District of New York. I'd like to welcome you here today. In addition, we have with us today FBI Director Kash Patel, FBI Assistant Director in Charge Christopher Rea of the New York Field Office, Special Agent in Charge of the New York Field Office Leslie Bakshi's, New York Special Agent in Charge of Homeland Security Ricky Patel, Newark Special Agent in Charge of Homeland Security Michael McCarty, Police Commissioner Jessica Tisch, Chief of Detectives Joseph Kenny, and the Executive Director of the Waterfront Commission, Phoebe Sorrell. I'm now going to turn the podium over to FBI Director Kash Patel.
morning. Today we are here in New York to announce a historic arrest across a wide-sweeping criminal enterprise that envelops both the NBA and La Casa Nostra. The men and women up here standing with me represent a small portion of the leadership team that brought profound justice in an era that needed it more than any. I'll just highlight some of the details in the case and the FBI work, and then you'll hear from the others. But as you now know, individuals such as Chauncey Billups, Damon Jones, and Terry Rozier were taken into custody today, former, current NBA players and coaches. What you don't know is that this is an illegal gambling operation and sports rigging operation that spanned the course of years. The FBI led a coordinated takedown across 11 states to arrest over 30 individuals today responsible for this case, which is very much ongoing. Not only did we crack into the fraud that these perpetrators committed on the grand stage of the NBA, but we also entered and executed a system of justice against La Casa Nostra to include the Bonanno, Gambino, Genovese, and Lucchesi crime families. And you'll hear more about those details today. The charges and the arrests that were taken down across this country range from wire fraud, money laundering, extortion, robbery, illegal gambling. This FBI will leave no room for any perpetrator of crime across this country. You hear a lot about our work of defending the homeland and crushing violent crime. Well, this work is also representative of a colossal portion of the FBI's mandate to keep America safe and to keep our entertainment industry fair and secure. The men and women that are standing up here today worked tireless hours, days, months, and years. And the fraud is mind-boggling. It's not hundreds of dollars. It's not thousands of dollars. It's not tens of thousands of dollars. It's not even millions of dollars. We're talking about tens of millions of dollars in fraud and theft and robbery across a multi-year investigation. And we could not have done it without our interagency partners that are before us today. The NYPD, HSI, and teams of law enforcement officials from around the country made this day possible. It takes a team to bring this kind of justice, sweeping justice, into the halls of the United States courtrooms, where our brave United States attorney has led this prosecution. It takes courageous prosecutors to stand before you and say, we will not allow this kind of illicit activity to happen, not only at the national sporting level, but also where it hides in La Casa Nostra. And when these two collided together, they perpetrated a fraud that is historic in terms of not just money, but the scheme and the deceit that they utilize to steal and swindle people from money, to include crypto fraud. This is an operation that showcases to you that under President Trump's administration, there is no room for any type of criminal behavior, be it on the world's largest stage or in the back rooms of tiny parlors where card games are being played. We are proud to stand here today with the men and women of the FBI and this legal team. And to the United States Attorney, I just want to thank you personally for taking the time to display the work that the media is about to hear about today in detail. As I said, it does take courageous prosecutors, but it takes a courageous United States Attorney to bring this case, because we are going to take heat for it. But we don't shy away in this administration. We don't say no. What we do is we bring the results across the finish line. We bring them to the public. We bring you accountability. And yes, they will have their day in court, and you will hear the evidence through the court system exclusively. We will not deny anyone of due process. And that's the brilliance of this system. That's the brilliance of this administration. Everyone will be held to account. So with that, I turn it over to United States Attorney Nosell. Thank you.
Thank you, Director Patel. To be clear, we're announcing today indictments in two major cases, both involving fraud. One involves sports betting, and the other involves illegal gambling, very specifically rigged poker games. The first indictment involves 6 defendants who are alleged to have participated in one of the most brazen sports corruption schemes since online sports betting became widely legalized in the United States. This scheme is an insider sports betting conspiracy that exploited confidential information about National Basketball Association athletes and teams. The second indictment involves 31 defendants alleged to have participated in a nationwide scheme to rig illegal poker games. These defendants, which include former professional athletes, used high-tech cheating technology to steal millions of dollars from victims in underground poker games that were secretly fixed. The games in the New York area were backed by the Bonanno, Gambino, and Genovese crime families of La Cosa Nostra. While the cases are separate, there are 3 overlapping defendants charged in both cases: Damon Jones, Eric Ernest, and Shane Hennon. The indictments in these cases contain only allegations, and the defendants are presumed innocent until they are proven guilty in a court of law. But my message to the defendants who've been rounded up today is this: your winning streak has ended. Your luck has run out. Violating the law is a losing proposition, and you can bet on that. First, I would like to talk about United States versus Ernest, the NBA basketball gambling case. The defendants in this case are Eric Ernest, Marvez Farley, Shane Hennon, De Niro Laster, Damon Jones, a former NBA player and coach, and Terry Rozier, a current NBA player. Other co-conspirators were previously charged for their roles in the scheme, including former NBA player Jonte Porter. Between December 2022 and March 2024, these defendants perpetrated a scheme to defraud by betting on inside, non-public information about NBA athletes and teams. The non-public information included when specific players would be sitting out future games, or when they would pull themselves out early for purported injuries or illnesses. They relied on corrupt individuals, including Jones and Rozier. They also misused information obtained through long-standing friendships that they had with NBA players and coaches. And in at least one instance, they got their information by threatening a current player, Porter, because of his pre-existing gambling debts. Defendants used this non-public information to place hundreds of thousands of dollars in fraudulent bets, mostly in the form of prop bets on individual player performance. The bets were placed through online sports books and also in person at casinos. The defendants relied on a network of straw bettors to place the maximum amount of bets to increase their potential profits. Most of these bets succeeded, and the intended losses were in the millions of dollars. The defendants then laundered their illegal winnings in various ways: peer-to-peer platforms, bank wires, and simple cash exchanges. The indictment details specific examples where the defendants profited from illegal gambling and illegal betting on various NBA games about the performance of players on, among other things, the Charlotte Hornets, the Portland Trail Blazers, the Los Angeles Lakers, and the Toronto Rangers. Each defendant in the NBA basketball gambling case has been charged with conspiracy to commit wire fraud and conspiracy to commit money laundering. Now, I would like to turn to the other case, United States versus Aiello, the rigged poker game case. Beginning as early as 2019, the defendants in this case orchestrated a scheme to use wireless cheating technology to run rigged poker games across the United States, including in the Hamptons, Las Vegas, Miami, and Manhattan. The scheme targeted victims known as, quote, fish, who were often lured to participate in these rigged games by the chance to play alongside former professional athletes who were known as, quote, face cards. The so-called face cards included the defendant Chauncey Billups, who at the time of the scheme was a former NBA player and is currently the head coach of the Portland Trail Blazers, and also Damon Jones, a former NBA player and coach. What the victims, the fish, didn't know is that everybody else at the poker game, from the dealer to the players, including the face cards, were in on the scam. Once the game was underway, the defendants fleeced the victims out of tens or hundreds of thousands of dollars per game. The defendants used a variety of very sophisticated cheating technologies, some of which were provided by other defendants in exchange for a share of the profits from the scheme. For example, they used off-the-shelf shuffling machines that had been secretly altered in order to read the cards in the deck, predict which player at the table had the best poker hand, and relay that information to an off-site operator. The off-site operator sent the information via cell phone back to a co-conspirator at the table, and that person at the table was known as the quarterback. The quarterback then signaled secretly the information he had received from others to others at the table, and together they used that information in order to win their games and to cheat the victims. Defendants used other cheating technologies such as poker chip tray analyzers, which is a poker chip tray that secretly reads cards using a hidden camera, special contact lenses or eyeglasses that could read pre-marked cards, and an X-ray table that could read cards face down on the table. What you see depicted on a screen right now is an example of the X-ray table that reveals the cards. Although they are face down on the table, they can be read because of the X-ray technology. The Mafia, specifically members and associates of the Bonanno, Gambino, and Genovese organized crime families, had pre-existing control over non-rigged, illegal poker games around New York City. As a result, they also became involved in the rigged poker games, helping to organize the games and taking a cut of the proceedings, and working to enforce the collection of debts. The defendants laundered their proceeds, including through cash exchanges, the use of multiple shell companies, and through cryptocurrency transfers. As part of the scheme, some of the defendants and their co-conspirators also committed acts of violence, including the gunpoint robbery of a person in order to obtain a rigged shuffling machine, and extortions that were perpetrated against victims in order to ensure that they repaid their gambling debts. Defendants who participated in the rigged poker scheme are charged with wire fraud conspiracy. Other defendants have been charged with crimes including illegal gambling, money laundering, Hobbs Act robbery, and extortions. This case demonstrates our office's unrelenting commitment to fighting the scourge of organized crime in whatever form it takes. I'd like to conclude my remarks by thanking the incredible hard work of our law enforcement partners, including the FBI, Homeland Security, the NYPD, and the Waterfront Commission. I also want to thank the dedicated prosecutors who built these two cases and who are standing to my right. Benjamin Weintraub, David Bourbon, Caitlin Farrell, Michael Gibaldi, Irisa Chen, and Sean Sherman. They had the assistance of paralegal specialists Liam McNett, John Schneider, Marlene Bosler. Also deserving of our thanks because of their outstanding investigative work on the NBA case are FBI Special Agents Russell Lantier, Dominic Mariani, Amy Giarosa, Shane Wilkins, and Supervisory Special Agent Luke Hardison. On the rigged poker game scheme, outstanding work was performed by FBI Special Agents Thomas Cribbin, Jeff Boriola, Jonathan Corona, Alexander Silverman, Amy Campanaro, and Supervisory Special Agent Michael Malahi, as well as NYPD Task Officer James McCullough, and from Homeland Security, Supervisory Special Agent Charles Freund, and from the Waterfront Commission, Detective Paul Shimborski. Finally, I want to note that the investigations in both cases are ongoing, and we encourage anyone with information about either scheme to please contact the FBI. Now I would like to turn the podium over to Special Agent in charge of the New York Field Office, I should say the Assistant Director in charge of the New York Field Office of the FBI, Christopher Rea. Chris?
All right, thank you, Joe. As always, we appreciate the partnership here. Can't do any of this without you and your team, so thank you. Also want to publicly thank the director for coming down from D.C. The director's a very busy person, and for him to come down should tell you the importance of this historic case. I'm Christopher Rea, the Assistant Director in charge of the FBI New York Field Office. Today, as you've heard, our office conducted a massive nationwide takedown from 2 indictments of 34 defendants for their alleged involvement in 2 separate illegal poker and sports betting schemes where, as you heard, the odds were rigged in their favor. Among these defendants are 13 members and associates of the Bonanno, Gambino, and Genovese crime families, to include capos and soldiers from these families. Additionally, as you heard, current and former NBA coaches and players are also implicated, to include Chauncey Billups, Damon Jones, and Terry Rozier. 3 of the named defendants are charged for their alleged roles in both schemes. This alleged illegal gambling operation hustled unwitting victims out of tens of millions of dollars and created a financial pipeline for La Cosa Nostra to help fund and facilitate their organized criminal activity. Victims were attracted to play alongside well-known professional athletes and coaches like Chauncey Billups, only to be unknowingly deceived through rigged shuffling machines, fixing the odds in their favor, as alleged, and as you just heard from the U.S. Attorney's Office. This alleged scheme wreaked havoc across the nation, exploiting the notoriety of some and the wallets of many to fund the Italian crime families here in New York. Let me be clear about this fact. The FBI has not and will never take their eye off the ball when it comes to Italian organized crime in this city, specifically the LCN and the 5 families here in New York. We are not going to permit any criminal enterprise, whether it be Italian organized crime, Asian organized crime, Eurasian organized crime. We're not going to permit any of those organized crimes, families, and organizations to operate in our city or our country, as evidenced by the 11 states that were also participating in this operation today. The FBI office here in New York remains committed to eradicating all unlawful revenue streams fueling this criminal activity. As with most cases we work, this is only the tip of the iceberg for the FBI and the U.S. Attorney's Office. Our LCN squad agents and analysts are continuing to work day and night with the Eastern District of New York to ensure members and associates of the 5 families cannot continue to wreak havoc in our communities. Today would not have been possible without the tireless efforts and dedication of the FBI New York Eurasian Organized Crime Task Force, which, as you heard, was led by Supervisory Special Agent Luke Hardison, and the Italian Organized Task Force, which was led by Supervisory Special Agent Mike Malahi. And coincidentally, Supervisory Special Agent Malahi is going out on a positive as he is retiring at the end of this month for 30 years of dedicated service to the FBI, and that deserves a hand. He's what we call a legend here at FBI New York. Additionally, obviously, we cannot do this alone without our partners. I want to extend my appreciation to Homeland Security Investigations Special Agent in Charge, Ricky Patel. Of course, we do nothing in this city without the NYPD. New York City Police Department Commissioner Jesse Tisch, thank you, ma'am, for all your work and all your resources that you dedicated to this. And New York Waterfront Commissioner Phoebe Soriel for their agency's assistance and support throughout this lengthy and complex investigation. Our collective efforts ensured these subjects will face accountability, like the director said, for their alleged wrongdoings. Thank you, and I'll now turn it over to Special Agent in charge of HSI, Ricky Patel.
Thanks, Chris. Good afternoon, everyone. My name is Ricky Patel. I'm the Special Agent in charge for Homeland Security Investigations here in New York. This morning, hundreds of special agents and investigators with HSI, the FBI, the New York Waterfront Commission, and the NYPD descended upon the homes of individuals who for years have operated with the false sense of impunity, a false sense of incivility. In the early hours of today, across 9 states, coast to coast, dozens of defendants were arrested and will face the consequences of their alleged crimes. This was their wake-up call. With the alleged involvement of 3 La Cosa Nostra crime families, 1 NBA head coach, a Hall of Famer, no less, and former NBA players, the years of investigative work that culminated with this morning's operation seem reminiscent of a Hollywood movie. But this wasn't luck, and this wasn't theatrics. This was an evidence-driven, relentless, and unified effort among law enforcement. Through what we have dubbed Operation Royal Flush, HSI New York, along with our task force personnel from the Waterfront Commission, first uncovered this scheme more than 4 years ago. Agents and investigators dedicated countless hours and sleepless nights in identifying the criminal network, dissecting communications and patterns, and following the money with precision. We built a case, piece by piece, and what we discovered was a sprawling criminal enterprise that utilized cutting-edge technology and various methods of deception to dupe unsuspecting gamblers into paying up so that these defendants could cash out. As alleged, this sophisticated conspiracy cheated victims out of at least $7 million and placed the public and the defendants alike at risk. This case involved global reach, financial death, and the patience to dismantle complex financial criminal enterprises from the inside out. When criminal organizations attempt to launder profits through our country, HSI connects the dots and shuts it down. To anyone who thinks intimidation, fraud, or violence will shield their profits, understand this. If you are exploiting our communities, expect HSI and all of our law enforcement partners at your door. I would like to thank all our partners here today. Obviously, the United States Attorney's Office for the Eastern District of New York, the Waterfront Commission, the FBI, the NYPD, and the prosecutors that will carry this forward. Today's arrests are not an endpoint. They are the start of accountability. Thank you, and I now turn it over to Police Commissioner Jessica Tisch.
Good morning. Thank you to Director Patel, Assistant Director Rhea, and U.S. Attorney Nacella. What we're announcing today is not just another takedown. It's the result of more than 2 years of coordinated investigative work by the NYPD's Joint Organized Crime Task Force and the FBI. 2 cases that exposed criminal networks led by 34 individuals who believed the rules did not apply to them. They hid behind layers of complexity, behind money, and behind influence, believing those things would shield them from accountability. The first case, Operation Nothing But Bet, exposed a gambling ring built around professional basketball, where players and associates allegedly used inside information to manipulate prop bets on major sports betting platforms. They placed wagers on unders on players to score less, rebound less, assist less, using information that was not yet public. In some instances, players altered their performance or took themselves out of games to make sure that those bets paid out. One example occurred on March 23rd, 2023 in Charlotte. Terry Rozier, an NBA player now with the Miami Heat, but at the time playing for the Hornets, allegedly let others close to him know that he planned to leave the game early with a supposed injury. Using that information, members of the group placed more than $200,000 in wagers on his under statistics. Rozier exited the game after just 9 minutes, and those bets paid out, generating tens of thousands of dollars in profit. The proceeds were later delivered to his home, where the group counted their cash. As the NBA season tips off, his career is already benched, not for injury, but for integrity. As a result of this investigation, 6 defendants, including Rozier, are now facing conspiracy to commit bank and wire fraud. In a second case, Operation Zen Diagram, investigators uncovered a long-running scheme in which members and associates of several well-known organized crime families rigged high-stakes poker games across the country. These operatives included capos and multiple soldiers from the Bonanno, Gambino, Lucchese, and Genovese crime families, bringing 4 of the 5 families together in a single indictment is extraordinarily rare. It reflects how deep and how far this investigation reached and the skill and the persistence it took to get here. That work uncovered a deliberate, technologically sophisticated operation designed to carry out their crimes. They used custom shuffling machines that could read the order of cards, barcoded decks, and hidden cameras built into tables and light fixtures. The organizers also enlisted well-known public figures, former and current NBA players and coaches, including Chauncey Billups, the head coach of the Portland Trail Blazers, an NBA champion and a Hall of Famer, to make the games appear legitimate. Victims believed that they were sitting at a fair table. Instead, they were cheated out of millions. One victim in particular lost $1.8 million. In total, losses exceeded $7 million and continue to climb. And when people refused to pay, these defendants did what organized crime has always done. They used threats, they used intimidation, and they used violence. It's the same pattern that we have seen for decades. Traditional mob enforcement methods combined with new technology to expand the reach of their operations. Now, with the unsealing of today's indictment, 34 individuals are facing charges, including robbery, extortion, money laundering, wire fraud, bank fraud, and illegal gambling. I want to commend the outstanding work of our detectives from the Joint Organized Crime Task Force and their dedication to these cases, especially Captain Ruben Pagan, Sergeant Chris McGuire, Detective Alexander Creamer, Detective James McCullough, and of course, our Chief of Detectives, Chief Kenny. As part of these investigations, our members recovered and reviewed thousands of hours of video, conducted extensive surveillance on illegal gambling locations across the city, and executed more than 24 search warrants on electronic records that revealed the true extent of this conspiracy. Once again, the work of our detectives, together with the FBI and the U.S. Attorney's Office, closed those gaps before they could widen further. The NYPD is proud to stand with each of you today, as these cases represent the kind of partnership that defines modern law enforcement agencies, sharing intelligence, coordinating resources, and moving as one team. Thank you.
If anyone has any questions that they'd like to ask, now's the time.
I have a question about the structure of the case. Is it the investigation into one case that lead into the discovery of the other? How if you could talk more about the link between the two?
I'm not at liberty to discuss either the background of the investigation itself or the investigation as it continues. So I'm afraid I can't really explain to you other than the fact that both cases have been unsealed today, and there was an overlap that has been discussed already with respect to certain of the defendants.
Are any other NBA players?
Yes.
Hunter Porter claimed that he had a gambling addiction. Did Rozier or Billups or Damon Jones claim the same thing at all?
With respect to any allegations or defenses that have been made by any of the defendants, they will have their opportunity to present them in court. We're not here to air those at this time or to discuss them. Yes.
You said the investigation is still ongoing. There seems to be several players referenced in the indictments, some that may have potentially passed on information. Is there the possibility of future arrests of NBA players in connection to the sports gambling operation specifically?
As I said, I can't discuss ongoing investigations. The investigation is ongoing, which by definition means that there will be further evidence uncovered at a minimum. And there's always that possibility, but I can't comment any further with respect to that. Yes?
Thank you. Director Patel, you had said in your comments, we're going to take heat for this case. Why do you say that? And what efforts might you take to counter that?
It's not popular to go after some of the defendants that we went after today, but justice is served blindly. And how do we countermand that? Simple. The unsealing of these indictments today shows the force of the Department of Justice and our great Attorney General and the leadership that we have at the FBI and the team here to specifically mete out justice. And look, let's not, mince words. This is the insider trading saga for the NBA. That's what this is. That's why we are going to take heat. But as the evidence comes out, as the indictments are unsealed, you will see the extensive work these men and women put in. Countless hours over years, and that's how we countermand it.
Director Patel, so the dates of these indictments that have been filed are October 9th and October 16th. Can you talk about the timing of moving in now? Why now?
We will not publicly discuss the timing of when we do takedowns. I will only say that we do takedowns in a coordinated fashion with our law enforcement partners and the U.S. Attorney at the appropriate time to make sure that we ensure the integrity of the investigation, as the United States Attorney said, an investigation that is very much ongoing.
Director Patel, you said insider trading for the NBA. What are the implications of this case for other sports leagues and for the legal gambling industry in general?
Simple. If you're participating in the legal gambling industry, you got nothing to worry about. If you're participating in illegal conduct, you got everything to worry about, and this case shows it.
Did the illegal conduct cross with the legal sports betting platforms in any capacity? And if so, is that the search warrants that the police commissioner just referenced?
I'm not sure I quite understand your question. You're asking if the illegal conduct...
If it crossed with, like, the sports betting industry or the online sports betting industry?
The sports books themselves are victims in this case. They themselves did not, as far as our investigation has concluded, they did not perpetrate anything unlawful.
Are you able to say which sports books or online outlets they use to make these bets?
I'm not going to respond to that at this time, but that information will be made public. Yes?
Can you identify the access point where these co-conspirators were able to recruit these, famous people to partake in the schemes?
When you say the access point,
they were able to recruit them.
I'm not sure which case you're referring to.
Oh, so Rozier, how he was recruited, Damon Jones in the NBA scandal, and then Billups for the poker game.
We're not at liberty to say that at this time. That will be revealed in due course. Yes.
He was being...
What is your question, sir?
Hey, thanks for being here. You just said that the sports books themselves are the victims, at least in the indictment involving Terry Rozier and others.
They're among the victims.
Okay, but those companies make, as we all know, they make a crazy amount of money off of a lot of everyday Americans make bets and mostly lose them. Are you concerned with a jury potentially not being sympathetic in a case where the victims, as you say, are these multi-million or billion-dollar gambling companies?
Let me repeat that all of the defendants themselves are presumed innocent. We believe that at a trial, when they have the opportunity to present their defenses, if they chose, because they're not required to, we will come forward with the evidence to demonstrate their guilt. Yes?
There's been, I'm sorry.
Did the NBA cooperate with this investigation at all?
The answer to your question is yes, the NBA has cooperated with the investigation. Yes, sir.
There's been a reason to believe there's an associated college basketball element to this. Can you confirm that, or is there another investigation or part of this investigation that will have college basketball?
The investigations that we announced today did not involve college basketball.
Last question.
Yes.
There was an emphasis on the Italian crime presence, organized crime in New York. Can you give us a sense of the strength and status of Italian organized crime in New York right now?
No, I'm sorry. That would be a question that goes beyond what we're here to discuss today, which is these two indictments. Thank you.
Everybody.
Okay. I think that does it for the press conference. The U.S. Attorney for the Eastern District of New York holding a press conference with New York and FBI officials. FBI, the leader Kash Patel was there as well, making comments, talking about the two indictments involving illegal gambling schemes, including involving the NBA.
Right. They're separate investigations, but there was some overlap with the folks involved. And from what we learned, this has spanned the course of years, and it also involves the New York crime families. There was also cryptocurrency, so it feels very of the moment.
Right. It feels like all the things you would expect to see in a script for some type of story like this, it's included here. So we'll have more reporting on this going forward, but we want to bring you that press conference and get it from the source. Let's get a little bit of a reset here in the market. We're actually turning a little bit green on the screen here, a little bit positive in the stock market. So let's go to John Tucker for a Bloomberg Business Flash, John.
All right, guys, this flash brought to you by IBKR. Will the U.S. economy enter a recession by the end of Q4 2025? At IBKR forecast trader, the answer was recently at 6%. Start predicting today at ibkr.com/forecast. Last trading day for this contract, March 26, 2026. Just curious, Scarlett and Paul, let's see how some of the publicly traded betting platforms are doing. So look at DraftKings, down 1.25%. Of course, they're not mentioned in any way with the FBI arrest. And in fact, we just heard from the Eastern District, the legal sports books did not perpetrate anything unlawful. That's a direct quote. Did get data at the top of the hour. Sales of previously owned homes in the U.S. modestly rising last month. Contract closings increased 1.5%. And then you get the inflation data tomorrow for the first time in weeks. BLS releases the Consumer Price Index. And with the announcement of sanctions on Russia, oil surging around 5%. Energy, also the best performing industry group in the S&P 500. In the meantime, Rianne Mitrione at the Callan Family Office says, you know what, the Mag 7 cohort of stocks, they will continue to outperform.
We're expecting to see for those 7 companies kind of in aggregate earnings growth year over year in the third quarter of just under 15%, which is pretty strong. And last quarter, we saw it actually come in quite a bit stronger than expected.
Right now, the S&P 500, 25 points higher. That's up 0.4% at 67.25. The Dow Jones Industrial Average, 60 points higher. And right now, the NASDAQ 100 up 154 points. That is a rise of 0.6%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right, thank you so much, John Tucker. We have seen markets recover here. The biggest laggards for a bit were these auto-related companies, and certainly if you look at the Mag 7, Paul, Tesla is the only stock that is down about 3.6% after its latest results.
Yeah, results, profit plunged despite record quarter for vehicle sales, as I guess people are trying to get ahead of the lapse in the incentives. But certainly hit the profits there.
All right, so let's bring in Steve Mann, Bloomberg Intelligence Global Autos and Industrials Research Analyst, to recap Tesla earnings, help us look ahead for this company. Steve, as Paul just mentioned, record quarter vehicle sales, which we knew, but operating profit plunged 40%. And we're now looking at a 4th straight quarters of falling earnings, and no real sign that that's going to turn around anytime soon either.
Yeah, it was quite a surprise given the volume of production. You would think that the fixed cost absorption would be higher this quarter than in the past, but it didn't happen. Looks like depreciation costs increased for them. Looks like the tariff cost impact is greater than expected, and then even below the gross margin line, the R&D costs went up quite a bit. That could be viewed as a good thing because that's a sign they're pivoting to the robotaxi, the FSD, and the Optimus robots.
And Elon Musk, I guess towards the end of the call, made a plea for investors to approve his $1 trillion pay package. Quote, this is from Elon, there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane, Mr. Musk said. How did that go over on the call here? And what's the thinking among investor community about what may be a $1 trillion pay package?
Yeah, I'm not sure if money is important to him. He does have a lot already. So I do believe that it's more about the control of the company. Look, Tesla doesn't have the dual class shares like some of the tech companies have. He does have that fear of getting pushed out. And, he had that experience, right, with OpenAI. He's one of the initial investors in OpenAI, and he got pushed out. So he does have the concern. It is his baby. Look, the stocks, the other thing is the stock hasn't reacted, too negatively to the weak earnings that we saw in the last quarter, right? There's a battle happening between the bulls and the bears, the long guys versus the near term investors. And, there are a lot of people who believes that he can achieve, getting the Optimus robot up and running, getting physical AI going. So there's a lot of believers out there.
There's a lot of believers, and what the company actually reports, especially when it comes to his vehicle sales, almost doesn't matter based on this idea that Elon Musk will steer the company in the right direction. Eventually, maybe,
exactly.
Because the robo-taxis, which are in operation, but these self-driving vehicles, the humanoid robots, those are going to take a couple of years to pan out. If that, we don't have any details on it. So in the meantime,
yeah, definitely.
what is the growth driver for this company?
Well, he definitely in the call, he doesn't talk about cars a lot anymore, other than robotaxi and FSD. He's very focused on physical AI. But at the end of the day, right, and I think that's why the stock is still down a little bit, is that, he needs to sell cars. He needs to continue to sell cars to actually generate the cash to support his endeavors. Now, he has launched cheaper vehicles. It would have been better if he is offering even a cheaper model, like something under 30,000 that, we talked about in the past. He is expanding overseas, right? He had, record sales in countries like Japan and South Korea. Now he's going into India, big market. So, cars is still going to be important. I think a lot of, the other half of an investor knows, and that's why the stock is down today.
One could argue that they should produce less cars, fewer cars. I mean, why produce something if you're not making money on it, when in the end of the day, this is effectively, one could say, just a holding company for R&D for the other businesses?
That's an interesting question. I think, if we step back and think about Tesla, it's almost, when you listen to Elon Musk, it's almost like he's resetting the company to make it look like a startup, right? But the big difference is, the big difference between now and 10 years ago is that he has a huge cash generator, which is selling cars, right? So I think that's something, and also on the investor's mind, on the bull side, that, hey, we're investing on this company for the long term. Mm-hmm. This physical AI that nobody's really doing, and to the extent they are. And now the big difference is that, there's a very low risk of it going bankrupt, like it did, when he was starting the car business.
Yeah, it's far from a startup now. You mentioned how Elon Musk, spent some time talking about his pay package, his $1 trillion pay package, which is over the long term and involves him meeting a lot of ambitious targets. ISS, Institutional Shareholder Services, as well as Glass Lewis, these proxy advisors, have recommended that investors reject this payout. Does that matter? I mean, are their votes are binding in any way, or is this going to end up in the courts and Musk is going to get his way?
It does matter because a lot of the funds out there are index funds, so it does matter what they say, and that's why he needed to address that in the call. But it's going to be tight. I mean, it's going to be up in the air, tight, because there are a lot of individual investors as well, retail investors as well. And, you know, those people are focused on, you know, the hope 3 or 5 years from now, he will able to kind of meet those targets, have a viable Optimus robot and a lot of robo-taxis, you know, running around on its own across the country.
What is Elon and the company saying about China, both as an end market and as a competitor globally?
Yeah, China is a challenging market. I think a lot of the policy over there do favor the local automakers. But look, the Tesla brand is still highly regarded over there, not just by the consumer, but their competitors, the BYDs, the XPeng, right? A lot of those companies, you know, when they're looking at autonomous vehicles, autonomous technology, they are benchmarking Tesla. So, and Tesla, you know, I think is being nimble as well. They launched the longer version of Model Y that works over there. Because if you look at, you know, the other foreign automakers like BMW, Mercedes, GM, and the likes, they have introduced extended version of their vehicles that they sell over there, and it resonates with the consumer there. So, you know, they're still kind of work in progress over there. They're watching the market. It's changing very rapidly. They're still waiting for official approval of the FSD, which you know, I think it will resonate well with the consumers, and it has so far from beta testers.
All right, All right, Steve, thanks so much. Appreciate that. Steve Mann, Global Autos and Industrials Research Analyst for Bloomberg Intelligence, getting us the latest on Tesla. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just minutes. S&P 500 up 24 points. The Dow up 32. NASDAQ up 142 points. That's 0.6%. More Bloomberg right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning. We are live from Bloomberg's Interactive Broker Studios in our global headquarters in Midtown Manhattan. This is Bloomberg Intelligence. I'm Scarlett Fu here with Paul Sweeney, and we are also streaming live on YouTube. We've got a lot coming up on the second hour of Bloomberg Intelligence. We're going to kick things off with a conversation with John Butler on T-Mobile adding 1 million subscribers buoyed by that U.S. cellular deal. And then following that, we're going to get the latest, and an analyst from Sportico giving us his legal perspective here on the FBI's arrests of some former NBA players, current NBA players, and a current NBA head coach in that massive betting case that was just announced this morning. Following that, we're going to talk to Shanna Sissel, founder and CEO at Banrion Capital Management, to get her take on the markets before that all-important CPI report comes out tomorrow morning, a delayed one. And then finally, we will end the hour with Connie Chung, the award-winning journalist and news anchor. She's a recent author of her memoir, Connie, on the changing news landscape here in the U.S. and globally. But first, let's get to John Tucker with our Bloomberg Business Flash. John.
And Scarlett, this report brought to you by Van Eck. Founded in 1955, Van Eck has been guided by conviction, not convention, spotting change early and turning it into opportunity from the very start. Let me start with oil. That is soaring after the U.S. announced sanctions on Russia's biggest oil companies. As oil rises, energy among the best performing industry groups right now in the S&P 500. You heard the U.S. Attorney for the Eastern District say legal sportsbooks not accusing that scandal you just mentioned involving the NBA. But just the same, you have shares of DraftKings down just about 1.2%. All eyes on the Consumer Price Index. That's set for release tomorrow. It's going to be the first data in weeks. And former Fed Governor Eric Rosengren says it will show that we are not getting much progress on the inflation front.
It partly reflects some of the pressures coming from tariffs continuing to flow through. So goods like apparel, furniture, sporting goods. But it's also that we're seeing food prices go up in a variety of areas.
Shares in quantum computing companies rallying. The Journal reported that the firms are in talks to give the Commerce Department equity stakes in exchange for federal funding. And we were doing the story about the debate in New York City among the three mayoral candidates this morning. And this is the lesson that politics makes for strange bedfellows. Okay. But Andrew Cuomo, who's trailing right now behind Zohran Mamdani, has just been endorsed by former Mayor Eric Adams. And you remember some of the things that Eric Adams said about Andrew Cuomo.
Until he dropped out of the race.
Exactly.
Well, they were seen at the Knicks game yesterday.
Yeah.
Well, the plot thickens.
Yes, Mr. Adams, Mr. Cuomo.
You probably know what they were talking about. Anyway, we check the markets and other stuff all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
It was actually a very good Knicks game. The Knicks beat the Cavaliers, which is they're going to have to beat to get to the finals, I think, in the East.
We're talking about the finals already. It's early days.
This is the Knicks. That's aspirations this year.
Yeah, well, it's the only thing that matters for the Knicks. Come on.
Exactly. All right, John Tucker, thank you so much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney, sitting in with Scarlett Fu, and we're joined by Bloomberg's Nora Melinda. Thank you. What do you got for us, Nora?
Well, looking at shares of Supermicro Computer, that's ticker SMCI, we're really seeing what was once a fan favorite here, reporting and unexpectedly issuing a first quarter guidance that fell short of the street's estimates here. Of course, you know, the stock is still up about 61% year to date, but this is among the worst performing stocks in the S&P 500 right now, down as much as 7.6% here as people really just parse this unexpected delivery here. And also, we do know that the company's really been working to recover from some of its accounting concerns since it missed an August 2024 deadline to file its annual financial report here.
All right, and the first Mag 7 name to report was Tesla, and the stock is down.
Yeah, lots going on today. I mean, profit plunge. This was all despite a record quarter of vehicle sales here. This is really just underscoring the ongoing strains that we've really seen on the automotive business that, of course, we know is owned by Elon Musk here. And we do know that he also came on the call toward the end saying that he wanted investors to essentially back his $1 trillion compensation package. So he was really pleading there with investors, those on his earnings call here. But we are seeing shares of Tesla, ticker TSLA, down about 2.5%, but earlier down as much as 5.7% for its worst day since July. And we know that this comes after yesterday when the news came out that it was recalling almost 13,000 of its EVs over risk of battery power loss. And people are really just continuing to parse all these different intricacies here going on with Tesla.
I can't think of a company that's more closely aligned with its founder or
Key man risk all the way.
All the way. I mean, I'm thinking back to all the years I've been doing this. I mean, but Elon Musk and Tesla.
And there's never any talk about a successor either.
No. No,
that doesn't exist.
I just don't understand. But no, it works if you're a believer there. That's for sure. He's made money for his shareholders. How about Amazon?
One that I find super interesting today, up as much as about 1.3%. But this is after Amazon said it is rolling out a new AI-powered tool that will recommend a specific product when shoppers are feeling overwhelmed. So this is made essentially for the indecisive. Apparently, if you're spending way too much time clicking through different products, it's supposed to hop in there and start recommending some to narrow it down for you here.
It's like a ticking time clock, you know.
Basically.
Buy.
Right. They're like, just check out.
Oh, boy. Okay. Nora Melinda, thank you so much with our market movers. And for more conversations like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or really anywhere you listen. All right. We continue with earnings season, and the second big
Mobile phone provider / internet broadband
Broadband, thank you. Internet broadband company to report is T-Mobile. So we got to bring in our own John Butler, who covers telecom companies for us, to get us his analysis. John, what's the verdict here on T-Mobile?
So the verdict here, Scarlett, is it was a little bit of a mixed quarter for them. If you look at what AT&T reported yesterday, the trends at T-Mobile really mirrored what we saw out of AT&T, which is subscriber growth was up. That was strong, pardon me, but pricing was a little bit weak. And so that tells everyone it's a promotional environment right now. I think probably the iPhone 17 had something to do with it. It's actually turning out to be a pretty strong cycle for that upgrade. And of course, when you go out to buy a new phone, people always think about switching carriers. So it boosts switching activity. The carriers all promote to protect their base. And Verizon hasn't reported yet. Well, we can talk about that a little bit more, but they have a new CEO. And so the grand concern in telecom land right now is that the new CEO of Verizon, if they lose share to AT&T and T-Mobile, they're going to get their dukes up and start to promote for the first time in a while, and that's bad overall for the industry.
So what's the T-Mobile marketing positioning right now for it within a very competitive wireless business, John?
So good question, Paul. They are, for years, they sort of leaned into this consumer-friendly brand. We're the guys we're the uncarrier. That is their tagline. And, they've done a very good job promoting a very strong brand image. They're now a lot larger, and I think what they're doing is starting to lean a lot more on their network quality. They've done a great job over the past 3 to 5 years of really upgrading that network since they bought Sprint. They got a ton of mid-band spectrum, which is terrific for download speeds. And so they're laying in coverage with that, and they're getting, as that coverage expands, they're getting a great high-capacity footprint. And so network performance has improved a lot, and I think they're leaning heavily into that now to promote the brand.
You mentioned Verizon has a new CEO. T-Mobile also has a new CEO coming up soon. CEO Mike Sievert is stepping down on November 1st, so in a week, and the COO, Srini Gopalan, will take over. How is he going to put his mark on this company?
I'll tell you, Mike is a tough act to follow. People were all listening for any sort of a change in strategy this morning because Srini ran the call, which I think was wise. Mike Sievert was on the call as well because he's still in that seat until November 1st, as you said. But Srini ran the call, and I really didn't hear anything different from him. I think they've got a winning formula going right now, and I think they're going to lean into that. One thing, Scarlett, that you mentioned at the beginning in the intro is broadband, and I think that's an area where T-Mobile has been lacking a little bit, specifically on the fiber side. And on the call, they mentioned the potential for further M&A. And I think if they were to buy any companies going forward, it would be in the realm of fiber broadband. So if Srini does anything different, it'll be to step up M&A on the fiber front.
All right, John, thanks so much for joining us. John Butler, he is Senior Telecom Analyst at Bloomberg Intelligence, joining us to give us the latest here on T-Mobile's results. Stock trading off about 4% today. We heard from AT&T, and next week, Verizon reports its numbers in that competitive wireless business. One of the key news stories of the day involves the NBA and illegal sports betting, and involves some current players and a head coach, kind of rocking the sports world, rocking the NBA as well. We want to get some more color on that. Michael McCann, he's a legal analyst at Sportico, joins us here. Michael, I'm guessing you saw the press conference just moments ago in Brooklyn, I believe. What's your view? What's your early view of kind of the legal issues here with the NBA and the sports betting case?
Yeah, the legal issues are really serious. These are major felonies. These are conspiracy to commit wire fraud and related charges. The players could face conceivably years in prison if they're convicted. Obviously, they haven't been able to tell their side of the story yet, so we'll find out how the defense surfaces. But super serious, and the allegations are that there's a player, there's a coach, a former coach, all of whom, of course, have access to information. A player can change his play to further bets. And there's even ties, alleged ties to the mafia. So there's a lot here that will take a while to unpack.
And we heard during the news conference that the NBA is cooperating with this investigation that has spanned a number of years. What do you think the NBA is doing right now as it tries to sniff out any other potential problems? What do you think is happening inside the MLB, the NFL, the NHL?
Yeah, so one of the challenges for all of these leagues is that they're not law enforcement. They don't have the ability to issue subpoenas. They don't have the ability to compel witnesses to talk. They're really contractually bound in terms of their authorities. So they can do a lot as to investigations. And the NBA investigated Terry Rozier, who was one of the players that was charged today, and didn't find wrongdoing. Now, the NBA, again, doesn't have the same access to information that law enforcement can do. And law enforcement, of course, can threaten people. I mean, this is the real power of the Justice Department. They can get a witness and tell the witness, you're going to be charged unless you cooperate. The NBA can't do that. So the leagues are all going to be, I'm sure, super diligent. They already are, to be honest. They already work with gaming partners to try to monitor activity. But they are bound a bit by the fact that although they're powerful, they're ultimately just private businesses.
What kind of messages is sent when the FBI director comes up from Washington, D.C. to participate in this press conference alongside the other folks in the New York City area?
But certainly prioritizing it as a matter of interest, that illegal gambling is something that the Justice Department and the FBI will look into with great scrutiny. Now, a cynic may say that they're doing this because the media will cover it and that it is a high-profile event that is intended to get headlines. And so I imagine the defense will likely argue that this is really trying to aggrandize a topic in a way that doesn't warrant it.
Do you expect that there's going to be changes, Michael, to how the leagues set out their policy for players and other personnel when it comes to sports betting, sports gambling? I mean, there's obviously it's banned when it comes to their own teams, and it's not something that they're supposed to be doing. But as we've seen, that's not the case. How else can they crack down harder?
I think one thing is that leagues can crack down harder by pushing gaming companies to drop these prop bets. This isn't the whole story, but a lot of this stems from prop bets, the idea that you can bet on how a player will do in a particular sequence in a game. So in other words, a basketball player, will that player get more than 2 rebounds in the second quarter? The reality is that it's really hard to monitor to see if the player is actually doing something a little fishy or not, because we don't really notice, right? That may not affect the outcome of the game. A player might get hurt. The fact that these players involved allegedly feigned injuries, how do you say someone's not hurt? I mean, it creates a lot of awkward terms of a compliance. So part of the problem, I think, is prop bets in general, that they're offered by gaming companies. I know that the NCAA's president, Charlie Baker, has spoken out against prop bets. They're really difficult to monitor. Of course, that's not the whole problem. There's all sorts of issues with this industry in terms of the pervasiveness of advertising, getting young people, college students to bet. There are a lot of areas of concern that need greater scrutiny that go way beyond the leagues, in my opinion.
So one of the things I learned just thinking and reading about betting in sports, illegal betting, is it's actually been pretty prevalent in lower level tennis matches that kind of fly under the radar, but it's just 2 individuals on a court, and that's where they've seen a lot of issues, which I wouldn't have thought about. I didn't think there was that much money there, but what's your sense of how pervasive, I don't know, game fixing, match fixing? I mean, we see it all over the world, European soccer as well. It feels like it's much more pervasive than we know.
I think it is. And I think for that reason that you just noted, that it's these low-level events that don't get a lot of detection. Why are people betting on ping pong and low-level tennis and these other sort of obscure things? And the reality is that I think that people are addicted to betting, and that this is their channel to bet on sports, and very hard to monitor. So the question becomes, I think, the legal question is, should the market allow these bets? I mean, that's really the fundamental question. And many would say, well, people are adults and they can do what they want. We let people buy stocks, speculate on property, all sorts of things. Why do we take away betting from them? And that is an area of resistance. On the other hand, I think we should all be concerned, particularly when it involves high school students and college students, right? I mean, these are not people that are fully mature.
Very quickly, does Europe do this better, Michael?
I don't know if Europe does. I mean, I teach students from Europe, and they tell me that it's just as much a problem over there. I think it's been there longer, so they may have better techniques, but I don't think this is a uniquely American phenomenon, nor is it clear that any part of the world is doing it better than us.
All right, Michael McCann, legal analyst at Sportico, joining us here. And of course, worth noting as well that Michael is the director of Sports and Entertainment Law Institute at UNH Law. He's a visiting professor of law at Harvard Law School on this gigantic story. The NBA head coach and NBA head coach, among many, arrested in an illegal gambling probe that they just announced this morning. The FBI leading the way, prosecutors in the Eastern District of New York certainly involved as well. From New York, this is Bloomberg Intelligence on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we're brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Surge in oil prices rekindling concern about any impacts on inflation after weeks of delays because of the government shutdown. We get inflation data tomorrow with the release of the Consumer Price Index, finally. Tesla among the most actively traded. Right now, those shares are down 1.7%. The earnings report there, largely a disappointing one. You know, in the S&P 500 for a long time, it was actually the best performing stock. Supermicro Computer unexpectedly issuing first quarter guidance falling short of Wall Street's expectations. Right now, overall, the S&P 500 up 16 points. That's a 0.25%, 67.16 on the index. Dow Jones Industrial Average up just 5 points right now. The NASDAQ 100, 118 points higher. That is up 0.5%. 2-year space, 2 basis points higher. The 2-year, 346 right now. The 10-year, that's up 4 basis points. Just under 4 at 399 right now. And this one from the Wall Street Journal. President Trump has now pardoned Changpeng Zhao, the convicted founder of the crypto exchange Binance. This follows months of efforts by Zhao to boost the Trump family's own crypto company. We check the markets all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
He is the pro-crypto president.
He is?
That's what he wanted to be.
Didn't President Trump also pardon Santos?
Yes.
Well, George Santos.
George Santos.
I don't think there were any overlapping business interests with the
and he's not crypto.
Long Island congressman.
No.
Sam Bankman-Fried, though, has not been pardoned yet, right?
I don't know. No, not that
My
I know.
understanding, the reporting has shown that his parents were lobbying for a pardon.
Okay. All right. We'll see how that goes. We'll keep on top of that one. Let's get back to these markets here. We actually get some economic data tomorrow.
Wait, official data?
Official data.
No.
So it's coming from
I'm glad you were listening to my report just now.
Exactly. Don't get the CPI data.
I'm trying to drum up the drama.
And we're trying to just, see where we are on inflation front and how that might impact the Fed and all that type of stuff. So we'll take it what we can get at this point. Shana Sissel, she's president and CEO of Banner Yellen Capital Management, joining us here. Shana, again, we're going to get a piece of inflation data tomorrow. Are you going to pay much attention to it? Do you feel like the Fed is kind of on track to continue to lower rates? How do you think about that?
No, I am going to pay attention to it. I'm a little concerned it may be distorted because it's not being, they brought people back in during the government shutdown to ask them to calculate this. So it's not being done as part of normal business operations, and it's coming out a little later than expected. So, those things make me a little concerned that there might be some distortions in the numbers, but I am paying attention to it because the last few readings have shown that inflation is ticking higher. So if you look at inflation versus, a year ago, it's higher than it was a year ago. And that's concerning because the Fed has a dual mandate. It's the labor markets and it's inflation. And the labor markets are definitely showing some signs of weakness, but nothing that's tangible enough that I think the Fed can say, whoa, this is very concerning. But inflation is ticking up, and they've been really, really focused on trying to keep that number around 2%, and they were moving in the right direction for a while. So the uptick in inflation, I think, is concerning. I don't know that it will affect their decision this month, but I do think it puts the December meeting in question on whether or not they will cut then.
Okay, so the Fed is in a blackout period right now. They're not speaking at all before the decision next Wednesday, and pretty much a rate cut is not in doubt for next week. If there's still no data, by the time this FOMC meeting comes around next Wednesday, what does Jay Powell talk about when he says this is a data-dependent Fed?
Well, I think it's naive to suggest that the Fed doesn't have some insight into what's going on. Like, they might not have publicly calculated data that they're putting out as they normally do, but they are almost certainly getting data from the states and areas of the areas that are not necessarily impacted by the government shutdown. So they have some idea of what's going on, and they're going to be looking at the inputs in the inflation data. So it's not as if they're completely flying blind here. obviously, it would be better if the government was open and that everything was working smoothly. But at the same time, I do think that they have some information. There are plenty of private market data points that they can touch on that may give them a glimpse of what's going on, whether it be ADP or something to that extent in terms of labor markets. So they're not completely flying blind. I expect that Chairman Powell will kind of continue the same talking points as it pertains to inflation and labor markets. He just might be referencing some private economic data resources instead of the publicly available government calculated ones.
Shanna, we're kind of right into the teeth of earnings so far. What have been your takeaways? What do you think maybe the street needs to hear from corporate America?
So I think my takeaway on earnings is they've been better than expected. That I think is largely a result of many executives at corporations, when they gave previous guidance, were doing so with some trepidation as it relates to how tariffs might impact their business, and the uncertainty surrounding that made them more conservative in their guidance. And then tariff policy maybe didn't impact their business to the extent that they expected, which allowed them to beat earnings. I like to say that they wanted to underpromise and overdeliver as much as possible. So I think there's a lot of that going on. I think what the street wants to hear is more insight into labor, application of AI. I know Amazon has talked about the implementation of AI to create efficiencies and how that might impact workforce. I think that's a broad trend. So I think the street's really looking for insight into what's going to happen in 2026. Growth slowing down, AI, monetization, things of that nature, I think are the key focuses for analysts in the street as they look forward into next year.
All right, that sounds like a good place to leave it. Shanna, thank you so much. Shanna Sissel is president and CEO of Banrione Capital Management, joining us from Chicago. Let's talk about airlines because two more airlines just reported results. American Airlines flying high, the stock is up, and then LUV, Southwest, down 7.4% on the day so far.
Do you know why the ticker is LUV?
No, I don't.
Because they flew out of Love Field in Dallas.
Makes sense. Area. Yes, they are based there. Well, let's bring in our own George Ferguson. He is Bloomberg Intelligence aviation analyst. And of course, he also covers the defense sector and the aerospace sector to give us a little more insight onto what he sees. American is different from Delta and United in that it is much more domestically focused. So we get a better read of how much people are spending to fly inside the U.S., whether it's for leisure travel or business travel.
Yeah, and so from American, what we saw actually in the third quarter was pretty similar, to be honest, to what United showed us. And I'm talking about sort of yields, price paid per mile flown by their customers. American's a very important domestic, provider of travel. So, I would say that I wasn't super impressed with what I saw in 3Q. I think the flying high is all about what American is guiding to in 4Q, a sizable bump. And, when we look at some of the domestic capacity trends for 4Q, we see a market that's probably going to see seat growth of around 1.5% or so, which seems, for the first time in a while, roughly in balance with where the economy is growing. So something like that should support Americans' earnings in 4Q. I mean, it's still, some of their guidance seems a little aggressive to me, but I guess sort of given the backdrop of supply and maybe some of Americans' initiatives as they try to retake some of the market share that they had previously, maybe seems more feasible than other guidance we've seen.
How about Southwest, George? They're starting to charge for lots of stuff like bags and different seats and all that kind of stuff, which they had not done previously. That had kind of been their core marketing strategy. Were the kind of the bare bones guys. What are they just seeing in their business?
Yeah, I just got off the Southwest call and my head hurts. So there's a lot of initiatives going on here, right? And like you said, we're going from an airline here that was bare bones. Bags fly free, blah, blah, blah. You keep, there's no breakage in your I think, frequent flyer miles, and if you buy a ticket, you can't use it. There's no expiration of your credit. Now we're going to change everything, right? And so the call's full of a lot of discussion about how the initiatives in 2026 are going to add $1 billion here, from premium seating and $700 million there. So there's a lot of big numbers being thrown around. I think the marketplace is a bit challenged to get its head around, whether or not all of these really roll through the bottom line for Southwest. But what I will say is I think there's some pretty strong opportunity at Southwest, given I think they have a pretty loyal brand following. And as they roll out some of the initiatives you're seeing at the full-service carriers like United, American, and Delta, as they roll out initiatives like branded credit cards, improving the loyalty program. They even talking on this call a little bit about hub cities and lounges, which just kind of again blew my mind. There is, I think, an opportunity for them to monetize all of that as they turn into something that looks a lot more like a full-service carrier. The question is on timeline. My guess is there's a decent timeline as they sort of retrain their customers. But I think, in 4Q, they have some pretty aggressive bounce back inside their guidance as well. And I think the street's just kind of trying to get its head around really how much of these initiatives are going to come to fruition in 4Q.
So when it comes to Southwest, the activist investors really pushed it to change its business model from this one-size-fits-all kind of offering. There was no checked bag fees, no prepaid seat assignments. Does this set of results kind of get that pressure off its back?
No, so I would say 3Q results would not. I thought 3Q, they did okay. Their expenses came in a bit better than we expected. Their revenue was pretty similar. I think nothing impressive. 3Q is generally kind of, I think, blah across most of the airlines. It wasn't that exciting. There's a lot more sort of built into 4Q and beyond. So no, I don't know that this necessarily gets Elliott sort of off their back.
Right.
I think they've got a lot of initiatives to perform on to keep Elliott happy, shall we say.
All right, George, thanks so much for joining us. Busy time for airline analyst and investor George Ferguson, senior aerospace, defense, and airlines analyst for Bloomberg Intelligence. Well, coming up at noon, join us for a conversation with House Minority Leader Hakeem Jeffrey from New York. Sits down with Bloomberg's David Gura for a conversation on the government shutdown and the other big issues confronting Democrats in Congress. Listen on Bloomberg Radio and watch on the Bloomberg Podcast YouTube channel at noon Eastern. David Gura speaks to House Minority Leader Hakeem Jeffries.
So many big issues.
Yeah, absolutely. Like, can you guys work with the folks across the aisle and get this government open?
Can you guys figure things out on your own?
Yes, exactly. So that's coming up at noon. S&P 25 points higher. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. Major stock averages, they are higher right now. Energy is the best performing major industry groups in the S&P 500. That as oil prices, they surge. Brent, the international benchmark, that's up over 5%, 65.87 a barrel there. That comes on the U.S. sanctions against the major Russian oil companies. Among the most active, you have Tesla again after reporting disappointing earnings after the close of regular trading. Those shares right now, they are down 1.3%. Next up on the earnings front, the 5 of the other 7 Mag 7 stocks are followed later in the month by NVIDIA. I don't know why they do that, but anyway, David Leibowitz at JP Morgan says increasing productivity from technology is a rising tide that's going to lift all boats.
It is going to change the game. It is going to support growth over the longer term. And importantly, it opens up this channel for more investment. And it allows investors to benefit not only in the big tech names that are doing a lot of the creation of this technology, but also over time, this should broaden out. It should support financials. It should support materials. It should support utilities.
And S&P 500 right now, just about 20 points higher. That's up 0.3% at 67.19. The NASDAQ 100 up 135 points. That's up 0.5%. The Dow up just 19 points right now, 46,612. Oh, a Barrel de Cracker update.
Sure, bring it.
So the CEO says the company was trying to make its logo easier to see for people on the highway. And that's when the design change prompted.
Like by getting rid of the picture and just focusing on the text?
I don't know, but they're trying to make it easy to read, but everybody flipped out. The stock price crashed. Fierce backlash this summer. She said it was never meant to be ideological. So
as long as they keep the country boy breakfast with the country ham and
when
the biscuits and gravy.
When are you taking the two of us with you?
We'll shoot out there. We're
all right.
78.
The portions, though, have gotten smaller and smaller over time.
I'm still overwhelmed. I can't eat half the plate. I mean,
I went to Olive Garden for the first time because it was near the doctor's office and I was waiting. That was a huge portion that I got. Yeah, it wasn't. I didn't think it was that expensive.
It wasn't the bottomless bread or bottomless salad or bottomless anything.
It's just like the last thing you should do before going to visit your doctor to check your cholesterol. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker at your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, John Tucker, with our latest Business Flash. Citigroup's is kind of in a unique position. There are not that many banks that have their chairman and CEO as separate positions.
Right.
But they recently merged that, and now Jane Fraser is both.
Yeah, and a longtime Citigroup bull, Mike Mayo, said the bank's decision to give CEO Jane Fraser a multi-million-dollar retention bonus and the additional title of chair reflected poor governance and prematurely rewards the chief executive. So I think what happened here, Citi on Wednesday said it was giving Fraser, who is succeeding John Dugan as chair, a one-time share package consisting of restricted stock with a grant date value of $25 million. You get that, boom. Along with 1.055 million stock options, potentially worth tens of millions of dollars more. And Mike Mayo
they had
says
this blockbuster earnings report.
Yeah, I'm looking at and I'm looking at the stock. It's up 37% year to date. That's pretty darn good. That's among the best of all the big banks. And having been a former employee there, it feels like they finally turned it around. I don't know if that's the case, but it just feels that we've had a number of quarters here of pretty good growth. So I'm saying, in a world where Elon wants $1 trillion pay package, what's so different about this?
But I wonder whether Mike Mayo says the same concerns about JP Morgan, right? Because the CEO and chairman role is held by Jamie Dimon. No one questions that.
No.
So I don't know.
So anyway,
does it have to do with the fact that she's a woman? I'm not sure. Just putting it out there. Just putting it out there. All right. Well, Paul, you know that big changes are afoot in the media industry. Yep. This is your wheelhouse. Skydance bought Paramount, the owner of CBS and Showtime, Warner Brothers Discovery, which owns CNN and HBO, now opening up its financial statements to bidders that include some big tech names. So you got to wonder where this leaves the news industry.
Yep.
So I'm pleased to welcome Connie Chung. She's a trailblazer in television business news. She's the first Asian American and second woman to anchor evening news at a major network, and she is here in studio with us. Hi, Connie.
Hi, Scarlett, and hi, Paul.
Nice to
I'm
meet you.
so glad that you're here. Thank you so
Thank
much.
you.
And of course, she
Thank
is
you.
the author of her memoir, which was just published. Paul is holding it up.
Yep, there we go.
Connie, a memoir.
Paul, you know you've made it when you get a Garden State Parkway rest stop named after you.
That is big.
Big
That
time.
is big.
Huge.
Yep.
Huge. I mean, I couldn't believe it. You know, I actually haven't been there.
Yeah.
But my husband has.
Yep.
And he took a selfie,
Oh,
you know,
okay.
in front of it. And
I think that's a viral moment for us to go there together.
Okay, it is. We definitely have to do that, Scarlett.
Connie, the news business was influential when you were reporting and anchoring in a way that it no longer is because it's so fragmented.
Yes.
We talk about companies like Comcast and Warner Brothers Discovering, spinning off or selling their news divisions. News gathering is inherently expensive. Talent like you is expensive, and sending talented journalists into the field is expensive. Should journalism be treated more like a public good, a utility, or infrastructure rather than a profit-driven business?
Without question, when I first started at CBS News in 1971, it was owned by William Paley.
Yep.
And he believed so strongly that the news division should be autonomous. We could spend as much money as it took to cover the news. And it was for the public good. But then what happened at CBS equally happened at NBC and ABC. Greedy owners took over, bought the companies, and made the bottom line the ultimate goal.
Mm-hmm.
And we lost all of our obligation to be objective and be truthful, and all they wanted was money.
Yep.
And I am just mortified that to this day I see, you know, at CBS, money drove the greed drove the fact that it was sold to David Ellison and Larry Ellison, and their unattention. I mean, they're not paying any attention to the old rules of journalism.
Well, one could argue just over the last 20, 25 years that the divide in this country and the divide in the media coverage has been so stark and become maybe even more stark. What do you make of that, the bias that may or may not be in the news business these days?
It is.
Okay. How do you view it? How has it changed maybe?
I'm horrified. Horrified with anyone who says on television, who purports to be an anchor or a news reporter, say, I think. I don't care what you think. All I want is the facts. And I think everyone out there, because I've been across the country just in this last year, and people just want the facts. I think the only saving grace is actually local news. Local news still just primarily provides the facts and the weather and sports.
So Apple, Amazon, Netflix are said to be among those companies interested for bidding for Warner Brothers Discovery, or at least parts of it. With big tech comes, of course, artificial intelligence. How do you make the case for why companies should not replace news reporters, news anchors with AI-generated and presented news, where they could focus on, presumably, the facts?
It's fake, too. It's all fake news, and we cannot depend on it. The social media has truly destroyed our reporting ability in many ways, because nothing is fact-checked. And I fear that AI would not be fact-checked. We can't depend on it. I can see the value of AI. For instance, if a doctor wants to look up research and figure out what a person's ailment is, he or she no longer has to go through volumes and volumes of medical literature. AI can find it in a second. and there are so many good benefits. But I think AI has no place in news. It just doesn't. I mean, I don't know what happened to truth. I believe that truth ruled when I was working in television news was ancient. In ancient times, even though you have white hair, Paul, you know,
Exactly.
I have white hair too. I just color it.
Right, I understand.
Yeah.
I understand. What's also changed, it seems like initiatives, not just in media, but across corporate America and society, the diversity, equality, inclusion, that movement, if you will, or that seems to have lost its momentum. And is that a concern for the newsroom, do you think?
It died with this administration. It's become non-existent and forced upon us. I would not have had a career had it not been for the 1964 Civil Rights Law, which created the Equal Employment Opportunities Commission. My sister-in-law, Lynn Povich, who is a researcher at Newsweek, filed a class action lawsuit with the other women because they were not allowed to move beyond the research stage. They could not be reporters, they could not be writers, they could not be editors, period, full stop. And I was, thanks to Lynn and the women's movement and the Black movement at the time in the 60s and 70s when I started, I would not have had my first job at CBS News, covering Watergate, covering a presidential campaign, the losing campaign of George McGovern in 1972. And I would not have covered Nelson Rockefeller when he was vice president after he took over, Ford took over from Nixon. We are seeing a replay of Nixon and Watergate. But during Watergate, at least Congress had a backbone. Members of Congress like Senator Barry Goldwater went to Nixon and said, you're not gonna survive.
Right. Yeah. No, it's a clear contrast to what we have on Capitol Hill today. Speaking of Watergate, Connie, there is a famous photo of you at a House Judiciary Committee hearing on Watergate, and it's you, a young Asian woman, in a sea of white men. Do you think female news reporters in 2025 face the same challenges that you did in the 70s through 90s?
I'm sorry. I was just looking to see. No, it's not there yet. Please tell your director. It's the one in which I'm standing all alone and there are a sea of men around. You can find it.
It's pretty unmistakable, that photo.
Yeah, for him or her to put up. What's your director's name?
Well, they may not have it at the moment, so we'll see.
Okay, sorry.
But talk to us about the challenges that female news reporters face today that you think, carries over from when you were reporting and anchoring.
Oh, it really hasn't changed.
That's depressing.
No, I know. I'm sorry, but it hasn't changed for men who still dominate. Not that there's anything wrong with being a man, Paul.
So far, so good.
What? So far, so good?
So far, so good.
Okay. You mean what?
Just, we all work together. We all get along happy in here in this little studio.
Okay, well, that's good.
We control what we can control, right?
Yes, that's right.
Yeah. Well, despite management. But, yeah, it was in the 1970s. But even today, there's a dominance of white males. And it's not a level of parity. We are not seeing that. And in terms of this administration and its determination to kill DEI, I'm hoping that we, the people, will not stand for it.
Connie, it's been a pleasure. Thank you so much. Connie Chung, first Asian American and second woman to anchor evening news at a major network, award-winning news broadcaster.
Thank you, Scarlett.
Thank you very much.
Thank you, Paul. And you, Paul.
Thank you very much for coming in. It's all good. All right, looking at these markets here, we got the S&P up 25 points, the Dow up 44, and the NASDAQ up 163. Some strong earnings here this morning. Right now, let's shift gears, and we're going to move over, and we'll take a look at some of these markets, and we'll take a look at what's happening in the cloud. We'll get some more cloud/tech news coming. AI adoption in video games can push Microsoft, Sony, NVIDIA to kill the console. How about a headline like that? Nathan Nadeau joins us here. He is the Bloomberg Intelligence Technology Research Analyst. Talk to us about the cloud and what that means for the gaming business. I'm not going to have to go out and buy any more gaming consoles.
Well, not for the long term. Thanks for that lead, Paul. Like I feel like I owe everybody an explanation when I use word like kill, because really in the 10 years that could actually happen. Like what I meant, if I were to unpack that comment a little bit, that headline, consoles will decline gradually, and that's what I mean. And kind of remaining over the long term as a niche device for loyal fans, the really hardcore gamers, as advancement in cloud infrastructure, and we see what's happening with data centers, as well as a wider spread of mobile gaming, playing games on mobile devices, whether smartphones or tablets, as that gain wider spread, and people become less interested, in playing games at an unportable gaming hardware that's stuck at home or living room. If they can do so and have the same experience on a mobile device, why not, right?
So where are we in kind of that evolution in terms of really putting more and more of the content, of the technology, of the capabilities in the cloud? How is that changing the gaming experience, the gaming business?
Yeah, so the key pain point to cloud gaming is network latency, because that literally depends on the distance between the user's hardware, whether a mobile device or a console, to the nearest cell tower. And we know that 5G network coverage are improving not just in emerging markets, but also becoming better in even developed markets, including China and the US. And so as that infrastructure and also cloud improve, because this proximity to data centers also is a factor in determining the experience of cloud. So far, in emerging market, there is a pain point, but we're seeing really huge uptick in coverage footprint, whether 5G or 4G LTE in markets like India and Middle East and Latin America. So that just support our conclusion that, in the next 10 years, the experience, that pain point will become better. And also, let's not forget that, mobile phones, mobile screens capture, a lot of our attention economy. Actually, there's a study according to Harmony Healthcare IT that it captures more than 5 hours of our time every day. And about 20% of those time actually go to gaming among Generation Alpha and Generation Z, and they are the bulk of the gamers. And also, these gamers don't really care about playing games at home anymore if they can play on mobile, because what they care about is access and also being able to do things on their mobile devices. So I feel like with this generation coming up, and entering into the workforce, and they are the one who would see spending power increasing. And I feel like there's a lot less inclination to actually play games on a console if 10 years down the line, you can have the same experience playing games on a mobile device.
Yeah, the technology is changing that business, and what blows me away is the revenue associated with the gaming business and the amount of time spent. It just blows me away every time. Nathan, thanks so much for joining us. Nathan Nadeau, technology research analyst. He's for Bloomberg Intelligence. He's based over there in London. He has a big deep dive report on the gaming business. So if any of you have an interest in the gaming business and the business of gaming, go check out Nathan's report. BIGO on the terminal will get you to the Bloomberg Intelligence platform, which you'll find the report there. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment, with the S&P 500 up 26 points. That's about 0.4%. The NASDAQ's up 160 points. That's 0.7%. So a pretty strong market here this morning. The Russell's doing a little bit better, up about 0.8%. Yields coming in. Actually, yields are pretty steady here. 10-year Treasury, 3.99%. That's up 5 basis points on the 10-year. Gold higher as well. We'll have more coming up. This is Bloomberg. Good morning.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. An NBA coach and player are facing big trouble off the courts.
The indictments are for allegedly rigged poker games, partly run by organized crime. Former athletes were used to attract starstruck but unsuspecting bettors. U.S. Attorney Joseph Nocella on the big names arrested.
Chauncey Billups, who at the time of the scheme was a former NBA player and is currently the head coach of the Portland Trail Blazers. And also Damon Jones, a former NBA player and coach.
Second probe involves betting on NBA games based on confidential information. Miami Heat guard Terry Rozier among those indicted. He was arrested in Orlando this morning. Peter King, CBS News, Orlando.
Now to Washington, where the demolition of the entire East Wing of the White House is more than the president himself advertised about his controversial ballroom project. CBS's Linda Kenyon.
President Trump has said no public funds are being used for construction of the ballroom, that he's paying for it himself along with donors. Those donors include Apple, Amazon, Meta, and Google, which have all taken steps to strengthen ties with the administration. Others include Comcast Corporation, Microsoft, Lockheed Martin, T-Mobile, Union Pacific Railroad, and Cameron and Tyler Winklevoss.
Well, to Capitol Hill now, where on day 23 of the government shutdown, CBS's Caitlin Huey-Burns reports on efforts to try to get some federal workers paid.
Right now, because there is no movement on this short-term resolution that they've been voting over and over again, you have both parties putting forward proposals to pay different sectors kind of in piecemeal, and we've not seen any success with any of those yet. We'll have 2 more today.
And CBS's Michael Wallace has more on the real-world impact of the shutdown.
Arkansas is warning SNAP benefits will be delayed if the shutdown doesn't end by November 1st. Teresa Robertson is with the Better Community Development Center in Little Rock.
We have clients come in all the time that talk about how I've eaten out of a dumpster 3 times this week because my benefits got cut off.
Meals on Wheels in San Antonio has lost $1.2 million in federal funding, forcing it to cut service to hundreds of seniors. CEO Vincent Ferris says a local business owner donated almost $200,000 to help.
It's letting these folks know that they're not alone and people remember.
Inter Miami says Lionel Messi has agreed to a new contract to remain with the Major League Soccer club. To the Vatican. History was made today when King Charles became the first British monarch to pray publicly with a pope in a service presided over by Pope Leo. Checking Wall Street, right now the Dow is up 33 points. The S&P is up 26. This is CBS News. It sounds like we don't like ourselves very much.
How many times do you look in the mirror and say this? I am beautiful. Probably not many. A new survey by Talker Research finds Americans have negative thoughts about their bodies an average of 4 times a day. A whopping 69% say that when they look in the mirror, the first thing they notice is something they want to fix. Almost 1 in 6 say they steer clear of social situations because of the way they feel about their bodies. If they felt better about their looks, more than half say they'd finally get to enjoy clothes and maybe take a peek in the looking glass and say, beautiful. Deborah Rodriguez, CBS News.
A final performance last night in New York for 43-year-old ballet star Misty Copeland. A decade ago, she became the first black female principal dancer in the American Ballet Theater's 75-year history. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump puts Russian oil on the blacklist. Welcome to the Thursday edition as the administration adds new sanctions on Russian oil, specifically targeting Moscow's top 2 oil companies in hopes of pressuring Vladimir Putin to end the war in Ukraine. We'll get the latest on this most recent turn from Bloomberg National Security Editor Ian Marlowe. It's day 23 of the government shutdown, and we have an important conversation ahead with Democratic leader in the House, Hakeem Jeffries, on this day after the final New York mayoral race. Bloomberg's David Gura will walk us through it, and we'll have analysis from our panel. Bloomberg Politics contributors Rick Davis and Adam Hodge are with us this hour. And we start, as always, on Wall Street. Alexis Christophers in for Charlie Pellet today with the latest on the markets. Hey, Alexis.
Hey, Joe. Stocks are regaining their footing following yesterday's slide. We've got the Dow Jones Industrial Average in the green by 33 points. The S&P 500 up about 29. The NASDAQ Composite, though, rallying 182 points, led higher by gains in NVIDIA, Broadcom, and Amazon. We've got gold on the rebound after a 2-day sell-off, up better than 1% now. And we've also got crude on the move. WTI crude now up more than 6%. Global benchmark Brent crude up 5.5% after the Trump administration imposed further sanctions on Russia's 2 largest crude companies, citing Russia's, quote, lack of serious commitment to a peace process to end the war in Ukraine. Now, that surge in oil fueling concerns about the impact of inflation one day before we get the delayed release of the September Consumer Price Index. Signs of rising inflation could hinder the Fed's ability to cut rates more aggressively when it meets next week, and that's sending bond yields higher. We've got the 10-year yield now sitting at 3.99%, the 2-year yield at 3.47%. In stock news, we've got shares of Honeywell up 7 1/3%. The industrial company reporting third quarter adjusted earnings per share that surpassed analyst expectations. Analysts here pointing to strength in the aerospace segment. And declining mortgage rates and more properties on the market helped to push sales of previously owned homes up 1.5% last month. That's the fastest pace in 7 months, according to the National Association of Realtors. And in more good housing news, according to Freddie Mac, the 30-year mortgage rate now at a 1-year low of 6.19%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christophorous. That's your Bloomberg Business Flash. Back over to Joe Matthew and Balance of Power.
All right, Alexis, great to see you. Thank you for being with us here on the Thursday edition of Balance of Power. You made it to Little Friday, and we've got a lot to talk about on what is day 23 of the government shutdown. You still keeping score? We're live every day from Washington, shutdown or not, on Bloomberg Radio, on your satellite radio, channel 121, on YouTube as well. We're going to be showing you some important stuff over the course of the hour, so dial us up on YouTube by searching Bloomberg Business News Live. Coming up later this hour, you're going to hear from the Democratic leader in the House. Speaking of day 23, Hakeem Jeffries just sat down for an important talk with David Gura that we're going to be rolling out here over the course of our program. So stay with us with much more on that to follow. As we try to follow the bead on Russia and Ukraine coming from the White House, this has been quite a whiplash moment for President Trump, who producer James reminded me 1 week ago today was on the horn with Vladimir Putin for that 2.5-hour call. And you remember what happened after that. We started talking about a summit, a second meeting in Hungary, and the Zelensky meeting the next day didn't go so well, pulled back on the Tomahawks. And then the whole thing turned around all over again, specifically after Mark Rutte, the NATO Secretary General, paid a visit to the president, leading us to this moment yesterday. Let's listen.
We canceled the meeting with President Putin.
And it didn't feel right to me. It didn't feel like we were going to get to the place we have to get, so I canceled it. But we'll do it in the future.
Mr. President, can you tell us a little bit about why you're elevating sanctions against Russia right now?
I just felt it was time. We've waited a long time. I thought that we'd go long before the Middle East. And Mark, as you know, we did the Middle East plus 7, so we did 7 different wars.
What did Mark Rutte tell him? What did Vladimir Putin say to him on the call? These conversations seem to lead the president from one extreme to the other. Fast forward to now sanctions, not those sanctions. We've been talking about the secondary sanctions bill on Capitol Hill, the Lindsey Graham legislation, for weeks and weeks. It's on pause, as John Thune said. The president is reaching out on his own here, flipping on Vladimir Putin with sanctions specifically on Russian oil, and more specifically than that, the nation's top 2 oil companies, Rosneft and Lukoil, in the push for talks. We're joined at this important moment by Ian Marlowe, who covers diplomacy and statecraft for us as our national security editor here at Bloomberg in Washington. It's great to see you, Ian. This is getting hard to follow. We could have a very different tune tomorrow, but speak to the significance of targeting these 2 companies.
These are the harshest sanctions yet we've seen from the Trump administration on Russia, and it's, maybe not a coincidence we see them so soon after this idea of a kind of a quick, hastily arranged peace summit with Putin has fallen apart. He asked Secretary of State Marco Rubio to sort of talk with Sergei Lavrov, the Russian foreign minister, to try and lay the groundwork for this. And now, just a few days later, we're seeing some of the biggest sanctions yet. And again, these were sanctions that, the Biden administration generally, didn't want to do because they were worried about the price of gas. Trump is also worried about that as well. Even in this moment, we see sort of a seesawing around with Trump saying, some people saying the summit's still going ahead, some people saying it's canceled, like Trump just said, and others just saying, maybe Trump saying these sanctions might not be in place for very long. So the message is a little bit confused right now, and it could just be part of a campaign in general to put more pressure on Russia right now, because other things have not worked.
Well, I woke up to imagery this morning, as you probably did as well, video of Russian drones crashing into civilian neighborhoods, a gas station that they were putting this massive fire out. So Vladimir Putin isn't slowing down here, and I suspect that this has the president upset, following many pleas to stop the fighting. I wonder, though, you mentioned the meeting between Marco Rubio and Sergei Lavrov. Is that the conversation that led to this breakdown?
Yeah, I think at the moment we're not sure. I mean, Rubio spoke on his way out to Israel just last night, kind of saying they're still trying to kind of push things forward. But you can hear it in Trump's voice, the way he's talking about the conversations with Vladimir. He has the conversations, then nothing happens.
Right. Yeah.
This is what the Europeans have been warning, and worrying about the Trump administration for months before they took office and since. That Putin was going to kind of try and play Trump to some degree, to try and spin out the war that they think they can win because they just have the numeric advantage over Russia, and they want this more than the U.S. does in terms of lasting beyond Trump's patience for supporting Ukraine.
What are your thoughts on the most recent fake news posts from the president? There was an important Wall Street Journal story yesterday that said that basically he had taken the reins off here and essentially given Ukraine permission to start striking deep inside Russian territory using longer-range missiles supplied by Europe. He went on Truth Social very shortly after that broke and wrote the Wall Street Journal story on the USA approval of Ukraine being allowed to use long-range missiles deep into Russia is fake news. Exclamation point. The U.S. has nothing to do with those missiles, wherever they may come from or what Ukraine does with them. But no one ever said that we did, right? This was, I think they call it a Storm Shadow missile that was used from Britain. So is he calling out this story or not?
It's a little bit strange, and I think it happened in part because the story had a bit of nuance to it, and also it came at a time where everyone was trying to read the tea leaves about where the White House was going on Russia. So it looked like, the story appeared after, the peace plan sort of started crumbling. And so people thought, oh, okay, well, the peace plan is crumbling, here's this new thing. But when you read the actual journal story, it refers to the decision being made before the Zelensky meeting last week, presumably before the call with Putin the day before. Right. So it's not 100% clear, and it does also make clear that Ukraine had been firing into Russian territory with Storm Shadow missiles previously. So it's a bit of a complicated.
Do we know what the permission structure is here? Is the U.S. cool with this or not?
At the moment, we don't. The journal seems to say that it was a sort of a U.S. general at NATO who was kind of allowing this. So it could just be that Trump is objecting to the overall interpretation that Trump is doing this, because again, Trump has been very hesitant to pressure Putin in a way that would keep him away from the negotiating table that Trump wants him at to solve the Ukraine war. One of the many that he has solved.
8, I think, is what we're going with 8 now. This would be 9. What about the Tomahawks? Was that just messaging when President Zelensky asked for these cruise missiles and the president said, yeah, I'm thinking about it? Was that an expectation that Vladimir Putin would respond to the threat? Because, of course, they're not getting any Tomahawk missiles.
It is unclear. It seemed very clear that Ukraine wanted them and that Russia did not want Ukraine to get them. And again, before the peace plan crumbled last week we were in a different universe, which was, the peace plan was in the works. The peace summit was in the works. And it was Putin basically getting to Trump before Zelensky and sort of torpedoing that meeting. And so, with the expectations of a big summit, you don't, in the future, in the near future, you don't want to give, Tomahawks to Ukraine and try and ruin it. Ruin the deal you might be able to strike with Putin. So
my God. Well, so I don't know if this meeting's going to happen or not. Apparently, no one does. But as we consider next moves here in the approach of the winter season, we are seeing oil prices rising here in reaction to this move. What makes us think, in our remaining minute here, Ian, that Russia cannot maneuver around this batch of sanctions as it has most others?
I haven't heard anyone serious say that this is something that's going to bring Russia to their knees. The attacks on Ukrainian energy infrastructure remains. Ukraine is seeking more, liquefied natural gas, other energy supplies to try and get through the winter. But when it comes to Russian oil, it's not quite clear. We're seeing some knock-on effects. We're seeing that China has already stockpiled oil in advance of this decision. And India now, which is one of the big refiners of Russian crude, they're actually starting to draw that down rather dramatically. And so, but that's not clear whether it's over these sanctions or whether it's over Trump threatening Modi with more tariffs. So it's not clear.
We have a lot to learn still with the help of Ian Marlowe. Thank you, Ian, so much, as always, for your insights and great reporting, editing our copy on the desk here in the national security space at Bloomberg in Washington. There you have it, straight from our newsroom. Taking a quick look at crude oil, WTI West Texas Intermediate up 5-6% now to approach $62 a barrel. Brent is above 66. This is Bloomberg.
It's 12:21 on Wall Street. I'm Alexis Christoforous, and stocks are bouncing back from yesterday's sell-off. We have all three major indexes moving higher, but the NASDAQ outperforming the rest of the market. Right now, the Dow Jones Industrial Average is up about 76 points. The S&P 500 is adding 30, but the NASDAQ Composite climbing 175. Oil is sprinting higher after the U.S. slapped sanctions on the Kremlin's two biggest oil producers as President Trump ratchets up the pressure on Russia's President Putin to end his war in Ukraine. Right now, we've got WTI crude up 5.6%, and the global benchmark Brent also up 5.5%. Some stocks in the spotlight today. American Airlines flying high, gaining about 5% after the carrier posted a smaller than expected loss for the third quarter, and its outlook for the rest of the year came in ahead of forecasts. And quantum computing stocks are on the rise on a Wall Street Journal report that President Trump's administration is in talks to take equity stakes in several quantum computing firms. We've got shares of IonQ now up 11%, quantum computing up 8%, and shares of D-Wave rallying 16%. And shares of Las Vegas Sands adding about 12% on the day after third quarter results beat street estimates on both the top and bottom lines, largely due to the growth in its Macau and Singapore investments. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Joe in Balance of Power.
You said it, Alexis. Thank you so much. We'll have more on the markets with Alexis Christoforous coming up in about 20 minutes here on Balance of Power. Good to see you. You made it to Thursday. You're almost there. It's day 23 of the government shutdown, and this is where I'm also supposed to tell you there's no end in sight, right? That's how this has been going. There's going to be more voting today. I don't know if they're even going to hit the CR. We'll have to ask around about that. They're going to be voting on Ron Johnson's bill that we spoke with him last evening, though, to help pay for active duty military and essential workers, those who are actually forced to go to work in the middle of all of this. Never mind the hundreds of thousands furloughed, hoping to be paid back when this thing reopens. Democrats set to filibuster that legislation, which is very controversial, and you better believe, as Sarah Chamberlain told us last evening on Balance of Power, they're already making ads. They just need a number. Democrats voted this many times to not pay the troops, and you just put that on repeat. Unless, of course, there's a deal. And the person who has spoken most recently with the Democratic leader in the House joins us right now on Balance of Power. My good friend David Gura is in the nation's capital. We're always better for having you. Great to see you. You sat down with Hakeem Jeffries for a big chunk of time this morning. I'd love to know what he's saying, if the talking points are the same, and what his demeanor was like.
There are some of the same talking points. What struck me going to the Capitol is how empty it feels. Yeah. You have leadership there, but the rank and file is not present, and there are some press conferences that happen. You see some folks in the halls, but it feels empty. And I think there's a general awareness that one of the participants in talks, should they happen, hasn't been that engaged with these talks and is getting ready for a major flight halfway around the world. And that adds to this frustration or this sense that very little is happening here. So I started off my conversation, which did last about half an hour, with Hakeem Jeffries, the Democratic leader, asking him just about the state of play and how much Democrats and Republicans are talking with one another. Let's take a listen.
As Democrats, we continue to make clear to our Republican colleagues that we will sit down with them anytime, any place, in order to reopen the government, to negotiate a bipartisan agreement that actually makes life better for the American people in terms of spending and funding. But we also have to decisively address the Republican health care crisis. We've maintained that position from the very beginning, before Republicans shut the government down and during the entirety of the shutdown, because it is a real crisis that has been created at this moment, particularly as it relates to the urgent need to extend the Affordable Care Act tax credits.
As you and I are speaking, the House Speaker is doing a press conference just down the hall. What is the level of engagement? Do you pass one another? Are you speaking with one another? Are Democrats talking to Republicans right now?
The conversations have been very limited, unfortunately, because Donald Trump has not given House Republican leaders or Senate Republican leaders permission to negotiate, reinforcing the principle from our view that he made the decision to shut the government down. They want to continue to inflict pain on federal employees. They've done that from the very beginning of Donald Trump's presidency. In fact, more than 200,000 federal employees had been forced off the job prior to the government shutdown. And this is something that we've continued to see them build upon during the shutdown. Until Donald Trump gets serious about reopening the government, unfortunately, we're going to remain in this situation, and everyday Americans are being hurt.
He's getting ready to take a trip to Asia. Is it appropriate for him to be doing that at this moment when the government is shut down?
I think that the president has a responsibility both domestically and throughout the world. However, what has been irresponsible is that throughout this shutdown, he's found more time to golf than he has to engage with Democrats on Capitol Hill. He's decided to try to steal $230 million in taxpayer funds from the Department of Injustice. Donald Trump and his administration have found $40 billion to bail out a right-wing wannabe dictator in Argentina and can't find a dime to extend the Affordable Care Act tax credits to keep health care affordable for tens of millions of Americans. And on top of all of that, they are demolishing the East Wing of the White House in ways that have appropriately horrified the American people.
I want to ask you about potential off-ramps, and Tammy Baldwin, the senator from Wisconsin, Democrat, said Trump is the off-ramp at this point. Do you agree with that assessment, and has there been any kind of outreach or dialogue between you and the White House?
Leader Schumer made clear earlier this week that we have reached out to the White House again to indicate that prior to Trump's departure for Asia, he should sit down with Democrats to find a path forward, to reopen the government, to enter into a bipartisan spending agreement, and to address the healthcare crisis that Marjorie Taylor Greene acknowledges must be addressed, and that traditional conservatives who are in the toughest seats in the country have now publicly acknowledged this week needs to be addressed.
Can I ask you a question of congressional mechanics, and that is, can the Democratic leader pick up the phone, call the White House, and reasonably expect the president's going to take that phone call? Are you able to do that? And if so, what's keeping you from having that dialogue?
Well, traditionally, that probably is the case, but in this White House, that's very much unclear. Donald Trump didn't have a meeting with House or Senate Democratic leadership until 2 days prior to the government shutting down.
An extraordinary amount of time they've had to wait to have that conversation, the leader making that known to me over and over again during the course of that conversation. Look, there are a couple of kind of forcing mechanisms or pressure points here on the horizon, the first of which takes place tomorrow when a lot of federal workers aren't going to get their paychecks. I think he's aware of that. I think Republican leadership is aware of that. And then beyond that, of course, November 1st, which, at the beginning of the shutdown felt very far away. And there were critics in the Democratic Party saying, look, if you're going to make this about health care and the elimination of these subsidies, that seems kind of abstract because of how far away it is from the beginning of the shutdown. Well, we're there now, and I think there's some confidence on the Democrats' part that when a lot of Americans open enrollment and look at the prospect of their health care bills really going up, that's going to have an effect on them. It's going to make them perhaps more supportive of the shutdown from the vantage of the Democrats. We'll see what happens here. But again, not having President Trump there certainly limits what they'll be able to do here in the days ahead.
Yeah, we can tell everyone the government's going to be shut down for at least another week, basically, right? That's going to be impossible for now. This vote will fail today on the bill to pay those workers, and you can add another on the 1st of November when SNAP benefits begin to expire. And you wonder at what point there's critical mass here from constituent services boiling over.
It's clear that that's going to become a more roaring boil here in the coming days. It hasn't happened yet, and one of the reasons has been because you have Russell Vought, the head of OMB, who President Trump is fond of calling Darth Vader, picking up the nickname that he's gotten, who's playing, as Russ Vought calls it, budgetary twister. He's moving money around and trying to keep some people paid and some programs open. And so that's kind of the crux of why Democrats have opposed legislation of the likes that's coming up for the vote today, is that they don't think that the White House should be picking and choosing sort of how all of this unfolds and who gets paid. So they're sticking to that, and we'll see how long that lasts.
And you're making the shutdown effectively easier and potentially prolonging it.
And less noticeable, I think, to a lot of Americans who aren't seeing it directly in their everyday lives.
So you sit down with Hakeem Jeffries the day after the big New York mayoral debate. He said he was going to say something about an endorsement one way or the other this week. He's not ready, huh?
I really had my fingers crossed, because what he said was, I'll make an announcement before early voting starts, which of course is this weekend. And I said, did you watch the debate last night? It was also opening night at Madison Square Garden when the Knicks defeated the Cavs. And he admitted he actually watched the last few minutes of the game and not the debate itself. He kept up with it. But he said to me that Zohran Mamdani's promise to ask Jessica Tisch, the head of the NYPD, to stick around is something that he sees as very promising. And the two of them, Hakeem Jeffries and Mandani, are scheduled to speak today and tomorrow, he said. They've spoken twice in the past already. So he wasn't ready to make that endorsement during the interview today, but it does sound like he's cognizant of the fact that there's a lot of pressure on him. Yes, as the minority leader, head of the Democratic Party in the House, but also somebody who represents the 8th District in Brooklyn and Queens, to make his opinion known.
There's no half measure here, right? He's going to have to endorse the Democratic nominee, especially if he's up by, well, 13 points in the latest poll we saw today, 30 in some polls.
Something I brought up to him stems from the interview that I did a few weeks back with Andrew Cuomo, the former governor and candidate on the independent line. And I said, look, he and I spoke, and I was struck by how much Andrew Cuomo kept saying, I'm a Democrat. My dad was a Democrat, almost taking up this mantle, even though, of course, he handily lost the Democratic primary. And I said, isn't there just an element of confusion here among the electorate that you have this independent candidate who's lost the Democratic primary doing that? I will say the minority leader seems to recognize that. So I feel like we're moving toward an announcement here. Again, the polls open this weekend, so time is of the essence.
Did this debate matter last evening? It looks like lines are so clearly drawn here, other than showing up to laugh at Curtis Sliwa one-liners. What's New York getting out of this? There were many.
I don't know that it moved the needle that much. I think you did see the two opposing candidates, Curtis Sliwa and Andrew Cuomo, maybe not working together, but training their criticism on Sarwan Mamdani in a way that they hadn't during that first mayoral debate. So highlighting his inexperience, comments he's made on the Middle East. I could sense that Andrew Cuomo was doubling down on that experience question, really playing up the fact that he has had all these jobs in government and Mamdani has not. But as you say, the polls continue to show Mamdani with a very sizable lead here with not much time to go.
You mentioned the game. Cuomo, Adams sitting together. They're going to reportedly appear today. What's about to happen?
Going to get the endorsement. Got the endorsement, I should say, and that was quite a picture that we saw last night on the sidelines as Cuomo left that debate and then made his way to the Garden to sit next to Eric Adams. An interesting moment during the course of that debate where the moderators asked all three candidates if Eric Adams were to endorse you, would you accept it? And it was Cuomo, the only one who said he would. And again, going back to my conversation with Governor Cuomo, he has a vision for how he thinks this will play out with him winning. I think he's acknowledged in recent days it's a tricky or difficult path to that happening here, but this is certainly one part of what he saw as needed to happen to try to get those voters who would have backed Eric Adams to throw their support behind him.
We'll have to play this, but we're going to talk about the debate with our panel coming up here. But Sliwa, would you accept the endorsement? Absolutely not. Put that crook in jail where he belongs. He was ready for a fire. He's had the full makeover. There's no beret, at least on the debate stage. He's wearing a suit. This goes the way the polls suggest in our remaining 30 seconds or so here. What does he do next?
It's a great question. I mean, he's lost many races before and has remained a very prominent figure here in Republican politics in New York City. I think that will continue. He claims to have the support of working class people in some of the outer boroughs, and that's one of the chief reasons why he's not stepping aside despite some pressure to do so. So I don't think he's going anywhere. Perhaps we'll look ahead to the next mayoral race. We'll have to see.
Well, I want to know when you guys are sitting down. This will be great. Nice to have you back. As always, David Gura will return in our second hour as we put an ear and an eye on some of the rest of that important conversation with Hakeem Jeffries that you're only going to hear today on Bloomberg Radio, of course. We'll assemble our panel next. Rick Davis and Adam Hodge back together, Bloomberg Politics contributors on the New York debate, right here on Bloomberg.
1240 on Wall Street. I'm Alexis Christoforous. Stocks are bouncing back after yesterday's sell-off, led by tech stocks. The Dow Jones Industrial Average gaining 96 points now, the S&P 500 adding 33, and the NASDAQ Composite up 176, a gain of 0.7%. Gold also on the rebound, up 1% after a two-day slide, and oil sprinting higher after the U.S. slapped more sanctions on Russian crude. We've got WTI crude now up nearly 6% at $61.97 the barrel. President Trump has pardoned Changpeng Zhao, the convicted founder of the crypto exchange Binance. That follows months of efforts by Zhao to boost the Trump family's own crypto company. Shares of Tesla now slightly in the green after a sell-off earlier. Rather than focus on sales, margins, and earnings, which missed estimates, Elon Musk used yesterday's earnings call to tout the company's robo-taxi and Optimus efforts without offering guidance for Q4. Shares of Supermicro sinking more than 7% after the one-time AI darling unexpectedly issued first quarter guidance that fell short of Wall Street's estimates. Ever have trouble deciding what to buy on Amazon? Well, the e-commerce giant is rolling out a new AI-powered tool. It's called Help Me Decide, that recommends a specific product when shoppers are feeling overwhelmed with options. And the show will go on after the union representing Broadway's musicians reached a tentative labor agreement with producers, averting a potentially crippling strike that would have silenced nearly 24 musicals. Broadway raked in a record $1.9 billion in ticket sales last year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Balance of Power now, and Joe Matthew.
All right, Alexis, thank you so much. The big show last evening in New York, of course, was at Madison Square Garden. Not the game, the meeting of the minds. Eric Adams, Andrew Cuomo together, leading up to an important endorsement that has not shaken up the race. But of course, it's significant, as we were just discussing with David Gura following the debate last evening. Thanks for joining us on the Thursday edition of Balance of Power. We're coming to you live from Washington here on Bloomberg Radio, on your satellite radio, on YouTube, where we're streaming live. Always search Bloomberg Business News Live. And we'll, by the way, have more on the markets with Alexis coming up at the top of the hour. This debate was pretty fierce last evening. Now we know Eric Adams will endorse Andrew Cuomo for mayor, a reversal after calling Cuomo a snake and a liar just a couple of weeks ago. Now, of course, the three were back on stage this evening, or last evening, I should say. It was Cuomo, it was Sliwa, and it was Zoran Mamdani. And it was pretty clear, based on the attacks coming from both sides, to Mamdani, who is the front runner in this race. Listen to the Democratic nominee from last night.
There are three candidates on this stage. You will hear only two messages. My opponents, who spend more time trying to convince the other to drop out than actually proposing their own policies, will speak only of the past, because that's all that they know. I am the sole candidate running with a vision for the future of this city. Andrew Cuomo will spend much of tonight attacking me. He is a desperate man, lashing out because he knows that the one thing he's always cared about, power, is now slipping away from him.
A desperate man, says Mamdani about the former governor, adding that today confirms what we've long known. Andrew Cuomo is running for Eric Adams' second term. That's a pretty good burn. Everybody showed up with a lot of material last night, and that's where we start with our political panel this day after the debate. Bloomberg Politics contributors Rick Davis and Adam Hodge are with us. Rick is our Republican strategist, partner at Stone Court Capital. Of course, Adam is Democratic strategist, managing partner at Bully Pulpit International. What do you think, Adam? Most are saying this morning that this debate did not move the needle, just like the last one didn't. Is Mr. Mamdani the next mayor of New York?
I mean, any candidate would kill to have a double-digit lead with just 2 weeks to go. I think that's you didn't see anything last night that really changed the fundamentals of the race. And I think he's certainly benefiting from having a three-person race. It's, just allowed the vote to split a little bit. And I don't think that Eric Adams coming in and endorsing him is actually going to make all that much difference. I mean, he's one of the more unpopular mayors in New York City history, and that's saying something. So I don't think anything's changed the race. I don't know that anything from the debate is going to fundamentally alter the race. And I think, Mamdani makes a point that he has offered a credible vision. You may disagree with it about what the future of New York City would look like under his leadership. The key question is, can he govern and execute it?
Well, apparently there was only one person on the stage who would have entertained the idea of an endorsement from Eric Adams. This, in fact, was a question in the debate last evening. Listen.
Would any of you accept Mayor Adams' endorsement? Mr. Mamdani?
No.
Mr. Cuomo?
Yes, I would.
Mr. Sliwa?
Absolutely not. Put that crook in jail where he belongs.
And final, a fun one.
Be careful. Be careful.
Be careful, said Cuomo. Rick Davis, what do you make of this back and forth, and does the endorsement make a dent?
Well, first of all, one of the more enjoyable debates that I've ever seen. It was good theater, and I would say, 2 weeks is forever in elections. I've seen leads slip away, maybe not this wide of a lead, but you take each day as it comes. And I'd say today Mario Cuomo woke up with a much better campaign than he had 2 days ago before the debate. He was able to cast some doubts on Mamdani, which he had not been able to do in the previous debate a week ago. And I thought Mamdani was a little slow to the game last night. I don't think it was a particularly good showing for him. But Cuomo is stuck between a rock and a hard place. The rock is Mamdani, who's got a sizable lead, and the hard place isn't, Eric Adams. It's Sliwa, because Sliwa's sitting on 12% that if he weren't in the race would likely be Cuomo's, and making it more competitive. So unless something dramatic happens with Sliwa's campaign, implodes or whatnot, I would think that this is kind of a slow grind to victory for Mamdani.
This is why you've got
Joe,
the
one
likes
thing I
of
was
Bill
thinking
Ackman,
about.
Adam, waiting for or hoping that Curtis Lee was going to drop out. We'll have you finish your thought here, Adam, but I'm just curious. Curtis Lee thinks that he's going to get a working class vote in neighborhoods that are not being quantified by polls. You know New York. What do you think?
I'm a little skeptical that Republican, longtime conservative is going to generate a huge number of votes in that area. But look, Donald Trump obviously increased his vote share in some of those, the part of the boroughs in New York City from some of those same voters. So I wouldn't totally count it out. But I can't help but hearing when Rick was making a really good point. I mean, I remember not that long ago, a lot of Democrats thought that, if we just appealed to some of the, Liz Cheney voters and getting him and her and Dick Cheney out to support Kamala Harris, that we get a whole bunch of Republican voters to come across the tent. And the reality is, people are Republicans or people are Democrats because they're Republicans and Democrats. And I don't think you're going to get a whole lot of Democrats in New York City. Certainly not enough to change the margin in this race, to switch parties and come over and support Andrew Cuomo, who they've despised for most of his political career. I have a hard time seeing that materialize in the next couple of weeks.
Mm-hmm. Well, next couple of weeks, like you said, I guess could be an eternity in politics. Rick Davis, if you're Zoran Mamdani and you've got early voting about to begin, how important is the Hakeem Jeffries endorsement, or does New York not care?
I really can't imagine, and I'm not, privy to internal polling that would have done a endorsement question. But Hakeem Jeffries has not elevated himself to the stature of a Nancy Pelosi to where her endorsement actually mattered in hard primaries, right? And so he's got a lot to prove as the leader of the Democrats in the House, that he can actually amass that kind of political power. So far, it has not been proven. Even his performance on the shutdown hasn't indicated that he's been able to generate public outcry as a leader of the Democrats to help solve that problem. So, and even his handling of the Mamdani campaign, where he's withheld, meetings, he's withheld endorsements. I'm not exactly sure. It could be the biggest letdown of the campaign if he finally does come on board. It's like, so who cares, right? So I'm really skeptical that it's going to have any material impact on the campaign. If anything, it's kind of cut to hit negative on on him because it just seems unlikely that the leading Democrat in the House wouldn't endorse the Democratic nominee.
What's more important, Adam, to have the Democratic leader in the House weigh in on the Democratic nominee in his own state? Or is it this decision by Zoran Mamdani to ask the New York City Police Commissioner, Jessica Tisch, to stay on board?
I mean, I think that probably says more about Tisch's job as the commissioner. I think across the board, people think she's done a pretty good job. And I think has brought a level of professionalism to that operation. That's just the read that I hear from talking to some friends and family in New York. I think the thing I keep coming back to, though, with this race is that Mamdani has been the one candidate who's been speaking most aggressively and consistently to the issue that is proven to be the number one issue that voters in New York care about. And I think across the country, and that's cost of living and prices in general. Yeah, there's a Quinnipiac poll a couple of weeks ago that showed that voters trusted him on that issue than any other else, and it's the number one issue for a lot of people in New York. So I think Andrew Cuomo has a lot of baggage on that issue. It has not proven he's got a credible idea for how he would address it. Now, again, you can take a lot of criticism with Mamdani's plans for addressing that issue, but he's laid out a vision and idea and spoken to the number one issue that people care about. And I think that, some politics 101 there, that's probably a solution to winning. Now, again, the key test will be, can he actually govern in City Hall and get things done to address the crisis? Because if he doesn't, I think you'll see a lot of issue that, quite frankly, Democratic mayors and elected officials have struggled with, is proving that you can get results and get things done. That's what I think the American people have the biggest questions about our party, is can you actually govern and get things done? He's got a chance, if he wins, to prove people different, but that's the test.
We have a couple of breaking stories that I just want to mention quickly as we spend time with our panel, Rick Davis and Adam Hodge. For starters, 2 Russian jets, and we just put out headlines on this on the Bloomberg. 2 Russian jets have violated Lithuanian airspace and stayed there for 18 seconds. We have just heard from the Lithuanian president on Twitter this evening. He writes, Russian military planes violated Lithuanian airspace, a blatant breach of international law and territorial integrity of Lithuania. Once again, he says, it confirms the importance of strengthening European air defense readiness. We'll find out potentially at the start of the next hour if the White House has a statement on this, because Caroline Leavitt, the press secretary, is going to be holding her briefing again, starting just moments from now, assuming things stay on time. We've also, guys, got another headline here, and it's coming out of San Francisco. We knew that the San Francisco mayor had spoken earlier today with President Trump, and we can now tell you, according to the mayor, that President Trump is calling off the deployment of federal law enforcement in San Francisco, which was expected to take place today, with the Bay Area next in line. There were 100 federal agents due to arrive at a Coast Guard base in Alameda today. Apparently, they are not going to be entering the city. Border Patrol operations, they had said, could start as soon as this week as well, in advance of mass raids or even the use of National Guard troops. Rick, I just dumped a whole bunch of information here. I'm curious your thoughts on San Francisco, though, and how a phone call with the mayor may have turned around the president on this.
Yeah, I think that some of these Democratic mayors have found ways, like in the District of Columbia, to try and work within the system that Trump is creating. And we've seen with foreign heads of state, those who are willing to sort of play ball, opportunities exist to make it less tumultuous when he does act upon his policies, in this case, on immigration. And so I'm not sure the confrontational strategies are working any better than the cooperation strategies, but in this case, it seems to me it's trying to keep the heat down a little bit, which I would imagine is a very positive thing for the people of San Francisco.
Yeah, I guess the conversation was last evening, not this morning, with the mayor and the president. The mayor saying late last night, I received a phone call from the president, told him the same thing I told our residents. San Francisco is on the rise. Visitors are coming back. Buildings are getting leased and purchased. Workers coming back into the office. Only got about 30 seconds. Adam, what do you make of this turn by Trump?
I mean, I think it's noteworthy that he would back down on this, but I think the power of engagement. Trump's a politician like a few others, and if you directly engage with him and show that you're willing to play ball a little bit or talk to him on these issues, he's sometimes willing to listen. Rick made a great point about the mayor of DC. She's done a pretty good job trying to manage it. It's hard, and so landmines left and right on that one, no question.
Maybe taking a page out of Muriel Bowser's book. We'll tell you more as we learn more about this decision. Adam Hodge and Rick Davis will stay with us in our second hour with much more to talk about in our conversation with Hakeem Jeffries. Straight ahead here, only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Still no end in sight. Welcome to the Thursday edition as the government shutdown stretches to 23 days with at least another week of closure expected as President Trump plans to leave the country for the better part of a week. I'm Joe Matthew alongside Tyler Kendall. who's in for Kaylee today, live in Washington. Thanks for joining us on Bloomberg TV and radio. Tyler, we're going to get the latest from Capitol Hill here and actually tap the insights of the Democratic leader in the House, Hakeem Jeffries.
Right, exactly, Joe. As pressure does seem to be mounting, but the upshot really is that the House has been out of session since September 19th. The Senate is set to adjourn later today. And as you mentioned, President Trump is about to head out for a week to Asia. And we know he's going to be critical in any sort of talks to get the government reopened.
Yeah, and if there was even a deal while he was gone, he wouldn't be here to sign that into law. So it looks like everybody's going to wait. House Democrats will be in town next week, we understand. And as I mentioned, Hakeem Jeffries speaking to that today on Bloomberg. Our own David Gora is in town and sat down for the better part of a half an hour with Jeffries, just reinforcing the frustration on Capitol Hill and the fact that there are at the moment, no off-ramps.
Right. Some incredible insights in that conversation, including some of those pressure points, because we've spoken about November 1st being that date for open enrollment. But, Joe, I'm also closely watching how November 1st could be impacted when it comes to SNAP benefits. We know that's going to be a big pressure point for both parties, really, going forward.
Millions of people relying on those benefits who will be impacted if this isn't solved by then. And I'm not sure that's possible before the 1st of November. Tyler, we'll hear what Hakeem Jeffries has to say moments away.
Right, and from domestic policy, we also have our eyes here in Washington on foreign policy as the White House has moved to sanction Russia's biggest oil companies. It's sending the price of oil absolutely soaring. So for the latest there and on the Thursday trade, we go now to Alexis Christoforous, World Headquarters in New York. Hey, Alexis.
Thanks very much, Tyler and Joe. Investors choosing to focus on strong earnings reports and continuing to turn a blind eye to that ongoing government shutdown. We have got stocks higher across the board right now for the three major indexes. The Dow Jones Industrial Average up 130 points. That's after losing more than 300 points yesterday. The S&P 500 is up about 39. NASDAQ Composite having a nice day, up better than 200 points, led higher by those mega cap tech stocks. Gold also on the rebound after a two-day slide, up now about 1% at 41.36 the ounce. And oil on the move to the upside. West Texas Intermediate up 6%. The global benchmark Brent up 5.6% after the U.S. slapped more sanctions on Russia's two largest oil producers. Now, in stock news, we have got shares of Hasbro gaining 2.5% after serving up better than expected quarterly results. That was driven by record performance from its Magic the Gathering franchise and strength in its digital gaming division, Wizards of the Coast. Also, IBM down about a point, adding to yesterday's after-the-bell losses after the tech giant reported disappointing growth for a key part of its Red Hat software division. That offset better than expected third quarter results and a boosted sales outlook. And consumer products giant Unilever is now up about 0.5%, posting stronger than expected sales and profits for last quarter, with hair and makeup products leading the charge. Unilever also maintaining its annual guidance. It's also delaying the spinoff of its Magnum ice cream company. It says that's due to the government shutdown, though it still expects to complete that spinoff later this year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back now to Tyler and Joe and Balance of Power.
All right, Alexis, thanks so much. As Alexis mentioned, I'm Tyler Kendall here alongside Joe Matthew in Washington, where the government shutdown continues. We are now in day 23, and we're seeing Republicans starting to try to ramp up their own pressure on Democratic colleagues. We saw the Transportation Secretary, Sean Duffy, on Capitol Hill today, and we've given you a lot of different dates to put in your calendar. But, Joe, here's another one. Tuesday, Sean Duffy confirmed is the first full paycheck that could be missed by air traffic controllers amid really what's been a shortage already from them since this shutdown has started.
To think we're clearing another pay cycle here is pretty remarkable. It was 2 weeks ago we were talking about how that might be an inflection point, but it's true. In air traffic controllers, long before the shutdown ever hit, and we were reminded of this with that terrible, tragic crash here in Washington, D.C., in many cases working 60-hour weeks, exhausted, away from their families, and to remove their paychecks right now is a very difficult circumstance, knowing we simply cannot train more air traffic controllers fast enough to fill these towers. So yes, the airline component here is a big one. We talked about the expiration of SNAP benefits, the 1st of November, the open enrollment. All of these items are creating a pretty major point of pressure here on Capitol Hill that brought us to our conversation with Hakeem Jeffries.
Right, exactly. And just to put a finer point on that November 1st date for SNAP benefits, we really are seeing this become an issue on both sides of the aisle. But I can say that I spoke to one senior aide to Democratic leader Chuck Schumer today, who told me that it really is the moderates within the Democratic conference that appear to be really making this a pressure point. And that is something that we should watch as we inch closer to that date.
That's for sure. The aforementioned David Gura is still in Washington and graces our desk right now here on Balance of Power. Of course, Bloomberg correspondent, host of the Big Take podcast, which is why you sat down for a good chunk of time with Hakeem Jeffries in his office. The sense of frustration was, I'm guessing, palpable.
It was. And as you both know, this is such a unique shutdown. The circumstances of it, how it's unfolding, and you've done such a good job of laying out all the potential pressure points here in the days to come. So far over the course of these 23 days, a lot of people have been shielded from those effects, the effects of the shutdown. We've seen Russell Vought, the head of OMB, moving a lot of things around to make it so that some people are paid, others aren't. Some programs are kept running, others aren't. Yeah. That can only last so long, one would think. And as we look ahead to Friday of this week, to Tuesday of next week, to when open enrollment begins for health insurance, pressure is going to mount. So it was a good time to sit down with the minority leader just to get a sense of sort of how this is all unfolding from his vantage in a very quiet Capitol building today. I asked him just sort of what kind of conversations are happening among Democrats and Republicans, and here's what he had to say.
As Democrats, we continue to make clear to our Republican colleagues that we will sit down with them anytime, any place, in order to reopen the government, to negotiate a bipartisan agreement that actually makes life better for the American people in terms of spending and funding. But we also have to decisively address the Republican health care crisis. We've maintained that position from the very beginning, before Republicans shut the government down and during the entirety of the shutdown, because it is a real crisis that has been created at this moment, particularly as it relates to the urgent need to extend the Affordable Care Act tax credits.
As you and I are speaking, the House Speaker is doing a press conference just down the hall. What is the level of engagement? Do you pass one another? Are you speaking with one another? Are Democrats talking to Republicans right now?
The conversations have been very limited, unfortunately, because Donald Trump has not given House Republican leaders or Senate Republican leaders permission to negotiate, reinforcing the principle from our view that he made the decision to shut the government down. They want to continue to inflict pain on federal employees. They've done that from the very beginning of Donald Trump's presidency. In fact, more than 200,000 federal employees had been forced off the job prior to the government shutdown. And this is something that we've continued to see them build upon during the shutdown. Until Donald Trump gets serious about reopening the government, unfortunately, we're going to remain in this situation, and everyday Americans are being hurt.
He's getting ready to take a trip to Asia. Is it appropriate for him to be doing that at this moment when the government is shut down?
I think that the president has a responsibility both domestically and throughout the world. However, what has been irresponsible is that throughout this shutdown, he's found more time to golf than he has to engage with Democrats on Capitol Hill. He's decided to try to steal $230 million in taxpayer funds from the Department of Injustice. Donald Trump and his administration have found $40 billion to bail out a right-wing wannabe dictator in Argentina and can't find a dime to extend the Affordable Care Act tax credits to keep health care affordable for tens of millions of Americans. And on top of all of that, they are demolishing the East Wing of the White House in ways that have appropriately horrified the American people.
I want to ask you about potential off-ramps, and Tammy Baldwin, the senator from Wisconsin, Democrat, said Trump is the off-ramp at this point. Do you agree with that assessment, and has there been any kind of outreach or dialogue between you and the White House?
Leader Schumer made clear earlier this week that we have reached out to the White House again to indicate that prior to Trump's departure for Asia, he should sit down with Democrats to find a path forward, to reopen the government, to enter into a bipartisan spending agreement, and to address the health care crisis that Marjorie Taylor Greene acknowledges must be addressed, and that traditional conservatives who are in the toughest seats in the country have now publicly acknowledged this week needs to be addressed.
Can I ask you a question of congressional mechanics, and that is, can the Democratic leader pick up the phone, call the White House, and reasonably expect the president's going to take that phone phone call. Are you able to do that? And if so, what's keeping you from having that dialogue?
Well, traditionally, that probably is the case, but in this White House, that's very much unclear. Donald Trump didn't have a meeting with House or Senate Democratic leadership until 2 days prior to the government shutting down.
It was opening night at the Garden last night. Knicks versus Cavs. Knicks won 119 to 111. Also the final mayoral debate in New York City.
Yes.
Did you watch it? Have you kept up with what happened on stage last night?
I wasn't able to catch the debate live. I did catch the final few moments of the Knicks game, I do admit. But the debate had already ended at that point by the time my day ended. I did think it was interesting yesterday, and a strong step that was taken by Zoran, the Democratic nominee, when he indicated his intention to retain our current police commissioner, Jessica Tisch. I think that probably will provide a lot of comfort to people throughout the city of New York. She's done a great job. She's well respected. We're a diverse city, and it'll be interesting to see how that is received upon my return home.
You've been asked about this 1,000 times. Let me ask 1,001 times. Are you prepared to endorse the Democratic nominee for mayor in New York City?
Well, what I'll say is I'm prepared to weigh in advance of early voting, and early voting
2 days away.
Early voting starts on Saturday.
Yeah. What's holding you up, and what are the issues that you're still concerned about? And I know that you said the last time you were asked about this, you were going to have a conversation with Zoran Mamdani, another conversation.
Yeah.
What's left undiscussed?
Well, I hope to speak to him today or tomorrow, and in fact, I plan on speaking to him today and tomorrow. And I think, from my standpoint, look, I was prepared to try to bring this to a close one way or the other several weeks ago, and then the government shutdown hit. And honestly, David, it's been all-encompassing, because this is a traumatic moment for the country that this has been inflicted on the American people. And then laying on top of it, right, just shutting the government down, as Republicans have done, is very problematic. But trying to communicate with the American people why we as Democrats also believe that addressing the Republican healthcare crisis is necessary, and explaining the entirety of the assault on their healthcare that has occurred this year, beginning with the one big ugly bill and the largest cut to Medicaid in American history, and the fact that their hospitals and nursing homes and community-based health centers are closing all across the country. Home care will be adversely affected. The possible cut to Medicare at the end of the year. The Republican refusal to extend the Affordable Care Act tax credits, and the threats that they're now making to even try to repeal the Affordable Care Act, and the assault on public health infrastructure. This is extraordinary stuff. We've never seen anything like this in the history of the country, which is why we believe it needs to be decisively addressed, along with, of course, reopening the government, standing by our hardworking federal civil servants, and making sure that we can enact the bipartisan spending agreement. So it's been all-encompassing, for the last several weeks. That said, I do have a sense of obligation to weigh in one way or the other in terms of the mayor's race in advance of early voting.
So I did watch the debate, and the themes of criticism that came up from the other two candidates were he's inexperienced, and his comments on the Middle East are problematic. Are those likewise the same issues that you want to talk to him more about? What's left unsaid between the two of you?
Well, I've certainly already publicly communicated and privately communicated some of my concerns with respect to some of the views that he's expressed in terms of foreign policy. That said, I believe his relentless focus on affordability is the right focus. The question, becomes for any mayor, for any executive, how are you going to implement that objective? Because it's the right objective, but he's got to navigate a treacherous governmental terrain in terms of the city, state, and most significantly, the federal government, because it's clear that Donald Trump has it out for Democratic-led cities all across the country, and we've got to be prepared for the fact that Donald Trump is coming for New York.
I guess my question is one of confusion. So I sat down with Governor Cuomo, and in that conversation he said, I'm a Democrat. My dad was a Democrat. He's really taking up that mantle. Of course, he lost the primary. He's running as an independent.
Yeah.
Isn't there an element here of confusion that in this vacuum, and you could, I guess, do something to close that vacuum, he's able to take up that mantle to the detriment of the duly elected Democratic nominee?
Well, it's interesting because he is running as an independent, so he's not the Democratic nominee. But of course, he has a long history as a Democrat. I think some of the concerns that I've seen articulated, however, is, well, what is the actual path to victory given the inability to convince a majority of Democrats in the primary, that you were the right person to lead the city moving forward at this moment.
A fascinating conversation, wide-ranging. We did talk a lot about the Democratic Party and what it can learn from the race in New York as well. So picking up on what he was just saying there a moment ago, I mean, Zohran Mamdani had a substantial win in that Democratic primary.
Yeah.
Sort of what does he take away from that as he looks at the political terrain across this country, which of course is a huge part of the minority leader's job, to assess who's running for what primaries are ones that can be contended. We talked about kind of younger voters that say that they might have, how they've been animated by some of these issues. And we came back to that notion of affordability, which again, he got, the mayoral candidate in New York got a lot of praise from Hakeem Jeffries about focusing on affordability in a very, very, very singular way.
Well, affordability also perhaps lends to this conversation about the shutdown. I was pretty struck with the Democratic leader telling you that this is a traumatic moment for our country. In his words, we're of course tracking this vote on Capitol Hill tonight. Potentially could pay some federal workers, but doesn't look poised to pass. Did you get any sense from Leader Jeffries that the pay aspect, the federal workers, they're potentially going to miss this full paycheck tomorrow, that is really leaning and weighing on the Democratic Party?
I think it is certainly weighing on him, and he said as much, but you heard from him in that conversation his adamance that this not be doled out selectively, that you can't prioritize some federal workers over other ones in the way in which Republicans in the White House have proposed here. So again, getting back to those pressure points, I think there's an awareness here among Democrats and Republicans as well that this is going to be a moment when, for lack of a better phrase, a lot of Americans wake up to the fact that this is happening. It's going to really hit them hard. And by virtue of how this is all played out, that last paycheck wasn't one that was as seismic as this one is likely to be. So yes, I think he recognizes it's going to weigh on a lot of people. Is it enough to kind of push him to make any concessions? No, it didn't seem like he felt that way.
Do we really believe he didn't watch the debate last night? I mean, I believe he caught the end of the game.
Yes.
He didn't watch, it wasn't on in the office?
I mean,
2 days away from an endorsement.
I can only believe what he's saying there, but I will say in New York, where I live, these were two dueling. I mean, you had both candidates, both Cuomo and Mamdani going to the stage. The first thing they said was, sorry that you're not able to watch the Knicks game tonight, but thank you very much for watching this debate. So there's a recognition of the fact that there was some split-screen programming there in New York last night.
Absolutely. So if you'd done the interview tomorrow, we'd have the endorsement, I guess,
I did
on the
feel
air
like
here.
I got 99% of the way there, based on what he was saying about his obligations.
So what do you think of that? And did he wait so long that it doesn't matter in New York?
That's a really great question, one I've really wrestled with over the last few weeks. I spoke with Governor Cuomo a few weeks back. How much does an endorsement like this matter? Of course, we haven't heard from Senator Schumer either, and in the past, both of them have weighed in on mayoral races. If you look at how well Mamdani performed in that Democratic primary, he did so without these endorsements, and it's fine. So I think you raise a really great point, which is how much does this really matter to the base of support that's really elevated for Mamdani? I don't think that it matters that much. But again, you heard there from Hakeem Jeffries, he feels an obligation to do so because of his position he's in, and that he's in the 8th District of New York. He feels like he has to do it. So we'll see if, in fact, he doesn't here in the next, as I said, 2 days.
Well, I was going to ask where this is headed. How likely is it that we are going to see something from the leader?
Look, I'm guessing here based on the conversation, the tone that he took. I think he's likely to do it. I think he feels that obligation is a real one. But again, time is ticking. So
there's a lot more of that interview, by the way. The Big Take podcast about the droppers just dropped.
Just dropped. 30 minutes in length, so you can hear the whole thing.
Apple, Spotify, you know the drill. I go through this every day. So the Big Take podcast with our good friend David Gora. It's great to have you back in D.C., David, and thank you for the great reporting. I'm Joe Matthew alongside Tyler Kendall. This is Bloomberg.
121 on Wall Street. I'm Alexis Christoforous. A fresh batch of better than expected earnings helping stocks bounce back from yesterday's sell-off. The Dow Jones Industrial Average up 104 points. In the broader market, the S&P 500 adding about 35, and the Nasdaq Composite up 184, 0.8%. The U.S. blacklisted 2 Russian oil giants as negotiations over ending the war in Ukraine stall. We've got WTI crude up 5.7%, and the global benchmark Brent crude up 5 1/3%. Shares of Honeywell are up now about 7% after the industrial company posted better than expected earnings on the strength in its aerospace segment. And American Airlines flying high, that stock up better than 5% right now after reporting a smaller than expected loss driven by a rebound in business and leisure travel in the domestic market. American Airlines predicts a return to profitability in the fourth quarter and said premium unit revenue growth continues to outperform the main cabin. And more layoffs coming to Rivian. The company plans to lay off more than 600 workers. That's about 4% of its workforce as the electric truck makers tries to conserve cash in a world that appears to be pulling back from electric vehicles. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's the Bloomberg Business Flash. Back to Joe and Tyler now and Balance of Power.
Alexis, thanks so much. I'm Tyler Kendall here alongside Joe Matthew in Washington. This is the Thursday edition of Balance of Power on Bloomberg Television and Radio. And we have some breaking news happening just moments ago. Senate Democrats blocking a Republican-backed measure aimed at paying military troops and some federal workers during the U.S. government shutdown. It is the latest sign that we are no closer to any agreement to reopen the government. Joe, a pretty partisan vote here. It looks like it failed to advance 54 to 45. Of course, as you well know, 60 votes are needed in order to get such a measure through.
Yeah, this is something that we knew was going to happen. We, in fact, talked to the author of that legislation last evening, Senator Ron Johnson, who was struggling with this idea of not necessarily having the votes for it to pass, knowing that Democrats were filibustering against this measure, and a lot of campaign ads are probably going to be made from those speeches, right?
Right, exactly. But Democrats, of course, have put up their own measures, and they're arguing when it comes to this bill in particular, it's going to give the administration too much power to determine who gets paid and who doesn't. And ultimately, that's how this bill really did fail today in the U.S. Senate.
Yeah, your take is spot on. Democrats have 2 bills of their own today that they're going to be offering. Chris Van Hollen, Democrat from Maryland, has one. Gary Peters of Michigan, the other. Those are going to fail as well. So this swirl continues, and the aforementioned Ron Johnson, the Republican from Wisconsin, tried to make the case for his bill last evening here on Bloomberg. Listen.
Clearly, the current system is utterly broken right now. We just crossed $38 trillion in debt. Again, the definition of insanity is doing the same thing over and over again, expecting different results. So again, we're in this dysfunction. Let's not make federal workers who are being forced to pay for our dysfunction.
Not a difficult case to make. This is legislation that would pay employees who have been forced to stay on the job, not furloughed, but still as essential workers continue working. Democrats are concerned, as Tyler mentioned, that gives the administration too much authority and in fact makes it a case of some get paid and some don't, and we shouldn't be making decisions like that now, with 750,000 federal workers furloughed. See how our panel feels about it. Bloomberg Politics contributors Adam Hodge and Rick Davis are with us. Adam, our Democratic strategist, managing partner at Bully Pulpit International. Rick, Republican strategist and partner at Stone Court Capital. What do you think about this, Rick? We knew it was going to fail, and this is going to be fodder for Republicans in the midterms.
Yeah, this is just a sort of continuation of the exercise that Leader Thune has been doing every day, putting up the clean CR for a vote. It fails. Do it again tomorrow. It fails. I think there have been 11 or 12 votes now on that, and so this is sort of another way of saying the same thing, which is we want to try to create some progress on government reopening, but unless we've got a deal across the board on all these various issues that the Democrats have raised, nothing is going to pass. And, I actually think it may have a pretty salutary effect on the employees, because these are the folks who are sitting around going, now, wait a minute. We're the victims. You guys are dysfunctional on Capitol Hill. And maybe we just start not showing up for work. And You know, I think if I were in a union in the federal government, which is almost laughable that I would be in a union in the federal government, you would have to argue that these union managers should start telling their employees, hey, maybe you shouldn't show up tomorrow. Maybe we ought to do a walkout. Maybe, I don't hear any of that happening, and yet that's a classic union strategy.
Well, Adam, what's your take, and what was the risk-reward calculus here for Democrats? Because as Joe mentioned, this seems like perfect fodder for Republicans as they start to make their midterm election campaign ads.
I think the thing to keep in mind is that you shouldn't pick and choose who does or doesn't get paid. That's a simple, basic principle. Just Joe mentioned, Democrats have put forward a proposal to pay all federal employees as the law makes clear. I think the fact that the White House has said that they may or may not fire some folks and keep some folks from quote unquote Democrat-run agencies as if they're not the leaders of the entire U.S. federal government, I think gives Democrats a little bit of pause here. But I think the biggest takeaway is that through all of this debate, throughout the entire shutdown, it really has become a topic about healthcare and what will happen on November 1st when people start seeing some of those real price increases and get that sticker shock. And Democrats have said, look, let's negotiate on this bill. Come to Washington, let's do it. The problem for the president, I think, the more he does go and play golf or does take this trip to Asia, it raises questions about whether he's serious about getting a deal. And he is the only one who can get a deal done to stop the government shutdown.
What do you think about the timing of this trip, Rick? Because it looks like the government will be shut down for at least another week, and we're going to be knocking on the door of November 1st here by the time the president gets back to the United States. That's when SNAP benefits are going to start expiring and so forth. This gives Democrats, as we heard from Hakeem Jeffries a little while ago, a pretty good talking point as well. Should the president cancel?
No. I kind of feel for the president. This is actually the one time he hasn't exactly told Thune and Johnson what to do. And then he gets criticized for usurping Congress, right? Here's Congress's chance to go and do their job. The president has a job to do. He should go to Asia. He should meet with Xi. He should figure out a way past these trade barriers that we have installed and make sure that Asia doesn't erupt into either a trade war or a shooting war. I mean, I'd say that's important, and that's the president's job. And he didn't pick the timing of this, but I just can't fathom why there isn't more leadership by the Republican leadership in the House and Senate. It's their House and Senate, and they have been criticized heavily for being usurped by the White House. And here's an opportunity that they can do something on their own to get government back working, and yet they seem unable to finding a strategy that will work 22 days in. And I mean, I don't know about you, Joe, but that's a long time to be thinking, oh, we'll just keep doing the same thing and that'll work over time. And that is the definition of insanity.
So, Adam, is it actually more to perhaps Democrats' benefit if President Trump does get more involved with these conversations, whether that is before or likely after he comes back from this trip to Asia?
I mean, on this, I just listened to some of the president's own words. I mean, he is clearly articulated in some of his more candid moments that he knows this healthcare issue is a real anchor around the political standing of the Republican Party. It's shocking maybe to some, but the fact that Marjorie Taylor Greene, even as Hakeem Jeffries alluded to, is essentially saying the same thing that House Democrats have been saying, that this is a real issue. We got to solve this issue. It hurts working class families who are going to pay higher premiums for healthcare. That is, I think the president understands the politics of it. I think John Thune and to a greater extent, Speaker Johnson has politics in his caucus, in their conference, that makes it harder to do a deal on the ACA. But at the end of the day, as Rick was alluding to, the math of the vote of the Senate is 60 votes. The way out of this is doing the deal that gets 60 votes to reopen the government and to tackle the healthcare crisis that some of the Republicans created. And so I think that is the key. And the sooner we get there, the sooner this will all be over.
We have an update on the ballroom project that we need to ask you both about, of course, happening at the White House right now. As the president leaves, I guess they'll be able to do some serious work over there because it is a massive construction site and According to some, it looks like somebody dropped a bomb on the East Wing. There's an update here, just even in the last 24 hours. President Trump has now decided to demolish the entire East Wing of the White House to make room for the ballroom, remembering that he had said back in July when this was first announced, the construction of the ballroom, that it would not interfere, this is a quote, would not interfere with the current building. The project's plans paid total respect, he said, to the existing structure's architectural style. Two things have happened since then. One, the price tag has gone up $100 million to $300 million. And as the president explained yesterday in the Oval Office, they had no choice but to tear down the entire East Wing. Listen.
We determined that after really a tremendous amount of study with some of the best architects in the world, we determined that really knocking it down, trying to use a little section, you know, the East Wing was not much. There was not much left from the original. It was over the course of 100 years, it was changed.
Well, it's gone, or will be soon. I actually took a walk by there last evening, Rick, and realized you actually cannot walk through the complex on Pennsylvania Avenue. There's a massive wall there. They've walled off Lafayette Park, and there's a wall running along the Treasury Department, so you cannot see this demolition taking place or take pictures of it. You've worked in the White House for a couple of administrations. What did you think when you saw the entire East Wing is coming down?
You know, I'm kind of torn. It is a historic location, right? And it is a rare thing to have in the middle of the nation's capital both the office and the residence of a president in one place. I mean, it's a wonderful kind of construct for the American people. That being said, there's been a lot of changes to the White House, the West Wing, the East Wing over many, many years. And so change in its own right has already been happening quite a bit. And it's not the same place that it was initially. And the Brits burned it down in the 1812 war. So, like, there's been a lot of changes in that place over time. And yet, at the same time, and I do think they could use more function rooms like this. I mean, you almost have to now do things inside the White House compound for security reasons. I mean, we used to go over and do events for the White House in like the Daughters of the American Revolution Hall because it was just down the street and we could walk there. Can't really do that anymore. So I'm kind of torn because I do think the facility needs upgrading. And you do need a bigger ballroom capability. The East Room just doesn't hack it for the kinds of things that are considered normal today for heads of state. And yet, at the same time, I'm feeling kind of sad about it.
All right, our political panel today, both Bloomberg Politics contributors, Rick Davis and Adam Hodge. Thank you both so much. And a redhead crossing the terminal right now. President Trump confirms he will meet with Chinese President Xi Jinping. That's next Thursday. That's according to the White House press briefing that's currently underway. We'll get into that and a lot more when it comes to foreign policy, including moves against Russia. That's up ahead. Stick with us. This is Bloomberg.
1:40 on Wall Street. I'm Alexis Christoforous. Strong earnings powering a rally on Wall Street today and helping stocks to recover some of yesterday's losses. Taking a look at the three indexes, the Dow is up 175 now, near its best level of the session. The S&P 500 up about 45, back in record territory, and the Nasdaq Composite up now 224 points, a gain there of about 1%. Also higher, oil is sprinting after the U.S. slapped sanctions on the Kremlin's two biggest oil producers. That's as President Trump ratchets up the pressure on Russia's President Putin to end his war in Ukraine. WTI crude up now about 6%. In stock news, toy maker Hasbro raised its full-year outlook and said sales are ramping up ahead of the holidays. Continued strength in its Magic the Gathering franchise and its Wizards of the Coast business boosted third-quarter profit and revenue. The maker of Play-Doh and Nerf now expects revenue to grow in the high single digits this year. We've got shares of Hasbro up now about 3%. And shares of Las Vegas Sands also on the move after third-quarter results beat street estimates on both the top and bottom lines. That's largely due to the growth in its Macau and Singapore investments. And Beyond Meat shares erasing a gain of as much as 120%, capping a turbulent run for the company. Analysts say the momentum may have been fueled by day traders trying to snap up the shares to squeeze short sellers who had bet against the company by selling borrowed shares. Right now, Beyond Meat down 13.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
Alexis, thanks so much. She'll be back with more at the top of the hour, 2 p.m. Eastern on the markets. I'm Joe Matthew alongside Tyler Kendall in Washington. Thanks for being with us here on the Thursday edition of Balance of Power on Bloomberg TV and radio with breaking news from the White House. This just came from the press secretary who's at the podium right now in the briefing room with some opening remarks making clear that the meeting will take place. President Trump and Chinese President Xi will sit down together on October 30th. That's a week from today, knowing the president is about to be wheels up this weekend toward the APEC summit in South Korea. Tyler, you're going to be along for the ride on this trip, and this is about as high stakes as it gets.
As high stakes, highly anticipated, Joe. It's going to happen on the sidelines, likely, of the APEC summit that's happening in South Korea. There is a lot at stake in this meeting, but I have to say our analysts at Bloomberg Economics say that their base case right now is that we're likely looking at a 90-day extension to that tariff truce that's in place, that's set to expire on November 10th, if everything goes as planned. But of course, a lot on the table, everything from export curbs to soybeans to also China's imports of Russian energy supplies, which brings us to this latest move from the White House, moving to sanction two of the largest Russian oil companies. And we heard this come out of the White House yesterday after President Trump had met with the NATO Secretary General Mark Rutte. He explained earlier sort of where these negotiations with Russia currently stand. Take a listen to part of what he had to say.
We canceled the meeting with President Putin. I mean, it didn't feel like we were going to get to the place we have to get, so I canceled it. But we'll do it in the future.
Mr. President, can you tell us a little bit about why you're elevating sanctions against Russia right now?
I just felt it was time. We've waited a long time. I thought that we'd go long before the Middle East. And Mark, as you know, we did the Middle East plus 7, so we did 7 different wars.
That was the president yesterday at the White House. The price of oil soaring today after the U.S. announced these sanctions against two of the largest Russian oil companies. It's really considered a change of course for President Trump. This marks the first direct U.S. measures on Russia of this term. WTI currently hovering around $62 a barrel. And Bloomberg estimates that the Russian companies that were blacklisted, one is state-controlled, the other is privately held. Together, they account for nearly 50% of Russia's crude oil exports. For all of the latest and to look into whether or not this is going to make a difference when it comes to the Kremlin's calculus, we're joined now by Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. Mike, thanks so much for joining us. Can you answer that question? Can you put this into context? Just how difficult will it be for Russian barrels to reach the market after this move from the Treasury Department?
Well, that's the thing about Russian barrels. Any type of sanctions, they always find their way to the market. It's just a question how they do it, where they do it. And you also mentioned one of the largest buyer of Russian oil is China. Yet China's total demand is declining. So Russia's becoming increasingly dependent on its unlimited friendship with President Xi to take that oil. But the bottom line for crude oil is we've had a big bounce in crude oil. In a bear market from lows, remember it was trading $57 the other day. The low for the year is 55, and last year's low is 65. So it's still very much a bear market. It's bouncing. At the same time, this week we had a pretty significant correction in gold. Now that's a bull market that's backed up, but I look at crude oil as it's a bear market. Someone has to shift, and the bottom line I'll end with is crude oil's going up. Crude oil's going down despite this record-setting stock market. Just imagine if we got a little pullback in the stock market. Crude oil's ready, I think, for the next impetus to push it towards those lower lows, and it needs something unusual like this to keep it at least somewhat bid in the near term.
So you're not moving off your forecast, though, right? Mike McGlone, you've been very consistent, and you have been correct. Are we going back below $50?
Oh, yes, I'm sticking with that one, Joe. I don't know what's going to change it. And just the fact that crude oil is down about 15% this year and the stock market's up about 15%, that's divergent deflationary weakness. But it's not alone. Corn, soybeans, wheat, the grains are all doing the same thing. Natural gas has a problem and it's priced for a colder than normal winter, yet we might get normal global warming trends. And crude oil is just oversupplied. And also let's remember what's changed in the history of crude oil's last 20 years, when a bottom around $40 a barrel since 2008, is the U.S. was a net large importer then. Now U.S. is one of the largest exporter on the planet, a major producer, and the rest of the world, for instance, China's not demanding as much anymore. Crude oil's just stuck in a normal bear market. I don't know what shifts it, but I'm fearful what can really make it accelerate, and that's just a little backup in beta.
Got it. He's the best at this. Mike McGlone with us live from Miami, Bloomberg Intelligence Senior Commodity Analyst. Mike, thank you so much. Right now, WTI, West Texas Intermediate, as Tyler mentioned, right below $62 a barrel, up almost 6%. Brent crude also rising almost 6% to $66 a barrel. So we're seeing an instant reaction here on the financial markets. The question, what will be the diplomatic reaction to this? And for help, we turn to an expert. James Jeffrey, the former ambassador, is with us right now on Bloomberg TV and radio, former ambassador and longtime diplomat here in Washington. It's great to have you back, sir. Does this decision by the Trump administration to sanction Russian oil bring us closer to an end to this war? Because so far, sanctions have not done a lot to alter Vladimir Putin's behavior.
No, that's true. But first of all, thanks for having me on.
Yes, sir.
This war is being fought in every sense as an attritional campaign. Think of World War I, at least in the West, almost 4 years with very little change on the ground. So therefore, little things are not going to make a difference decisively, rather they add up. So you take what we just heard, this is pretty significant. This is a major hit. In the end, the Russians will get their oil out. We'll be able to absorb that because, as you have been reporting, oil prices per barrel have been quite low, around $60. They're up a bit now. But this is going to hurt the Russians. In addition, the Trump administration has been apparently greenlighting intelligence for long-range European missiles that the Ukrainians have to hit targets deep inside Russia. You have the campaign against refineries by the Ukrainians using their own drones, and you have the Europeans moving forward on a slower timetable to cut off all Russian gas that they're still importing. Bit by bit, this is making things harder for the Russians. Their economy is at a point where it's not growing and they can't produce more military capability, although they can sustain what they have. And two, it sends a signal politically to Putin that our will has not collectively been broken. That's important because he thinks he can wear down Zelensky, wear down the Europeans, and wear down Trump.
Mr. Ambassador, much to Joe's point earlier about this idea that we have seen sanctions before, President Trump himself has pointed to that as a reason why he waited. He's previously been asked why he wouldn't do this. He said he wasn't sure if it would deter Russia or not. But then he said that the time is right now. If we sort of just retrace our steps from these past few weeks, is there any moment that you can point to that you think might have been the tipping point here, or have we been creeping along towards this end goal all along?
We've been creeping along, but I would say the turning point was after the president's recent call with Putin, where he thought, and probably correctly, that Putin gave him some signals, some hints that he could be flexible on a ceasefire and a termination of the war. There was then a follow-up call between Secretary Rubio and the awful long-term Russian Foreign Minister Lavrov, Mr. No. Well, apparently Rubio reported back that the Russians were not moving. So Trump, who had, of course, invited Putin to Alaska, was ready to have another summit in Budapest, decided this guy is playing with him. So bang, he cancels the Budapest meeting, and also he's taking these additional steps. Trump would like to see a negotiated settlement of this war because he doesn't see it leading to a Ukraine win, and he needs to do business with Russia, he needs to do business with China, etc. But he's not going to cave on this, and that's another, today is another signal of that.
Is he correct on his assumptions about the battlefield? Ambassador, I'm wondering where your thoughts are at this point as President Zelensky requests Tomahawk missiles to turn the tide in this war. We know that they're also using long-range missiles, even without the United States contribution being provided by Europe. These desert shadow or dark shadow missiles, if I'm using the term correctly, could strike deep into Russia. Is that what Ukraine needs?
Well, Ukraine has those from the French and from the British. And as I said, they use American components and intelligence, and we've just green-lighted long-range strikes into key infrastructure inside Russia for them. So that's another big step. The Tomahawks would help further, both as a signal of American strength and willingness to push back on Putin, and also marginally on the battlefield. But basically, nothing much is going to change the situation on the front unless one or the other side collapses psychologically, politically, or economically, and neither Ukraine nor Russia seem to be in that position now. So it's going to drag on unless we can get negotiations going.
Well, you alluded to it there with how some of our allies are also providing, of course, military assistance and weaponry to Ukraine. The sanctions package that we were talking about seems to be coming in concert with the European Union this morning approving its 19th package of measures, including that there's these plans to ban Russian LNG imports into the bloc by early next year. Can you talk to us about how regional partners have been so important to this effort, to the White House's stance when it comes to the future of the war in Ukraine, particularly as we had the NATO Secretary General Mark Rutte there just yesterday?
Right, and he's a guy who is able to turn Trump around and explain to Trump why Europe and Ukraine are important. He's playing a huge positive role. But the Europeans have funded, when you look at both weapons, including buying them from us, and economic assistance, not to speak of taking in refugees, a greater burden than the United States has. But that's reasonable. We have global responsibilities. They don't, and they're closer. There are also a lot more Europeans than Americans. So that's okay, but they are doing a good job. These latest sanctions, some come into effect next year, some not until 2027. But the key thing is there has been broadly defined a dramatic decline in hydrocarbon exports from Russia into Europe since 2022, particularly when the Nord Stream gas pipeline was cut off. What we're seeing now is LNG shipments and some oil shipments. They need to be cut off. That will take place, as I said, over the next 12 to 24 months. It's a good signal. In the short term, it won't have much impact, though. The Trump oil sanctions that we were just announced will have a bigger effect, I think.
Interesting. So with our remaining moment, Mr. Ambassador, is there a need for secondary sanctions has been drafted on Capitol Hill, or should the president be in charge of this from the White House?
The president always, regardless of the president, I'm speaking as a guy who worked for many of them, so I'm biased, should have the final say on life or death things, including a conflict with another nuclear power. But he needs to keep that in his back pocket. He needs to escalate. He determines, like Kennedy did in the Cuban crisis, how quickly and to what degree he escalates. But these things are good tools, be it the tomahawks, be it these congressional sanctions, secondary ones, if we need to put pressure on. And he will eventually, I think, if Putin doesn't change his position.
All right, Mr. Ambassador. James Jeffrey, former ambassador to Iraq and Turkey and special envoy to the global coalition to defeat ISIS. Thank you so much for joining us here on Bloomberg. A breaking news headline on the terminal. Caroline Levitt saying Russia has not shown enough interest in peace. We'll stick with this story. Keep with us here on Bloomberg. Business Week Daily is up next.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, this is Thursday. What a week it's been. October 23rd, 2025. Carol Master, Tim Stenovic, live here at Bloomberg headquarters. Got to say, putting this show together, it was a little bit tricky because there's a lot, once again, coming at investors. We have seen stocks, though, they have been higher. But what's interesting is Treasury yields, too, have spiked as oil prices have kind of rekindled some of those concerns when it comes to inflation. We've got an inflation print, right, we expect tomorrow, Tim, and then you've got, what, a Fed meeting next week?
We do, and we are expecting to get data about jobless claims at 4 o'clock today.
Oh,
this
right.
happens with a shutdown. The state data, as Michael McKee just explained to me, is sent to the Labor Department. They release it in Excel format. Got to do some number crunching, but just a deep tease for the 4 o'clock hour. Michael McKee is going to be with us to break down that data and preview everything next week.
Super important as we think about what's going to come our way potentially tomorrow as well. Having said that, in the next 60 minutes, we are going to hear from House Minority Leader Hakeem Jeffries on President Trump on U.S. priorities. And of course, that does include the U.S. government shutdown. Am I correct? 23rd day?
Yeah, today's day 23.
Yeah.
See how many more days it goes. Also, Elon Musk's hijacking of Tesla's earnings call, if you caught that last night, even if you didn't stick around, Max is going to be joining us, Max Chafkin, a little bit later.
If I was offered $1 trillion in a pay package, I'd be pleading too. I'm just going to say.
Would you be satisfied with the $450 million that you already have?
Yeah, that's kind of okay too.
I don't know.
All right, we're also going to get into how emerging technologies, including AI and quantum computing, are changing the nature of making healthcare diagnoses. So we're going to get into that. It's a busy 60 minutes. It's a busy 3 hours. So stick around, everybody.
First up, though, check of the day's trade and top business stories. Here she is, Alexis Christoforous, in for Charlie Pellet. Hey, Alexis.
Thanks, guys. A big rally here in big tech, driving stocks higher in the run-up to tomorrow's reading on consumer prices, which we know will give Fed officials a critical piece of information on inflation ahead of their policy meeting the following week. The Dow Industrials now up 189 points. The S&P 500 back in record territory on a gain of about 46, and the NASDAQ composite racing ahead up 231. Gold is advancing, pairing some of the week's steep declines, up now about 1% at 41.38 the ounce. And oil, of course, the big story this week, climbing. WTI up 5.25% at 61.58 the barrel. That jump in oil stoking fears of higher inflation, and that is pushing yields higher. So we have the yield on the 10-year at 3.99%, two-year yield at 3.47%. By the way, Binance Coin, that's on our radar today. It is jumping right now 5.6% after exchange co-founder Changpeng Zhao received a pardon from President Trump. Taking a look at stocks making news, toy maker Hasbro raised its full-year outlook and said sales are ramping up ahead of the holidays after continued strength in its Magic the Gathering franchise, and its Wizards of the Coast business helped to boost third-quarter profit and revenue. Hasbro up 3.75%. And we are, of course, keeping an eye on Ford and Intel, both out with earnings after the closing bell. Ford down just about 0.5%. Intel, though, up 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back to Carol and Tim.
All right, Alexis, thank you so much. Jim Farley of Ford, of course, the CEO. He's going to be joining us in the 4 o'clock
4:20.
hour.
Tune in.
4:20.
4:20.
4:20.
That's when it's happening.
Isn't that what, like Tesla's 4:20? All right,
This
not
is
going
all
to go
you,
there.
Carol Nasser.
I know. All right, let's talk about some of the stories that are going on, certainly out of the nation's capital. Transportation Secretary Sean Duffy warned that flight disruptions would continue across the U.S. As the government shutdown drags into its 4th week. More than 13,000 air traffic controllers and 50,000 Transportation Security Administration agents are being forced to work during the shutdown without pay. Just one important part of the government, as you know, that is being impacted, Tim, by this breakdown between Republicans and Democrats, a breakdown that we seem to see over and over and over again.
Bloomberg News correspondent and host of the Big Take podcast, David Gura, sat down for an interview with House Minority Leader Hakeem Jeffries to talk about the relationship between the U.S. and Russia, the upcoming New York City mayoral election, and first and foremost, the ongoing government shutdown.
As Democrats, we continue to make clear to our Republican colleagues that we will sit down with them anytime, any place, in order to reopen the government, to negotiate a bipartisan agreement that actually makes life better for the American people in terms of spending and funding. But we also have to decisively address the Republican health care crisis. We've maintained that position from the very beginning, before Republicans shut the government down, and during the entirety of the shutdown, because it is a real crisis that has been created at this moment, particularly as it relates to the urgent need to extend the Affordable Care Act tax credits.
As you and I are speaking, the House Speaker is doing a press conference just down the hall. What is the level of engagement? Do you pass one another? Are you speaking with one another? Are Democrats talking to Republicans right now?
The conversations have been very limited, unfortunately, because Donald Trump has not given House Republican leaders or Senate Republican leaders permission to negotiate, reinforcing the principle from our view that he made the decision to shut the government down. They want to continue to inflict pain on federal employees. They've done that from the very beginning of Donald Trump's presidency. In fact, more than 200,000 federal employees had been forced off the job prior to the government shutdown. And this is something that we've continued to see them build upon during the shutdown. Until Donald Trump gets serious about reopening the government, unfortunately, we're going to remain in this situation, and everyday Americans are being hurt.
He's getting ready to take a trip to Asia. Is it appropriate for him to be doing that at this moment when the government is shut down?
I think that the president has a responsibility both domestically and throughout the world. However, what has been irresponsible is that throughout this shutdown, he's found more time to golf than he has to engage with Democrats on Capitol Hill. He's decided to try to steal $230 million in taxpayer funds from the Department of Injustice. Donald Trump and his administration have found $40 billion to bail out a right-wing wannabe dictator in Argentina and can't find a dime to extend the Affordable Care Act tax credits to keep health care affordable for tens of millions of Americans. And on top of all of that, they are demolishing the East Wing of the White House in ways that have appropriately horrified the American people.
I want to ask you about potential off-ramps, and Tammy Baldwin, the senator from Wisconsin, Democrat, said Trump is the off-ramp at this point. Do you agree with that assessment, and has there been any kind of outreach or dialogue between you and the White House?
Leader Schumer made clear earlier this week that we have reached out to the White House again to indicate that prior to Trump's departure for Asia, he should sit down with Democrats to find a path forward, to reopen the government, to enter into a bipartisan spending agreement, and to address the healthcare crisis that Marjorie Taylor Greene acknowledges must be addressed, and that traditional conservatives who are in the toughest seats in the country have now publicly acknowledged this week needs to be addressed.
Can I ask you a question of congressional mechanics, and that is, can the Democratic leader pick up the phone, call the White House, and reasonably expect the president's going to take that phone call? Are you able to do that? And if so, what's keeping you from having that dialogue?
Well, traditionally, that probably is the case, but in this White House, that's very much unclear. Donald Trump didn't have a meeting with House or Senate Democratic leadership until 2 days prior to the government shutting down.
That, of course, was House Minority Leader Hakeem Jeffries with Bloomberg's David Gore. David joining us from the Bloomberg News Bureau in the nation's capital. Hey, David, what I picked up from there is, we hear the president and Republicans talk about the shutdown, then we hear Democrats separately talk about it. But again, nothing about leaders coming together to really work on the issues that separate them. And I kind of got that from the House Minority Leader as well.
Separately is the key word there, Carol. Suffice to say, these two parties are not speaking with one another. And I should say, at the Capitol building today, it was incredibly quiet. You do have congressional leadership there holding press conferences, meeting among themselves. But it is sleepy isn't the right word. Empty is perhaps a better word. And it was clear from that conversation that the person who needs to be at the table, or at least giving the blessing to Republicans who are at the table, is President Trump. And there is, I think, a level of resignation among Democratic leadership that without that, this is just going to continue. So we're poised for President Trump, as we talked about in that interview, to take this trip for about a week to Asia. Again, there's a recognition there that with him absent, this is unlikely to advance or develop here over the coming days.
Yes, I guess the big question on the Democrat and Republican side is what can be done with the president on this trip? What can be done out of the country? Is there a chance that these two sides can come together and end the government shutdown even if he's not around?
Well, there is some hope for optimism, of course, but there are a number of kind of pressure points that are on the horizon. I think that's pretty notable. So tomorrow is the first one, October the 24th. That's when a lot of federal workers are not going to receive their paychecks for the first time in this shutdown. So the pain of the shutdown is going to be more acutely felt by more people. And I think what's kind of novel about this shutdown is You've had someone who heads the Office of Management and Budget at the White House really moving things around, playing what he calls budgetary twister to make sure that a number of government employees are paid, certain programs are continued. All of that starts to become more and more difficult here as the days tick on. So tomorrow, a big pressure point. Another one is next week, November the 1st, when some SNAP benefits are scheduled to expire. And of course, when open enrollment begins for healthcare plans. That's the moment at which Democrats believe Americans are going to look at the prospects of their healthcare going up, becoming more and more expensive. And they're going to perhaps recognize the fact, as Democrats would say, that this is something that's real and important, and that having the government shut down so that those subsidies can be restored is worth doing.
I will say, I think that message is getting to Americans outside of the Beltway. I was in Arizona last week. The lead story on local news last weekend was about premiums going up for Obamacare. That story seems to be getting out there, and people are actually talking about that. David, a lot in that interview. One thing you also touched on was what's coming here in New York in the next couple of weeks, early November, the mayoral election, and the way that Leader Jeffries has or has not yet communicated with Zohran Mamdani, the favorite to win the election here in November. What did he say about that?
They have spoken a couple of times, and I was optimistic. I had my fingers crossed that he'd be willing to make an endorsement today. During that interview, he declined to do so, but he has said that he's going to speak with Zohran Mamdani again today and tomorrow as he prepares to do that. He talked about the obligation of doing that. I asked him, did he watch the debate last night, the final mayoral debate, or did he watch the Knicks season opener? He admitted he watched the last few minutes of the basketball game and not the debate, but he kept up with it and kept up with what the conversation has been. And after he declined to make an endorsement, I really pushed him on what the outstanding issues are. And what he emphasized to me during our conversation is, look, he really applauds Mr. Mamdani for his emphasis on affordability. He thinks that's a signal issue in New York City and one that's a signal issue across this country for Democrats. So really applauded him for focusing so much on that. But he acknowledged the fact that President Trump is likely to go after New York after this mayoral election takes place. Does Mamdani have the capacity, the experience to deal with the level of pressure that the federal government is going to bring to bear? So I personally a bit disappointed that we didn't get that endorsement during my interview today, but it does seem like that's likely. I mean, I think what he said over and over again is he plans to weigh in on this race before early voting begins. And as both of you know, early voting in New York City is scheduled to start on Saturday of this week. So time is nigh, and he's going to do it soon. I should say he was about like 98% there, I think, during the course of our conversation. He really applauded Mamdani for saying that he planned to keep Jessica Tisch as the New York Police Department commissioner if he is elected. He saw that as a positive step.
All right, last question, though, because this also came up, and I feel like people have said to me, why aren't you guys talking about this? But it's all over social media activity. And, David, that is what's happening at the White House, the actual physical demolishing of a piece of the White House. I know in the grand scheme of things, maybe isn't as important as a lot of other things that are going on in this world, but it feels very symbolic despite the actual physicality of what's happening and indicative of a president that can kind of do whatever he wants. What did Mr. Jeffries say on that?
He expressed dismay over this happening, as I think a lot of people in this city have as well. Of course, it's a very old building that has been remodeled in the past, but this is pretty dramatic, and in the past it would have gone through a lot of reviews. That hasn't happened here. The president said initially he planned to build this ballroom that was going to have no effect on the existing building. Of course, that's not the case. We have seen images and video of the demolition of the East Wing of the White House that are startling to a lot of people, as the minority leader said. And then there's just the notion of what's being built there, this massive structure, this 90,000 square foot ballroom, which the president says is essential for the leader of the United States to entertain foreign leaders who come through Washington, D.C. An organization of architectural historians pointing out that just proportionality is wrong here. To have a building of that scale on the White House plan is just huge. So a lot of people just expressing dismay and stupefaction over what's happening here. And I should note as well, the price tag on this has gotten larger over the course of this construction too. It started out at $200 million. The president said it'd be paid for by himself and private donors. Now the price tag is $300 million. So a lot of people just kind of wondering how this is happening, how it's happening so quickly. And I think that you hitting on kind of the metaphorical side of this is important too, Carol. A lot of people kind of looking at it as a way of the president here moving with some relative impunity.
Gotta say, I have an old house, 1800s, and I can't even change a window without like a commission weighing in. So there's got to be something when we're talking about the people's house. David,
you're
Gora.
not the president, Carol.
That's what I'm saying. I'm nothing.
You're not nothing, but you're not the president.
I can't change a window without stuff coming down on me. And I'm just thinking about the historic significance of that building there on Pennsylvania Avenue. All right, David, thank you as always. Bloomberg News correspondent, host of the Big Take podcast, David Gora. Government shutdown, you and I have gone back and forth that it's really not top of mind for investors. It's kind of startling, at least not yet. We know people are worried about the deficit, but it doesn't seem top of mind. Other things are.
Yeah, earnings, Fed policy, inflation concerns, the data that we do or do not get, trying to make sense of this economy. Here with more on that and today's market environment, we've got Allie McCartney back with us. She's Managing Director of Wealth Management and Private Wealth Advisor with Alignment Partners at UBS. She's got just over $1 billion in assets under management. She's back here in our Bloomberg Business Week studio. Is there a clear narrative to you about where exactly markets go next?
No, there isn't. I know that I have an opinion. Many on the sell and the buy side have an opinion. But I think what's very interesting now is we're in this environment where we have peak uncertainty. Many would argue we have more uncertainty than we did even coming into this year. We have peak multiples, peak valuations, and we have the lowest risk premium that we've seen in hardly ever, right? So you sit there with a market where you're looking at putting $1 to work and you say, do I do it in fixed income? I'm concerned a little bit about private credit. Yields are at their tightest, spreads are at their tightest. So you don't go there. You say, okay, do I go into equities? Oh, I don't know if I feel like going into equities right now. Okay, what about commodities? Well, I do think it's a great hedge. I do think the dollar's going down, but do I go into an asset that is supposed to be there for structural diversification? And it's up 40, 50, 60%, depending on whether you're looking at gold, palladium. So it is, I'm finding it, and a client of mine actually used this wording. He said, this is an environment about fear, either fear of investing or fear of missing out on the upside, and there's not a lot in the middle.
She said palladium, Carol.
What?
She said palladium. That's like the first mention of palladium in the 2 p.m. hour today.
Okay, check. Listen, you and I were sitting in the makeup room getting ready to come on air, and you said something to me about some of your clients, these high net worth individuals, and just to show the range of thinking that's out there with people who have a lot at stake.
Yeah, so again, these are people who have a lot at stake. In addition, there are people that either are entrepreneurs that are sort of in markets dealing with tech, dealing with healthcare every day, and or, you know, some of the people that I talk about are financial professionals. They're private equity people, they run hedge funds, so they're really seeing what's happening. So, you know, 2 clients, very similar balance sheet. You know, one is probably 80% in equities. She's so happy with that. She's had 20% returns for the last 3 years. And most of yesterday was focused on should we be borrowing to increase that amount?
Wow.
Rates are going down. Equities, you still, you know, you people have a 7,300 target on the S&P. So, right, this is a no-brainer. Fast forward to, you know, that was 2 o'clock. 3 o'clock was we'd like to sell everything, and we'd like to figure out what we can.
Another client.
Okay, I was going to say, this is the same person, right?
No. Another client,
so again,
similar portfolio.
Right. So, you know, when you talk about how emotion.
Wait, finish what they said.
Sorry.
They want to sell everything.
So they want to sell everything, and they said, you know, something akin to, what can we do to put capital at risk to profit in a true black swan scenario, i.e. like shorting MBS in 2008. And I literally am having those 2 conversations and everything in between. And then my job is, you know, to use UBS, to use our resources, to use my personal network of people like that, and sort of take a pulse and then take the institutional and technical part and get on top of it. But I do think, like we say all the time, this time's different or this time feels, you know, more challenging. But again, if you have $1 and, you know, fixed income doesn't make sense, equity feels too high, and commodities or relative diversifiers don't feel right, what do you do?
Really struck by the client who wanted to do more on margin.
Yeah.
Is that something is that a one-off? Is that idiosyncratic for you and your clients? Or
For
you
me,
guys,
it is.
Okay,
For me,
that's not really, wealth managers don't typically do stuff on, like they're not
okay, so yes and no. So there's something called like structural strategic leverage, right? If you could borrow at 3%, which you could for a long time, I still have people that have 1% on their books, and you could invest at what you thought was a minimum of 4 just because of your portfolio, a maximum of 20.
Right.
You would do that all day.
Meaning you're getting are you talking about getting a line of credit for cash purposes against your securities? That's not what I heard from you though. I heard from you leveraging up and buying more equities using margin. Is that
I mean,
what they're thinking of?
So it's not naked in that sense.
Okay.
They do have it collateralized, but what it means is that ultimately that person is so bullish, and that FOMO example, that 80% equities is not enough, right? There's no way we could get them to a perspective. And so
What's their other 20%? If they're 80%, they're obviously looking to up that.
Yeah.
What else are they?
So
what do
it's
they do?
commodities, and honestly, my fixed income allocation is pretty boring because of what we just described about fixed income. So it's short duration treasuries, short to medium duration IG, and then if we have a retirement asset, a little bit of upper tier high yield, but it's not that much more complicated than that.
I don't hear private credit.
Yeah, so private credit, I'm going to leave sort of the whole conversation about what's been happening aside, because I'm sure you've had a million conversations about, is it systemic, is it specific?
Feel free to weave it in, though, because we think it's an important one that we aren't quite yet dropping.
Okay, so I think it's an important one. I have always been a believer in, and Lehman as part of my life is where this comes from, that part of risk management means transparency, being nimble, and knowing what you own, because when things go against you, they go against you quickly, and you can't pivot if you are locked up or you don't exactly know who you're lending to. So for me, private credit served a purpose when there were no rates or diversification to be gotten in the general fixed income market.
Yeah.
But when that ceased to be, i.e. when rates went up significantly during the pandemic, there was a much higher hurdle for private credit for me. Now, I think that when people talk about it being late in the credit cycle, that's sort of a cheeky way of saying rates are going to go one way, spreads are tight, and there's some behavior, some underwriting that may be a little bit ebullient or excessive.
Right.
Do I think that that has happened and that there's also fraud? There's always fraud. There's always ebullience. Do I think it's relative to the standards or the lack of standards during the financial crisis and mortgage crisis? No, but there's been a lot of money put to work, and I don't know everybody's underwriting standards, and I don't know everybody's liquidity profile, but so I would say I'm not in the cockroach camp. I'm not in the this is nothing camp. It's probably going to be something in between.
Just 20, 30 seconds.
Yeah.
Why did Jamie Dimon say that? He didn't have
really
to.
interesting.
And to use the word cockroach, we all went there.
We all went there, and I have had a lot of conversations about that. I think that
he knows when he says something.
He's very intentional.
It carries weight.
I worked for him for many years. He's very, very intentional. It carries a lot of weight politically. It carries a lot of weight in the investment world. It carries a lot of weight on Main Street. I think that, now mind you, he has been much more cautious over the last number of years.
Yeah.
Oftentimes than his firm when he gives, his quarterly statement.
Right.
So I think that he tends towards being more cautious, being more bearish, and related to some conversations we've had in the past, being more a man of the people as opposed to a man of the markets. And so to me, I think he wanted some level of sensationalism, or he wouldn't have used that word.
We the people understand cockroaches, and especially if you live in New York City, you understand cockroaches, Tim.
If you're a super in a building, you call them water bugs. You don't call them cockroaches.
Ugh. Don't like them at all. Allie, thank you. Really appreciate it. Allie McCartney, she is Managing Director of Wealth Management and Private Wealth Advisor with Alignment Partners over at UBS. We're going to talk Elon and Tesla in just a moment, but first up, check on the trade.
Yeah, here's Alexis Christoforous in for Charlie Pellet. Hey, Alexis.
No water bugs or cockroaches on Wall Street today because investors once again turning a blind eye to the ongoing government shutdown, now in day 23, and focusing on a new batch of strong earnings reports. Investors, of course, also looking ahead to tomorrow's all-important consumer price index for more clues about the pace of inflation. The Dow Jones Industrial Average up 178 points. We've got the S&P 500 adding about 47, near an all-time high. The NASDAQ Composite climbing 232. Oil is soaring after the U.S. announced sanctions on Russia's two biggest oil companies, threatening supplies from one of the world's top producing countries. We've got WTI crude up 5.6%. Global benchmark Brent up 5.33%. American Airlines reported a smaller than expected loss last quarter, driven by a rebound in business and leisure travel in the domestic market. The carrier expects to return to profitability this quarter, and shares of American Airlines up now 7.6%. And some good news for home buyers. Mortgage rates now at their lowest level in more than a year at 6.19%. That's according to Freddie Mac. Lower rates and more properties on the market help push sales of previously owned homes up 1.5% in September. That's the fastest pace in 7 months. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Carol and Tim.
All right, so appreciated. Alexis in for Charlie Pellet, Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City. Well, Tesla shares, if you check them out, they have been bouncing around
1.4% right now. They turned positive later in the session, but for most of the day, they were lower.
Yeah, down almost 6% at their lows today, right? Listen, the company came out, they posted earnings late yesterday. Results largely disappointing, profit missing estimates despite record vehicle deliveries and operating income plunging 40% in the third quarter, Tim.
Meantime, the head of the company, the world's richest man, we were talking about Elon Musk. He hijacked the earnings call, pleading with investors to approve his $1 trillion pay package and blasting the shareholder advisory firms that have come out against the proposal.
The point is, I just like, there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
That's it.
That's classic, Elon. That's just in case I go insane. Hey, like
just those two things.
I guess so.
That's the barometer. That's what we're doing.
I guess so. I don't know. All right, that's Elon Musk apparently making the case last night for that pay package on the earnings call, and really, I guess, his position at the company. Let's talk all things Elon and Tesla. With us is Bloomberg Business Week senior reporter Max Chafkin, co-host of the Everybody's Business podcast, author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power, right here in studio. All right, we got a lot to talk about. That's classic Elon.
It is. I mean, there's probably no figure in modern life who so openly flirts with the idea of his own insanity as Elon Musk. But of course, what he's talking about
on an earnings call,
on an earnings
responsibility.
Well, of course, what he's saying essentially is you gotta let me cook, and the only reason I should be fired is if I am going crazy, and that would be crazier than he normally is, because of course he's pretty out there on a normal day, and for believers, that's kind of part of the appeal.
Dare I say, Max, a lot of people would say, even though they could be critical of $1 trillion pay package, they say, well, what would Tesla be without Elon Musk?
Yeah, and that's kind of the difficult position that investors find themselves in this company, where, yeah, there's some opposition to this pay package, and we've seen some of the shareholder advisory firms come out against it. But I think for most investors, you're kind of in a position where if you say no to this package, and Elon Musk threatens to leave or even does leave, the stock falls, right? It doesn't go up, because so much of this company's value is about the future, and that future is all about Elon Musk. The other thing I'll say about this pay package, big as it is, it's requiring the company to get even bigger, to hit milestones that seem almost cartoonish at this point. So if you're an investor, you're saying, well, I mean, let's hope it works out. He's been effective before. Why not this time?
Well, I got to say, one investor, we're talking about New York State, and the comptroller, Thomas DiNapoli, did say that Tesla pay package for Elon is overly generous, lacks clear performance metrics to justify the $1 trillion that he could earn under this proposal. He plans to vote against the compensation package, and Tesla directors up for re-election on November 6th. He spoke with Bloomberg Surveillance on TV earlier today.
When you see the excessive compensation package, I mean, credit to Mr. Musk. He's already one of the richest men in the world. How much more rich does one person have to be?
I don't know. I'm not that rich, but so I
think it's. I don't know. I know that we joke about that, but I don't know if that's the right question to be asking, Max. Is it about wealth or is it about control?
I think it's about both. I mean, people always say, and you always hear things like, well, Elon Musk doesn't care. He's so rich, he is worth hundreds of billion dollars. Yeah. What's another couple $100 billion? But I think when you're talking about this level of wealth, you do, like, the amount of money he stands to make on this package would, double his wealth potentially. So like that is a big difference. And the other thing, Tim, as you said, Musk says this is about control. It's about being able to maintain his position, to essentially be able to operate without any kind of shareholder activism, a critic might say, without constraint.
You know, having said that, you go to the core business, right? And EVs, like, listen, for a long time, he and Tesla did not really face much competition here in the U.S. And he and Tesla for a long time promised, didn't deliver, and then they started to deliver. But the environment is changing. But so too is the evolution continuing for Tesla as a company, right? Whether it's battery storage and other businesses. But I don't know, what is the business, and does that business, would it be able to hit some of these metrics to justify this pay package?
I mean, that is what's so difficult. And to the point that Thomas DiNapoli is making in there, you know, Tesla has not done that great over the last couple of years. The stock price has been phenomenal. Investors, and particularly like the kind of retail investors who follow what Elon Musk says and buy his stock, like they are in love with this thing. There is a boom in AI. Elon Musk is talking a lot about AI, but you know, car sales have not been great. And even in this quarter, which was good, right, where sales went way up, margins went down, and there is a sense among investors, and you've even heard this from the company itself, that this is going to be a bit of an aberration, because what happened is the tax credit, the $7,500, was effectively making electric cars cheaper. It went away as part of the big beautiful bill that Trump passed. So this is kind of like a one-time thing where you have a bunch of people basically moving purchases forward. At the same time, lots of competition from lots of automakers. Now we talked about this really for years, for almost a decade, like, you know, GM and others are going to come. Well, they're here now. There are a bunch of really great electric cars that cost the same amount of money, or in some markets less than a Tesla. You know, BYD has cars in Europe that are very, very competitive with Tesla and are cheaper. GM has cars now that are about the same price as the cheapest car and that are competitive. So that's a challenge. And then on the other hand, you have Musk's kind of fantastic promises around humanoid robots, around autonomy. And that stuff is hard to value. You basically either value that at zero, or you value it at like $20 trillion. And so it's kind of created a gap in the discourse around this company.
So, look, obviously none of us know the answer about how to value that business, but if increasingly these autos are becoming commodity, and outside of the U.S., especially with competition from BYD and Xiaomi, then it looks like a more insular market for Tesla, at least for autos here in the U.S., if they don't lean into Optimus, if they don't lean into other technology.
Yeah, I think there are two things. So one is Optimus, humanoid robot. Elon Musk says, you know, very soon, like in a matter of years, we're going to have these things in our homes. They're going to be like friends. You're like not even going to be able to tell. I think he said on the earnings call, you're not going to like barely be able to tell it's a robot. Like if that's true, obviously that's great. The other thing, is sort of robotaxis, unsupervised self-driving, which Tesla has yet to do, but it is trying to do. There is a question on how you value that, because Elon Musk has said for years and years and years, you know, basically that is worth an unlimited amount of money. Your cars will increase in value because of this thing. But you're seeing Chinese companies essentially give this stuff away. So that's why I say, like, we don't really know how valuable this is yet, even though the idea of not having to drive your car and being able to take a nap, that obviously sounds great. It's just unclear how much people will pay for that and how much they will be asked to pay for that, given that a bunch of other automakers are giving away very similar technology.
It's also not quite doable, right? Listen, we've talked about Waymo, how much we love it, but I mean, it's still tricky, and the infrastructure doesn't necessarily support it everywhere.
No, do not take a nap in your Tesla today, despite what you see on Twitter. Yeah, I mean, there are huge question marks here, and I think when you look at Waymo, it's a big success, but it's a success in a very narrow way. Like a defined number of markets operating at slow speed. You know, they don't drive on highways yet. You know, there's tons of supervision. There's remote supervision. We've talked about this. Same thing with Tesla. And Waymo has been very deliberate, you know, rolling this out in just in a handful of markets, moving very slowly. I think Tesla, and I think most people who cover the autonomy space closely, believe that there is no way Tesla gets anywhere near the timelines that Elon Musk is talking about. What we kind of expect is that it follows more like the Waymo path. Now of course, and if it does that, it's worth a lot less money. Now, of course, Elon Musk is telling a different story where one day he's going to just basically flip the switch and you're going to see this deploy everywhere.
We had an interesting conversation with Ross Gerber and with Ed Ludlow yesterday on the academic differences between the radar LiDAR side of things with Waymo and the vision only stuff with Tesla. Where do you fall on that, Max? Do you believe that, I mean, Ross Gerber doesn't think it's possible to have vision only self-driving. There are a lot of experts who I've talked to who are very skeptical of the technical approach, which I think is a problem. The great thing about LiDAR is it's like an additional safety feature. I also think, again, there are so many reasons to think that the timeline is going to take much longer than what we're talking about, that it's almost not worth parsing the technical differences. This is something that is going to take decades to pull off in the way that Elon Musk wants it to pull off.
Relevant when you've got a company that trades with a PE of 320 or a forward PE of about 262, right? Like, because these are things that aren't going to happen so quickly. Got to run. Love, love, love. Max Chafkin, senior reporter at Bloomberg Businessweek, co-host of the Everybody's Business podcast, and author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power.
Coming up next, how genetics could improve health outcomes for women where R&D lags. Next on Bloomberg Businessweek.
2:40 on Wall Street. I'm Alexis Christoforous, and stocks are in rally mode, boosted by tech as investors step in to buy after a batch of strong earnings results. The Dow Jones Industrial Average up more than 190 points. We've got the S&P 500 making up yesterday's losses and then some on a gain of about 48, also near an all-time high for the S&P. The NASDAQ Composite is up 226 points or 1%. We've also got oil sprinting higher today. WTI crude up 5.6%. The global benchmark Brent up 5.5% after the U.S. slapped sanctions on the Kremlin's two largest oil producers in an effort to pressure Russia to end its war in Ukraine. That surge in oil fueling concerns about the impact on inflation one day before we get that delayed release of the September Consumer Price Index. All of that sending bond yields higher. The 10-year yield 3.99%, the 2-year yield at 3.48%. And shares of IBM slipping 1.25% after the tech giant reported disappointing growth for a key part of its software division that offset better than expected third quarter results and a boosted sales outlook. And consumer products giant Unilever posting stronger than expected sales and profits for last quarter, with hair and makeup products leading the charge. The maker of Dove and Vaseline also maintaining its annual guidance. Shares of Unilever up now 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
All right, got it. Alexis, thank you so much. Well, hey, over the summer, a Bloomberg Opinion piece pointed out that new research shows Americans need greater access to genetic testing and stronger legal protections against genetic discrimination, according to a recent study that was published in the American Journal of Human Genetics. Now, the study of DNA samples from the Penn Medicine Biobank found that a quarter of adults under the age of 40 who had been admitted to the Penn Medicine ICU carried a mutation that would have been relevant to their treatment. So it's just talking about the importance of understanding your genetics and what it could mean for health.
And that genetic testing, what becomes available, changes so frequently. I mean, year to year,
does.
they can identify more and more.
Yeah, exactly. And our next guest has a vast body of work when it comes to the field of genetics. Let's get to our weekly Business Week Women's Health segment, where we focus on key issues and developing technologies impacting the present and future of women's health around the world, and really, in many ways, everybody's health around the world. Joining us right now is Dr. Wendy Chung, Chief of Pediatrics at Boston Children's Hospital. She is the Mary Ellen Avery Professor of Pediatrics at Harvard Medical School, and she joins us from London, where it's a little bit later. So thank you so much, Dr. Chung, for joining us. You have spent more than 2 decades as a clinical and molecular geneticist and have directed many NIH-funded research programs. Got to ask, are we at a good time for healthcare advancements, or are we possibly going backwards?
We have amazing opportunities specifically around genetics, both in terms of diagnostics, predicting, and being able to tailor health and health prevention and health treatment based on that, and new things in terms of therapeutics, especially in the rare disease space. So it couldn't be a more exciting time in terms of the ability to scale this, to use data to do it more accurately, and to get it to more people where they're at.
It sounds exciting and the opportunities sound exciting, but we're at a point with the United States where we don't have great outcomes compared to the rest of the world. We lag when it comes to other countries and their health outcomes. Why is that from your view?
In many cases, it's due to access. And as we think about this, we're trying to think of ways that we can provide care anywhere. So are there ways to think about how do we get access to patients where they are in ways that can fit in with their lives and get them really news they can use, is the way I think about it, when they can use it, just in time to be able to do it, ingest it, understand it, and apply it in ways that really fit in with their life. We have amazing opportunities, but we don't do them equitably for everyone.
Well, you know, Dr. Chung, Tim and I spend so much time talking about the K-shaped economy, right? And that on an economic level, not everybody benefits from the U.S. economy, even in good times. So that obviously carries over to healthcare. If you could change one thing, what would it be that would make healthcare more equitable?
So if you can imagine this future state I've been running a study in New York City called Guardian, Genomic Uniform Screening Against Rare Diseases in All Newborns. For a baby, when they get their heel prick right after birth, to be able to screen for disorders that are treatable and curable, things like phenylketonuria. Now can we think about blowing that up in a good way by being able to do genome sequencing to identify all the treatable conditions so that everyone gets access to this? And for those same children, if they get sick and have symptoms at some point in the future, reinterrogate that genomic information to make the diagnosis essentially instantaneously. So if they're having breathing problems, growing problems, problems with development, not hitting their milestones, can you get the diagnosis very, very quickly to start the journey and make sure that diagnostic odyssey doesn't go on for very long? Start the treatment.
All right, logical question or follow-up. Why don't we do that? Is it just too expensive or what? You know, it's funny. I was talking to an individual who is from South Korea or has family back in South Korea and says, you know, every year you can go and you can get a body scan head to toe, not crazy expensive like it would be here in the United States, and you can get potentially early signs of something that's not good. So I'm just wondering, when it comes to why don't we do these genetic testing? Is it not available? Is it too expensive?
So it is being done on a research basis on a very small number of newborns right now, but I'll throw down the gauntlet. I think we can drive down the price of being able to do this. And right now, let's just say it costs $1,000 per baby to be able to do this. That's probably not something that we can scale at 3.6 million babies born each year. But if we can drive down the cost by 50%, 75%, I do think if you look at the health economics in terms of the return on investment, it easily pays for itself over a 10-year period.
What about when it comes to using that data for technology such as gene editing? We spoke to Jennifer Doudna, the 2020 Nobel laureate, a few months ago at our Bloomberg Technology Conference back in San Francisco. She was very optimistic that we will see this happening more and more in humans. Will this become just the standard of care, in your view, for kids who have genetic disorders?
So I do think for these single gene conditions, platform technologies such as what Dr. Doudna and others have developed, they're not quite ready for prime time to just dial in any particular genetic edit and fix it. But we are getting towards those platforms to be able to do this. And I do think that over the next decade, we're going to make tremendous strides. And I do think from a regulatory point of view, the FDA and other regulatory agencies understand that within rare diseases, you need to think about platforms and being able to use information for one rare disease in terms of treatments for others, and to understand the safety profile and use that across conditions. And so for the 7,000 rare diseases, I don't think we have to solve the problem 7,000 times. I think it's going to come to a much simpler number of solutions.
Hey, one thing we wanted to ask you about, a recent article in Nature, you were quoted that Maha's spotlight on children's health is welcome, and that this could be the decade of the kids, and that would be an amazing thing. How so, especially when we see an administration, a secretary of HHS, pushing back on things like vaccines and other policies that research has showed has definitely improved health in the United States?
So I think if you think about the technology that I talked about with newborn screening, it can be applied to any number of things for children, so that, again, if you know where the pain points are, if you know what the susceptibilities, you can think about everything from how a child can learn better if they're going to have certain challenges in terms of understanding learning behavior, how to be able to tailor things to them, if they're going to have problems in terms of a tendency towards type 1 diabetes, asthma, even cancer in the future. How do you tailor their surveillance, the particular things we monitor, how frequently we monitor? So it's not a one-size-fits-all for everyone. You really get more out of the energy and the money you're putting into it because it's tailored for the person. And I do think both in terms of being able to have biomarkers looking at disease progression and genomics to guide you, we can do much better because we have enough data now to be able to understand those patterns and profiles.
We've run out of time, but hopefully come back real soon, because I know emerging technologies, whether it's artificial intelligence or quantum computing, which all of a sudden this week we're talking a lot about, are going to be very important metrics when it comes to disease predictability. So please, please come back really soon. Dr. Wendy Chung, Chief of Pediatrics at Boston Children's Hospital. She is the Mary Ellen Avery Professor of Pediatrics at Harvard Medical School, and she's joining us from London on this Thursday.
Well, on this Thursday, stocks in the green, 0.7% to the upside on the S&P 500 right now. NASDAQ Composite up a full percentage point. The Dow up to the tune of 200.